You're tuned in to Reimagine 2021. Yes, it is I, your friendly mutant, non-fungible, totally not boring, totally not 453, but rather 452 ape. As you know, I was born of a yacht club, and it's definitely easy to get carried away with exaggerating just how glamorous it is to go on weekend sails to exotic tropical islands and all of that. But trust me, it's not all it's made out to be. Sometimes you even have to cook for yourself in the salty air. The point I'm getting at is that we often glamorize that which is new and foreign to us as long as it seems to be a solution to all of your problems. And this is true with the concept of decentralization. Although decentralization is helping the humans reinvent many of their outdated ways of living, it definitely comes with its drawbacks. Up next, we'll turn to see just what some of the common misconceptions of decentralization are, what it can do, what it can't do, but don't take it from me. I can do whatever I want. I'm a trust fund, baby, remember?
Right now we're in Times Square. Times Square is taken over by NFTs. We're sitting on some of the most incredible events that are happening, and the only way you can get in is if you own one of these digital assets.
Now one of these digital assets is for sale for $3.2 million. It's an explosion like nothing we've ever seen on the planet.
It's something that you can't actually see, but that's why we're here, because you can actually see it.
Wealth is being generated at massive amounts.
In the form of digital billboards, in the form of merchandise. Some don't get the benefit. With NFTs, everyone shares in the benefit of the upside.
We're in Times Square. We're talking about the Dirty Bird Flight Club, the most exclusive club, I think, in events right now.
It's a generative NFT project, 9,090 birds, all made by Birdcap, a legendary muralist, and artist for us in 2020. We have a different artist every year at Dirty Bird. And all the birds kind of get you inside the Dirty Bird family, I would say. Yeah. I'm just really excited to talk to other people in the NFT community and to not be DJing the entire trip, just actually be talking to people and finding out about other projects and finding out different ways that we can expand our project through new technology and new ideas that other people.
So NFTs really give the opportunity to capture moments in time, to secure them with blockchain, crypto technology, and anyone can really own it, right, in a decentralized way. So this is really going to help a lot of photographers and underserved creatives, right, bridging the digital world, but also capturing real-world moments. A moment in time is about collecting the community spirit, and it's all tokenized in the digital form.
And into the forefront, make crypto mainstream, help people along the way, and create an amazing community. And have a fuckload of fun.
So I'm a collector, and I look for promising artists who really don't have the exposure that they should, and I offer mentoring and my advice and try to kind of be a kingmaker and connect people. So you have teams like OpenSea. I mean, we're here in the Edison on the rooftop, and OpenSea is one of the featured blockchain NFT platforms here. Polygon you can mint for free. They've implemented gas-free minting on ETH. And then you have platforms like Harmony One who have a huge grants program. So it's just people taking a chance, believing in themselves, and it's folks like us that have to grab them and tell them, you can do this, take a chance, here's a little bit of the walkthrough. You have a lot of collectors out there that they just want to buy stuff that they know is going to go up, established projects that are going to turn a profit quickly. You have to take a chance on new creators. And for me, the high that I get from that is the elation that they feel that they just have the first investment in their work, and that empowers them to get better equipment, that empowers them to be able to travel and to build. And who knows, one day I could turn a profit on that photo, but it's not about that. It's about really bringing that person in the space and feel that love. And they're gonna be adopted into the space forever, building and contributing, and hopefully, if they make some money, helping others.
At Teller, we know your project is only as decentralized as your source of data. DeFi depends on oracles to supply real-world data, making it valuable infrastructure, but vulnerable to attack if centralized. Teller uses a decentralized data community, offering complete censorship resistance. Teller is a proud sponsor of Reimagine. Teller, data cryptofied.
Hello, everyone. Welcome back to Reimagine 2021, version 11. So we've been doing this free virtual conference for the past year or so. I'm Roshan Marajkar. I'll be your host for this event. Really excited to be back here after a while and excited to speak with Matthias, who's a global marketing strategy at OpenOcean. Matthias, great to have you here. And before we get into talking about a lot of the market structure, the latest technological innovations, would love to hear your story about how you initially got into the crypto space.
Okay, sure. Yeah, hey Roshan, hey everyone. Super excited to be part of Reimagine 2021. So I've been in the blockchain crypto industry and space for around 5 years, and it all started off that I started to see all these things going on YouTube and read all these papers and so on, and I really liked the idea about having basically your own control of your own assets. So I started to invest a bit in some Bitcoins and Ethereums, and then it basically rolled from there. But at that time, I was also working as consultant, and several of our clients, they were asking about blockchain, so we started to build some concepts around that. Then later on, I joined one of the big infrastructure projects. So I helped design, do architecture for protocols from a very early stage. And most recently, I was CTO for a small Japanese blockchain startup, which is building their own proprietary protocol for digital identity, which I was doing for around 2 years. And around a year ago, I joined OpenOcean, where we are building DeFi aggregators, and I'm excited to talk about that.
Yeah, it's really interesting. You've obviously been in the space for a while. You've seen a lot of the problems, and that's why I'm really excited to talk about OpenOcean and learn more about why you guys are even building some of these products. What are the different ways users can use it to really benefit, their current strategies, but also new innovations. So first, let's get started with explain to us, the audience that's watching this right now, what exactly OpenOcean is, and maybe what are some of your key principles that you think while building.
Sure. Yeah. So OpenOcean is a full aggregator. And what that basically means is that we aggregate CeFi and DeFi. So that means we aggregate centralized exchanges and decentralized exchanges. And what we're trying to do with all this liquidity that we aggregate and source is that we will get the best price for our users when they do a trade. So we were maybe the first full aggregator who was really trying to do this concept both with CeFi and DeFi. And what's really happening when you go into our platform is that you, for example, want to do a trade from some Ethereum to DAI, and then you type it into our terminal, and then we have some algorithms and protocols which goes out and source the liquidity, look what is the prices, and then we optimize the routes and the trade so you will get the best price. And maybe not only on one DEX, it might be several DEXs and pools that we split this trade across. Just to give a little background why we built this. So we started in September 2020, where we were a team of around 10, where one half are from traditional finance. They have more than 15 years experience dealing with investment banking, building centralized exchanges, futures exchanges, and so on. And then the other part has been in the crypto space for a long time, building protocols and DApps. When we came together, what we really wanted to solve is, because we saw the crypto market is very fragmented. So there's a lot of exchanges out there, and they have different liquidity, different prices. And as a user, when you want to do a trade, it's very difficult to figure out where should I do that trade and how should I split it. So that was kind of the main reason why we started. And all this information is very asymmetric. So it's very difficult to see in between the exchanges, and therefore difficult to maximize your trade. So yeah, that's why we built it OpenOcean in the first place. And that's still the cornerstone of what we're trying to achieve.
Definitely. And I think, from what I know about OpenOcean, you guys are also helping to kind of democratize the market as well, democratize the information so that people can, I think, make better decisions, based on if there's low slippage, for example. It might enable a different class of users to get involved. Just from your perspective, thinking about DeFi and all of the aggregation you guys are doing, DeFi has been, I would say, something that people kind of use daily as far as checking in on their pools, taking actions daily. To what extent do you think, as more of the information, like as retail users get more of the information, do you think that arbitrage opportunity will disappear for other parties, like institutional companies and funds?
So I definitely think it's like, if you compare to the traditional finances, is more approachable, because you have so many tools and all the information is generally available out there, especially when maybe you use something like OpenOcean. So I said that we do both CeFi and DeFi, so centralized and decentralized exchanges. One of the cool things you can do with that is, for example, inside our terminal, you can see the spread between CeFi and DeFi, and then you can spot like an arbitrage opportunity yourself. And you can also do that in between the DEXs if you want. So I definitely think this is something that's easier for retail and normal traders to go in and try to make a profit of. And one of the things we are actually building that I wanted to talk bit about later, but let's just jump into it now when we are here, is that we are building a SaaS tool for automated arbitrage trading. So right now we have kind of the visuals where you can go in and see on a graph, here's a spread, I want to take some action on that. But to actually do it might be a bit more complicated for some people. So we are building this tool where you can go in and deploy your own strategies, and they will run automatically. And I think that's something, you know, when people, they kind of develop these automated tools for arbitrage, they kept it to themselves because it can eventually be, you know, like a big profit machine. So we are kind of democratizing that we give you the tools, and there will be some guidance, and then you can do it yourself.
Yeah, that's really great. And I think a lot of people talk about arbitrage or even total value locked and compare these sort of metrics to sort of success, I guess. So do you always believe that this arbitrage opportunity will exist? Because like for example, a lot of the DeFi opportunities, whether it's the interest or, you know, taking out a loan, that collateral ratio kind of exists because not everyone is in the pool. Like, do you sort of have the perspective that if too much capital comes into some of these pools, it will, you know, change some of the interest rates? Or do you think as more capital comes in, it will that there might be more DeFi products for like capital efficiency? Because like in DeFi, you keep wanting to use the capital.
Yeah. Well, I think the market, if we just look at the history, right, it was rather inefficient, and there's a lot of improvements in that because people, they're building these tools and they take advantages of you know, for example, arbitrage. But I generally think it will become more and more efficient, and the opportunities will be less. But I don't think it will belong only to the institutions, just to go back on that, because people, they will keep building these DApps where you can, or like contracts which you can do different mechanisms to kind of maximize your own capital and make the market more efficient. You know, for example, that you deploy some capital, you get a representation of that capital, which you again can deploy and move around, and yeah, that will eventually make it much more efficient.
And what makes you excited about kind of the change in business models, like kind of talking about liquidity mining a bit, where suddenly anyone has opportunities to use their capital and provide liquidity, you know, kind of as a LP. Like a lot of these things were locked in traditional finance or centralized finance before. So do you think that the roles of different parties might change in the way they interact in crypto? Like, do you think a trader will just always stay a trader, or do you think like not just VCs will have the opportunity to kind of be LPs in this pool, like specifically talking about liquidity mining, that model?
Yeah, sure. I think like in the crypto space, liquidity mining is for everyone. So depending on the networks and the fees you have to pay, you know, to deposit, withdraw and stuff like that, there might be, you know, some scenarios where you will need to deploy more capital than others, you know, simply to make a break even or a profit. But I think we've seen more and more retailers and small investors and traders, they're jumping into this, especially because, you know, you can do it on other networks now and specifically Ethereum, right, where it's more cost efficient to deploy and withdraw. And the opportunities also become more in the sense that there's more variety, and it appeals to different risk profiles. So for example, now you can also do a single token staking with a stable coin, right, which might be interesting for a lot because it's not as risky as doing staking with a more volatile token, or even go in and provide liquidity, with a pair into a pool, which carries significantly more risk, namely the impermanent loss. So I think, there's different options for different risk appetites now, and that really appeals to the normal traders, the users, and that along with the transaction fees being lower in many scenarios.
Yeah, and also to talk about transaction fees, we're seeing like multiple layer 2 blockchains, people are starting to kind of trade on those different dexes to also kind of hedge their risk and maybe not pay all these fees. But getting a technological perspective, would you say that all of these innovations, are they driven by algorithms? Is it the innovation in building bridges, swaps for capital efficiency? Or do you think it's just kind of knowledge, one area that you guys are really focused on, giving all the information to the trader? Because I know a lot of people talk about, front running and a lot of the problems here in the industry.
Yeah, sure. So just to back up a little bit, like in OpenOcean, we aggregate 10 different public networks. So under this, it's Ethereum, Binance Smart Chain, Avalanche, Phantom, and so on. What's really interesting here is that all the users, they move around these different networks, and they're not only restricted to one particular network. So may I have the question again? I'm just trying to put it into a context here.
Yeah, so I was sort of asking, like, do you believe, like, what kind of drives the innovation in a lot of the things that we're talking about, like making the markets more efficient? Does that come from a more efficient algorithm that you or other companies are developing? Or is it between networks where they're trying to build bridges to reduce the cost, or maybe bring in liquidity from another chain? Like, which one is it more, would you say, the innovation, the reason why the innovation is happening right now?
So I definitely think the networks, they play a role here, right? Because all the different networks, they offer like different algorithms, first of all, right? But they also offer different performance and different features, which might appeal to certain builders, but also traders. And obviously, like the efficiency comes into when you can move around these chains via, for example, the bridges, right? Because you might have a pool of some token on one network and another web network, and they sort of need to balance out that arbitrage somehow. And that could be between the network through a bridge. This is also something we look into, right? That we aggregate so many different networks, and as a trader, you can just come into OpenOcean and you can trade on all these 10 networks. So if you spot that opportunity, we can kind of help you to get the price overview and see if you have an opportunity. Another thing we are building for this is that we are about to launch a cross-chain swap terminal. So what that means is that you can go from one network to the other network and do the swap and get the best price. So for example, if you want to go from Ethereum to Avalanche, and you want to go from ETH to AVAX, you can go into our interface and you select like the starting network and the destination chain, and in the middle you will kind of be able to see the cross-chain protocol and bridges you can utilize for that. So that's just something we put together because a lot of traders, they don't know how to do it practically. But these types of architectures, they can help make them more efficiency into the market, because you kind of build bridges in between these two pools and networks.
Yeah, we certainly need more bridges in the space. I really like the idea of capital flowing across different networks and users getting full options for basically picking the liquidity they either want to provide or receive, kind of at their rates. So do you think, what percentage of, I guess we have, to quickly talk about things like the upcoming ETF and kind of the flow of funds. A lot of those flow of funds kind of stay in the traditional finance or centralized finance ecosystem. So to what percentage do you think people will actually directly interact with a lot of things like future contracts and do that level of trading themselves, versus is it just going to come in the form of a traditional product, I guess, where they can just click a button?
You mean between like the traditional finance and the crypto space?
No, more like, when we talk about things like interest rates and stuff like that, do you think more people are going to take the full crypto route? Or do you think there's a world where in the future you actually go to your traditional bank right now and they might offer a crypto product, but in the back end, it's still like, a decentralized lending platform or something like that? Yeah, so which one do you think it's going to be more? Do you actually think users are going to interact directly with a lot of these lending platforms, or will they do it through these larger institutions that are getting crypto exposure?
Sure. Well, I think it's very interesting when we look at like the world, right? I think it's around 2% or less than 2% which has exposure to crypto already, and the exposure is relatively small. So as crypto grow and we probably will see more of these 98% coming in, I think there's a need for all of this, right? Whether it's like ETFs from traditional finance, where they can go to the bank and say, I want some exposure on Bitcoin, or they go directly into the space, go to an exchange, do their KYC, make them manage their keys, or go, the full DeFi route and jump into MetaMask, create an address, and manage everything themselves. I think there will be more on the crypto space, like centralized exchanges and decentralized exchanges, rather than going into the bank and buy a ETF. The ones who will buy the ETFs and the traditional financial instruments and so on, I think that would more be maybe the elder generation, which are not so comfortable, going in and create an exchange accounts and even a DEX account and have your own control of it. I think the maybe slightly younger generation, I'm not hoping I offend anyone here about this. I'm sure there's a lot of technological good people out there in all generations, but I think the younger and the ones who kind of grew up with the idea about crypto, they learned about it on YouTube and all that, they are more ready to go in and create a centralized exchange account, or even do it themselves with, for example, a MetaMask. And I think that, when we talk about this CDeFi, so centralized and decentralized exchanges, that's really interesting for the growth, because we will need both of these parts to onboard the remaining, let's just say 98% of the population into crypto, because some people, they might not be so comfortable managing their own keys. They want to do KYC because they feel that's a better way to be compliant. And then we also have the full DeFi route where you just create your own, you have your keys, there's no KYC, it's privacy, you can get access to the new projects when they just fresh on the market a lot of the times.
Yeah, definitely. And I think to add onto something, I think for the future of kind of crypto investing and how people even get involved, I think it should very much revolve around doing it in a communal way, like in a either group investing to diversify risk. And I think that might be one of my questions to you is, what effect will the idea of, I guess, pooling your capital together with other people, like we've kind of already seen it, right? These are permissionless pools. You can kind of go in and out of these pools on your own will. But to talk about the social side of it as well, like, do you think what effect will it have on just the trading markets if we start to see smaller groups of people like creating their own smaller pools and trading, kind of like what we saw with the Wall Street bets movement, where a bunch of people put trading pressure? Is it possible for decentralized groups of people to use these tools to push back on a lot of the problems in the ecosystem, like front running and things like that that people always complain about?
Yeah, I think so. I mean, that's one of the most powerful things we've seen in blockchain and crypto, right? That people get together in communities and they even run projects, projects which are more of a DAO system. They are like controlled and run by the users. And I think specifically for, you mentioned like if they go together in pools and provide liquidity together and so on, I definitely think that will push back on some of it. One of the things here is that, the intentions might be good and they are in communities and they probably talk and like each other and so on, but they in most cases would be anonymous people, right? So you can only, the community is often very powerful, and I see so many better cases than worse cases. But I just think when you have these things, I wouldn't rely 100% on it and put my full faith and trust into it, as long as it's run by 100% anonymous, and especially if it's run by few actors, right? If you saw something becoming bigger with that kind of network effect, I would trust it more. I think that's also a bit of a personal opinion from me, how my risk profile is and what I like to be part of and contribute to.
Yeah, I mean, no, it's always interesting to get the personal belief. Everyone has different beliefs. Everyone's metrics are pretty different, right? Whether it's new people getting in and, people have been in the space for a while, like you, definitely have different metrics for a good reason. I would be interested to hear more about OpenOcean. What are some of the interesting features you guys are building in the future? Do you guys see a world where you might want to show people, addresses that do participate in front running, or is there a way, do you think, through more data we can maybe build a dashboard to help people be more trusting of protocols or pools or anything? Like what data would you want to show them? Like, I don't know, what metrics do you think are important for trust and safety?
Yeah, so I think for trust and safety, right? So OpenOcean, we are an aggregator. So we tap into liquidity in different pools. And the front running problem, the way we try to tackle that is that we talk to the decentralized exchanges that we aggregate. So it's not, you cannot just tap into any liquidity on OpenOcean. We have a process where we whitelist the DEXs, or we approve them, right, based on our due diligence, and the same goes for the trading pairs. And that's kind of how we try to mitigate that problem. Just for other safety concerns when we talk about OpenOcean, that is that we audit all our protocols, all our contracts, and it's by third parties, it's by internal. We use as much as we can from other communities and projects, which has been battle tested along with our own proprietary. Yeah, and so about the future products and features we're developing. Right now, our primary thing is aggregation, right? And it's free to use, which is another nice thing about OpenOcean. In the future, we have kind of a few products coming up. I mentioned the SES tool already. Then we are gonna aggregate decentralized derivatives, which is something very new. We are extremely excited about. So, you know, spot trading is very popular, but we see in the future that decentralized derivatives, or just derivatives in general, like futures contracts and perpetuals, will become very large. So we want help people get the best trade on that as well. Then we will do combined margin pools, which means that you can have one margin pool which you can utilize to open positions on different exchanges. And here we talk both CeFi and DeFi. So, for example, you could go long on one place and short on another place and utilize the same margin on that. Then we talk about the cross-chain protocol, which we will also launch soon. And last, we are gonna launch an intelligent wealth management tool. So this is something people can access, and they can, you know, choose a strategy which fit their risk appetite, and we can sort of help them to get a profit out of that based on the risk profile. So all these services or products is also something which we will try to get some revenue streams on. And on OpenOcean, we have our own token called OOE, which is a governance and utility token. Some of these products will be accessible. For example, if you hold a certain amount of OOE, then you'll automatically be granted access to that, perhaps in different tiers. Some of them might also be something where you pay a subscription fee, which you could pay in OpenOcean token. Not at a fixed OE price, but, you know, like something that will be pegged to a dollar price. Yeah, so and now we talk about the token. So I said it's a governance and utility. We are slowly moving towards the governance perspective, where we want to involve the holders and the communities more and more in decision making, so proposing and voting. The token is only 6 months old, and building governance is a long route, and come up with DAO ideas and so on. Then for the other side of the token is the utility. We are also working with gas refund programs, right? So when you do trading, you can get gas refunds in OpenOcean token.
That might be one of the best things that I've heard all week, honestly. Yeah, we need more programs like that either subsidize the gas cost for the users, or you know, change the initial experience, right? Like if you're crypto native, maybe you lose some gas, we understand, but for the outside people, I agree, it doesn't really make a lot of sense, right? You talk about all this opportunity, and then people are paying high gas fees. That's why it's exciting that you guys are also expanding to different chains. And one interesting thing I wanted to ask you as well is, you kind of mentioned that people can spot arbitrage opportunities. Is there a way right now where users can share these insights with other users? And do you imagine, like, is that where the future of open ocean is heading? Like sharing of different strategies and getting rewarded for that? Or are you guys going to focus on, because I know you guys launched Open Ocean Atlantic recently, and made some progress with the capital efficiency and cheaper prices.
Yeah, sure. So for the arbitrage, since day one, we actually had the graph which shows the spread between CeFi and DeFi. So very practically, you can go into OpenOcean.finance, then you say start trading, and then go advanced, and then you will, for example, go on Ethereum, and then you can choose a pair, and you can see what is the prices on CeFi, and currently that's Binance spot trading. Then you can see what is it on layer 2. So Loopring, Arbitrum is about to come, and then you can see what is it on the DEXs. So then you have like all these price informations, right? And you can see where's the best price. Am I a guy who wants to trade on CeFi, or I'm hardcore DeFi users? And then kind of in the middle, we have a graph which shows the CeFi, the DeFi, and the spread, right? So you go in there and you can see in a nice visual way, here's an opportunity. Let me see if I can do it manually by myself, or do I want to use OpenOcean's SaaS tool for that? So you also mentioned the Atlantic upgrade, and that's actually the biggest milestone we had since we started. With the Atlantic upgrade, we improved our intelligent routing algorithms. So it finds better routes, and it optimizes the maximum return on your trade. And what's really interesting about the new upgrade is that we take so many factors into account to give you the best returns. So we look into the prices, we look at the gas prices, we look at the routes, and then we put all these things into like this optimization algorithm, and it will provide you the best return on your trade, right? So for example, certain chains, it might not make sense to split the route too much, because the gas fee will simply eat up the profit that you will get from just doing a trade in one pool. Whereas other scenarios, gas fees, they're so cheap that you can split the routes into so many different DEXs and even different pools and pairs that will make sense, because you get so much better price from splitting it in so many routes. So yeah, that's something we worked on for a really long time, basically since we started to do this next upgrade. And we did a lot of testing on it, and it seems like we are providing the maximum returns, and it outperforms a lot of the other aggregators out there. So we are super excited about that, and that's what we are full speed on now, to help our users get in and utilize that.
Yeah, thank you so much for going over that. I truly believe what you just mentioned. The people watching, you guys should listen to it again. It's very innovative, especially you guys are thinking about all these different properties and metrics, which I don't think everyone is thinking about, honestly. A lot of the aggregators, they only show you, I guess they might show you a cheaper cost, but I get what you're saying. You guys are actually thinking about different metrics that normal user might not think about, and I think that's what really gives it its power. And I love the idea of more information and letting users decide. Yeah, I want to give you opportunity to, like, how can more people get involved with the project, and any shout outs or any upcoming events you have, want to get more people involved?
Sure. Yeah. So the easiest way to get involved is to join our Discord and go into OpenOcean.finance and try to play around with it. It's very intuitive after the upgrade. We made some major changes in the UI UX. So I think even if you are new to DeFi, you would be quite comfortable with it. And then join our Discord. I mean, I'm in there all the time talking to the communities. Our engineers, they're also there because we provide an API. So if you wanna, develop your own stuff, try to use our API, you can talk to them, talk to me. Yeah, and then if you're more looking for, generally what we do, then Twitter is always good, Telegram and so on. We also have amazing people in Telegram chatting around about different topics, not only related to OpenOcean, but also many of the things we talked about today. So coming up on OpenOcean, I would say it's pretty interesting, all the products we have coming up, right? SaaS tools, combined margin pools, derivative aggregation, and so on. So definitely stay tuned for that. We are also working on aggregating new networks. For example, Arbitrum is something we are looking strongly at, and I would expect to communicate something about that soon. But we also look into other networks, right? So we are the aggregator which by far aggregated the most networks, because we want our users just to be able to go in and trade on the newest stuff all the time and get the best trades. So we have these 10 networks already, and we are talking to some of the new networks that's coming up and being very popular, because we have seen, right, this where communities, capital, hype has jumped around the different networks, and we want our users to be able to ride on that if that's what they want. If they think that's interesting to get exposure to all these new networks and trading pairs, we are happy to do it as long as it's within our due diligence and we can stand in for it. So yeah, stay tuned for those new networks and join OpenOcean on that journey. We will most likely be the first one to jump on the new ones. Then I think one of the things we're really excited about is NFTs, metaverse, DAOs, and so on. And we are talking to these projects when they pop up and see how we can work with them, get them involved, and so on. Yeah, so I hope that gave a good overview of OpenOcean. And after all, it's free to use, right? OpenOcean. We don't charge any protocol fees. So if you go in, type in your code, you can see where does it split my route, where's the different gas fees, which is charged by the network, not us, and what is the different trading fees, which is charged by the exchanges and not us. So yeah, why not, if you can save a buck and make your trading more efficient and maximum return.
That's a great way to end things off, right? Like why not, if the question is why not if you had all the data available. But here's, I think you guys are at OpenOcean, you guys are truly building something unique. I haven't heard anyone build this massive aggregator, and love how much emphasis you guys are putting on building this for users and user control. It was a pleasure speaking to you here, and I advise anyone watching this to definitely check out OpenOcean, get involved. Definitely some alpha and some insight here. Looking forward to seeing what you guys roll out in the next few months.
Cool, thanks a lot. It's been a pleasure. Looking forward to see the rest of the talks.
Thank you. And on that note, I'm your host, Roshan, everyone, and I'll let you all tune back in to Reimagine 2021. As usual, follow our YouTube library. We've done over 500 plus interviews, and I'll let you all enjoy the rest of the talks here at Reimagine. Thank you.
Thanks a lot. Bye.
Consensus is a pathway to good data. At Teller, we use a permissionless network of data reporters in our Oracle. No more private data manipulation. Clear staking and dispute models make sure the data reported on-chain is up to consensus standards. Teller is a proud sponsor of Reimagine. Teller, the unstoppable Oracle.
Mutant Ape 452 here. You know, if there's one thing I know as an ape, it's that human beings can go a little bananas when they try to get organized into well-functioning communities without the right kind of leadership. It's just a fact of nature of the hairless degenerates that somehow, some way, the alpha gorilla, the CEOs, the presidents, the de facto leaders, more than often end up with too much power, and their centralized control becomes a single point of weakness. In that case, all that it takes to bring down the house of cards is for a single actor to slip on a peel. But one of the interesting developments in the world of crypto and Web3 is the emergence of what is called a DAO, a decentralized autonomous organization, where no single actor is in charge and no single point of failure puts the livelihood of an operation in jeopardy. With the evolution of business reaching its modern apex at the birth of the DAO, it's now possible for entire communities to govern a company, a project, or the development of software, amongst other things. Stay tuned to find out more about this revolution in decentralizing technology. Ape into decentralization, folks, and opt out of the old school.
You thought DeFi was just a buzzword, did you? You thought you could remove our face from your books without a legitimate explanation, did you? Does a mask on Ben Franklin offend you? Or perhaps the symbolism frightens you, because it represents the end of your arbitrary decisions made in the name of elitism? Well, I've got news for you. The decentralized financial revolution isn't letting up, and we will not be silenced. The future is being determined under your nose. I suggest you wake up.
Hello, everyone. Welcome back to Reimagine 2021. I'm Roshan Marachkar. I'll be your host for this event. and I'm very excited. This is our 11th event. We've been doing these free Reimagine virtual conferences for the past year now, and our goal is always to feature the latest innovators, latest leaders in the space, and of course, the companies that actually support communities. I'm very excited to feature a special panel here today from our supporters, OpenOcean. So with me here today, I have Cindy Wu, who's the co-founder of OpenOcean. I have Joe De Tomaso, who's the investment portfolio manager at CMS Holdings. And we have Vijay Chetty, who's the head of business development for DYDX. So we're going to cover a lot of interesting topics. We're going to talk about some new tools in the market. We're also going to talk about, what is the future of DeFi? What is really the future of trading? So, to kind of just kick things off, one of the questions I think everyone has been asking about DeFi is kind of, what are some of the main success metrics and what are some of the innovations you guys have seen in DeFi in the past 2 years?
Yeah, sure. Happy to kick things off. So I think for us, as a decentralized exchange at DYDX, we really look at metrics that map to centralized exchanges and probably how a lot of the leading centralized exchanges are thinking about their businesses. So at the highest level, that maps to volume, open interest in terms of positions taken on, and then also liquidity in the books. So can somebody come in and transact at significant size in these markets? And of course, you have leverage involved, so you want to make sure that there's sufficient depth, particularly in periods of high liquidations. So that kind of trinity of metrics is what we pay a lot of attention to. As we've seen our volumes rise, we've tended to focus a bit more on market share. So what percentage of the decentralized exchange market are we, as well as what percentage of the overall derivatives exchange market are we? So we're paying a bit more attention to those two now. And then of course, given that we're a decentralized exchange, the decentralization of the protocol itself is key. So ensuring that there's a wide base of users engaging at a governance level is also another key metric.
Yeah, I know you guys recently did your airdrop, and you have a lot of motivated community members. In your view, what are some of the tools that DYDX is building just on the DeFi or trading side that you think just couldn't efficiently be built in the TradeFi world?
Yeah, so at the highest level, we're really seeking to build kind of the same type of functionality that you see on centralized exchanges, but in a DeFi first manner. So a lot of that maps to the feature set that you may expect to see on the latest and greatest centralized derivative exchanges. So using FTX as an example, it's sort of a lot of the same trading features that you'd expect in order to have a great experience. Eventually, we plan to have support for multiple forms of collateral, which is another key product feature to expand the user base and expand the functionality. And then, of course, continuing to ship different order types like iceberg orders, and especially on the front end, and really kind of educating users on how to take advantage of that functionality is also a key part of the picture. I'd say the one area that we tend to spend a lot of time on is how can we securely do this in a decentralized manner, since obviously the benefit of using a decentralized derivatives exchange like DYDX compared to centralized exchanges is really that you get the benefit of self-custody and the security and flexibility that comes with that. So we think a lot about how can we continue catering towards interoperability and to ensuring that we provide users with those benefits of security and then of course ease of use on top of all that, because a decentralized experience kind of introduces a bit more complexity to the user onboarding. But I think we're also quickly finding a lot of users getting comfortable with that. And so that's kind of opening up some interesting use spaces too.
Yeah, I think you're right. It's kind of a learning curve, obviously, and I think there's a gap too between how much capital the institutions have and how much knowledge some retailers have. And I guess a question for you, Joe, I think would be good to answer is, Kind of on the flip side of it, to what extent do you think, like, I feel like everything in DeFi, it's very collateral driven, right? We don't really have, uncollateralized loans. They haven't really hit the inflection point yet. So to what extent, when you're thinking about diversifying a portfolio, would you use some of the TradeFi tools, or would you use just all of the DeFi tools or pools?
Yeah, I mean, so for us, we kind of sit on both sides of the spectrum. So, I mean, we do play very much in more of the traditional sense on centralized exchanges, trading more traditional strategies, kind of focused around trading futures curve and things you might find back in TradFi. I think we kind of sit on DeFi a little heavier nowadays. So we run quite a bit of strategies, or automated strategies, I should say, across the derivatives protocols. So we're starting to get ramped up on DYDX. We've been active on things like perpetual protocol for a while. So, I mean, for us, like, we really try to, I guess, bridge the gap, for lack of a better term, between using both things. I mean, we don't really feel like you need to stick to one side or the other, whether it be DeFi applications or centralized platforms. But we think that there's kind of a space for both of those. So, I mean, when we think about portfolio allocation, we're kind of active on both sides of that regularly. So I don't think we take too much into account kind of one or the other, if that makes sense.
Yeah, definitely. Like, kind of playing on the strengths of each ecosystem. And I think there's a lot of, I guess there's a lot of different trading strategies and even like kind of like a risk parameter, right? With all these tools. Cindy, I think if you want to go and talk a little bit about what is, OpenOcean's DeFi trading strategy, like, are you guys kind of using all of the different markets like spot, futures, or do you guys only focus maybe on chain, like just on chain investment?
Yeah, and OpenOcean is we are acting as a full aggregator because we are a team from traditional finance and traditional financial exchanges and wealth management and private equity. So when we land into the DeFi space, we find like there are some kind of inefficiencies. For example, it's very difficult to trade across various networks and to do cross-chain, and even like within one network, it's very difficult for you if you want to swap a token pair. When it is not supported by the pools, you cannot swap against each other, and the price varies from various networks and various DEXs. So what we are aiming to do is to provide, like, increase the trading efficiency of the users and to make most profit for them. That's why we came to the idea of bringing building a full aggregator. We aggregate the various DEXs on various public networks to provide traders with one-stop entrance for DeFi tradings right now. So that's how we came to the idea of a DEX aggregator first, to build on various public networks. We are now on 10 public networks, including Ethereum, Solana, Polygon, Avalanche, Phantom, and Charm, etc., and Binance Smart Chain. And we find the best price for users on various networks. And the next stage we are going to do is to launch our cross-chain best price for services. So basically, we are integrating the cross-chain bridges and the OpenOcean algorithm to find the best price for users to swap cross-chains. And also, like, this is the swap part we are building on, and also we are going to aggregate derivative products, because we think as a trader, there are lots of trading opportunities for you to trade on spot and derivatives altogether. For example, there are some spread opportunities for you to trade and do arbitrary tradings between spot and futures, and also you can run your CTA strategies, etc. So we are working along the way to aggregate derivatives besides swap. And on the swap side, we think for the users, because for the users, they start thinking about whether I need to trade on DeFi or CeFi. So we provide the price comparison for users on OpenOcean. You can check the price difference between the best price OpenOcean provided for you across the most public networks. You can check the asset price there, and you can check the price difference between it and CeFi. So right now we aggregate Binance. So after you check the price difference, you make the comparisons, you can make the decision. You can make free choice for you whether to trade on DeFi or CeFi. So that's what we think. We are thinking for our traders and from the users' perspective, what they need when they are trading on DeFi and CeFi.
Yeah, that makes a lot of sense to me, because I think to some extent a lot of people use certain protocols just because you cannot, you don't have all the data, you don't have the full picture about what are the different tools or even markets that are available on all these different chains. A kind of an open-ended question. So when we talk about capital efficiency and building more efficient futures markets or just markets in general, is that more of a development with technology, or is it, what really makes a trader a good trader? Is it just the efficiencies in the technology they're using, or what are some other metrics you guys think about when designing your trading products?
Yeah, I'll start with that. So we kind of think about capital efficiency at sort of two levels. So in terms of the product we're building, there is capital efficiency inside of the DYDX platform. And so a big step that we made with the launch of our latest perpetuals product was supporting the ability to cross margin across all the perpetual pairs that we support. So you can go long on the BTC perp and the ETH perp and then short another perp, for example. And that's all happening out of the same collateral pool. So that's a huge advantage for particularly a lot of the pro traders, market makers, the trading firms that tend to run strategies across a number of pairs. And we're also seeing growing usage of that cross-margining capability from the long tail of users on DYDX as well. So that's something that is encouraging to see from a capital efficiency perspective. And then obviously, as we continue taking steps in that direction to support additional forms of collateral, that just expands that pie a bit. And then the other level that we tend to think about it as well is in terms of kind of interlinks in the market, right? And I'm sure that Joe and Cindy are thinking a lot about this as well, since they really kind of play there. But effectively, aggregators are becoming more and more important at sort of an overall market level, I think, just given the explosion in the number of venues, the different layer ones and different forms of collateral supported. So having aggregators is a great way to kind of make that easier, particularly for the long tail of users. And then also market makers are huge in terms of pricing efficiency across venues. So we also seek to work with and partner with a lot of market makers and aggregators as well.
Yeah, it's it's kind of interesting. You have this world of DeFi. You also have a lot of CeFi products. Would you say that when we're talking about things like perpetual swaps or even futures products, like to what extent did retail users not have access to these things before? Is it a question of knowledge, or what effect does this have on the market, I guess, for people that don't really understand the impact of all of the tools that you guys are building, right? Is it only for, I feel like there's like a misunderstanding. People think it's only for institutions, right? How would you guys explain it to these people for like, even if they're not involved in these products, what impact does it have on the market? Like, is it all bad, just with leverage? Or I guess maybe let's talk about some ways it helps the market maybe mature or grow.
Yeah, definitely. I mean, I can hop in there. I mean, I think generally speaking, despite like more leverage being added to the ecosystem, we're always looking for just liquidity in general. And I think some of the venues that you find the most of that are derivatives platforms. So specifically, it's been a lot of futures contracts or perpetuals on Ethereum. And for us, I mean, we find that this just provides an overall benefit in the sense that there's more liquid markets, there's more trading action happening, you're getting a more accurate price across a longer time frame because of the liquidity that's available across the space. So I mean, for us, I think we only really see this stuff as a net benefit. I mean, I suppose you can get down a few winding roads on whether the leverage stacks up and becomes an issue down the line, and we should be worried about that. But I think generally speaking, these platforms are kind of bring more liquidity to the space, whether it be a trading venue or lending, borrowing. I think that's just a net positive across the board, really.
Yeah, and talking about liquidity, so it's also like one of our future plans to aggregate the decentralized derivatives that we can offer users free choices to choose the liquidity, because you can see like the liquidity difference between various and derivative products. So that's one option we are working on. So to bring the convenience for users to use. And the other thing we are building on is like we are going to build a combined margin pool on OpenOcean to assist users to trade simultaneously on various derivative protocols across multiple networks. So this also increase the capital efficiency in derivative trading. For example, if you want to do long position on DYDX and you want to do short positions on perpetual, so on OpenOcean with one single combined margin pool, you can trade on various derivative exchanges on different positions, and your risk exposure can be offset with the long and short positions. That's something we are building on, and to facilitate users one-stop trading across various derivative exchanges. And we are trying to solve the liquidity issues with this kind of solutions.
So one thing I would add on this point is definitely like, I think the types of innovation that we're seeing in the market and the example that Cindy just alluded to and sort of everything that's happening on that front, I think are things that were largely kind of inconceivable in a lot of traditional markets as well. And so there are kind of a lot of blue sky opportunities coming about in this market just because of kind of the Web3 and sort of open model that everything follows. So I think from that sense, whether you see leverage as kind of a good or bad thing is largely also a function of perspective, in the sense that I think there's a world in which users just take leverage punts and get liquidated and have a bad experience. But there's also a world in which users can get educated on how to use these tools. And of course, implementing product features like position limits and things like that can help lead to a better all-around experience. So that's something that we pay a lot of attention to. And I know everybody else in this space is as well. Just really, how can you offer a kind of an experience where users feel empowered, feel educated, and obviously not coddled, but I think the user experience and sort of the user funnel plays a big part in that. And so that's something that we try to pay a lot of attention to, so that that long tail of users who maybe isn't familiar with this market can get smarter and maybe start taking small amounts of risk and dipping their toes in the water. So I think in a lot of ways, it's also a means of financial education. And we're just seeing a much, much wider range of people get extremely knowledgeable about finance in a way that we haven't seen in prior generations, frankly. And so that gets me excited about the longer term possibilities of the space and everything that's being built.
Yeah, and I think it's interesting when you kind of zoom out and realize like a lot of these tools, people are actively using it to improve their lives, or using it as an alternative, not even using the C5 product. So kind of to quickly talk about, right now in the market, as we speak, there's many ETFs that have launched in the past week that are launching, I believe, today or yesterday, right? There's many coming out with high volume. Do you think that this is a sign that institutions want demand, or do you think this will pass on to some of the retail investors as well? Like, will we start to see these products drip down into people's 401k? And do you think that's how they'll get exposure? Or like, what are some of the cool use cases, just as broadly, I'll ask, that you all have seen people use derivatives for?
Yeah, I mean, I could speak on the ETF front briefly just to kick off there, but I think generally, I mean, I think we've been seeing institutional interest for a while now. I mean, we've had Grayscale's closed-end funds, which are a bit different from an ETF, but still kind of access on the market to a vehicle that holds Bitcoin or Ethereum. I forget what the actual number was on the first day that the first ETF had launched a couple of weeks back now, but a very large percentage of the orders that had gone through had actually been from retail participants in the market versus institutions. And I think a lot of the reason for that is ETF is kind of like a safety package for a lot of people. I mean, it's something a lot more familiar than going out and buying a Bitcoin on Coinbase or trading some Ethereum for an ERC20 token on a DEX, right? So, I mean, I think the ETF kind of ushers in retail to get their feet wet a little bit more. I mean, I don't think it's really kind of bringing users to the cryptoverse, if you will, in the same way that them kind of logging on to a Uniswap or DYDX and actually playing around is going to. But generally speaking, I mean, I think it's just good for the broad kind of adoption and visibility there. I mean, I think retail participants get a little bit more comfortable with the idea using these types of instruments. Maybe they buy some in their 401k or they hold it in a brokerage account. And now they're just a lot more open to kind of crypto in general after that. So, I mean, we kind of see it that way.
Got it, for sure. And in terms of like sort of the frameworks or the policies that are even needed to launch things like derivatives, I guess when we talk about completely decentralized derivatives, I guess can you guys sort of explain to what percentage of people out there or even institutions will use the completely decentralized derivatives, and to what extent will people use kind of a middle ground, kind of a breed, I guess, like not too risky, but just kind of like marginal risk, I guess.
Yeah. So I think it's really a matter of like sort of what I think the preferences of like any given player are with regards to kind of where they value compliance and in what jurisdictions. Like, I think the landscape is definitely evolving pretty rapidly, and from our perspective, like most of the major crypto native market makers are comfortable with the decentralized derivatives landscape, and we're also seeing some shifts in terms of a lot of the traditional market makers as well, working with non-US entities. So I think on the non-US side, there's a fair amount of kind of innovation and participation happening. I think with the US lens, things are still pretty restricted, and we go out of our way to also comply by those restrictions. But of course, like, again, it's not just the US, there's other jurisdictions that pose challenges as well. And so from our perspective, it's a little bit like you're building a jet in midair, and we think that this technology is inherently valuable and useful to end users, and that there's a way to kind of work with the regulatory environment to kind of bring about new frameworks for this sort of internet first or internet native era that we're in. Because I think if you look at a lot of the historical regulatory frameworks, they don't sort of account for the internet, frankly. A lot of them were developed decades before, and they definitely don't contemplate something like Web3, right? So our approach is very much to build as a company right now, but we have this period where we've set a clock for ourselves to fully decentralize in order to comply with what we understand the existing environment, the regulatory environment to be. And once we have a fully decentralized product that'll be something that the team plays a much smaller role in and steps back from to a large degree. So we're sort of committed to that vision and what's involved to getting there. And we're very much working with the regulatory environment to make that happen to the extent we can. And I think a lot of the other market participants, like market makers, trading firms, hedge funds, seem committed to that ethos as well. And like I was saying, a lot of them are looking for ways to get involved now. So I think a lot of this is just collectively society is sort of trying to come to a new equilibrium here, and it should feel uncomfortable, and there's a lot of stuff to work through. But we're optimistic for the future, definitely.
Yeah, as an aggregator, we're now looking into the decentralized derivative products and ecosystem growth on various public networks. And it's easy to see, like right now, decentralized derivative is getting more and more popular on various public networks, and most of them choose the AMM models. So for example, when you look into Binance Smart Chain, they just landed several decentralized derivative products on them, and they are having like large scale liquidity mining campaigns and incentivize users to trade on it. And so that's Avalanche. We talk with them, and they have the intention to bring in more decentralized derivatives on their platform, and NEO as well. As we talk to NEO team, and they also would like to bring in derivative products on them. So the chain is more like, to me, it's more like the DEX is building on various public network ecosystems. The derivative products are going to be more and more popular on various public networks. But again, the liquidity could be an issue for the AMM models, because you cannot support a good liquidity. And also speed is another issue, and efficiency is also another issue for on various public networks. But a layer 2 could be a good choice for everyone to build. So that's why you see, like on Arbitrum, projects are choosing Arbitrum and building on Arbitrum, and some are with order book models similar to DYDX, as we see some new projects coming out with order book models, and they choose layer 2 or various fork chains with high efficiency and to build on. So that's why we see, as an aggregator, there are a good opportunity, or like we can bring benefit to users on various public networks on those, and to aggregate those and decentralized and derivative products. Because like you have like lots of problems, or we can say like lots of trading opportunities on various decentralized derivatives. So that's why we can provide value there by aggregating them and finding the best price, and help users to trade efficiently on them to spot the arbitrage opportunities across various exchanges. So, so that's why we see we are quite positive on that perspective, because we see the policy there, but policy is like on one end they can lead the industry to a healthy growth and long-term growth, and on the other hand, like on other places, different aside from the states, decentralized derivatives can work out there without regulation or issues. So we will see how it goes on, and I'm quite positive with the trend with this development in the space. And I see like it is moving more and more into the direction of traditional finance, and the way people build derivatives on decentralized exchanges are working more and more close to traditional finance.
Yeah, and I think what you all are doing is very important in terms of kind of democratizing access to the market, or I should say kind of access to the data, so you can actually see the layout of different rates and options. And I think just with all the market activity we've seen kind of in the past 5 years, it's very clear that as new products launch, as users get more information. A lot of people are just learning about, how much interest they get at their current bank right now. And then I think, everyone here on this panel kind of either connecting with you guys or just using your actual products that your companies are building. I think they're discovering if they take it into their own hands, they can sort of make more money and use these tools. So one of my questions broadly is, what are some of the competitive advantages, I guess, that centralized finance still might have? Because, I think you guys are really democratizing access to a market that's currently controlled by a very small group of people. So in what ways do you think retailers or different types of traders will be involved? Like, do you think they will always be the source for liquidity? Or do you guys have any creative thoughts about how like a larger CeFi company might be able to enter a DeFi pool or use one of your products?
Yeah, sure, I can take that. So yeah, it's an interesting question, and obviously like it's very much happening and sort of playing out in real time. What we've seen is that non-banks have tended to move faster than any of the banks. The banks are definitely looking at everything, seeing what's going on, and sort of determining their strategy. But I think in a lot of ways, because of where they sit, especially like the 23 primary dealers at the Fed, like they have a large book of existing obligations that kind of hamstrings them, and they just tend to go where like the market collectively goes. And so I think a lot of the kind of convergence possibilities with traditional finance will initially happen sort of outside of the banking side of things and more with like non-bank players like market makers, aggregators, non-bank brokers or kind of payment providers and that world, just because they're not subject to kind of the same existing obligations at kind of the highest levels. And we're definitely seeing movement on that right now. And so I think that gives us a lot of encouragement for DeFi really converging at kind of a more fundamental level with centralized finance long term, not just CeFi and crypto, but also traditional finance. But that being said, like still something that will probably take a bunch of time and happen in sort of very limited ways. We're definitely seeing a lot of connectors come out that want to act as middleware for very compliant players to access the DeFi ecosystem. And while at DYDX, we don't plan to build kind of a KYC version of our product the way some other DeFi players have, we do think there's potential for that middleware to kind of open up access to the ecosystem more broadly and help players with certain obligations kind of open doors they otherwise couldn't. So I think some of that's already happening, and definitely expect more to. But I think the banks could be the last to go. But even anecdotally, just based on conversations I've had with people at banks and talking to sort of enterprise players in the space, everybody's paying attention to what's going on in sort of the Web3 and DeFi side of things. It's more just on their personal time or personal side. And so I think that's also a telling signal for where things are headed. Curious to get other perspectives on that though.
Yeah, and I guess just to add to that, I mean, if I had to pick something that CeFi kind of had an advantage on today, it would probably just be, I think, the general onboarding experience. And by that, I mean, it's just a lot easier for people to, or I should say it's a lot more familiar for people to open just traditional bank accounts or a traditional brokerage account and understand, okay, I hook my bank account up to this and I can deposit money and I'm good to go. I mean, I think using DYDX as an example, if I want to go trade perpetuals on the platform, I need to get some Ethereum and download a MetaMask wallet and bridge the Ethereum over to Starkware. And I'm all over the place at this point. And it's a lot of steps that I think we take for granted just being in this space every day. I mean, it's easy stuff for us, but you kind of give that to the general user and those simple steps, it becomes days of work for them. So I think kind of like Vijay's saying, I mean, you have players that are coming in as this kind of KYC middleware, but you're also starting to see kind of development of more of a abstraction layer, I suppose is one way of terming it. So things like, I mean, OpenOcean might be a good example in itself. Maybe you want to trade on DYDX and all you have to do is deposit some Ethereum to OpenOcean. There's no bridging, or you don't need the MetaMask, like X, Y, and Z. You just cut out all these intermediate steps to make it a lot easier for the user to access these things. And I think we'll get to a point where maybe the user doesn't even know what they're accessing underneath. They have these abstraction layers or this middleware that basically lays everything out plain and simple for them, and DYDX under the hood, maybe Uniswap's under the hood, and you don't even know it. So I think that's probably like one thing that T5's got a little bit of an advantage of right now, but I think the gap is closing pretty quickly.
Yeah, and on that note, I think a lot of the products that we're talking about here, some of them I would say are individual, but I think many of them can kind of be thought of as like a pooled resource, right? You know, and like a quick anecdote, you know, the whole Wall Street bets movement, to use kind of pooled capital, decentralized capital to really make an impact. So to what extent do you guys think that, you know, people will start to pool their capital, and like, do you think the derivatives market will like kind of be fractionalized even more with like different rates? Like, will that, you know, to what extent will the rates continue kind of just descending, I guess, like lower interest rates, or do you think that's directly proportional to the current market conditions?
I mean, for us, I think it's pretty aligned with the current market conditions. I mean, I think that we expect a future where these things begin to compress pretty heavily. Maybe perp funding rates don't get hit as much, but maybe stable coin borrow rates come down quite a bit. Supplying or lending your assets, I should say, comes down quite a bit. But I think we're in the position, at least from CMS, looking out into the future here, I think we've got some time where we come down anywhere near what we're seeing today in traditional markets, obviously, but even coming down to standard 2 or 3%, maybe that's quite a bit off at this point.
Yeah, I would agree with that. Just given how much siloed capital pools there still are, there's still plenty of kind of even stablecoin to stablecoin ARB opportunities. And there's just like a lot more room to come down. So one other thing I think that's interesting is sort of from a market structure standpoint, like the number of venues. So if you look at traditional finance, at this point, you really have only one major venue in the United States, the Chicago Mercantile Exchange, and then there's the CBOE, of course. But you've had tons of consolidation in the broader derivatives landscape in traditional finance. But in DeFi right now, it's very much the opposite direction, right? You're having an explosion in the number of venues of all kinds, even derivative venues. And you continue to have a handful of dominant centralized exchanges. So I think for me, what's interesting is kind of seeing how that landscape evolves over the next few years. And I do think in crypto, there's greater potential for the market to bear a much larger number of venues, just given the variety of layer ones you have, the different ecosystems, the number of tokens that people are actively engaged in. And I think that's part of what makes the market interesting for a lot of people, is just the boundless kind of matrix of ARB opportunities that you have across all these pairs and the tokens and product types. Makes for a very interesting capital markets landscape. So in many ways, like the number of venues in DeFi, like may be part of its overall strength and resilience, but I could also see over a much longer arc of time, potentially some consolidation.
Yeah. When you look into the market size, centralized exchanges constitute like almost 90% still. So most of liquidity and most of users are still using centralized exchanges. So in most places, if you need to trade fair, you still need to go through centralized exchanges to trade fair. That's why like it is a must go way to trade on centralized exchanges. And when we look into the access, some of the tokens, they mainly exist in centralized exchanges. That's why we build a CDeFi aggregator to offer most tradable assets for users to trade. So, and some of the assets, they have larger they have better liquidity on centralized exchanges. Some have better liquidity on decentralized exchanges. So, as you see, like the tokens, also it's very interesting. Even like the CoinGecko top 100 tokens I see like some of them also have the major existence on centralized exchanges. They don't have that much liquidity on decentralized exchanges compared to centralized exchanges. So that's why, like, when you want to trade for large volumes, and sometimes on decentralized exchanges, the price won't be that good. So you still need to go to trade on centralized exchanges. And also there are some price differences across various centralized exchanges and decentralized exchanges. That's why there are some arbitrage opportunities there to trade across indexes and sexes. So we don't see, like, we are quite positive on DeFi, and we start from DeFi. So all we are looking for the solutions is to think from the DeFi traders' perspective. When they want to trade a token, they have more choices. On centralized exchanges can sometimes act as a complement to those DeFi traders if they want to trade on large volumes, and if they want to. Also, Joe mentioned about the cross-chain. So right now, if you want to do cross-chain, you want to have a gas fee on the other network. The most efficient way is to trade through centralized exchanges to get to buy the tokens. And we also think about that solution. So once we launch our cross-chain swap protocols to bring the cross-chain swap solutions to users, and the later stage is we will set our native token OE as gas fee to help users to trade with OE. You can just use OE as gas fee. If you want to do cross-chain swaps across the 10 public networks, we aggregate. You don't need to bother about the gas fee preference. So that's how we see. Only from the trader's view, there are advantages and disadvantages on various on DeFi or CeFi, and we are trying to connect them both to benefit the users.
Right, definitely. And, kind of going back to what we kind of talked about earlier, just kind of shifting the conversation to also just about trust, right? There's some industry leading companies in the industry, people know them, even some of the early aggregators, they trust them. But I guess talking about things like futures contracts and stuff like this, to what extent do you guys think that, people will trust, I guess, their existing bank and have that settlement still happen on the traditional market? Like even a Bitcoin futures contract is still settled in like centralized finance. But I think it's also interesting how some of the large companies are using, for example, Ethereum as a settlement layer. So where do you guys see, I guess, just derivatives in general, or like crypto derivatives? Do you think they'll start to actually be settled in crypto, or will we always have this imbalance where these large amounts of capital there? Is there going to be a way to actually provide enough insurance to get all this capital in?
Yeah, I'll take that first. So it's a good question, and yeah, I think again the landscape is evolving sort of as we speak, but we definitely are seeing a significant amount of at least stablecoin capital come in and into the smart contracts that the DYDX team has built, and so in that sense, we're definitely encouraged by the trust that existing users and the existing crypto ecosystem are willing to place in us. We only support USDC collateral at the moment, though. So effectively, that keeps things simple from a risk perspective. Of course, as we expand to supporting multiple forms of collateral, the logic and sort of risk embedded increases a bit. But that's definitely something we're taking our time to implement. And so in the meantime, we feel pretty comfortable with the USDC that's locked in our smart contracts. And I would say we really hang our hat on the track record of the DYDX team and the smart contracts it shipped, and the flawless track record there. So that's just, I think, something that right now counts for trust among crypto natives. But I also think trust can compound over time, right? So as more crypto natives trust DYDX, OpenOcean, other platforms, that trust starts to count for something in the broader ecosystem among the long tail of users who say are still in their bank accounts right now. And so over time, they start seeing more getting locked up in these systems. There may be like incidences that are not planned, like erroneous liquidations or things like that. But if the system can, as a collective, kind of survive and be stronger coming out of those, I think those can also count for a track record. And we've definitely seen that with some DeFi protocols already in terms of, or even some L1s in terms of having a hiccup, but they came back from that and sort of regained user trust, right? And I think among the crypto native base, there's a great understanding of the fact that everybody is building a jet in midair. So I think crypto natives are forgiving of those mistakes at a system level. And that sort of allows a lot of the R&D and innovation to happen and get to a point where everybody can collectively take these products out to a much broader ecosystem of non-crypto natives and start seeing adoption with the help of abstraction tools like Joe was talking about earlier. That's kind of my take on it, but curious to hear others.
Yeah, I mean, I think I would generally agree there. Like, I think from my standpoint, I mean, generally speaking, trust is kind of like this perceived notion, right? And in a sense, it's like, how do you get there? I mean, with things like blockchain networks, you have the whole don't trust, verify. So I can go and check that something actually happened the way it said it did. And then I can go ahead and trust that things are working properly. I think kind of like Vijay is saying, it's going to permeate out from a lot of these kind of ground floor users that are comfortable right now. I mean, I think a big hurdle for just totally non-crypto native people is once they come to play with this stuff, it's kind of like you're by yourself. I mean, it's very much the Wild West. You're not calling up your bank teller or some support staff to help you. Maybe there's a developer channel in a Discord somewhere where you can find some help, but you're very much on your own. And I think that's a little scary for a lot of people. So I think as the kind of core crypto user base continues to grow and these things are kind of tested over time, it's really just a matter of signaling to the broader, I guess, population that this stuff, I mean, works how it says it does. And I mean, here's X, Y, and Z cases across the board of this going this way for these people. So I think it's just kind of this perceived notion that will eventually kind of be learned.
I'm trying to like telling some examples from our community, which is very interesting to us because we, at the beginning, we were quite conservative in aggregating the DEXs and listed tokens on OpenOcean. And some community members just came to approach us and push us for faster listing on lots of tokens that newly exist. So we are quite conservative about that, but they said, don't worry about this, we will take the responsibilities. We don't mind whether they are scams or not, we just want to trade on it. So that's why you see like the DeFi users, their risk appetite are quite high and their tolerance levels are quite high. So I think this is kind of interesting when you see people get used to that, and also it's like we have lots of tolerance for people to do RMDs, and even you are not perfect, people are willing to try to use the new projects, and to new projects are motivated to apply their new technologies in DeFi, which is very different from traditional finance. And this is also the thing that is keep this industry moving ahead, because the tolerance levels are high, and people incentivize and people appreciate innovative solutions, and they are willing to try out.
Yeah, people really appreciate, you're totally right. They really appreciate when there's innovation in things like pools or even, I believe OpenOcean Atlantic, you guys launched trying to make the aggregation more efficient, capital efficiency, and give people, an easier way to swap these tokens. I think we were talking about that earlier. To kind of end things off, kind of just like two last questions. I want to give you each a chance to kind of talk about what are you guys most excited about in the next 6 months. But first, just a general question. To what extent does this idea of tokenized liquidity, right? Like right now, you get a loan from the bank. Not many people just, you have to put something up, right? But this idea of tokenized liquidity, the liquidity that you have right now, you could go to a pool and borrow against that. So do you guys believe that this is an important structure to DeFi? Or do you think, for example, uncollateralized loans and opportunities will start to see that?
Yeah, so I mean, I think we're definitely starting to see some more uncollateralized platforms at least start building. And a lot of this kind of revolves around building what people are calling like a DeFi credit score, if you will. So kind of evaluating their on-chain actions and determining how much to lend out to this user. There are a couple of platforms that are even doing things like integrations with Plaid, where they will go out, you type in your bank information, Plaid goes and kind of runs a diagnostics on your spending habit, and then they can issue an under collateralized loan or uncollateralized loan against that. So, I mean, we're definitely seeing that come to the forefront. But I think generally speaking, I mean, like the essence of all of this stuff really is that it's supposed to be open for everybody. So, I mean, I think the ability to go out and kind of lend or borrow or park your assets over here, maybe you mint a stable coin with them in a CDP. I mean, I think that's really like the underpinning of what's going on here. And the intent is kind of keep this stuff as open as possible. And I think that's kind of the ethos of what's going on, at least right now in DeFi.
Yeah. It's like having that collateral is a way to really keep the system open and sort of sustainable. So would definitely agree with that. At the same time, I'm curious to see kind of how the uncollateralized innovations develop as well, just given that those could potentially unlock kind of further capital efficiency at a system level. But yeah, they're probably more designed for kind of more targeted use cases or kind of specific audiences versus a general purpose all access platform.
Yeah, we also like see collateral evolving so to uncollateral, and there are more and more cases there are more cases emerging, and this also increase the liquidity. And we are excited to see the involvement in the innovative solutions in DeFi spaces. But again, like trust is also an issue that we need to pay attention on. So that's why you see like credit scores and lots of projects they are launching this kind of credit scores or to borrow the credit system from traditional finance to DeFi and to help the development of uncollateral and to release more capital efficiency into the market.
Yep, I think you all gave great answers for sure. I think it's just like an interesting open discussion. A lot of people are getting excited that a lot of the bigger players are getting involved, but totally agree. This idea of openness, democratizing access to either information through markets or even all the great tools that you guys are building are super important. I definitely think, yeah, it's going to take some time, but people are going to learn, based on all these great innovations in technology. They're eventually going to learn, as they did starting with the wallet. I think to end things off, if each of you just kind of want to talk about what are you most excited about, either with derivatives or DeFi in the next 6 months, anything that you would like to see get built. But it was great chatting with everyone here today on the panel.
Yeah, thanks for the time today. So I'll just go first here. I mean, I think for us, given that we kind of play around on a lot of different chains, a lot of different platforms within each chain, I think we're getting pretty excited just about kind of how the bridges are going in this ecosystem. So we're starting to see a lot more kind of streamlined interaction between chains. And I think these things are in their very early stages still, but you have quite a few platforms where you can bridge assets from, say, Avalanche to Ethereum, But I think what we're excited about is to see a platform come to market that really streamlines these things. At this point, you've got protocols all over different layer 2s, you've got them on different chains, and there really hasn't been something that just brings it all together in an easy way. I mean, it's still a process to kind of bridge this stuff. So for us, I mean, we are keeping our eyes peeled kind of on the interoperability front, and then just kind of development on bridges in general and how these can get a little bit more efficient in moving things around, whether it be between just different platforms or external chains.
Yeah, I can go next. So I definitely echo that a bit, just in terms of interoperability, whether that's solutions like Wormhole or even aggregators like OpenOcean, I think serve a big role in interoperability as well from the end user perspective. So definitely excited to see how that develops. I think for me, something I and the DYDX team are spending a lot of time thinking about is kind of enriching the end user experience in a Web3 context. And of course, for us, that's largely with the DeFi lens and kind of a derivatives trading lens. But how can we sort of create a better user experience? So whether that involves some degree of gamification or some kind of crossover with the NFT and the play to earn ecosystem, and really just seeing more convergence between financial infrastructure and what's going on kind of the NFT and the gaming side. Because a lot of these games and NFT ecosystems are becoming universes in their own right that kind of have things that have to be traded for each other and sometimes go down to a layer 1. And so you have all these different aspects that I think sort of increasingly will cross over with sort of the financialization side of things and what's going on in DeFi. And so super excited for the innovation, kind of the weird, new, interesting things that pop up at that nexus. And that's something that we're paying a lot of attention to as well.
Yeah, and yeah, as an aggregator, we're excited to see the things getting more and more decentralized. That's why, like, the aggregator makes sense in a decentralized way. So when we look into the NFT markets and metaverse, we are quite excited to see opportunities there. So we would like to keep eyes on the development and evolving of NFT, and we are thinking about how an aggregator can play a role in NFT. So that's one way we would like to see more interesting things happen in NFT and GameFi. And also, like, we would like to see a real decentralized bridge and exist in the market that would be very beneficial to the users, because right now the bridges more or less are centralized. In a centralized way. So if there is any like real innovation solutions that can bring out the decentralized solutions, that's great. And the other things, like on Web3, we are looking into Polkadot and the Polkadot ecosystem as well. So we are landing on the aggregation of Polkadot ecosystem, and we are looking forward to see more and more mature products coming out and real applications coming out on Polkadot ecosystem.
Love all the different angles each of you gave. It was a pleasure having you here, Joe and Vijay, and thank you to Cindy for setting all this up with us, for supporting Reimagine. And I hope everyone watching this go back and watch it again. This was the OpenOcean kind of derivatives and innovative trading panel. And as usual, I'm your host, Roshan Rashkar, and I'll let you all tune back into Reimagine 2021. Thank you.
Stay tuned. We're about to wipe the floor with this one.
I'm Robert Davi, and you're tuned into Coins, the only podcast that might literally set you free.
Welcome to the podcast Coins. I'm your host, Patrick McLean, and I'll be joined by a panel of experts.
Sitting here today with Eric Voorhees.
I
I'm Sheila Warren.
Happy to be here with Dave Jevons.
I'm Asif Herji. My name is Bill Barheit.
We have Paul Brody, Whitfield Diffie. Mark, how you doing today? Kosala Hemachandra. Sitting here today with Dan Hell.
My name is Luke Kerner.
My name is Bruce Fenton.
I'm Nick Carter.
Melton Damaris.
Raoul Powell.
Roger Vare, Lynn Ulbrich, Anthony Scaramucci, Alex Mashinsky. I get to sit here today with Charles Hodgkinson,
Sam Bankman-Fried,
Nathaniel Popper,
Paolo Ardoino.
Could we define this as a war?
Welcome back to Reimagine 2021 version 11, our virtual conference series, bringing you nothing but the best projects, bright minds, and leaders in the space with a focus on what's up next. My name is Miguel Vasquez, and up next with us today is Asaf Naim, co-founder and CEO of Kirobo, the startup with the challenging goal of protecting crypto end users from human error. Kirobo recently launched Retrievable Transfer, a technology they're saying is the undo button for Bitcoin and Ethereum transactions. Mr. Naim, what made you start Kirobo and why? I think we're all very familiar with the situation you're trying to prevent.
Basically, I'm an accountant. I have a master's degree in taxation, and I taught myself how to program. So I have a friend that established a tax division, and he asked me to join and run the tax division because I have all the knowledge and also the technical background. And after a few months, one of the clients asked me to report losses because he sent money to the wrong address. And then this is the first time that I actually thought and understand that it's possible. And I thought it's unbelievable. And this thing has to be fixed. And this is how I established Kirobo.
So what does Kirobo do? So I know are we already there? And then also I saw the peer-to-peer swap as well. Maybe we could talk a little bit about that.
Kirobo basically the vision is to making blockchain as simple as online banking, in the meaning that you just do, you don't even think about it, right? So we identify three things that actually cause loss of money. The first one is when you send money. So a lot of people made the mistake, and actually 80% of all users afraid to send money. This is why we send two transactions. The first the $1 and then the big amount. And the second one is the ability to lose access to your wallet. I think this is huge, and we will soon reveal our solution for that, and also the inheritance. So if someone died, the money is gone forever. And I think that in order to build a sustainable ecosystem, this problem has to be addressed.
Definitely. Yeah, those are some big problems, especially if you haven't set up beforehand before you die. It's kind of everything, it's gone. What do you do? But how do you undo a transaction that's already been confirmed or completed on the blockchain?
Basically, it's a unique transaction with a passcode. You interact with our platform like you connect to Uniswap. So with every wallet, basically 90% of all wallets, and then you generate the transaction with the passcode. The money is deducted from your account. You see the transaction on the blockchain, and then the recipient needs to connect to the system. He see the transaction, he see the money, but he needs to type the right passcode that you generate. As long as he didn't type the right passcode, you can retrieve the money back. Once you do, you can't.
So we're talking about more of this is going to be a layer 2 network, something that kind of sits on top of another blockchain, correct?
No, this is we build solely inside the blockchain, so it's a solution inside the blockchain, not layer 2, and we are not a custodian. We never touch the money.
So maybe we can just kind of branch off from there into what does the token actually do? Because I was poking around a little bit and I saw that you do actually have your own token.
Yeah, we have a token. Again, we will reveal the backup and inheritance solution very, very soon. And without the token, the backup and inheritance basically will be centralized. So in order to avoid that, we have to have a token that motivate people to help you once you lost access to your wallet or if someone died. But I cannot reveal more than that. So, but in order to do that, you have to have a motivation, and the motivation is by our token. And by the way, I can only say that you set up rules in advance, and this rule sits on the blockchain, and if something happens, someone trigger these rules. I think it's very interesting concept because I just mentioned two problems that can be solved with that, the backup and inheritance. But imagine more things. For example, if you want to do arbitrage, so you can set up a rules that if price on Uniswap is this and on SushiSwap is that, then you sign a transaction and this transaction execute only in the right time, and whoever execute this transaction rewarded with the coin that function as a reward mechanism.
Very interesting. Yeah, that's quite unique. What other exciting things does Kirobo have coming in the near future?
I think that the idea is to build the safety net. So, for example, if you are a new protocol or even existing protocol, you can build on top of what we are doing or to interact with us, and basically your customers has a safety net. So, for example, if you provide liquidity and your LP token is stored as we revealed in the next future, then this LP token has a backup mechanism. Basically, if you lost access to your wallet, you will not lose access to your assets. And if someone died, God forbid, so the family will receive this LP token and will have they will have access to the funds.
So we were talking about, kind of building it out into the future and stuff. Are y'all going to offer DeFi services for all users, like trading, staking, maybe NFTs and stuff like that?
Yeah, in the solution that we will reveal, everything can be stored inside. So you can store your NFT, you can trade directly out of our technology. Again, it's our technology, not our custodian. So you simply take our technology, deploy that, and from this moment on, and again, you can interact with any wallet. And from this moment on, you can swap, you can stake, you can store your LP, you can do whatever you want, and the rules that you set are here to stay.
Interesting. I was going to ask as well, I saw about the token that it said, or at least I saw a headline that said whale proof. Is that something that's going to be revealed soon, or do we already know how that's possible?
No, it's something that we did in the past, but it's not relevant anymore.
Outdated. Okay, no, unfortunately, the search continues for the whale-proof method, right? What do you see? And talking about whales, it's getting normalized kind of in the financial industry, the biggest whales of all, right? Where do you see the crypto and blockchain kind of heading in the next few years? El Salvador, they've normalized, they've made, Bitcoin their national currency. What do you think about that and just kind of the future of crypto in general?
I think that the country that will normalize crypto basically will be the next innovation country that everyone will wants to go through. And the problem is that crypto, DeFi, crypto, DeFi, and whatever, it's a different form of money and finance institutional, and as long as as fast as the country will adopt that, it will happen, and it can be more secure than what it is now. Because, for example, if you take US regulation, you see that they are against or basically block most of the innovation. And for example, they make a hard life for Uniswap, but no one knows who run PancakeSwap, right? I don't know about that. So basically, you see a lot of projects that are faceless. So it's not going to add security, but it's the opposite. But if they do a light regulation, and they address this correctly and embrace the technology and not against the technology, I think it will be much benefit for all the players, the countries and the user. And I want to say another statement. I think that if someone, let's say that someone now invented the cars, right? That we all drive all day long, no one in the current regulation be able to drive cars, because back then when they invented the cars, the regulation that wasn't so hard and difficult, and you can see that with drones today, the technology is there, right? Me and you can fly in drones today. I don't know if you know that, but basically the regulation is killing that, and this is not the way to embrace technology and change.
Yeah, absolutely. I think we share a YouTube algorithm, my friend, because I'm getting that on my YouTube as well. The single person planes is very, very exciting. Yes, and I do agree with you that it does have a tendency to choke out innovation and all those sorts of things. You see the way that they treat some of the innovators in the space. What do you think about things like DAOs, or maybe even central banking digital currency? Like I believe the Fed just released something on stablecoins. Do you think that could be a way for them to effectively get involved without being too restrictive?
Yeah. Listen. Today, let's say, forget about crypto for 1 second. Let's say that you have $1 million. Where do you park this money, right? If you are not invested, so basically you will park this on your bank account. And your bank account take this money and make, like, deliver loans to other people. And basically the bank system make money out of your money, but you will receive fraction of that, if any. And the reason for that, because there is no competition. Where do you put this 1 million? Do you take this as cash? No. But the movement that you just described basically allow anyone to hold this money in his wallet. So let's say that USD will become a blockchain-based currency, like in China. So basically, you can hold your money inside JP Morgan, Bank of America, or whatever, or you can hold this in your Ledger, Trezor, MetaMask, or whatever. So then the bank will chase you in order for you to deposit the money inside the bank so they can actually loan the money. And actually bank, you remember Madoff system, right? Madoff was a fraud. But basically the banks do it every day. This is what banks do. They take your money and loan this to other people. And let me tell you a secret. If you give them $1 million, they take this $1 million and make $10 million investment on the same $1 million. They actually create the money. So, and this is legit, because this is like they operate according to what the state allow them. So I think that if we do it on blockchain, first of all, they cannot produce any more money. Only the government and not the bank. And second, they will start paying you for allow them to take your money and to loan that money to other people.
Exactly. Yes, 100%. I agree with everything you just said. And also, if anybody doubts what this man just said, just Google what reverse repo actually is and why they won't let individuals do it, but they let banks do it. And so I do agree with you that some of this DeFi is really allowing people to get on the other side of that kind of equation that banks really have been on one side of for so long. So what is something that you can kind of see in the DeFi space, maybe even with Kurobo? You were talking about some of the swap platforms before. I've already expressed that kind of to my friends about, hey, we could get on the other side of the equation with some of these things. What is another avenue up that route that you kind of see kind of evening the playing field?
You mean on DeFi, right?
Yeah, yes, sir.
Yeah. So again, I think that I mentioned that. I think that the DeFi movement now is in the beginning. So a lot of problems today. For example, I don't know if you know, but if you buy, let's say let's take CeFi. So let's say that you are in Binance and you want to buy or sell something. So you can have an order as the market price, or you can have a limit order. Most of the people do limit order. No one said like market price, right? Because you lost a lot of money. You let's say that someone offered to sell 100 Ether for $4,000, and then someone wants to sell 100 Ether at 4,100. Then if you buy 200, basically you pay 100 multiply 4,000, and then 100 multiply 4,100. So this is the market. The limit order said that you're only willing to buy at 4,000. Now, I don't know if people know, but when you buy on Uniswap, you actually buy on market price. So you take the entire range, and this is why the slippage is so big. And people actually lose money because of this, and they don't even aware that they especially in small pools, that they change the price when they buy or sell. So I think that one of the biggest problem in DeFi currently is the ability to create rules that will trigger by mistake, that will trigger according to a call. For example, if the price hit 4,000, then buy. If the margin between Uniswap and SushiSwap is above 2%, then buy and sell. So there is no simple way to do that. Obviously, you can be a programmer and try to build a bot or something like that. But even so, you need and also oracles. But even so, it's not that simple, and it can only address one issue, not 10, 30, 50, 100 different issue. And I think the new method that we will reveal soon will allow you to make whatever you want, like sign a wishes. You can sign whatever you want, and actually the community will execute your order according to what you define.
That's very, very powerful. So is that kind of what's something, I guess, you would like to leave our viewers with, and then maybe something exclusive that you want to kind of leave the viewers with to excite. I know you've been teasing a lot.
Yeah, I can tease now a little bit, but I don't know if you interact with Uniswap lately. So you see that the gas price is very, very high. Imagine that if you use our service, you don't need to pay for this gas.
I'm pretty excited.
This is what I can say. That's it.
You saved me about, I don't know, $20-$30 a day easy, and that's a slow day. So I think everybody out there, everybody out there should be very, very excited. So Mr. Asaf Naim, he's with Kirobo, a name that we will not soon forget, because I will be back. I will be back taking a look to see, because I'm sick and tired of paying for gas. You know, I'm sick and tired of paying for gas in the real world. So
exactly.
All right, Mr. Naim, it was a pleasure talking with you. Thank you. Have a great rest of your day today.
Thank you for having me.
Don't you dare change the channel, cause we're going ape shit.
So hello everyone, very happy to see you all here. My name is Michael Pearl, I'm the COO of Kirobo. So we have just celebrated 13 years since the launch of the Satoshi white paper. And we're about 2 years in since DeFi came to our lives. And you know, crypto has made a very long way from being just a fringe thing for computer geeks to become a real asset class that really can't be ignored. Right, we see crypto everywhere. More and more institutional money is pouring into crypto. We see crypto payments that became a very common thing, and that's definitely a good direction. But having said that, I think we're a very long way from mass adoption. Crypto has still a lot of problems, a lot of hurdles. You know that crypto is very cumbersome. Not many people know how to use crypto. People need to, you know, educate themselves, and people need to read a lot and make a lot of mistakes before they can actually interact with crypto. More than that, crypto has a lot of problems in terms of risks. People are losing their money due to transfers sent to the wrong address. People are losing their keys. People are losing money due to scams. So I think it's safe to say that crypto has a very long way to go before we can come even close to mass adoption. So the premise of the panel is how to make crypto as simple and secure as online banking. That's what we want to talk about here. Online banking is obviously not the perfect model because it has its problems, but we still trust it and we still use it. And we want to see how we can make crypto much more accessible on our way to mass adoption. So with us, we have an amazing panel of some true OGs of the crypto and the DeFi space. So I will let you guys introduce yourselves. Doug, why don't we start with you?
Sure. So my name is Doug Leonard. I am CEO of Hi-Fi Finance, and we are a fixed rate lending protocol that is planning to launch on the Ethereum network. And we formerly were known as Mainframe. And so we've been through a couple of different iterations within the space over the past 3 or 4 years. So that's a bit about me.
Hi guys, I'm Asaf Naim, Kirobo CEO. I'm in this space since 2013 and established Kirobo in 2018. And that's it.
Great. Oleg?
Yeah, hi, my name is Oleg Ivanov. I'm basically a co-founder of 3 divisions. One of them is called initially Crypto Bazaar or CB Capital, where we invest early stage in different projects. We've invested in about 17 projects, 70 since that time, and we continue doing that. I'm very proud to be one of the investors in Kirobo and Mainframe, actually. We also became very active in DeFi space with our Berezka DAO, which is an asset management managed in the form of a DAO with basically the governance and channeling liquidity across different protocols, farming protocols in Ethereum ecosystem, and moving on to Binance Smart Chain. And also we're helping other asset managers to deploy their own DAOs to manage assets across DeFi ecosystem. I have to apologize because I'm actually just jumped out from the conference in Lisbon right now, so that's why the environment here might be a little bit loud, but happy to be here.
Yeah, it's a good chance to remind that a lot of things are going on now in the crypto space, a lot of events. Thankfully, after COVID has kind of declined, so to speak. So me and Asaf are in Lisbon as well, and Oleg is here with us. So guys, so let's start with a question for the entire panel. I want to ask you, what's the most pressing issue that curbs the growth of crypto? We mentioned a few, but I want to hear your idea about what needs to be done. What is the most acute problem that is curbing this growth that we want to see? So Doug, let's start with you.
So the way I think about this problem is 2 major kind of initiatives. One is UI UX. You're never going to get the grandmas and grandpas and older generation into this with the need to manage a seed phrase, private keys, and the inability to reverse a transaction. It's too scary for them. They would rather have a professional do it. And quite honestly, that's what our banking system does. Anytime you try and wire out a large sum of money, you have to go in to the bank, talk to a teller, and then they help do it for you. And that's to help avoid scams. They can, they ask you a lot of questions about where the money's going, and then assist you in it. And then the second is that nobody wants to pay extremely high fees for doing anything, and so we need blockchains that can scale and keep up with demand. Right now, Ethereum is failing all of DeFi because it is such a great idea. It is so popular that it has outpaced its ability to scale and keep up and be manageable. And so we're seeing segmentation within DeFi of people going to Binance Smart Chain, Polygon, Solana, other alternatives because of those high fees.
Good. Oleg?
Yeah, I would definitely agree with what Doug has just said. Of course, the UX UI is far from what the general community is even used to right now with all our phones and all our web pages that we access through our notebooks. But at the same time, what I think we should also add to the basket not only the security level of all the transactions and the foolproof, let's say, systems where you make a mistake and you're punished for this badly, right? I guess this would, I would not eat the lunch of Asaf. I'm sure he would have a lot to say about this with his solution. But what also I think we have to look at is basically the business application of blockchain, because apparently, if you look historically at where blockchain was used and it is being used at the moment, starting with Bitcoin as, in a way, a remittance service, like your version of Western Europe, right? For like, you know, trans-border transfers of your value. Then you had Ethereum with the launch of ICOs, which was basically a version of crowdfunding via this platform, right? Now there is this the launch of DeFi, or basically primitive banking products with exchange of currencies, and then your traditional deposits and lending of your assets within the automated ecosystem. Coupled now with NFTs and of course the GameFi, which is a huge thing that is picking up right now, where you have actually a totally different class of people joining the ecosystem, which are not the gamers, but actually the guys who would have a lot of time on their hands and otherwise would be just, you know, using this time to flip TikToks or whatever else, and they're now spending this time on playing Axie Infinity or some other things to earn money in crypto, and that's why they have to onboard. They have to learn how to use these interfaces and actually participate actively. So I would say business applications in like big chunks and big verticals that are coming in. This is very, very exciting for us.
Thank you, Asaf.
I think that the major thing here is to not to eliminate the option to make a mistake, but to make human mistake reasonable. For example, today, if you are logged into your bank account, you see on default, you see lost password. Here you can recover the password. So I'm agreed that UI UX is very important, but it's important, but it's not mandatory, meaning you can have your seed or your private key as of now. Also, you can improve that. Obviously, it will be better, but to make it possible that if you lost them, you will not lose access to your money. I think this is crucial. And for example, mistakes that can happen, and a glitch is still happening every day. For example, the other day, I don't know if you guys know, but we, the first product that we launched is the undo button. So if you accidentally send the money to the wrong address, you can retrieve the money back. And someday a guy came to our Telegram group and actually said that he lost 96 Ether that he sent to the wrong address. So I asked him, how you send 96 Ether to the wrong address? It's like 220,000 USD. So this guy said, listen, I monitor this address on Dextool, and the activity that these guys did was very, very appealing to me. So I decided to do the same. I go to my Binance account and then transfer 96 Ether in order to do the same. The problem is that instead of transfer to my address, I actually transfer to the address that I monitor. So imagine this guy sat in the morning and he drank a cup of coffee and he said, it's a nice day, this is a nice activity, let's do the same. And suddenly $220,000 gone. This cannot be happen in a functional finance ecosystem. And today, if you made a mistake in the bank, you can call your bank, you can call your teller, and in 99% of the cases, they will give you the money back. And also, I think that the ability to lose the entire assets if you lose access to your wallet, or if someone died, God forbid, so the family is crying on him and on the money, it's unreasonable, and I think this should be solved as soon as possible.
So Asaf, you mentioned the undo button that we all probably know, and you mentioned that there are more products coming up. So I have a question: how, obviously, in your opinion, those products that you're about to launch, if you can reveal something about them, how will they change the crypto ecospace? Will we see a safer, easier to use crypto after you launch those products? And again, if you can share some more details, it would be very good.
Yeah, I cannot share everything, but I will share what I can. So basically, we build an infrastructure that can facilitate backup and inheritance in a decentralized way, and it will become an infrastructure for other product to build on top on our safety net. So, for example, if you provide liquidity and this protocol interact with our protocol, so basically, if you lose access to your wallet, you will not lose access to your assets. Or if someone died, God forbid, so you predefined the exact address that the money needs to transfer to, and it's all decentralized. We never touch the money. It's simply technology that controlled by the blockchain and the community, obviously.
Interesting. Doug, so you're in the business of crypto lending. I wanted to ask you, how can we boost access to crypto loans, both for lenders and borrowers? I know that crypto lending is steaming hot right now, but I'm sure that there are a lot of populations that are unbanked. And I'm sure that on the other side, there are a lot of either high net worth individuals or just plain people that would like to lend money to other people and help them and earn some money on the way. So what do you think needs to change in that respect?
So I think we have to change the form at which we get access to this. So I think we're going to see an emergence of hybrid type organizations which interact with the blockchain on your behalf. And they'll take on the form of neobanks, which are these banks that basically only have a storefront in your iPhone or Android device. And on your smartphone, you'll access them. You'll be able to deposit your crypto and you'll be able to wire in money. And so this is, kind of a specialty space that is going to emerge as the yields in DeFi remain much, much higher than, on Wall Street. And so insofar as this asymmetry exists, there exists an opportunity for entrepreneurs to step up to help onboard, the next group of people into DeFi, and then they don't have to worry about keys, where they do get and so I think we're going to see an emergence of these hybrid type organizations where they're not maxis, where not your keys, not your crypto. Well, not everybody actually wants to manage their keys, and they do want to have someone hold their hand. It's hard for a lot of us who've been in the space for the last decade to imagine that somebody would be okay with that. Watching Mt. Gox happen, watching these different hacks, the DAO, they do want an expert who can vet different projects so they minimize their smart contract risk and leverage asset classes that have recourse. When you look at some of the stable coins that are more centralized, like USDC and Tether, they come with certain benefits. Whenever protocols are hacked, they're able to reach out to those entities at Circle and have them freeze the funds. And so there are trade-offs. There are certain people in this space who are trying to build a fully decentralized, maximalized type future, and we absolutely need those people, but it's not going to be the only way to interface with this opportunity. There's going to be a whole spectrum.
So it's interesting. You're saying that the future of the decentralized finance lays in the centralized tools.
Absolutely. This is something people are already familiar with. One of the hardest things to do is to change consumer behavior. And so you need a form factor, and you're seeing it with things like Square's Cash App, PayPal. They've started taking steps forward in adding crypto as payment options or investment options, and it's very limited in what it can do today. But all of these apps are trying to take on the broader banking industry and be where you park your money. And so the way that they get an edge ahead of banking is they get to these new innovative tools that the younger generation is really excited about, and start building up customer loyalty and offering really good customer service as they evolve their offering in crypto.
Interesting. So Oleg, you mentioned the projects that you guys invested in. You're in the business of investing, and to invest in a project is to somehow try to predict the future, right? To see what are the next trends. So I wanted to ask you, what type of projects, in your point of view, will dominate the crypto sphere in the years to come?
Well, it's a very hard one, of course, because I mean nobody has a crystal ball, right? And it's kind of a it's probably not as bad as your casino, but it's still something that you would try to logically predict in terms of what are the current bottlenecks in the whole ecosystem, what would make sense to actually solve those bottlenecks, and which approaches might actually do that. And then trying to be among the first ones to finance it, or help with the whole infrastructure that you have with developers and the networks and community and so on. So, and of course, having said all that, our biases, right, and all our background. So that's why some of the things that we see and we invest in does not necessarily mean that we would be right, because there could be some other solutions and directions where we would be not specializing in. So take NFTs, like the art part of the NFTs. So we are totally, like, our team is totally unaware of all this industry or the rules in it, and that's why we cannot be touching it anyway. But the technology of NFT, the stuff that we're using for this as a technology, like allowing pre-coding NFTs in DeFi, like that, the things that you're using now in Uniswap v3, for example, or in DAO infrastructure, that is very, very exciting and interesting. So to summarize, apparently the trends that everybody is watching at the moment are the GameFi or play to earn, of course, because it's pretty much understandable in terms of what people are trying to do there, the teams are trying to do there with the new types of games that are coming in. So they are pretty much similar games with similar gameplay. It's just the motive is different. So you spend your time not just to sort of, receive some affection or just some pleasure, right? But actually to earn money. And that has become a very, pretty much a breakthrough with the Axie Infinity and the other games that are coming in with Mythic Quest and so on. Especially after the pandemic, when so many people in so many parts of the world actually lost their jobs and were on the brink of financial collapse. And now, especially in this not very well-off countries, of course, this opportunity with pretty much like hundreds of thousands of players right now in Philippines, Indonesia, lots of places in in Africa and Latin America. These people can, spending 3-4 hours a day, they're playing practically. Otherwise, they would be spending this on, Angry Birds or just flipping your Facebooks or Instagrams or TikToks or whatever. They're making, $200 to $400 to $500 a month, which is like huge amounts of money for them and for the economy as a whole. So, of course, all this thing is one ecosystem with the games, with guilds, play of players, right, that are providing knowledge and the capital to this ecosystem, and of course the link to the liquidity in DeFi that is definitely going to go there. And these are like the areas that we are personally looking at very, very deeply. And the second thing, of course, is the whole ecosystem of DAO, because we do believe that this first attempts and the current infrastructure is definitely not there with the pretty much understandable verticals, right? So when you have a group of people, usually if you want to coordinate them in this or that activity, then you would need specific tools, and the tools are quite understandable. So you need a group. I mean, you need them. You need a place for them where they can discuss things. You need tools for them where they can initiate votes and process those votes so that everybody would agree what they do. They need a storage for their assets or a treasury where they would manage those treasuries. And they definitely need some dashboards to actually see the traction of how they perform, and their assets, their treasuries, or something else. And that right now is pretty much scattered all across different solutions in blockchain. And there is not a single unified solution for DAOs to move on. Not even to, if we don't even cover the legal aspect of it, just in terms of the tools. So that's very, very exciting for us. And at least these two verticals were diving very deep into it.
Interesting. Asaf, let me ask you about the first vertical that Oleg has mentioned about NFTs. So NFTs are obviously a new thing, and many people refer to them as sort of the way that we look at meme tokens, right? Something is still missing there, something is lacking. What do you think is missing in the infrastructure of NFTs in order for them to become a more serious asset? What needs to change there?
I think the way to trade NFT now is pretty lame. There is only a few infrastructure for that, and it's costly, and you can't even tell if it's like the fake or it can be falsified in very easily. I think the first thing is to trade or to sell the NFT to a specific person. This is very, very important, and this is why we create the peer-to-peer swap with NFT. And second, I think again, if you buy an NFT that costs a lot of money and you hold this in your wallet and you lose access to your wallet, I think it's imagine that this guy that bought the NFT at $59 million, I think of this NFT, how he got it. So obviously this guy will hold it in custodian or something like that. But if you hold NFT 500,000 USD, $1 million dollar USD, and you trade and you want to and you try to sell that and everything, so I think it's this problem has to be addressed.
Okay, Doug, let me ask you from a regulatory standpoint, what needs to change in order for the soil to be ready for the next step of DeFi? What's keeping DeFi from growing right now from the regulatory standpoint?
On the regulatory front, really, it's just clarity. There's a lot of speculation on these ERC-20s tokens, whether or not they're securities. And the really interesting thing is you may end up launching a token that is not constituted as security, but in time, as governance proposals make changes to the smart contracts and update the ecosystem around that token, you can have something that becomes a security. And so there's this very fluid kind of transformation where never have we had an asset class that can shapeshift and move from looking more like debt, or looking more like stock, or other types of securities, a stable coin or a deposit account. We've never had something that can take on potentially any form. And DeFi moves so fast that by the time I think that we get clarity from a regulation standpoint, we will be so far beyond that we will already be in a state that lacks clarity again. It's my belief that individuals will invent new types of money regardless of what type of rules. So if governments come out with rules that kind of block access to this type of innovation, there will be new types of money that meet those rules and are potentially just dumber. And I think this is what gives a lot of credibility to the meme coin, meme is the fact that it is safer, at least I'll speak to the perspective of the United States regulatory environment. It is safer to launch something with zero utility that is a joke, something similar to Dogecoin or Shiba Inu, than it is to try and do something that seriously pushes the space forward. There's a lot of safety in it being a joke. This is one reason why I think that we will see much more adoption of NFTs, because the space around understanding art as an asset class is very well defined, very well understood. These things are used as collateral. These things are valued using certain techniques, and I think we will see sort of this culture of crypto take on even more of kind of the NFT form, especially as we get clarity on as to whether or not these assets are securities and what the implications are, and whether or not world governments are willing to acknowledge that we have something distinct that can take on different forms and might need its own class of regulations for itself.
Interesting. Oleg, let me ask you, Ethereum is no longer the king of DeFi, or at least it seems that that may change in the future. And other blockchains are constantly growing and challenging it. We're now at the Solana conference. There's also obviously Polygon and Binance Smart Chain and so on. What in your view is the next infrastructure for DeFi? Will it be Polygon? Maybe Avalanche? What do you think?
Well, to answer it simply, of course, the future of blockchain is multi-chain, right, and cross-chain. So apparently, most of the successful chains will definitely find their place. Speaking like traditional words, either geographically or industry related, right? So they would be like really focused in some specific area. If you look at the industry of web browsers, right? So you have Google as the international leader, of course, but then you have some local large players in different parts of the world for you, China, Korea, Russia, and Russian-speaking countries, and in other parts of the world as well. So in here, our opinion, which I guess, I mean, we definitely might be wrong, would probably be a little, blockchain and DeFi on top of it, of course, would most likely look like this. So I wouldn't discount Ethereum as platform that has already lost the game, because apparently POS way of consensus is still coming, and let's hope it comes soon, or let's say sooner than later. But definitely, just the amount of time and the amount of developers, the amount of problems that this blockchain actually went through to develop, and the in a way bulletproof system, or let's say fault-proof system, compared to other younger blockchains which still have to go through the same steps, is just it has like in a way an unfair advantage in terms of if you compare it to the other chains. And of course the other chains, if you look at them, you see their benefits, there are specific benefits, right? Because if you look at Binance Smart Chain, of course that's the ecosystem of Binance in the first place, with all its audience, it's all its money, and the marketing sort of machine, right, that helps all the projects that start there to take off faster than on any other chain, right? Polygon, in a way, pretty much the same, because it was the first layer 2 solution, supported by the Binance machine in a way as well. So in terms of all the other chains, it's still a question mark, right? What sort of vertical in terms of business application each of them would be taking because there's some blockchains that are saying that they would go into like industrial verticals. There's the other ones that are trying to be the light blockchain, so they could be run on mobile phones with just used for quick snapshot or optimist voting, you know, like ZK Snark sort of way, and so on and so forth. So I would say there's going to be sort of specialization the more we go into this industry. But of course, there's going to be the interrelation of all these chains together with multi-bridges and oracles, and each of the chains trying to pick their own niche to actually dominate it.
Mm-hmm. Very interesting.
I think that Ethereum will remain the major blockchain, and I think that all the blockchain that are EVM, this is the only way to succeed today, because if you build a very easy and nice transaction from Ethereum to EVM, like Binance Smart Chain or whatever, then you can capture a lot of market share. Otherwise, all the companies that already develop, and you know, I run a blockchain company for 3 years now, and there is no such thing like 2 months or 3 months. Like everything that you build, it's take time. Smart contract, audits, interaction, Web3, interaction with the front end. It's not an easy step, and if someone builds something that is very easy to migrate from Ethereum to the next to other blockchains. So I think this is the way to do. I want to comment of what Doug said about DeFi and I thought and the US regulation. I totally agree with him, and I want to add that the regulation, for me, instead of embracing the change, trying to fight them, I don't think this is the way, because to be honest, they do a hard time to Uniswap now, but who is running PancakeSwap? so you can create a faceless project that can sell token, can do whatever you want, and it's not going to protect the user more. It's going to no one knows who run this, and people buying, and this is the key point. I think that if the regulation will do a very light regulation that will basically save the user from frauds, and also other concern like MAL, and also KYC. So this is the way to succeed. But again, it has to be very, very light. It has to be very, very simple. And you see today the shift from CeFi to DeFi. So CeFi, it's completely regulated. You have like on Binance and Coinbase, if you want to go in, you need to have KYC, AML, and all that. And on CeFi, on DeFi, you don't have to do it. And I think this is the crucial point here.
Okay, guys, so we have time for one more question for the entire panel. I wanted to ask you, can you identify one occurrence or one trend that, in your point of view, will change the DeFi space in the upcoming future? It can be something that, you know, just happened recently. It can be, you know, a new company that was established. It can be new technology or a new regulatory framework, whatever. One thing that you can identify that will leave the mark for the upcoming years in the DeFi space. Doug, let's start with you.
Sure. I think people, generally speaking, want to feel smart and secure about where they deploy their capital. Any product or service that helps people feel that is going to be very successful. So that means Likely, we're going to see the emergence of insurance products that help protect against smart contract or counterparty risk. I think we're going to see protocols that add additional utility or liquidity to existing assets that are high conviction assets that users hold. And that's going to help people feel really smart for having purchased a punk, an NFT 2 years ago, and gives them liquidity on it. And then I think we're going to see aggregating protocols that help you get exposure to the right trade-offs between yield and risk. I think we'll see filters on these aggregating protocols where you can likely deploy your capital to the highest yield that is insurable rather than just the highest yield. And so broadly speaking, nobody likes to lose money. And psychology says that we have much more of a loss aversion than the sort of elation that we get when we make a bunch of money. And so I think safety and feeling that we're being intelligent about how we deploy our assets and thus additional layers of utility from composable projects and DAOs is where we're headed.
Interesting. Olen?
Well, I'm a bit skeptical about the way you formulated the question. To be honest, I would say that the biggest thing in DeFi have already happened, and this is really becoming a commodity now. So because if you talk to anybody who's even not touching crypto, quite a lot of people, number one, talk about DeFi. Number two, actually try to do something with it, because you don't have to explain high yields on your deposits as you do with your bank, right? I mean, with our traditional money, we're sort of used to the situation where we don't hold our money, the bank holds our money, right? And we just have an interface on our mobile phones where we could see some numbers, and we could shift those numbers from one account to another account that can give us certain percentage points and whatnot. So in DeFi, it's pretty much the same game. So it is all understandable. Now, most of the innovations, in my opinion, would come in very unnoticeable forms. So practically, the trends that we're seeing now is actually forming into three buckets. So one of them being catered to the mass market, and the other one to the institutional investors, and the third is pretty much in the middle for the blockchain, true sort of how do you call them, enthusiasts, right? Let's put it this way. So the first bucket would still be serviced by the probably current companies who are already holding their large number of retail clients. Because imagine if you want to, I mean, it's much easier for Revolut or for I don't know, Tinkoff Bank from our part of the world, and so on and so forth, to actually add an additional product to their current user base, to their current interfaces, to give them a chance to sort of deploy a portion of their money to this instrument that is called DeFi, lending or borrowing, right? Or deposits or whatnot. And then on the back end, just structure it with, I don't know, BVI or Cayman or Delaware entity, where you would have a hedge fund that would be receiving those funds on a settlement basis, on a daily or I don't know, a weekly basis, and then just help convert those assets into crypto and then channel it to your Uniswap or Compound or Aave. This can be done as already now, so within the current regulation, right? So it's very easy. So for companies who are trying to actually attract all those users from the market with spending enormous amounts of money on traffic to acquire those users, I don't know. I mean, you have to have tons of money to compete with those guys. So that's why I'm not very firm believer in retail markets for DeFi, because I think this war is already lost, right? Now the second war, of course, is the institutional guys. For them, you really don't need the dashboards. I mean, it's just about how they control the money, how they structure the whole investment product so that the risk of volatile assets they could be hedging on traditional markets or on futures and options, on via different interfaces. So that volume, I don't think we'll be seeing at all. So it's going to be just like playing on the background somewhere, and just as the family office business, right? You don't know how much money is actually managed by the global family offices, regardless of all the reports and so on and so on. But and then the middle sort of size is just these interfaces of players that are trying to do this, play this game, the DeFi game in a way, right? To manage their personal assets, managing their personal keys, and trying to just really advocate and live this life, within this framework that your key, your money. This is a big chunk of people, to be honest. I mean, it's becoming more and more. So for this, of course, you would have more and more solutions, but that would look more like your small and mid-sized business, sort of groups of companies in traditional world. And for us, again, this is the most exciting part.
Interesting. Last but not least, Asaf, what do you think the current trends that can change the DeFi or crypto space?
I think the shift from CeFi to DeFi is huge. I don't know if people know this, but before DeFi, we actually basically switch from a bank to another bank. Like Coinbase is a bank; it's custodian. Binance, it's a bank. You don't hold your money. So the shift from CeFi to DeFi, it's truly exciting and amazing because people actually hold the money in their hand. It's come with downsides, like I mentioned, the ability to lose the entire amount, the entire money due to a mistake or something happened to the guy. It's horrible and needs to be addressed. And I think that the next challenge here is to make automatic activities on DeFi. For example, to do arbitrage between two different DeFi exchanges, to make loans, to do all this stuff automatically based on the rules that you set in advance. I cannot reveal too much about our roadmap in this space, but I can say that once we launch our solution, then the version 2 and version 3 will address this problem also, meaning that you can do automatic activities on DeFi that you predefined in advance, and that's it. Stay tuned, so to speak.
Stay tuned. Gentlemen, thank you so much for this fascinating conversation. I had a lot of fun. I hope you had too. And see you next time.
Thank you.
Thanks.
Thanks very much, guys.
More alpha coming at you now.
My friends, I am glad that you can join us in the decentralized financial revolution. The only way forward is if we continue to educate ourselves and those around us, and that is certainly what we intend to do. The value of a dollar can diminish with the click of a federal button, but the seeds of wisdom may never die. Don't let them catch you, be bold, and dare to reimagine your freedom.
everyone, and welcome to Reimagine, the virtual blockchain conference, coming at you with our 11th event with some really exciting content. We are on the road, we're on tour, getting high quality content with people both in person and virtually, like today, reporting back on what's going on in San Francisco, New York, El Salvador, as well as some of the biggest developments in NFTs and DAOs. I'm your co-host, Ashley Meredith, and today I'm pleased to introduce you to Nicholas Carey, co-founder and president of blockchain.com. Welcome. How are you doing today?
Thank you, Meredith. It's really lovely to be with you.
Well, we're so happy to have you. So for those of you just tuning in, be sure to check out some of our previous interviews over on YouTube. Smash that subscribe button. We've interviewed people from blockchain.com before. Check out our past interviews, doing amazing work in the space, building the infrastructure and the lily pads, as we'll discuss later, helping to really make blockchain adoption happen. So this year we've seen digital and decentralized technologies absolutely dominate on the world stage. The crypto revolution is unstoppable. El Salvador making Bitcoin legal tender, corporations turning into DAOs, NFT boom showing no signs of stopping. I think people are accepting that the future of finance, art, and culture is and collaboration is digital. So can you tell our viewers, from the perspective of a company like blockchain.com, where we've been the last decade and where we're going?
Yeah, thanks, Ashley. I think you make some great points. Like, technology has always been the driving force in history. We captured fire, we invented the wheel, we paved roads. We're always in a state of trying to improve where we were before. And I think that concentration on that is one of the things that differentiates everything about humans versus all the other species in the planet. One of the things, though, that's interesting is that we've also tried different forms of money. Money is a very ancient and old construct. It actually predates written word. So we find in burial sites in northern Scotland, pearls and seashells that came from very far away. So it's best to probably understand money as some sort of social consensus that allows us to exchange wealth. And we've tested all kinds of different mediums to do that. Everything from seashells to pearls to feathers to coins to gold and then fiat currency. So if we wanted to invent a better form of money, one that would be suited for the age of the internet, where we're broadcasting and teleporting precious information all over the world instantly, what would we give that money? What design principles would we want to apply to it? And this is some of the cool stuff that's been going on in the cryptocurrency industry over the past decade. And it is pretty incredible if you think back on what's been achieved in the last 10 years. And we just celebrated the 13th birthday of the Satoshi Nakamoto white paper, which is obviously the seminal work that sort of unleashed a tidal wave of innovation, curiosity, and innovation in the design of monetary policy systems and technology. And blockchain.com has been at the forefront of building tools and kit and technology that helps empower individuals to control their own wealth. And that's been something that's been dear and near to our hearts from the very beginning. We just celebrated our own 10-year anniversary on October 15th, and we actually have a really exciting promotion going on right now. So if anyone is still skeptical about getting into crypto, you can sign up for a blockchain.com wallet. And if you buy your first $100 worth of Bitcoin, we're going to give you $50 worth of Bitcoin for free. And this is a gift to all the new crypto curious users out there. The wallets are free to download. You can install them from iOS or Android or get a web wallet. So we please welcome everyone to do that. So speaking very broadly, it's important to kind of study what's happened. Satoshi pioneered the concept of a peer-to-peer electronic cash system. Since then, we've seen the novel innovations of blockchains that are capable of doing much more advanced computations and agreements that are a little more complicated that humans sort of need in order to provide sort of new social, I would say, collaborations and contracts. So you might hear the things about smart contracts and things like that. This is a very predictable outcome from the initial experimentation. And now, not only is it not just financial agreements that are getting programmed around money, but we're seeing the explosion of incredible creative capabilities around artwork, music, and content. And so in short, at blockchain.com, 1 decade into doing this work, we've had over 78 million people sign up. Our users have conducted over $1 trillion worth of on-chain transactions. And 1/3 of the worldwide on-chain Bitcoin traffic originates from blockchain.com wallets. So we've been at this for a long time. We're really going to be concentrating over the next decade on building the passport to the future of financial services. It's in our mission to make sure we empower end users to control their wealth and have tools that enable them, regardless of the circumstances of their birth, to be able to send, receive, secure, trade, and exchange digital forms of money. And so I'm super excited to explore all of the exciting innovations that have happened the last year, and then maybe think a little bit about, what's going to happen over the next decade as policy, money, and technology all merge together and give us new tools to build wealth and collaborate and share how we're going to basically build the future of a financial economy that's grafted into the internet, that empowers all people in a way that we were never able to do previously.
Absolutely. And blockchain.com has experienced massive growth. I think the last time we talked with someone from your team, you had tripled your users last year or something like that.
Yeah, it's been a very intense period of growth. We've seen more users sign up in the past 12 months we had in terms of speed than in any previous period of time. We've also grown our team tremendously. We've raised more money than we ever have before, and we're hiring like crazy. So short little plug, if you are interested in working in the crypto space across all of our teams, whether that's the backend engineering, the front end, the creative side on product or sales or asset management or custody, we have a lot of open roles. So please visit blockchain.com/careers. We'd love to find the best people in the world to help us deliver on the mission. But yeah, it's been a very good but very stressful year in terms of adding muscle to the organization. And in a lot of ways, we really feel like we're just getting started. We are trying to build a company that persists through time and ultimately takes care of our customers and our team so that we can build amazing things that help individuals control their wealth.
Absolutely. And in your mind, what do you think is driving this growth in just the last year? Is it retail investors stuck at home with COVID, trying to find something to do, or secondary ways of making income? Is it the NFT boom, just the inflection point combination of things?
Yeah, actually, it's a great question. I think if you were to poll Twitter, you get a lot of different answers. My personal perspective is there's some macroeconomic conditions that are really conspiring to make crypto extraordinarily relevant more than ever today. You have non-transitory inflation. In the last year, the central banks across the world, in response to the COVID crisis, provided extraordinary levels of liquidity to the markets, meaning they literally made a lot of money. And that money is flushing through the economy, but it's concentrating in the pockets of a very few number of people. And it's also causing asset prices across all kinds of things that regular people need access to increase, whether that's food or oil or the cost of grass and soil, seeds. Everything's getting more expensive because there's a lot more money flushing through the system. This is pretty concerning. On the other side of things, you have real disintermediation happening in the financial services space by fintechs, by cryptocurrency companies, and by innovative traditional financial companies that are trying to figure out how to respond to building capabilities to suit the modern needs. You have incredible innovation happening in our industry, though. If you're able to develop a type of money that can teleport around the world instantly at low cost, you massively decrease the barriers to entry for people to perform commerce, to start companies, and to trade with each other. And that's a big deal. We have modular financial applications, user-controlled ownership. You have the ability to develop yield for the first time in especially a negative interest rate environment. So I'm in London tonight. Across the entire Eurozone, all of individuals that store euros in their bank accounts are actually losing purchasing power on a day-to-day basis. And so between the disintermediation happening globally in financial services, I think the innovation in our industry, the yield opportunities, and then finally digital hardness, which is an important concept, especially Bitcoin and some of the other digital currencies that use sound money principles, are adding a new asset class that large institutions are taking much more seriously than ever before. In 2017, we heard some rumors that the institutions were going to into crypto. In 2021, they are coming, but they're also coming at sort of a later stage. And what's interesting is that there are now hundreds of millions of retail users that have access and custody and control over their own cryptocurrencies. And the institutions are coming a little late to the party, but they are coming because they don't have other places to allocate capital that can give them consistent returns, help them manage their own wealth preservation strategies. And so now it's no longer a conversation about, well, I don't really believe in this stuff, but it's actually just a portfolio management, risk management conversation. And so you're seeing the likes of crossover investors from the largest institutions in the world. We took capital from Bailey Gifford, one of the most significant asset managers in the world. Just this week, we've heard DCG, the Digital Currency Group in New York, closed a large round of financing led by Google and SoftBank. And there's just hundreds of examples now of just large institutions holding treasury in crypto, as well as investing in cryptocurrency projects, companies, and entrepreneurs. And so the biggest difference is you've got institutions, you've got a cultural zeitgeist in the artists and the musicians and the NFT space, and you've got the crypto OGs that are all pushing basically this whole phenomena forward at incredible speed.
Yeah, absolutely. Well, speaking of, the kind of the macroeconomic conditions that have made this a really kind of inflection point for crypto adoption, just last month, El Salvador made Bitcoin legal tender. What do you think about this decision?
Yeah, it's interesting. We always sort of predicted that eventually, nation states would start to hold crypto treasury. And my perspective is there are some interesting criticisms of how that was pushed through in El Salvador. But without argument, to me, smaller countries and medium-sized countries and soon big countries are going to realize that accessing a market that enables anyone in the world to send, receive, secure, trade, and exchange precious information is going to be very useful and valuable to their own countries and to their citizens. And I'm, without a doubt, so far we've seen pretty impressive adoption in El Salvador. Even from our own metricing, the number of users from El Salvador that have signed up for blockchain.com wallets has increased in the time since that announcement was made. So, it's in the mainstream media, there's a kind of constant drumming around, well, crypto is only for nerds. Crypto is only for, people that had access to technology. Crypto is only used by a few small companies on the internet. Crypto is only used by a few small countries. But the argument is sort of washing away slowly as a castle in the sand does. More and more people are paying attention to what's happening. And I think the pioneering efforts of El Salvador will be copied by other countries. How that happens, I hope generally takes on a more less top-down approach and more of one that's consensus-driven from democratic processes. But at the end of the day, more people getting access to digital currencies in a legal way is extraordinarily interesting. And so I'm, very excited to see more initiatives like it.
Absolutely. Well, the International Monetary Fund labeled cryptoization as a threat to the global economy. What do you think the Bitcoin decision in El Salvador, how will that affect the wider global economy?
So my view is that a lot of the large policy groups like the IMF or the World Bank are still in the learning curve, and they're catching up quickly. It's easy to label things that look concerning or confusing as threats, but it's also super important to understand some of the value systems that underpin the technology. And if these institutions really care about financial inclusion, if they really care about access to financial services that can get down to anyone that has access to a smartphone, we can really level the playing field so that at least everyone has an equal opportunity to participate in the economy. And so when I think about what we're really trying to achieve in the crypto industry, and this is a personal view, we're really just trying to wrap the planet in an economic fabric that all people have access to, regardless of the circumstances of their birth, to do things like send, receive, secure, trade, and exchange digital forms of wealth. And so I'm hopeful that these larger institutions, as they come up the learning curve of everything from stable coins to central bank digital currencies to just digital currencies and digital assets, that they'll see some of the positive benefits of these things and hopefully turn the page on some of, I would say, belabored criticisms that we've continually addressed and have taken quite seriously over the last decade. But the reality is that these things are being adopted because because people find them useful. That's extremely important. No one's coercing anyone to do these things. So if they're useful and there's some economic designs in them that make them valuable, they're going to command market prices. And the fact to me that anyone in the world can start to use these things speaks really truly to the humanity of them, which is an important argument.
Yeah, I guess there's a bit of coercion happening in El Salvador, however, requiring businesses to accept Bitcoin. Do you think that's a good or a bad thing?
My hope is that people would adopt it without any coercion whatsoever. In the same way that I would prefer that any country not force anyone to use one type of religious standard or one type of vocabulary standard or one type of language. And a single monetary policy, I think, also fits into a similar category of, how do you really consider people's freedom to, use the labors of their time and the efforts that they have to do things with whatever they determine to be money. And so in the long term, I think enough retail adoption sort of causes society to change its perspective on these things, but it's a slow thing. A decade ago, people were making really crude arguments against crypto. We're still seeing that a little bit today, but the conversation has dramatically evolved. And when you have everybody from the wealthiest person in the world running some of the most impressive, innovative companies advocating on behalf of crypto, it causes people to take pause and pay attention. And when you have the largest IPO of 2021, be a cryptocurrency company, people are starting to pay attention. And when we think about how do we build an economy that's inclusive, that gives people equal access of opportunity, we need to be serious about thinking through the policy that enables and encourages further innovation generally. And the financial services sector, the traditional financial services space, has not delivered for many billions of people around the world. And fintech, and especially crypto, I think is extraordinarily well tooled to deliver financial services at scale to anyone.
Absolutely. Well, moving on to some of the other kind of biggest conversations in crypto right now, many corporations are considering becoming DAOs, or decentralized autonomous organizations. What is blockchain.com thinking about DAOs, or yourself? Have you seen it work particularly well? Any particular projects that come to mind, or any drawbacks to a DAO model that you can think of?
Yeah, so decentralized autonomous organizations are sort of at the, I would say, the absolute cutting edge of what's happening in consensus-driven organization. And how do you align incentives across disparate groups of people to coordinate time, to compensate them, and ultimately build stuff people find useful. So we, in a lot of ways, it's sort of like to be determined still. But I'm not surprised that these things exist. And let 1,000 flowers, or 1,000 seeds be spread and some flowers bloom. So I'm excited to see how these organizations navigate what is a very difficult challenge, which is to build stuff people find useful. And we have a lot of different governance mechanisms in what I would call the molecular world, AKA running companies, building institutions, nonprofits, charities, schools, universities. So can all that stuff actually be, just programmed into an application that runs on the internet? I think it can eventually, but we also have to get good at working in decentralized ways, really making sure people are held accountable. Roadmaps for projects, having deadlines, and having accountability at an individual contributor level for all these things being navigated. It's a big challenge, but we've seen some interesting implementations of this. Famously this year, the Fox token project run by Shapeshift. The founder basically decentralized his entire company, wrote it into a smart contract, gave everybody that was ever a user and all of his shareholders equal voting rights into the project and how they work in the future. And that is a super bold, super pioneering spirit that I think really carries the vanguard of the crypto movement. And we need to see more projects like this try and experiment. The only way we'll know whether or not it works is if we see communities adopt these services, compensate these services, and reward the contributors of those services over the long run. And so in the long run, I am excited. In the short term, let's watch and see what happens.
Absolutely. It's kind of one of those fundamental problems we've been trying to answer since the dawn of civilization, how to incentivize certain behaviors and collaborations, how to disincentivize bad actors. Really love what Shapeshift has done. I think it was the biggest airdrop in history. They tagged it as. Well, before I let you go, I'm here currently in New York for NFT NYC, and it's just amazing to see Times Square wrapped buses, NFT projects advertising everywhere, and really seeing like crypto adoption on a massive scale. And it's just a lot of fun with all of the art. Just got to get some of your thoughts on NFTs. Do you own any? What's your favorite projects? What is blockchain.com thinking about NFTs?
Yeah, thanks. So we're super excited to be at Art Basel in Miami in just a few weeks, and we'll hopefully have some things to share with the community in the not too distant future. Look, I am so excited to finally see the creators, the individuals in our economy that are challenging the status quo with how we look at ourselves, how we look at our content, at our media, and adopting digital currencies as a medium for having real ownership over the things that they've built. For too long, the creators in the world, the musicians, the artists, the writers, they haven't been properly taken care of for their tremendous contributions that they make for our society. I don't think NFTs are going away at all. I love all the applications in the sports and entertainment world that are coming to fruition. I think it's going to completely change how fans experience games and how they share moments that they have witnessed in the real world with their friends in the long term. So I'm long-term bullish on all this stuff. In the short term, I think you see some outrageous, ridiculous things happening. People should be cautious as what they're actually acquiring when they shop for NFTs online. Make sure you're operating in a trusted venue. Check your counterparties, basic rules of the road, just like you wouldn't buy stuff in a dark alley necessarily if you weren't extraordinarily confident in that outcome. The same thing applies on the internet here. So there are good reasons to be encouraged and excited. There's also, some rules of the road that I'd encourage people a basic modicum of caution on as it relates to buying stuff on the internet with your crypto.
Absolutely. Stay safe out there, everyone, as you're collecting your exciting new NFTs. Well, for anyone just tuning in, you've been watching Reimagine. This is our 11th event. We're talking about DAOs, NFTs, Bitcoin being legal tender in El Salvador, and some of the current market trends and predictions for the rest of 2021. Thanks for joining us. We've been speaking with Nicholas Carey, co-founder and president of blockchain.com. Thank you so much for joining us, Nicholas.
Thank you, Meredith. Have a wonderful afternoon.
Reimagine 2021, the #1 global event in the metaverse.
Jocelyn, ¿qué le parece que El Salvador va a tener al Bitcoin como moneda de curso legal?
A mí me parece bien porque creo que es hora de irnos innovando un poco, ¿verdad? Es algo un poco más moderno y también nos va a ayudar a atraer más turistas que manejen la moneda. Es un ingreso más para el país.
¿Usted cree que los jóvenes se van a adaptar más rápido que las personas adultos mayores?
Yo pienso que sí, porque estamos más acostumbrados a la tecnología y todo eso y nos vamos modernizando cada vez más, ¿verdad? Nos adaptamos a los cambios. La verdad que...
¿Y usted va a usar el Bitcoin?
Yo sí, claramente, sí.
Porque el gobierno va a regalar $30 y usted puede bajar la wallet, el archivo, ¿verdad?
Sí,
¿Ya ha oído hablar del archivo?
Sí, oí de la app y sí la voy a descargar y la voy a utilizar.
¿Qué le parece esa medida del gobierno de ayudar a que el Bitcoin se mueva regalando $30?
Me parece bien porque cualquiera se motiva a que le van a regalar y lo va a ir a gastar y me parece bien.
¿Y usted cree que el Bitcoin le va a ayudar al país?
Sí, yo pienso que sí.
Hello, everyone. Welcome back to Reimagined version 11, our virtual conference series, bringing you nothing but the best projects, bright minds, and leaders in the space with a focus on what's up next. And up next with us today is Dominic Williams, founder and chief scientist at Dfinity, the foundation responsible for building the internet computer, backed by investors like Andreessen Horowitz and Polychain Capital. Since Genesis in May, Internet Computer has already deployed dozens of decentralized apps and now turns its focus towards Bitcoin integration. That seems like a tall task, doesn't it, Dominic?
Well, we've been going for a long time. So, the project was working in 2016, being incubated by this company called String Labs in Palo Alto. It then sort of spun out as a foundation at the end of that year. It raised money in a public fundraiser. So it's actually members of the public who are by far the biggest holders of the ICP token. That decentralized fundraiser was run in February 2017, so it actually predated, all of that ICO craziness that kicked off that year. And it's a very different project. I was originally inspired by the world computer vision that was floating around the early Ethereum community in 2014 and 2015. And when I heard about this idea, I thought, gosh, this thing just has to exist. The world needs a world computer. It sort of completes the functionality of the internet, if you like. And I also realized that, smart contracts are a really very profoundly new kind of software or system. It's something in between. That run on a public network, and they're tamper-proof. Don't need firewalls to protect them. Unstoppable. Can be composed in the form of components, and allow for tokenization. So, I believe that if we could build a real-world computer using a blockchain that ran at web speed and had infinite scalability and was incredibly efficient and could serve interactive web content directly to users, that eventually, because of the superiority of smart contracts over traditional IT platforms, eventually every system and service would be rebuilt on blockchain. Now, to create a world computer, I realized we'd have to do a lot of very hardcore R&D. So we built out the Dfinity Foundation, and we have by far the biggest R&D. We run by far the biggest R&D operation in blockchain, and it's been running for many years. I mean, people often think the Internet Computer is a new project. It's actually one of the oldest. It just took a lot of R&D to get it into production, if you like. And I think we probably employed the biggest team of leading cryptographers in all of tech, not just blockchain. So we had this big team of leading cryptographers, also many computer science researchers and senior engineers. Most blockchain projects, are sort of 80-90%, social media people, marketing people, business development people, and you just have a few hackers who sort of take some technology off the shelf and get something up and running, right? There isn't really that much technical substance, and it's really about building a community and getting people excited and sending the token up on exchanges and things like that. The Internet Computer is almost the exact reverse. I mean, we're mostly composed from, cryptographers, computer science researchers, and engineers. So, I describe the organization as blockchain maximalist. We want to see a blockchain singularity where everything runs from blockchain, and the Internet Computer is our way of achieving that. Now, back to Bitcoin integration. The Internet Computer was made possible by the development of new types of cryptography and cryptography framework, which are sort of loosely referred to as chain key cryptography. And chain key cryptography is a pretty complex field. I mean, you can go to the dfinity.org website and go into the how it works section and access some of the low-level cryptography and sections on the non-interactive key, DKG and key resharing and so on. But essentially, chain key cryptography is used by the Internet Computer Network to scale. And what it does is allows blockchains to be given their own public key, essentially. So, inside the Internet Computer Network, there are numerous subnet blockchains, And one of these subnet blockchains is a master subnet, and it has a single master chain key, of like a public key. And each of the other subnet blockchains also have, their own chain keys that are signed by the master subnet, which runs something called the network nervous system. Now, what's so cool about this thing is that the blockchain is able to act as a whole to create signatures for its chain key, right? Just like if you've got the private key corresponding to a public key, you can create signatures that people can validate using the public key, right? This is the sort of one of the fundamental building blocks, of course, of blockchain. The advance the internet computer introduces is that the blockchain actually has a master public key. So what's extraordinary about the internet computer is there is a single master chain key. You can think of it like a public key, and the blockchain can act as a whole to create signatures against that. So, intuitively, you might be able to see that this makes it possible to interact with the blockchain without having to download all of its blocks, right, into a local node, because the blockchain is signing your interactions with it, and you can just check these signatures to verify that the state of the blockchain is correct and that your interactions with it haven't been tampered with. And inside the internet computer network, all of these subnet blockchains are able to directly interact with each other without knowing each other's state, because they can just check the signatures, right, correspond to their chain keys, and of course that the chain keys have been signed by the master chain key. So it really is revolutionary technology. Now, without getting into the gory details of how chain key cryptography works, because it's a very complex field, and even I myself don't profess to understand all of the low-level cryptography involved, and that's why we employ many of the world's top cryptographers. But that same framework, anyways, is being extended so that the internet computer blockchain can create transactions, firstly on Bitcoin, and later we'll look at other blockchains like Ethereum. Now, what does that mean in practical terms? It means that smart contracts on the internet computer blockchain are going to get their own Bitcoin addresses, right? And this is nothing to do with bridges or wrapped Bitcoin or sidechains or any of that kind of malarkey. These smart contracts will effectively sit on the Bitcoin blockchain with their own Bitcoin addresses. And they're going to be able to send, receive, and process Bitcoin. And behind the scenes, of course, what's going on is that, if a smart contract on the internet computer wants to send some of its Bitcoin, for example, to your Bitcoin wallet, right, to any standard Bitcoin address, or to another another smart contract on the internet computer blockchain. Behind the scenes, in the protocol there, a whole load of super advanced cryptography is going on, and the internet computer blockchain is actually creating Bitcoin transactions to make all this stuff happen. Now, what's so exciting about this is that on the one hand, people building DeFi on the internet computer will, or for example, SocialFi or GameFi or anything like that, these emerging, in these emerging areas, will gain access to the, I don't know what it is currently, $1.5 trillion of Bitcoin liquidity. And in return, Bitcoin is going to get smart contracts. So it'll provide for people to build a sort of new generation of native DeFi on Bitcoin. And just to be clear about what I'm talking about, this means that smart contracts will have Bitcoin addresses, and when they send Bitcoin to other smart contracts or any other Bitcoin address like a user wallet or an exchange, that Bitcoin's actually going to move on the Bitcoin blockchain, which of course is completely different to the situation you see today where, various bridges, trusted third parties will create wrapped Bitcoin for you. And that's a very dangerous arrangement, of course, because, for example, if you want to move your Bitcoin onto Ethereum in the form of wrapped Bitcoin, you've got to go to some trusted bridge and say, here, bridge, take my Bitcoin. And the bridge then, takes your Bitcoin and gives you wrapped Bitcoin on Ethereum. But they're acting as a sort of, issuer and redeemer. and they're holding your Bitcoin in custody. And, you rely on the fact that when you want to go back from wrapped Bitcoin to Bitcoin, that bridge is good for its word, right? And if they get hacked, all the Bitcoin's going to go away and your wrapped Bitcoin will become worthless. And we've seen, these bridges get hacked already. I mean, the Poly network got hacked for $600 million a few months ago. The hacker involved very kindly gave back all the different, Bitcoin and Ether and everything else that he stole, which was very kind of him. But, sooner or later, we're going to see a Mt. Gox type event where, all of these kind of chains, like, that have all these wrapped coins, are going to experience something nasty where the trusted intermediary that's the bridge is going to run off with it. So there's a very big difference between smart contracts on Ethereum or Avalanche or Solana, say, processing wrapped Bitcoin, and native smart contracts on the Bitcoin blockchain. So I think it's incredibly exciting. And I mean, for me personally, obviously I'm very passionate primarily about the technology, and we've been working with the whole chain key framework for years now, and it wasn't something that was we were able to do quickly at all. We're pretty much the only project in blockchain that actually develops new cryptography to solve major problems, and we're the only one with the capability of doing so because we have the necessary expertise. But developing new cryptography is very time consuming. Integrating some of these super complex cryptographic techniques with blockchain protocols is very time consuming. But we've got there the internet computers running using chain key cryptography, and now we're extending it to support so we can essentially directly integrate the internet computer and Bitcoin networks. And it's going to be great for both networks. Bitcoin's going to really have the ability to create native Bitcoin DeFi. And there's a lot of very interesting things being built on the internet computer at the moment, in areas such as SocialFi and GameFi, for example, that they're going to be able to make use of Bitcoin.
Yeah, because the number one, I think, way that I've heard the layman kind of describe internet computer is, they're trying to wrap all of the everything else. And digging a little bit deeper, it seems like what you're describing is a blockchain of blockchains, where...
No, well, kind of, yes and no. Look, I mean, one of the... if you look at one of the reasons DeFi has been successful on Ethereum, is because all the smart contracts exist inside one trust zone, right? Within one seamless universe. Like if you run a DeFi smart contract on Ethereum, I can upload a DeFi smart contract on Ethereum that with permission calls into your smart contract, right? There's no interoperability cost. It's all just code within one universe. And this creates immense network effects because you have system composability, right? You can compose new systems from existing system building blocks, which are smart contracts, which is sort of like double as both software and system units at the same time. And one smart contract can simultaneously be in any number of different systems. And it really is makes smart contracts generally extraordinarily powerful. So, a lot of people never think about it, but, today Ethereum is very expensive. I mean, there's the website out there that gives you the cost of 1 gigabyte of smart contract data on Ethereum. And just today, I mean, it goes up and down. It's like $500 million. $500 million. On Amazon Web Services, I don't know. My guess is it's about 50 cents a year.
Yeah, if that.
So
if that.
Yeah, so that's $1 billion. It's $1 billion times cheaper. So you've got to ask yourself, well, if Amazon Web Services is $1 billion times cheaper than Ethereum, why is all the DeFi on Ethereum? Well, the answer is that you can only build DeFi with smart contracts.
Programmability.
And also one of the advantages of having all the smart contracts on the same chain is that they can all interact with each other. So, the internet computer is a blockchain, and internally, of course, it scales out by adding subnet blockchains, but that's completely transparent to the smart contracts. The internet computer is unique in providing that. It's a single blockchain. These subnet blockchains act as a single blockchain because of they're able to do that because of chain key cryptography, right? So, and there's a bunch of other things like smart contracts on the internet computer actually run using the actor model and can be run in parallel, which obviously, if you think about it, is another prerequisite for scaling. But, there's a lot of advanced technology involved, but the purpose of the internet computer is to provide people with a single public blockchain, a single general purpose public blockchain, which runs smart contracts. And, we're blockchain maximalists, so we really don't like a lot of the ways things tend to work today. We think it's a bit of a fakery going on. Like, for us, Web 3.0 means running things from blockchain, right? But,
yes.
What percentage of dApps would you say today outside the internet computer ecosystem run from blockchain?
Maybe 2%.
Yeah, it's actually 0%, right?
Yeah.
Because all of them, yeah. So all of them actually, none of the existing blockchains, other than the internet computer, can actually enable their smart contracts to serve web experiences to users. So, in practice, the dApps aren't really dApps. I mean, a dApp is a decentralized application, right? They're certainly not Web3. You might call them blockchain applications. Basically, everything lives on the corporate cloud, right? Mm-hmm. On a corporate cloud service like, Amazon Web Services. You've got a website that runs on Amazon Web Services. That basically does most of the data processing and stores most of the data involved. And then, does a bit of back-end interaction with some blockchain. And, for example, if you're buying an NFT, the NFT lives on the cloud service, and then, just the fingerprint is put on the blockchain. And then when you want to authenticate yourself to the blockchain to actually make it, to perform a smart contract computation, say, you're typically interacting with a wallet that is a browser extension like MetaMask. And where does that come from? It comes from the Chrome Web Store, right? Yeah. If there was a malicious Google employee, he could just tweak the code and steal all your ether or whatever it was, and they could also switch it off. In fact, going back a little while, I think it's 2018, the Chrome Web Store did indeed ban MetaMask for a short while. So it's not censorship resistant. And you really have to trust Google hasn't tampered with the code. You have to trust that the website running on Amazon Web Services hasn't been hacked. And you have to trust, of course, that Amazon Web Services doesn't want to switch you off. Last year, during the election, Amazon Web Services took against this social media service called Parler. Now, you may or may not agree with the politics of Parler, and it's probably fair to say Jeff Bezos didn't vote for Donald Trump. But, I couldn't vote anyway. I'm in Zurich now, but when I couldn't vote, I was a British citizen without a green card. But the point is, it doesn't matter whether or not you'd vote for Donald Trump, right? I mean, Parler should not have been shut down. It's absolutely terrifying that Amazon Web Services were able to push a button. Today, other than dApps on the internet computer, which really are dApps and really, are working in the mode of Web3, 100% of dApps aren't dApps. They're blockchain applications. They're websites running on Amazon Web Services. And they rely on their goodwill, just as, people rely on the goodwill of the Chrome Web Store to serve their MetaMask wallet, whatever it is. And look, it wouldn't take much, a change in the regulatory environment, a change in the regulatory, commercial, and political incentives. And Amazon could just say, hey, no dApps on our platform. They could press a button and all of those dApps would disappear, just like that. And you also got to trust, what's even more scary is, that's another topic altogether. If you look at all these new, blockchains that are being spun up in the proof of stake space, it's just a rush to make money, right? And monetize and sell tokens. And the whole sort of blockchain ecosystem is really like the Matrix, right? It's designed to make people buy these dodgy coins. But, if you look at Avalanche, Solana, well, Solana's is even questionable whether it's a blockchain, to be honest. But Cardano, Polkadot, you go to their websites and you'll go through the documentation, you'll find instructions how to set up their nodes on Amazon Web Services. So they claim this massive decentralization, and it's true that a lot of people are running these nodes. But the reality is, they're just one big node because they're running on Amazon Web Services. Amazon Web Services can steal their validator keys, take control of the chain, or more likely it wouldn't want to get sued by doing that. It would just say, sorry, no blockchain, switch them off. So this is a really, really big problem today. So, we want to make sure that, first of all, the internet computer doesn't run on cloud, and it runs on a sovereign network of dedicated hardware. Like, you need these special node machines, and they're run by independent owner-operators from independent data centers in different geographies and jurisdictions. No cloud involved. And in addition to that, the blockchain itself needs to serve interactive web content, directly to the end user with no cloud being involved. So it can't be switched off, it can't be hacked. And there's another much more subtle piece to it as well, which is that we're beginning to see this already. That, if you create a fake DApp, right, the developers end up being sort of transitively liable for the smart contracts. So even like if you look at a service like Uniswap, which is the biggest DeFi service on Ethereum, that's actually, the smart contracts involved are actually upgraded using governance tokens. So the actual sort of DeFi infrastructure of Uniswap is actually pretty well decentralized. I mean, the governance mechanism isn't very sophisticated. Look, it's decentralized, right? The problem is that how do people interact with Uniswap? The answer is by a website and Amazon Web Services, or if not that, a private server or something. And who's running that? Who's running that centralized infrastructure that allows users to interact? Guess what? The developers of Uniswap, right? They're paying, it's their personal credit card or company credit card, and that's being used to pay the service. So the problem is that they realize that even though the smart contracts running Uniswap are decentralized, transitively they're legally liable, right? And it's not really decentralized, and it's very easy for a regulator to look at it and say, well, hold on a second. Really, what I'm looking at here is a website in Amazon Web Services that on the back end makes some, interacts with some smart contracts. Even though in this case, it's not so clear cut because they've got some governance tokens that upgrade the contracts. But that's why they self-censored, right? Uniswap self-censored and removed 100 tokens from the DeFi service. And I think that's just, giving you, yeah. So that's, I think, just a harbinger of the kind of stuff that's going to come. So, although it's, which is funny because, the internet computer is the biggest team in blockchain, right? With all of the most interesting technology, really. But it's not well known that this is the situation that exists. And that if you want to actually create a Web3 dApp that's really a decentralized application that runs from blockchain, there's only one place you can do it. It's the internet computer. Smart contracts on the internet computer run at web speed, and they're incredibly efficient. They can scale out their capacity. The internet computer itself can scale out its capacity. And not only that, those smart contracts can serve web directly into the browser securely using some, again, advanced cryptography, and allowing the user to basically interact directly with smart contracts and authenticate themselves using something called internet identity, which is things that allows you to use cryptographic devices like the fingerprint sensor on your laptop or the Face ID on your phone or a portable HSM like a YubiKey or a Ledger wallet.
And as I understand it as well, since we're heading down this road here, on the internet computer, you can go ahead and deploy something like Uniswap and then natively deploy even the governance tokens as well? Is that something that's in the future?
I think people are already doing DeFi. I mean, so there's a bunch of differences between the internet computer and a traditional blockchain. One of them is that the blockchain has this governance system integrated into its protocols. It's called the network nervous system, right? And you participate in that using the ICP token, and you can stake them inside the governance token to create something called a voting neuron. Obviously, the more you stake, the greater your voting power. But when you stake, you have to configure a lockup period, right, or a minimum time, if you like,
of course,
which it will take to recover to dissolve the neuron. And the longer that period is, again, the greater your voting power. The greater your voting power, naturally, the greater your voting rewards, right? So anyway, what's cool about this network nervous system is it's completely permissionless. Anybody can submit proposals to it, and the proposals are either processed by this thing, it's algorithmic, and this thing is responding to the voting activity of neurons. They're called neurons, of course, because you can configure them to vote automatically by following other neurons. And then this network nervous system, responds to the activity of these voting neurons by either rejecting or adopting proposals. And when the proposal is adopted, it's completely, it's executed automatically by the network. And in fact, it's already processed thousands of proposals in the 6 months the internet computer has been live. And these proposals also do things like, upgrade the protocol by updating the software running on node machines, tweaking economic parameters, that kind of thing. So it's constantly, the internet computer's a blockchain network that's constantly evolving and improving, and there's a huge number of people working on it all the time. And so, there isn't really the concept of a hard fork. The hard fork only occurs in very extreme technical circumstances. It actually happened once, a couple of weeks after it first launched. There was a problem with the network nervous system. The network nervous system couldn't, process proposals anymore, so there's no way of updating it to fix the problem. So actually, all these node operators had to go around and install software manually by sticking USB keys into the back of node machines. But it's only happened once. In normal operation, the internet computer blockchain never needs a hard fork, and it just constantly updates itself through this governance system.
Well, it's kind of ironic because that's really the way that the internet kind of started, because I know that there are a couple of other crypto players in the space that are trying to do similar real true decentralization. And when I've been in those spaces, it's not just once, like you're saying, it's, oh man, we've got to pass out this file to every single developer and every person, every node. So
it's nuts. Yeah, it's not. So I realized I didn't answer your question properly. Your question was, can people deploy Uniswap? So the answer to that anyways is, some of the functionality needed for DeFi hasn't been switched on in the internet computer yet, and it's going to be switched on absolutely imminently. But there are there's other work going on with, I won't even bore you with it, but process separation for WASM runtimes, because it uses the Web70 virtual machine to guard against jailbreaks. And side channel attacks. And basically, there's a lot of people clamoring for it, allow us to do DeFi right now on the internet computer. And it's a difficult decision because, in practice, the internet computer is a hell of a lot more secure than every other blockchain. It's seriously well built. But the fact is we employ a lot of cryptographers. Cryptographers don't like things going wrong under any circumstances. So we've made the decision just to sort of hold back and wait for this, process separation, which guards against WASM, Web70 jailbreaks and things like that. But so at the moment, you couldn't. It's not quite true. You can do some things, and there are already people doing DeFi. There's lots of NFT stuff. Obviously, you can move ICP around the governance token and trade that, and you can also move cycles around. But individual smart contracts we call them canister smart contracts on the internet computer. There's some functionality that hasn't been activated yet. It'll come soon. But yeah, absolutely. You could very, very shortly, just create a DEX, for example, that runs on the internet computer. And what you would do is you design it so the smart contracts serve the interactive web content, right? So, obviously, if you go to a centralized exchange like Coinbase, that's probably coming off Amazon Web Services or its own servers, right? If you created a DEX on the internet computer, you'd be interacting with web content that was directly served by the smart contracts themselves without any intermediaries. Now, that obviously is a very important part of decentralization. Like if you want to create a truly decentralized exchange, you need to do that because otherwise you become responsible for creating this exchange. If it really runs on Amazon Web Services, right? You become legally liable. So you could do that on the internet computer today. There's one final step that's very, very important that's coming, which is that you want to decentralize control of the smart contracts behind the service, right? And I mentioned that the internet computer blockchain itself runs under the control of this thing called the network nervous system, which is like a sort of very advanced DAO, decentralized autonomous organization, right? Mm-hmm. That same technology, which has successfully been running the internet computer now for 6 months, and has been developed over quite a long period of time, obviously, that's going to be made available to dApps. So you'll be able to take a dApp like a DEX or a decentralized service or whatever it is, and assign control to a turnkey service nervous system. So basically, you get your own network nervous system. It's the same technology, and once you've done that, the idea is that the dApp or service runs under the control of the community rather than you. So if you're a developer, what you do, let's say you're a DeFi guy and you wanted to create super cool DEX, and obviously some very interesting things are going to be possible soon. There's going to be all these governance tokens for these different dApps running on the internet computer, and plus you're going to have Bitcoin, on the chain and stuff like that. So you build this DEX using smart contracts on the internet computer. There's no need for the use of Amazon Web Services. The smart contracts can serve the interactive web experience. But you're still not really censorship resistant, because you, Mr. Developer, are updating these smart contracts, and the regulator can say, "Hey, you, Casey, you're updating these smart contracts." So the point being that
they can come after you.
They come after you. So you'd assign control of this thing you'd built to a service nervous system. Now, what does the service nervous system do? It creates a new ledger of governance tokens, which are equivalent, again, using the same technology as ICP, which also means that if your dApp gets really popular, the likes of Coinbase and Binance and so on can just integrate your governance token by pressing a button. Your service nervous system, will create 1 billion governance tokens on that ledger. It will then auction a very large proportion of them in a single clearing price auction, so that the participants in that auction receive a mixture of governance tokens pre-installed as neurons, and some of them liquid, mostly pre-installed as neurons. And immediately it's now running as a fully decentralized service under the control of the community, thousands of anonymous neuron holders. And then, the service nervous system will typically, grant some tranche of governance tokens, again, mostly as voting neurons, some, pre-installed in the governance system, pre-staked, and then some liquid, to the developers, the founding team. And then the founding team continues, that's their reward, if you like, for their initial contribution, and they continue as a sort of leading contributor, community member. Obviously, they're very highly incentivized. But the funds from the decentralization auction never go to the developer. They stay inside the service nervous system and are basically, used for things like developer grants, feature bounties, bug bounties, and paying for computation. They're under the control of the community. So it's not an ICO where the developers go and sell a bunch of tokens and get the funds and can run off. The community keeps the funds. And then typically you will also reserve some tranche of these governance tokens to give out to users. So what we're going to see is this kind of merger of different fields where social media is going to merge with DeFi, games are going to merge with DeFi, and we're going to see social-fi and GameFi. So, for example, there's already a chat service running from the Internet Computer blockchain called OpenChat. If anyone's interested in it, they can find it at oc.app. And when you put oc.app into your browser, you'll see that it redirects you to this really weird-looking address. And OpenChat's being served directly from the smart contracts. Now, once that fully decentralizes, right, you're going to see that your chat account, right, which is actually going to be backed by an individual smart contract, is going to also be a wallet. It's going to be a wallet, right? So, the chat of the future is, your chat account of the future is also your crypto wallet. So if you and I are chatting, right, I can send you tokens inside chat messages. We can negotiate for an NFT and there'll be an atomic swap executed through chat messages. Obviously, it will also do other, it'll also be possible to do other things like, notarizing documents and doing signing documents and sort of role of DocuSign-esque functionality.
I was going to get into exactly why I was looking through some of the documentation here and exactly why there's going to be a location verification. And I guess the answer to that might be is that we don't want bots kind of setting these things up and, just kind of...
Oh, I'm not sure. Yeah, no, I mean, look, currently, it's a big misunderstanding. Internet identity is an anonymizing blockchain authentication service. So, Internet identity, is basically powered by chain key cryptography, right? Mm-hmm. And it's designed to allow you to authenticate in an anonymous way and to prevent you being tracked across your use of different dApps. So this, firstly, very important that listeners know that. So there's been a lot of FUD and nonsense on social media. Right? There's a lot of blockchain interests that are very upset about the internet computer. And, we've literally got teams of hundreds of people out there just spreading complete lies. So internet identity is an anonymizing blockchain authentication system. And what happens is you're able to create any number of internet identity anchors, right? And to an anchor, you can assign any number of cryptographically enabled devices. So, for example, I've got an anchor I use with social media, and I've assigned my fingerprint sensor on my MacBook Pro, Face ID on my phone, and I've backed it up onto a YubiKey. And then, if you're using an internet identity with, say, DeFi, you want it to be more secure, then maybe you don't use the Face ID. You use like a Ledger wallet which can, you have to, when you want to authenticate, you have to put the PIN in. But the point is, I can, for example, log into OpenChat on my phone, and I can also log into OpenChat from my laptop to the same account using different devices. If I go to oc.app on my phone, I do Face ID, right? And that activates a biometric system that causes a private key kept inside a secure TPM. It can't be taken outside the chip to sign a session, right, that enables me to interact with the OpenChat dApp. And something similar happens on the laptop when I press the fingerprint sensor. So I can, I can authenticate on any of my devices in a very straightforward way. Now, what's interesting is, I'm using this internet identity anchor for social media, right? So I'm authenticating to, say, OpenChat using my fingerprint sensor, my Face ID, or whatever, or my YubiKey if I want, whatever I'm using. If I go to another dApp like District, right, which is like a professional network that's being built on the internet computer, I can log in exactly the same way with the fingerprint sensor and my Face ID, but both OpenChat and District see different pseudonyms. They don't see the original. The actual internet identity anchor is just a short number, like a phone number you can memorize, right, to reconnect with it. But the dApps themselves see something completely different, a pseudonym. So it's not possible to track you across your usage of dApps. So first of all, they're important to us that people are able to maintain their privacy, and you would expect that to be the case when you look at the people that work for the Dfinity Foundation. And that's not, of course, the case today on normal blockchains. On normal blockchains, you can be tracked across all the different dApps you use and so on and so forth. Not the case on the internet computer, first of all. And that's the fun. You start off from a position where there's total privacy and obviously cryptographic security, and it, although with our case in a much more decentralized way, you don't need any browser extensions or anything, right? You're just using your own devices. Yeah. So always with the internet computer, always real web 3.0. Now you talk about, I think what you're alluding to is people parties. So people parties
that's
are also,
what I was getting
yes. Into. So people parties are, no, it's not about location at all. It's not about location. It's also about anonymity. So one of the problems when you have a totally decentralized ecosystem where everyone's anonymous is that, some people will start being trolls.
Oh, of course.
Right. So at the moment, it's very frustrating. Like, there's a lot of blockchains that are really terrified of the internet computer. So for the most part, there's like a crypto, crypto media blackout. Like, after we launched, all this revolutionary stuff started happening, and it was a total 5-month news blackout. It was extraordinary. And all you got was just all this madness on social media. One of the other kind of things that to give you an idea of the stuff we have to deal with, like one of the blockchains, a competitive blockchain, has basically hired this small troll army, right? And this troll army logs in to services running on the internet computer like District and just posts junk content, just nonstop. Like if you post something, you'll get loads of junk comments. And at first we thought it was bots. But it's not. Like even if you put a capture in, it doesn't work because they're human beings, right? Being paid by someone. So, that's all right. Okay. Other blockchains are rightfully terrified of the internet computer and its capabilities, and they want to slow it down, and they don't want to see SocialFi and GameFi taken off. So they're going to hire these bot armies. In a way, it's good because that's how you get stronger, right? So the people parties are being brought in to allow people who are anonymous to get elevated trust privileges by proving they're human beings and making commitments to the ecosystem, right? So what we've got coming are people parties. They're completely optional, right? And this is completely virtual. These run virtually, which is quite revolutionary. Essentially, you're going to be able to sign up to this thing, make a small deposit to make sure you attend. Won't be that much. It'll be easily affordable by everyone in the world. And you'll be able to, you basically RSVP for the people party. When you do that, you have to commit to a location, right? And then when the people party takes place about 3 days later, essentially you'll be on video with a small group of people who are in your continent, right? And it'll be a small group, and you need to basically verify each of the people in that party are where they claim to be. Without going into, again, all the gory details, all these parties take place simultaneously. And because you as an individual can't be in two places at once, you can only prove personhood once. But we're actually going to run, as we sort of refine the process, we're going to run a succession of these people parties. And what's really exciting is, firstly, every time you do that, you're going to be able to increase the trust associated. You're going to be able to prove personhood, and you're going to be able to use that within services like OpenChat and District. So, for example, you as somebody with elevated trust, you're going to be able to see one of these really annoying trolls employed by competitive blockchains and just, press mute, right? Mute them, right? And if enough people with elevated trust privileges press mute, then the troll is frozen for 6 hours. He comes back, happens again. Next time he's frozen for 12 hours. Next time for 24 hours. So basically that's one of the reasons for it. Another reason is, so that's, a solution that's coming. It's going to be very exciting. I think we're hopefully going to, people are racing to get this done. Hopefully we're going to see people parties taking place in a few weeks. That's super exciting. There's another reason, apart from getting elevated trust privileges, people should want to prove personhood. And that is, you can boost a neuron. So one of the things we struggle with, I think all blockchains struggle with this to some extent, is the power of whales, right? And I'm a whale, right? I'm a founder of the project. I've got a ton of ICP, but there's lots of people who participate. I participated in Seed. I put all my crypto into it, and I've got ICP through other routes too. And there are some big players in that 2017 Seed round, and of course they got a ton of ICP. Now, bully to them. Well done. You took a huge risk and it paid off. But I think, often in crypto, we talk about ideas like, universal wage. And we don't want to create, if you want to create a real Web3, decentralized ecosystem, you don't want it dominated by whales, right? Mm-hmm. And that also goes for the network nervous system, right? There's a lot of whales, who keep a lot of ICP in the network nervous system. And there's like $10 billion locked in there at the moment. And they're getting these great voting rewards. Again, brilliant. Thank you for securing the network and so on. But what we'd like to do is increase the voting power and economic power of real human beings, right? Mm-hmm. Now, obviously, we don't want to turn this into a sort of universal wage system where, like, this guy locks up, $10 million in his neuron and he gets the same voting rewards as this guy who's only locked up, $1,000. That would be absurd, right? I mean, yeah. We still want the whales to lend us their capital and to lock up vast amounts of ICP and secure the network and eventually invest it, help invest into the ecosystem. But we also want to balance that by giving more voting power to individual human beings and also more voting rewards to recognize the fact that they are indeed an individual human being that's participating. So these people, if you participate in a people party, on the one hand, you can increase the trust rating you have in services like District and OpenChat and many, many others. Discover probably will do it. On the other hand, though, you're going to be able to increase your voting power and voting rewards. So essentially, when you prove personhood, you're going to be able to boost a neuron in the network nervous system, right? So I don't know the details yet, it hasn't been decided, but let's just say you've got 10 ICP inside a neuron in the network nervous system. You could boost it, and now all of a sudden you've got the same voting power, and that means voting rewards as if you had 50 ICP locked inside your neuron. Now, obviously, there's going to be some limit. You're not going to be able to boost it beyond, right? If you have like, if you've got 1,000 ICP, you're not going to be able to boost it, right? Because you're probably getting onto being a bit of a, not quite a whale, but you know what I mean. But yeah, we want to make sure that like every individual can, who has a modest amount of ICP and they're participating in the network nervous system, they can basically boost their voting power, right? In consideration of the fact they're actually a human being, right, with their own brain, right, and also increase their voting rewards. So I think it's going to be pretty exciting. And I don't know, we're going to keep on running these again and again, right, until we get the People Party thing right. And every single time that somebody participates, they're going to be able to increase the trust rating that they have as an anonymous person, and also boost more neurons. Now, we don't know how many people will participate. I think the first iterations are going to have to limit the numbers of people. It's going to be fully decentralized there. It's all going to be run by smart contracts, no cloud or anything like that involved. But I think that the smart contracts will have to limit participation initially, because we don't know how many people. It might be only 100 sort of decentralization fanatics actually turn up. Who knows? Maybe it's just me on my own or something. But there's a big possibility that actually we get some thousands even in the first one. So we probably have to limit participation, in which case it'll do it like a lottery or something to decide who can take part. But we plan to scale it up and hopefully have millions and millions of people taking part in these people parties. And the system does that, right? Because what it's doing is it's randomly sorting everyone into individual virtual parties, and people don't have to, in fact, it's very important that people aren't in the same place, right? And to be clear, it's true that when you RSVP, you do have to commit to a location. And then when you participate in the People Party, you have to show you're actually there. That's not because we're trying to track, or the systems involved are trying to track anybody or associate people with a location. It's simply because that's the only way that's what enables people to prove that they're actually a real person in one location, because you can't be in two places at once. But the smart contracts will delete that data after the People Party's run. It's not a purpose like you proved it wouldn't mean anything anyways, because I could be in Amsterdam one day and do my People Party there and come back here to Zurich. So it wouldn't provide any useful information anyway.
Sure, of course. So the People Party is trying to solve that problem of that community moderation that we haven't really figured out in a centralized environment. Because I know that one of the biggest websites in the world doesn't even pay their moderators. So
that's right. So you got to think about it like Les. Like, we think, we proceed in very structured ways, as you'd expect, because, we're very science and engineering driven. So, the first problem we had to solve was enabling people to, authenticate themselves to blockchain dApps and services using cryptographically enabled devices like the fingerprint sensor, Face ID, YubiKey, Ledger Wallet, whatever, in a way that kept them anonymous, right? So, the actual private keys exist inside these TPM chips, and they're only used in conjunction with internet identity. So it's not, we're not like, the internet identity doesn't know about somebody's device. That's another misconception. People hear that you authenticate yourself using your devices with internet identity, and you hear all this mad stuff on social media saying, oh yeah, when you get internet identity, all your devices, a link to all your devices is stored on the blockchain, right? And they're tracking. Of course not. Like, it uses a protocol called WebAuthn, right? And basically, for use with internet identity only, a key pair is created inside a special chip on your computer or your laptop, or inside a secure element on a Ledger Wallet or something, and it's only used with internet identity. It's a key pair that lives there, that's separate to every other key pair. So internet identity allows you to authenticate using your devices, but it doesn't identify your devices to internet identity. Of course not, right? It's an anonymizing system. And not only that, when you go between different dApps in the internet computer ecosystem, they're all seeing different pseudonyms. So that's layer one, right? Enable people to authenticate anonymously and securely using cryptography with the minimum of friction, right? And you probably agree with me that pressing the fingerprint sensor to get into OpenChat is a minimum of friction. And it's more secure because although it's using cryptography, you're never actually touching the keys yourself, right? Because if you can touch the keys, and you're sort of backing them up by sending yourself a chat message or something like that, they can be stolen. Okay, so we've got this layer 1, which is, anonymizing and very convenient to use and highly secure. Okay, layer 2 is we just want to be able to, identify, grant things to people because it is an anonymous universe that can say, I'm a human being, I'm a single individual, right? And there's going to be this personhood profile thing that you can create. And people can actually create multiple personhood profiles, just to be clear, but there are advantages to topping up the trust in just one. And, that means that we can, boost the voting power of, actual real people, right? And increase the rewards they receive, which is more democratic, which I think everyone in decentralization and blockchain can agree is a worthy aim. And then, the third layer, which is probably going to have to wait a while because we're kind of snowed under, is property-based identity, which relies, again, upon advanced cryptography. In fact, Jan Kamenisch, our CTO, was the guy really who invented this, at Sovereign, and showed how you could do this efficiently with zero-knowledge proofs based on BLS and things like that. So essentially, that's going to enable you to collect attestations, right? And once you've collected these attestations, you can prove things anonymously to people. I could prove to you that I'm over 21. Sadly, I could prove to you I'm over a much bigger age, right? But let's say I was getting into a nightclub, right? I was going to a nightclub. You could be the bouncer, right? You could be the bouncer, and you'd have like a phone, and I would walk up to you with my phone. They'd communicate by near field, communication, right? Mm-hmm. And you would see my picture with a tick saying over 21, right? And so you as the bouncer, yeah, this dude in this picture, which is him in front of me, is over 21. But I would have convinced you of that in zero knowledge, right? Without ever having to give you my driver's license, say, or something like that. So, that's a very simple application, but, you can imagine reverse mortgage markets where as an individual, you can participate in the reverse mortgage market and, prove you're a citizen of some country, you've got a job that pays so much, you've got a house that's worth so much, there's, an existing mortgage of so much, and so on and so forth. And you can go to this mortgage market and say, hey, give me mortgage quotes, refinancing quotes or something like that. And, the people involved in, the mortgage brokers, if you like, or the mortgage companies involved in that market can be convinced of all of the salient facts, right, that they need to give you a quote, but they don't know anything about you. They don't know your name, address, or anything like that. And then you can introduce rules and, that you can only participate so many times without accepting a quote and so on and so forth. So, that's called property-based identity. So, we're approaching it in a very structured way. At the bottom layer, you've got internet identity, which is an anonymizing blockchain authentication system where you can, authenticate anonymously with great security and with great convenience because you're just touching the fingerprint sensor or look at your Face ID or something. Now we're adding another component, which is personhood. People can prove they're a human being, an individual human being, and that allows us to, for example, increase the voting power in the network nervous system accruing to that person and give them greater rewards, and allows them to be given elevated privileges in SocialFi, merging SocialFi and GameFi dApps, for example, as moderators that can mute miscreants, employed by other blockchains that are just posting junk day and night. And then that's the second layer. And the third layer that's following is going to be property-based identity. But that, I think we might get it done, halfway through 2022. It's actually quite a complex.
Well, I know that somebody this week just announced the metaverse, but it sounds like y'all are building the actual building blocks over there that those guys are going to need to depend on. So.
Well, the decentralized metaverse. So look, this is just what's cool, right? I mean, look, I love NFTs, and it's all very, NFTs are great and everything, and but. Blockchain is going to become about much more than just like, a picture you can buy and sell, right? Collectibles. Blockchain is going to become the final stack, right? On the internet computer, you can build entire systems end to end from smart contracts. You don't need the corporate cloud. Like the internet computer is the final stack, or is designed as such. Maybe we'll fail on some, but someone's going to do it, right? And the aim is obviously to have all of humanity's information systems, rebuilt using smart contracts. But when that happens, they get reimagined. Like DeFi is built with smart contracts, and so it makes use of new capabilities and looks very different to traditional finance. Now, if you look at OpenChat, for example, it looks very much like WhatsApp, although I believe there's this update coming in a couple of weeks that's going to change the way it looks. But the point is that it's not just about trying to replicate WhatsApp on blockchain, on the internet computer. That's table stakes. You've got to replicate the basic functionality running entirely from blockchain just to get moving, right? But, established tech has these immense network effects, just like traditional finance has immense network effects. And you need to use the power of tokenization to win and to overcome those network effects. So, sorry to keep using OpenChat as an example, but I think it's a good way of explaining it. What you're going to see when they fully decentralize and run decentralization auctions, probably in January, is the introduction of advanced tokenization. Your blockchain chat account is also a crypto wallet, and you can send Bitcoin with a chat message, right? Which is obviously one of the exciting things that's coming with the Bitcoin integration, and do other things like negotiate for NFTs and do atomic swaps and sign documents and notarize documents. You sort of need this. You need this just single unified Web3 environment to pull all that stuff off.
Yeah, and it would be
GameFi is the other one. Like GameFi, you're going to see play to earn, right? And you can't do this stuff. For example, if you believe like me in decentralization, then you believe that the next generation of social media and GameFi will make the users, the owners, and the team, right? So let's think about OpenChat, right? But it's prototypical for any social fi service. It's going to start probably randomly airdropping algorithmically, right? Not an airdrop in the traditional sense, but the actual smart contracts themselves are going to start giving out, governance tokens to users that are actually online, right? So let's say you're online, it's going to say, hey, I don't know, complete this captcha to prove you're not a bot. Okay, well done. Here's 3 governance tokens. At some random time, you never know when it's going to happen. So if you're not online, obviously you're missing out. Hey, man, prove you're not a bot by doing this captcha, and you get next time like 6 governance tokens. And so the point is that people, through that kind of approach, you can ensure people are online all the time, which obviously is very important when you're building a social media service. You want people to be online so they can interact. But by making users the owners, you're also making them part of the team, the business development team, because they're going to go out and tell their friends about it and say, hey, come and get an OpenChat account. You can get these governance tokens, right, by being online. So they're going to become advocates. That's kind of what happens with blockchain now, right? People advocate for the blockchains they're invested in. But it's more than that too. That's one, in a sense, the users will become the owners, and the business development team and the moderation team, right? The users are the future owners and the team. Now, of course, within that mix, you're also going to get investors who acquire these governance tokens, either as individuals or venture capital firms or hedge funds, and you're going to get the developers that build out these services who are going to be incentivized with tokens too. But they're just going to look very, very different to the services of today. And that's what's so exciting. It's SocialFi and GameFi that's going to bring in billions of users to blockchain. That really is where this is going.
Well, yeah, because I can almost instantaneously take a line from where we are today to the things that you're describing with GameFi and all this other SocialFi. We could take things like, Web Turks, those repetitive kinds of things, and turn that into GameFi with these things that it seems like y'all are building.
Yeah, totally. And you mentioned the metaverse. I think I tend to go off on these tangents, but back to your original question. Sorry. You mentioned the metaverse and Facebook and so on. I'm sure Meta is going to be horribly successful, but God help us, right? That everyone's sort of floating around inside Facebook's walled garden. This is not where we want it to go. The metaverse needs to, be built on blockchain, and it needs to, make things like, cryptocurrencies, NFTs interoperable. So, I can be in one virtual world. I mean, by the way, the internet computer runs WebAssembly. Smart contracts are like a bundle of WebAssembly and persistent memory pages. Have you heard of Unity? Unity is one of the biggest game engines in the world, right? Unity now will compile down to WebAssembly, so you can run it in the browser. So you can have end-to-end WebAssembly. Yeah, it's going to be epic, right? The point is, you can be in a 3D world, right? Served into your browser. Basically, it's WebAssembly compiled from, down from some Unity app, and it's interacting, with more WebAssembly on the internet computer blockchain, right? And you could be in this three-dimensional world, right? And no doubt there's ways of getting out the browser full screen and connecting it to a, virtual reality goggles and all the rest of it. But what's important though with this is it's completely open, and the developers can, introduce cryptocurrencies into that space, NFTs into that space, and imagine this. We've just talked about OpenChat, and the fact that OpenChat is not only a messaging platform, but also is going to do all this other stuff like, be a cryptocurrency wallet, enable you to send cryptocurrency or chat messages, sign documents, negotiate for NFTs. Well, guess what? Let's say someone builds a GameFi game, right? End-to-end WebAssembly. They use Unity and internet computer smart contracts written in Rust or Motoko, say. And, obviously, they introduce cryptocurrencies and things like that, or, token, it's fully tokenized. But they could also say, we need some chat functionality. Okay, we're going to import OpenChat into our game. Right? And so, now you can meet people inside this, three-dimensional metaverse and then start chatting. But when you're chatting, you're reusing your existing OpenChat account, say, and you've got all of these, tokens available to you and things like that. And not only that, OpenChat itself should be designed in such a way that it's extendable by other blockchain developers, right? So OpenChat really just becomes the sort of nexus of many different smart contract-based systems, which itself now appears within some three-dimensional kind of environment. That to me is the metaverse that we want to see, like, an open permissionless public blockchain, where innovation, is free. If anyone can innovate.
So less of a walled garden and more of a park where that guy over there, he built the pond, and that guy paved the road, and that guy planted some plants, and maybe there's somebody that builds Unity or writes Unity, or somebody who's got some WebAssembly experience watching right now. I know we're kind of running out of time here. Y'all have a grant program still going on?
We do. I know we've got a big, and it's going to go on forever. I mean, I'll be honest with you. I mean, the Definity Foundation's grants aren't the biggest. Despite all the nonsense on social media that we did some kind of rug pull and we sold billions of dollars of tokens. We actually didn't sell any tokens initially. Right? We're well financed. But we're pretty modest with our grants, except there's a difference here. Our grants program works in a different way. So first of all, the purpose of the grants really is to take you to a decentralization auction, right? So we give out grants, and, the aim of the grants is to fund people to get to that place. And not only that, we give follow-on grants. So what we tend to do, rather than trying to, we don't want to be discriminatory, right? We don't want to be like because what you're tending to see already with other blockchains is you're just getting all the usual suspects getting these big grants, right? They're like teams out of Silicon Valley that are connected to venture capitalists. We prefer a much more sort of organic approach, right? Where, it's much easier to get a grant initially. And then if you need more money to get to a decentralization auction, we'll give you a follow-on grant based upon progress that's demonstrated, right? So the modus operandi is pretty much, hey, you want to get a grant to get going, here you go, right? If you can't get to a decentralization auction from this, come back to us, and if you can demonstrate progress, we'll give you another one. But the aim for everyone, in our view, should be to get to a decentralization auction where you can hand over control of your SocialFi, GameFi, DApp or service to a service nervous system, which is like a sort of DAO. And that thing then runs a decentralization auction in which it auctions governance tokens to the public and runs under the control of the community thereafter. And you obviously probably very likely still lead the community as a primary contributor. But we believe we're going to see. I mean, I think there's like 50 plus dApps already planning to do this in January when this functionality goes live. Who knows how many will be ready by then? I think we're going to see, much larger amounts of money raised in this way, directly into decentralized autonomous organizations, right, that run autonomously and control these dApps and services. Today everyone's like, if you look at the crypto media, it's like, I'm not talking about these dApps unless you tell me that they've raised $10 million in grants from some foundation and from venture capital. And it's kind of like, I just hit my head. I'm like, this is meant to be Web3 for crying out loud, right? Why are you obsessed with dApps that raise money from foundations and venture capital? What should matter is, what are these dApps doing? What's the functionality provided? What's the experience? And most importantly, what's their decentralization plan? Like, how does this really work within this new ecosystem, this true Web3 ecosystem we're trying to get to? But I think they're going to start listening anyway early next year. My prediction is that these fully decentralized Web3 dApps and services are going to raise vastly more money than these teams that have chosen to take the venture capital pill. By the way, the venture capital is still incredibly important. I would urge every single venture capitalist out there to get involved with the internet computer ecosystem. And you can fund very, very cool teams working on the cutting edge of blockchain. And when if you help fund those teams, when they run decentralization auctions, you can have a slice of their founder tokens. This is exactly how blockchains like the internet computer were funded originally back in the day. So, dApps are becoming like blockchains themselves. Really, once you run under the control of a service nervous system, you're really becoming an extension of the blockchain yourself and creating a microeconomy within its macroeconomy. But that's the important point. You're becoming part of an extension of the blockchain, and that's why you can do advanced tokenization. And these things are going to go huge. And VCs, it's definitely going to be a very fertile ground for VCs. But the important point, though, is that the aim is to decentralize, right, rather than be centralized, because it's only through true decentralization that you gain the freedom to do things like, socialify and gamify that will basically merge social media functionality with DeFi functionality, or game functionality with DeFi functionality. If you try doing that on Amazon Web Services, you'll get away with it for a bit, and then sooner or later you're going to get in trouble and be self-censoring like Uniswap. Anyone out there that's excited about blockchain, check out the Internet Computer.
Awesome. Well, thank you so much, Mr. Dominic Williams.
Thank you.
Chief scientist and founder over at Dfinity Foundation. They're working on the Internet Computer, which is building true decentralized Web 3.0 apps and empowering the community to do its own moderation and, get a little bit back for it. So thank you for talking with Reimagine today.
Thank you. Williams. Yeah, thank you very much. Awesome. It's been fun.
You're tuned in to Reimagine 2021. Yes, it is I, your friendly mutant, non-fungible, totally not boring, totally not 453, but rather 452 ape. As you know, I was born of a yacht club, and it's definitely easy to get carried away with exaggerating just how glamorous it is to go on weekend sails to exotic tropical islands and all of that. But trust me, it's not all it's made out to be. Sometimes you even have to cook for yourself in the salty air. The point I'm getting at is that we often glamorize that which is new and foreign to us, as long as it seems to be a solution to all of your problems. And this is true with the concept of decentralization. Although decentralization is helping the humans reinvent many of their outdated ways of living, it definitely comes with its drawbacks. Up next, we'll turn to see just what some of the common misconceptions of decentralization are, what it can do, what it can't do, but don't take it from me. I can do whatever I want. I'm a trust fund, baby, remember?
Right now we're in Times Square. Times Square is taken over by NFTs. We're sitting on some of the most incredible events that are happening, and the only way you can get in is if you own one of these digital assets.
Now one of these digital assets is for sale for $3.2 million. It's an explosion like nothing we've ever seen on the planet.
It's something that you can't actually see, but that's why we're here, because you can actually see it.
Wealth is being generated at massive amounts.
In the form of digital billboards, in the form of merchandise. Some don't get the benefit. With NFTs, everyone shares in the benefit of the upside.
We're in Times Square. We're talking about the Dirty Bird Flight Club, the most exclusive club, I think, in events right now.
It's a generative NFT project, 9,090 birds, all made by Birdcap, a legendary muralist, and artist for us in 2020. We have a different artist every year at Dirty Bird. And all the birds kind of get you inside the Dirty Bird family, I would say. Yeah. I'm just really excited to talk to other people in the NFT community and to not be DJing the entire trip, just actually be talking to people and finding out about other projects and finding out different ways that we can expand our project through new technology and new ideas that other people.
So NFTs really give the opportunity to capture moments in time, to secure them with blockchain, crypto technology, and anyone can really own it, right, in a decentralized way. So this is really going to help a lot of photographers and underserved creatives, right, bridging the digital world, but also capturing real world moments. A moment in time is about collecting the community spirit, and it's all tokenized in the digital form.
And into the forefront, make crypto mainstream, help people along the way, and create an amazing community. And have a fuckload of fun.
So I'm a collector, and I look for promising artists who really don't have the exposure that they should, and I offer mentoring and my advice and try to kind of be a kingmaker and connect people. So you have teams like OpenSea. I mean, we're here in the Edison on the rooftop, and OpenSea is one of the featured blockchain NFT platforms here. Polygon you can mint for free. They've implemented gas-free minting on ETH. And then you have platforms like Harmony One who have a huge grants program. So it's just people taking a chance, believing in themselves, and it's folks like us that have to grab them and tell them, you can do this, take a chance, here's a little bit of the walkthrough. You have a lot of collectors out there that they just want to buy stuff that they know is going to go up, established projects that are going to turn a profit quickly. You have to take a chance on new creators. And for me, the high that I get from that is the elation that they feel that they just have the first investment in their work. And that empowers them to get better equipment, that empowers them to be able to travel and to build. And who knows, one day I could turn a profit on that photo, but it's not about that. It's about really bringing that person in the space and feel that love. And they're gonna be adopted into the space forever, building and contributing, and hopefully, if they make some money, helping others.
Teller, we know your project is only as decentralized as your source of data. DeFi depends on oracles to supply real-world data, making it valuable infrastructure, but vulnerable to attack if centralized. Teller uses a decentralized data community, offering complete censorship resistance. Teller is a proud sponsor of REIMAGINE. Teller, data cryptofied. welcome to Reimagine 2021. This is our 11th monthly conference that we've been doing. Super excited to be here today. We host these events as part of our monthly series, bringing you nothing but the best projects, bright minds, and leaders in the space. We've been fortunate enough to invite many talented individuals and teams to come speak with us, providing updates, insights, and all of the above that's happening in crypto. I'll be your host today, Adam from the Mouseball team, where we focus on early stage investments through our accelerator, or providing development support to a number of growing projects, as well as education within our Mouseball University program. Our main objectives and goals are pretty simple. It's increasing adoption, use cases, and real-world applications. So thank you for tuning in. I'm joined here by a couple special guests. This is, I think, my first joint interview with two co-founders. I have Adam Jackson and Gabriel Luna Ostaseski, co-founders of BrainTrust. How you both doing?
Doing great. Thanks for having us.
Yeah, thanks for having us here. Excited to jam with you.
Awesome. So as I kind of mentioned, when we first met, Reimagine really is just kind of educating our audience, people that are wanting to learn, not just in the crypto space, but outside of our bubble. And that's what we're here to do. We've had over 500 interviews for the last 12 months. And, the demand for this type of content has just been strong and robust. And so I'm super excited to have both of you guys on. You've never been on before, so this is our first go around. So let's kind of get into it. I know you guys come from the Web 2 world. Now you guys are operating in the Web3 world, which we'll get into, and I'm super excited because I don't think I've had anybody on with that kind of background, and so looking forward to getting into that. But first, I'll let both of you pick on who wants to go first. But how did you both end up in blockchain? What was leading up to this path to BrainTrust?
Gabe, why don't you go first?
Yeah, sure. So see, I think I bought Bitcoin back in 2013, but I really didn't know what I was buying. It was kind of just like taking a flyer on something, and then kind of lost track of it and got re-energized, I think, in 2017. And what started to get me really excited was as a non-engineer or a non-technical co-founder, I was trying to understand, like, where do I fit in this space? And I started to see like use cases emerge that weren't just pure like engineering or pure finance use cases. And so that's kind of where I started investing more, advising some projects, and just kind of like going down the rabbit hole. And then reconnected with my old friend Adam here, who we've known each other for 14 years, and we're jamming together. And he had this incredible idea, and I just wanted to get as close to it as I possibly could get.
Awesome. And Adam, I'll let you go ahead, but I feel like everybody kind of got into, not everybody, but I got in 2013 as well. That was my first experience on the Bitcoin side. I was in banking, and so everybody falls down this rabbit hole. But Adam, how about your story that led you into blockchain?
Yeah, sure. I have a friend, a longtime friend, who lives in Europe, who was one of the original online casino pioneers, and he told me about Bitcoin actually in 2011 because he started using it as digital cash, the original use case for it. So I bought some back then. Again, like, didn't understand the gravity of it, kind of forgot about it, and probably sold it when it hit a couple thousand or something like that. I've been in and out of Bitcoin for a long time, but now I'm in, would never sell. But my background is investing and building in Web 2 marketplaces, and then I sort of got into crypto full time in 2016. Got to participate in the Ethereum crowd sale, the Binance crowd sale, a bunch of other kind of cool things, many of which didn't work out, but all amazing experiments. And so I really got, like, when smart contracts came around, and that's what really hooked me. And this idea of, a token being the new organizational backbone for networks of people, sort of replacing the corporation, just became completely fascinating to me. And that's what I've been working on ever since.
No, sounds great. And I'm really excited to get into it because the Web 2 world, I think people underestimate kind of the impact that's had, and the history of the internet, centralization, extracting value from the users. And now we're really giving value back, to the client base, the users, people that are leveraging kind of the protocol itself. So let's talk a little bit about BrainTrust, and I'll let you guys kind of divulge there from Web 2.0 and then how Web 3 like really impacts the type of concept that you're working on, which is it's a decentralized Upwork freelance, not only that, but finding talent. But it's so interesting because everybody wanted to decentralize everything, Uber, Twitter, and all this stuff, right? And you guys actually targeted a market leveraging talent, and it's really competitive. And you guys know from a dev team how tough it is to find engineers, to find developers, people in the crypto space and whatnot. So I'll let you guys get into. My question is Web 2.0, Web 3.0, and Brain Trust, and kind of what led you to Brain Trust.
Yeah. Well, and I think if you, even it's helpful context, like if you go in the rewind machine even a little further and you kind of look at the history of the web and you say like, okay, well, Web 1.0 was really around, I'll say like connecting people, but it was very much the Wild West, right? There was no trust, there was no payments, there was no escrow services, things like that, right? But it was still this kind of like fundamental shift, being able to connect people that didn't know each other from all around the world to transact. And then what you saw in Web 2.0 was kind of the introduction of a few kind of novel innovations. Like one was escrow services, two was payments, three was clearly like the mobile phone, like a new delivery device. And then a new business model, which in the marketplace world was essentially own the transaction and take a rake or a transaction fee out of that, right? And that gave rise to many of the Web 2 marketplaces that we know today, right? Ranging from StubHub to Airbnb and Uber and kind of everything in between. And listen, those have been the dominant business models of the last, 2 decades. And what you see happening in that was like, Adam and I together, and we've invested and advised over 100 Web 2 marketplaces and built as well. And so when you're on the front lines of that, what you see is kind of like, I'll say the dirty little secrets. And the dirty little secret of all of these Web 2 marketplaces is essentially that they build enterprise value by extracting the maximum amount of value from their users in the form of a take rate or a fee, right? And what that does, that scale, is it puts the users at odds with the operator. And you can see that it's across the board in every Web 2 marketplace. The drivers hate Uber, the Dashers hate DoorDash, like across the board. So when your users hate the operator, like the writing's on the wall. It's just a matter of time till something comes along and kind of disintermediates. And so what we were witnessing over these past few years is basically flipping that old model on its head. In Web 3, instead of centralizing, the goal is to decentralize. Instead of maximizing fees, the goal is to minimize fees. And instead of concentrating governance, the goal is to decentralize governance and give power back to the users. And so I view that shift as like this fundamental shift in the way in which these businesses are done. And one analogy that I've used in the past is kind of like the shift from like software being sold on-prem with multi-year contracts to software being sold by the month and hosted in the cloud. And so this new business model of user-owned and user-governed has such strong incentives. It's just a matter of time for it to start eating into all of these Web 2 marketplaces that extract disproportionate rents from their users.
And what is Brain Trust?
Yeah, Adam, do you want to cover that one?
Yeah, so Brain Trust is a decentralized talent network that connects knowledge workers, mostly tech, so engineers, designers, developers, product managers, with companies, typically Fortune 1000, that have insatiable demand for them. So that marketplace model is in and of itself not new. The way the network is constructed, owned, and controlled is completely new. So instead of a for-profit seeking company in the middle, like an Upwork or a Fiverr, whose job it is to connect supply and demand, and then take as much of that fee as possible in the form of a rake, right? They're rake maximizing businesses. Brain Trust is the opposite. It's a network it's a series of smart contracts and software that essentially replace the for-profit entity, Upwork or Fiverr or whatever, even staffing firms like Accenture. And it's controlled, the future of the smart contracts and the rules of the network are controlled by token holders. And so there's no equity, there's no company in the middle, just like there's no company that runs Bitcoin and no company that runs Ethereum. They are in fact run by many nodes. Brain Trust is the same. It's run by, the talent essentially are the nodes of the network. And the future of Brain Trust is controlled through on-chain and off-chain governance, one token, one vote. And so when you have when you've replaced the for-profit entity in the middle with software, you can then change the rake. You can lower the rake to zero. So we charge talent a flat 0% fee, and our clients pay a 10% fee, and that's basically just to sustain network operations. And so when you bring the rake down like that, you enable a couple things. One, instead of a rake eroding network effects and incentivizing people to disintermediate the operator of the network, you actually have the opposite case, right? We actually have what I call a negative rake, where the more you contribute positively to the marketplace, the more tokens you earn, the more control over the network you have. And so what that enables is much larger, more interesting ongoing projects. So on an Upwork or Fiverr, you're talking about an average job size of a few $100s. On Braintrust, it's something like $76,000, like massive ongoing projects for the likes of Nike, Goldman Sachs, Porsche, Nestle. And so what that means is folks that don't want to work at, in a cube farm in Mountain View anymore, or, have a W-2 job at a staffing firm and sort of, go where they're told and have no autonomy, can now unbundle out of that corporate environment and be their own boss, be their own freelancer, and work for whom, when they want to, from where they want to, at a rate that they think is fair. And we publish all the global rates. There's none of this geographic arbitrage where, a client pays $150 an hour, but the guy, in the Philippines makes $20 an hour. None of that stuff, right? That's all flattened out through this transparent model at Braintrust.
No, that's fantastic. And you touched on it a little bit. The tokenomics. Can you explain a little bit how you earn tokens, who's getting the tokens, who are the stakeholders, and then two, how you guys have a unique node functionality. If you can talk a little bit about that as well.
Yeah, sure. So the way you get the token is you help build the network, simply. Now, there's dozens of ways to do that, but the most popular ways are inviting talent, helping screen that talent, making sure those folks are who they say they are, et cetera, or bringing on clients. We have a user type on the network called connector. So they're not here to hire, they're not here to do the work, they're actually here to just connect. So like think recruiters, and those folks are rewarded tokens for bringing new clients to the network. And so that's primarily how you earn tokens. There's dozens of other ways you can earn tokens, but those are the big ones. And so that's growing and curating supply and demand. Those are the main functions of usually thousands of employees in a marketplace business, right? If you go to Uber's office in San Francisco, most of the people in that office are doing that, building supply, building demand. In our case, we have the community doing it. It's not a centrally controlled system, it's decentralized. And then the way you use the token is, primarily governance. There's also features. We have staking features that are under development. So it's not like Ethereum staking where you're earning bonuses for locking your tokens up. In our world, it's different. It's staking tokens along with your bid in order to increase the likelihood that you win the business, or clients who are trying to attract more qualified talent to their job will award some tokens for qualified proposals. Right. So we think of tokens, in our utility token world, tokens are used to unstick parts of the flywheel, right? If all marketplaces have a strong flywheel, tokens are a great way to help ease the friction, alleviate the friction in a flywheel. So another example would be like, it's a kind of a big ask to have talent come to Braintrust and create a profile and verify their work history. There's like a good hour of work there. Sometimes it could be shorter, but and so that's a friction point where we might award tokens for completing that and getting people through it faster. So that's how we think about token economics at Braintrust.
Awesome. No, that's fantastic. And the governance, the voting, the vetting, how has that been operating? I mean, for our audience tuning in, you guys have been around for a few years, Braintrust. How has that been? How's that operation? How's the flow? And then more importantly, how has the vetting of talent, how do you get good quality talent in there?
Yeah. Well, I mean, I think the first thing would be like when we were first starting this, there was countless people that were saying like, who cares governance? Like, why does that matter? and like in many companies, you know, as a shareholder, especially a small shareholder, like it frankly doesn't matter. If you're running your business on a platform, you care quite a bit about the fee structure and how the network runs and how it expands. There's countless of examples of this in Web 2 that basically like the platform makes a decision that has enormous adverse effects to drivers or dashers or whatever it may be. So in our case, governance matters quite a lot. And we've seen this kind of explosion of governance proposals just in this last 4 weeks or so. And this happens primarily in Discord is kind of like the first step is anyone in the community can propose something for governance and they have to put up some tokens to be able to propose. And then there's a huge amount of discussion that happens in dedicated Discord channels where people debate the positives, the negatives, the externalities of a decision like this. And then if it kind of gets to a critical mass, then it goes into kind of a temperature check function on Snapchat, where people actually have to connect their MetaMask wallet or whatever the wallet is and actually vote with their tokens. And again, it's a one token, one vote system. So there's a strong incentive to both like earn tokens and hold them. And then it actually will go through a next stage of governance and then a final stage of like on-chain governance and then implementation. And so we've seen, I forget what the exact number is, but let's say 5 to 10 of these things go through just in the last 4 weeks that had wide range of activities ranging from staking to fees, categories, things like that. And it's all publicly available. Anyone can view it on in Discord or on Snapchat, on Snapchat.
Not a lot of governance happening on Snapchat.
Yeah.
Very little. And you know, blockchain and crypto, as we all know, community driven, network driven, contacts, relationships, everybody working together for a common goal. What have you noticed about the Brain Trust community, the participants, the engagement that maybe has surprised you, or you know, that has led to some good success in a short period of time when people were trying to decentralize everything? But you know, they used to say, build it and they will come, right? And that wasn't so true. Like you first needed a community, build that up, trust. And so what have you noticed, I guess, from your community?
Yeah, I mean, I think a couple of things that are approaches that we've done things intentionally different. Number one is in the beginning, we focused on building a sustainable and successful network with product market fit. And so that was our primary objective, basically from 2018 to the beginning of 2020, was building a functional platform and also building, you know, enough liquidity on both sides that the marketplace worked and generated transactions and had high NPS. And that's, I frankly, like, that's again, my point of view, but I saw a lot of projects that basically like built community and then never got to actually a successful network. And so we took a very different tack there, and we're really successful in doing that, and then started to layer on more and more community and governance functions after that. And so I think the advantage to that is like when people show up to the network, it's not like an idea. It's not a blog article. Like this is a network that has 100 of the Fortune 1000 companies hiring. There's tens of thousands of community people that have already been there and been hired. And so what we saw was really interesting is like when we hit mainnet in beginning of September, we went from about 1,000 people in our community to over 150,000 in less than 4 weeks.
Wow.
And so what you see happening now is like, you know, people get attracted to projects that are already having success and that are, you know, proven models that they can then plug into. And frankly, you can just accomplish a whole lot more then because there's a clear direction, you know where you're going, and also you know kind of what works.
And why do you think it's interesting? You guys are working with, like you said, Fortune 100 companies. Yeah. And in the crypto space, people are trying, you know, in the blockchain space are trying to get to enterprises, institutions, you know, various big players. Talk about kind of the demand from the traditional side and what you've noticed there. And that's that's already a big win there in itself. So talk about a little about those relationships using and leveraging brain trust.
I mean, a couple things. Either one of us can touch on.
Go ahead, Gabe.
So I think, it wasn't a guess of why we picked this category. Like, it's $1.5 trillion market continuing to grow every single year. And so the opportunity is really to become the global protocol for internet labor. And what you see happening in global enterprise is that they're dealing with the Great Resignation, and they're also dealing with a battle for technical talent that is unwinnable, especially if you're a Fortune 1 company in Lansing, Michigan, or St. Louis, Missouri, and you're trying to.
Oh, did we lose Gabe? Adam, can you still hear me?
Yeah, I got you.
Okay. Here, I'll pick up and we can have him come back. Kind of tacking on, like the whole, like, these enterprise companies actually don't care about blockchain. Let's be really clear, right? They care about things that can be made better for them because of blockchain, right? And so Nike, there was an article in Protocol about the Brain Trust Network a couple of weeks ago. Tomio Jaron wrote really in-depth analysis, and he was saying the headline was Nike uses blockchain now and probably doesn't even know it. And the reason is because Nike is drawing talent off the Brain Trust network. Why? Because there are talent on Brain Trust that they can't get anywhere else. Oh, and they're not paying this giant marketplace fee or some ridiculous markup from a staffing agency, right? And so they're like, hey, you've got talent we can't get, and you've got it at amazing prices, and we can directly interact with them. No BS, walled garden stuff. Cool, we're in. Oh, is that powered by blockchain? Great. Then we love blockchain, right? Like, that's the thing is there's people in the space, a lot of us who have been early to this love the technology. We love what it stands for, all the freedom, the disintermediation of corrupt institutions, I think is like the core of what gets all of us early people in blockchain excited. But corporate America doesn't give a shit about any of that, right? They have to see real value. And so that's, I think, a great use case.
And what about the UI UX component? We had a portfolio project as well, like completely remove blockchain from their pitch, from their deck, right? Like, it's just a tool, in the stack, but we have a business model, and that's what we're going to talk about, right? And blockchain just happens to be a component, part of the piece. How do you see the UI UX? That was a big issue in blockchain crypto, just in general. How have you guys targeted kind of that flow? And I'm assuming you kind of just brought in the front end from what we're used to, few clicks, the onboarding process. Can you explain when someone goes to Brain Trust from either end, a talent seeker or somebody looking for employment? What does that flow look like?
Yeah, UI UX is critical in this space, right? It needs to be easy to use, and like Web 2 got that right. Like, think about what Airbnb did for user experience in the vacation rentals market. When I say user experience, I don't just mean a pretty app and a pretty website. I mean, like, there's insurance for when you rent your place out. There's curation for these types of guides that can help you have a great experience in your new city. Like, Airbnb is obsessed with user experience, and it ended up consolidating the entire super fragmented, often scammy vacation rental market, right? And so user experience has to be more than just UI and pixels. It has to be like how the users feel about using the service. And so crypto has a lot of room to improve on user experience, right? And look, I think, let's give credit where it's due, right? I think Coinbase has done a great job of improving the user experience, of onboarding new folks, right? Not everyone wants to be their own bank, like, I think it's cool, right? I mean, it's a cool idea, whatever, but like, that's not right for mainstream consumers. And it's certainly not right for enterprises, right? Big companies don't want to hold keys, right? They want to use qualified custodians, right? And so thank goodness Fidelity and Bakkt and Coinbase and Gemini are great players in this space. And so With Brain Trust, it's the same thing, right? Our clients may be interacting with crypto, every time they use Brain Trust, but there's no reason to like clobber them over the head and like force them to use MetaMask and stuff like that.
Fantastic. And maybe Adam, maybe this is to you on the technical side of things. All these moving parts, you guys are developed on Ethereum, or I'm sorry, Scale or Ethereum?
Both,
right? Talk about kind of the decision there, the congestion, the network, infrastructure. What did you guys envision, and how has the evolution gone from when you guys kicked this thing off, a few years back to where you're at now, and what was that journey like? It's been tough, right? There's a lot of competition, a lot of various chains. Everybody's battling for users and dApps. What was your experience in choosing a technology, and how has that panned out?
Yeah, sure. So with Web3, decentralization has varying technical decentralization has varying degrees of importance based on which category you're in. So in DeFi, it's super important, right? Like the thing needs to be decentralized top to bottom, both the front interface, the protocols, anything happening off chain, super important, right? Because, they're challenging, really highly regulated banking systems, and decentralization matters. With what we're doing, it matters a bit less. So, our tokens are the main business rules for the network, all the governance, that's all ERC20. That's all, we forked even Compound's Governor Alpha, which, Compound and Uniswap both run for on-chain governance. We didn't want to reinvent that wheel. So the important stuff is on-chain for us. Like some of the like matching engine and stuff, happens today just in Python, Postgre, moving to Scale, right? Because that stuff can't and shouldn't be on chain. When picking a layer one, it's amazing now to see the progress like Solana and chains like that have made. When we had to pick one, a year or two ago, there was no choice, right? It was like Ethereum was the dead obvious answer because nobody uses Definity or Tezos or things like that, right? Even though I have tremendous respect for those projects and they're really creative and they have different trade-offs than Ethereum does. If you want enterprise grade custodians and 30,000 ecosystem developers and dozens of wallets, the Ethereum ecosystem is the only choice, right? Now, look, I think today, like Solana, is super interesting in that, and they're, a really credible alternative to Ethereum.
And are you set up, or will you just cross that path, interoperability, cross-chain, solutions? Are you guys set up for that, like in the future, or have that in mind when developing, the evolution of Brain Trust Network?
Yeah, it's something we'll always keep our eye on. Cross-chain interoperability isn't required for most layer threes. Although, like if you look at Audius has an interesting architecture where they use, the ERC20 for the bank and Solana for the other stuff. Yeah, I could see us, sort of doing something similar. Scale is sort of bridging that for us. They have a really interesting or a scalable architecture that way, and can do cross-chain stuff.
Yeah, no, I think they're fantastic. They're actually part of the REIMAGINE conference. They've been on a few times, and they offered their location for on-site filming. So that was kind of cool. Great team. They're working on a lot of things. What
we have an office there too. We're right next to them.
Oh, Shack 15?
Yeah.
Yeah. We were just there last week, kicking off all these interviews, and great spot. Great people coming in to discuss, what we're talking about here. So the topic of the theme of the conference is around NFTs, DAOs, and Bitcoin, or I'm sorry, government kind of influence on crypto and Bitcoin. This kind of ties into some DAOs and kind of this obviously decentralized, aspect of business. What are you seeing the future of, this type of use case? DAOs, decentralization, not only in the talent seeking spot, but do you see other use cases as well?
Yeah, I'm sure we have both the perspectives here. I think that, at a fundamental level, if you think about the evolution of Web 2 to Web 3, granted that the things in Web 3 might not just be the they might not just be ported over from Web 2. They might be new versions of it, or like iterations or slices of it. But I think the whole concept of these Web 3 projects is that they are decentralized autonomous organizations, right? And so I view it almost as one in the same. The DAO is just the kind of the organizing of Web 3 projects. And so, yeah, so I think there's a lot of really interesting experimentation here. And, I mean, frankly, that's always been the goal for us, is building a decentralized autonomous organization and a decentralized network. And that's what we've always been building. We just didn't call it a DAO.
For sure. I think early on. Adam, you have thoughts on DAOs moving forward and kind of how you see them operating?
Yeah. I mean, Governor Alpha is in itself a DAO, right? I mean, anytime, if you think about it, Compound has been operating a DAO basically since day one. And we forked all the same code. You have to be kind of technical to interact with it. So I would say that's like one of the limitations. I think this next iteration of the term DAO that we're living through right now, I think what gets people excited is like non-technical folks being able to participate. And so, I'm an investor in a few projects that are helping facilitate that sort of infrastructure. I think it's awesome. I think, disintermediating gatekeepers of capital has always been something I've been super passionate about. Gabe and I have never liked our mandatory trips to Sand Hill Road we've been making for the last decade and a half. And, frankly, I don't think most of those folks are qualified to gatekeep that capital. And so not to say every DAO is going to be a smashing success with amazing IRR and, benchmark style returns, but, more capital flowing to more creative people, and doing so in a transparent way on blockchain-based DAOs can only be good for innovation, right? It's a super exciting thing.
What do you see like the next disruption around DAOs and kind of this decentralization aspect? Do you see any other verticals or other industries that maybe you've kept an eye on that this is going to impact?
Any industry that extracts disproportionate rents from their users is and will be susceptible to this new model.
Yeah, I think, any Web 2 marketplace where one or more sides of the marketplace hates the operator, that creates excellent opportunity for disruption. And so, I go back to my there's a spectrum of web-enabled marketplaces where on one end you have very high fee extracting, eroding their own network effects, all the way to, hey, the fee they extract is probably commensurate with the value they provide. And so on this side, I'd put Airbnb again, I think they provide as much value as they extract or more. On the other side, you look at Uber, DoorDash, these companies that force restaurants into gross margins, steal their tips from their dashers. The gig economy is just this expose of new exploitative ways that technology can steal from poor people, essentially working class. So I think it won't be terribly long before every package, person, and thing delivered to your house is done so by a driver who owns part of the network that they work for.
And I think kind of what you guys are working on, this concept, is really, how do you see it attracting like top talent? You guys are already providing top talent to the network. What do you think this decentralized aspect does to somebody as a user or looking for employment? Why would they be more attracted to this? And you kind of summed it up a little bit in terms of ownership, more control. And I think you guys could probably elaborate more on that.
Yeah, I mean, I think that, part of our guiding force here has always been to make working on Brain Trust better than getting a full-time job, and also better than hiring someone full-time. And so if you start there, then what do? You have to unpack that, right? So you say well, why would somebody take a full-time job? Well, they would take it for continuity, right? Knowing that or at least the theory is, you have a safe paycheck. But there is some level of consistency there, right? The second component would be that like you feel a part of something, right? You collaborate, you feel part of something bigger than yourself. And then I would say like, you know, the third part is like working on something that you really enjoy and like having good incentives, right? Earning money or stock options or whatever those things may be, right? So if you unpack those components, you say like, well, what if like you could have long-term jobs with the best, like the biggest brands in the world. You could set your own rates and keep 100% of the value without somebody taking a huge chunk out of your paycheck. Oh, and guess what? Like you could also be a part of building the future and actually have a voice in governance. Like, and granted, there's more things that we're going to stack on top of that. But if coming out of school, like instead of getting an entry-level job, imagine if you just joined Brain Trust and you could work from wherever you wanted in the world, doing the work you love on your own terms, and also like earning more than you could earn in a W-2. Like that's when this thing starts to flip.
And it seems like with Brain Trust, what that allows and the people that are looking, they can work for whoever they want. They can work for, you know, a Nike and Adidas, or, you know, tech company A, tech company B, and really kind of leverage their talents and skill sets for each employer for certain projects.
I mean, listen, we've got like companies in every major category, right? We've got everything from Twitter to Porsche to Nestle and Goldman Sachs, right? Like we've got representatives of the biggest companies in every single industry. And so, and also like all of these core roles ranging from product to engineering and design, and obviously more categories to be added as well.
Do you see kind of this DAO infrastructure being like an alternative to an LLC, a new legal entity that people will just operate in and do deals with, you know, investment DAOs and various social DAOs and all that? Do you see kind of this new framework as a way to do business amongst your community and invest your time that way?
The DAO is definitely the new LLC. There's no question, historically speaking. We're in this transition period though, where like code is law until it's not, right? It's like, there's only so many things you can settle in a smart contract. Now, eventually probably everything, but as long as there's a real world and there's fiat money and there's on-ramps and off-ramps, you need a connection between the DAO and your local jurisdiction. And I don't see that going away anytime soon. That's why I'm so impressed with places like Wyoming that have, you know, they're absolute pioneers in this space, right? You can form an LLC, like an actual LLC in the state of Wyoming, and have its owners or members be Ethereum smart contract addresses. That's freaking cool, right? There's a judge in Wyoming that said, cool, that's all right, we'll enforce that. That's a big deal. And so, and you know, it's important for compliance and taxation and all these things, but you know, it's amazing to see how quickly that's moving.
Yeah, I mean, definitely Wyoming's leading the charge there, you know, across the jurisdiction landscape, and especially in the States with a few other cities. But yeah, Wyoming's definitely kind of, you know, leading the way. Another topic, you know, not to move so quick, but NFTs. How have you guys seen that play out? That's kind of, you know, DeFi summer last year. Now we got DAO booms and NFT booms. Real quick on kind of what's going on from your thoughts and opinions on the NFT market.
I love art, right? And so like, I think this is a new way for people to both own and distribute and co-own art in its current iteration. Obviously, there's a bunch more implementations of this kind of use case in the future. So like, I love that, like two things. One, I love that like people nerd out on stuff, whether it's coffee or wine or cars or watches, whatever it is, like this human desire to collect things. It has been around since we collected rocks and will be around till the end of time. And I think this is just a modern implementation of that, which I think is cool. And then also I love seeing creators get more of the value that they create. Traditionally, artists have been exploited by art houses and people kind of sitting in the middle in the same way that freelancers have. So I view those folks as our brethren. And I wish them well. And I'd love to see more artists earn sustainable incomes and be able to create beauty in the world.
Yeah, totally agree with that. I would tack on that, NFTs they're a new primitive of the digital economy, right? So if you think about like kind of these, crypto punks or like, $250,000 pictures of rocks or whatever, like these are sort of interesting blips. The same way, like, remember 15 years ago, somebody made the $1 million homepage where they had 1 million squares sold for $1, whatever it was. And like,
Yeah.
that was like a nonsensical thing. That's our version of like a rock, right? An NFT rock that someone would pay 200 grand for. But what ended up, he ended up being very prescient, because it was like, oh, this is sort of the beginning of like interactive commerce and commerce through community and scarcity. And right, it was almost like a precursor for digital scarcity, right? And so that's what NFTs, it's not just for digital art, right? It'll be for provenance of everything. And especially if the metaverse actually takes off, which chances are probably that's the next big thing, NFTs will be the core primitive behind that.
And one last question, actually, kind of take it back, and we'll conclude here. We'll wrap it up in a few minutes. What's needed or what's required for DAOs or decentralized kind of dApps to go more mainstream? Is this more infrastructure? Is this just kind of time? DAO starter kits. You guys were in the early days and you guys wrapped it up and kind of, forked some things, took some things, some ideas. What do you see is kind of some barriers or what's necessary for people to come in and kind of ramp up and build their own kind of decentralized dApp or DAO?
I mean, I think the thing that's so unique and also an amazing canvas for entrepreneurship in this space is like composability, right? And the fact that you can now piece together things so fast. And if you look at Adam, you can tell me if you agree with this comparison, but like if you look at the world of like SaaS applications today, like you used to have to build all of those things, right? And now there's like Twilio, right? You can like pay by the text message. And there's BI tools. There's basically all of these components that you can basically rent by the month or by the use. And so I think that is the proliferation of projects that provide the infrastructure then enables entrepreneurs to build things faster than they've ever built before. And guess what? You now have like the faster distribution of these ideas through Telegram, through Discord, through these like established crypto channels. And so what I think is really cool is that like entrepreneurs and or teams or communities will be able to build and distribute things faster than has ever been possible before.
Yeah, it's on the technical side, it's composability, as Gabe's saying, right? The having underlying layers of complexity hardened and then abstracted away for the next layer of innovation, right? We think about layer 1, layer 2, layer 3 in our world. We couldn't do what Braintrust does at layer 3 without all of the amazing cryptography at layer 1 here with Ethereum and layer 2 is scale. And then second, we're moving from hierarchical corporate environments to networks, right? Flat networks. And so just what Gabe was saying, innovation won't always just come from some corporate committee, who says like, we need a new style of sneaker and here's how we're going to think about it. It'll come from, it'll be crowd created. And now you have a money layer, to reward outcomes.
Fantastic. Yeah, that's always just a question, for entrepreneurs, founders, people that are tuning in to Reimagine, kind of understanding the landscape, the environment of how to whip up a project. It does take, some research, some understanding. But as you mentioned, Gabe, like the infrastructure, what's available now, provides a little bit more, resourcefulness to start building, right? And not focus on, like you said, building from scratch.
Never been a better time to be a builder or an entrepreneur or a creative. This is like, we're watching the future get created. And so I would encourage people to dive in and start. You'll learn more operating within a DAO or volunteering or contributing in a month than you will in 6 months of reading about this stuff.
For sure. Very hands-on. engaging, participating. Those are kind of the keys to success. Where can our audience and viewers learn more about Brain Trust? Where can they follow and get more information?
Yeah, sure. So we're at braintrust.com is the main website. And on there, you can learn everything about governance, how the token is designed, how to earn. You can also sign up as talent, a connector, or as a company looking to hire. Or you can also catch our social channels from the main course site. So if you're a developer or want to be involved in the really active community, you could join us on Discord. Or if you just want to follow along on our social channels, you can welcome to do that. So that's a great jumping off point.
Perfect. Well, we'll go ahead and conclude here. For all of you tuning in to Reimagine, thank you for taking the time out to listen to this discussion. I was joined here by Adam Jackson and Gabe Luna Ostaseski, co-founders at Brain Trust. Thank you both for being on. We hope to have you back soon.
Thanks for having us, Adam. Good to see you.
Thanks for having us. Take good
All
care.
right. Have a good one. Thank you, everybody, and hopefully you're enjoying the conference.
Consensus is a pathway to good data. At Teller, we use a permissionless network of data reporters in our Oracle. No more private data manipulation. Your staking and dispute models make sure the data reported on-chain is up to consensus standards. Teller is a proud sponsor of Reimagine. Teller, the unstoppable Oracle.
Mutant Ape 452 here. You know, if there's one thing I know as an ape, it's that human beings can go a little bananas when they try to get organized into well-functioning communities without the right kind of leadership. It's just a fact of nature for the hairless degenerates that somehow, some way, the alpha gorilla, the CEOs, the presidents, the de facto leaders, more than often end up with too much power, and their centralized control becomes a single point of weakness. In that case, all that it takes to bring down the house of cards is for a single actor to slip on a peel. But one of the interesting developments in the world of crypto and Web3 is the emergence of what is called a DAO, a decentralized autonomous organization where no single actor is in charge and no single point of failure puts the livelihood of an operation in jeopardy. With the evolution of business reaching its modern apex at the birth of the DAO, it's now possible for entire communities to govern a company, a project, or the development of software, amongst other things. Stay tuned to find out more about this revolution in decentralizing technology. Ape into decentralization, folks, and opt out of the old school.
You thought DeFi was just a buzzword, did you? You thought you could remove our face from your books without a legitimate explanation, did you? Does a mask on Ben Franklin offend you? Or perhaps the symbolism frightens you, because it represents the end of your arbitrary decisions made in the name of elitism? Well, I've got news for you. The decentralized financial revolution isn't letting up, and we will not be silenced. The future is being determined under your nose. I suggest you wake up.
Hello and welcome to Reimagine 2021. This is our 11th edition, our 11th conference over the past year. We host these events every month and bring you nothing but the best projects, bright minds, and leaders in the space. We've been fortunate enough to, invite many talented individuals like the one I have here today. Not only that, their teams to come speak with us, providing updates, insights, and all the above that's happening in crypto. I'll be your host today, Adam, from the Mouseball team, where we focus on early stage investments through our accelerator and providing development support to a growing number of projects. Our main objectives is pretty simple. It's increasing adoption, use cases, and real-world applications. Feel free to check out Mouseball University. We mentor and advise a lot of student clubs and universities around the world. So I'm super excited to have Wobi Exchange here, global strategy, Jeff May. How you doing, man? Thank you. Welcome to the show.
Hey, excited to be here. Thank you.
So we've been doing this now for over a year. Unfortunately, COVID hit, which allowed us this opportunity to really invite industry leaders like yourself and teams and companies, and what we've been working on for the past 4 or 5 years, depending on who you ask. So before we get into it, Jeff, what's your role with the company, and then how did you land with Wobi Exchange, and what's been your experience down this blockchain crypto journey path?
Yeah, sure. It's very nice to meet everyone. So I'm the director of global strategy at Wobi, and I'm pretty much heading all of our global expansion initiatives, right? So, as you know, crypto is all over the world. Crypto is in every single place. That's the point of crypto. We need some kind of strategy to kind of get it there, right? Get our exchange, get our service and products into the hands of everyone. That's kind of what I'm focusing on right now. My story, a quick background about myself. I'm a Los Angeles native. I'm from LA. Went to UCLA. I've just been in LA for a lot of my life. But I've always kind of wanted to head to China. This was back in May, those are 10 years ago. I already had this thought that China was developing so quickly. A lot of tech, a lot of new innovations and technology were kind of coming out from there. So I always wanted to head there. I wanted to kind of learn Chinese, better my Chinese, kind of immerse myself into all the different things going on there. So I headed to China in 2015. And then I started off in just a lot of different tech startups. We worked with 500 startups. We were kind of in the tech zone, the startup little community out there. And then I kind of got into crypto around 2017, 2018. I actually bought my first Bitcoin a while back. This was a really shady way to buy it for around like $250. That was a long time ago. But in 2018, a lot of people started to ask me, yo, you're from America? Like, can you get Bitcoin? Like, can you get there's like the thing called Ethereum? Like, what, can you get this stuff? And I was like, yeah, I can get it. Right. So I started, we formed a team together, and then through, our own creative methods, we're getting crypto in the hands of a lot of Chinese users. So then I kind of got into this space a little bit near that time. And then I joined Huobi over a year ago, and they really needed someone who understood global markets, who knew Chinese, who would kind of piece it all together, right? Become the bridge of Huobi in China, which is the roots are in a Chinese exchange, right? The roots are in China, but of course the services are for everyone. We have users in over 130 countries, right? So they really needed someone to piece this all together. And that's how I kind of got my role here.
Awesome. And we'll get into that, talking about shady transactions, how to buy Bitcoin. So obviously you landed in the right spot when you're talking about, owning Bitcoin, how to buy Bitcoin, and for all those tuning in, right? Like, it's very critical. These are components of the space that we need. Important companies to exchange various digital assets, and we'll get into that shortly. And by the way, UCLA, we sponsored one of their first blockchain accredited courses. So proud of that. So go nice. Bruins, go Bruins. And one question that I asked before we get into this interview, this month's conference is around NFTs, DAOs, and kind of government's impact on global adoption, really, and I'm sure you're experiencing all three. But before we get into that, you as an owner of Bitcoin, you going to China, people ask me about Bitcoin. What does Bitcoin mean to you? Right? It's financial freedom. Is it just a digital currency? Like, how do you view Bitcoin when you first saw it, and maybe where you see it now? And what are your thoughts around Bitcoin as a cryptocurrency or a blockchain native DApp or software? Like, what's your thoughts on Bitcoin?
Sure. Yeah, I mean, more directly, more easily, I think Bitcoin, of course, as a store of value, I think it's functionally, it's very functional, right? Everyone can use it. It's easily shared. You don't have to go through a lot of, I mean, this is good and bad, but like a lot of legal restrictions and parameters and all these hoops to jump through to share share something, right? But to me, it actually, I like how the roots of Bitcoin started. It means so much more than that. It means that, a community, something that's not a government, just a community of people, right, created this one thing that had adoption around the world. Something that was made by, a couple guys in the beginning, guys or girls, we don't know, right? A couple people in the beginning, but it got traction and people recognized it. So for me, it's like a symbol. A Bitcoin is really like a symbol of how there can be something that can unite the world, right? I mean, there's a lot of, politics and hate and all this, conflicts going on here and there. But Bitcoin just shows that, no, if there's something that a lot of people believe in, everyone can get together and approach this one thing, right? And even the Bitcoin today, the value over 60,000, it's because of the adoption of the acceptance from all the people around the world, right? That's how the value is so high. And that's why it is a store of value, right? This consensus among, communities in any country or region. So that's what it means to me. It means that, people can do something, people can expand these possibilities, and people can have something created from scratch that the whole world can recognize. That, I think that's like almost doing the impossible. So it gives hope. I think Bitcoin really gives me hope.
Awesome. And one of the things, which is great, I think we have people just getting into the space. Reimagine is for everybody in the space, out of the space. And our goal is really to educate that and highlight, Bitcoin's impact, crypto's impact. So let's get into the company that you work for. Can you talk a little bit more about what Huobi does as an exchange and the importance that you guys bring to the table and the value that you add to your end user?
Yeah, sure. So of course, in the really beginning, right, Huobi is an 8-year-old exchange, and that's actually something special in itself, right? You can see a lot of crypto moves fast. There's cryptos dying out every day. There's new cryptos springing up every day. There's exchanges getting closed down. There's policy. But the fact that Huobi has been resilient and has been alive for so long, it just shows that this company actually has something that people need, right? And what is the thing that people need? Of course, in the beginning, the most basic is fiat to crypto, right? We help you get crypto. We help you turn your cash or credit card into cryptocurrencies. That's the one thing. And the second thing is why people want to get into crypto is all the amazing projects, all the amazing tokens that, that represent the projects out there. Huobi gives you access to that, right? We are an exchange. We literally get you on, we try to get the best assets. We do our due diligence to make sure that it's not some like vaporware or some coin that's going to scam people or run away. We try our best to do due diligence for you. And then we give you access to these tokens, right? So that's what we do. But of course, Huobi is more than that. And by being in the game so early, and a lot of players in Korea, in China, and Japan, we had access to all the major primary, big players in the Asian market, right? And Asia was a huge start. Satoshi Nakamoto, right? They say he's from Japan, right? Asia was a huge start for the creation and the growth of Bitcoin. So by being in that space, Huobi has really developed an entire ecosystem, right? So whether it be DeFi products, NFTs, public chains, DAOs, as you said, or even now in our more traditional products, such as asset management, brokerage, venture capital, Huobi has an entire ecosystem that we have very experienced and very long-term players that in each of these parts. And that's what makes the ecosystem great. It's not a new thing, right? We've been building this for years. And that's why I think Huobi Group is a little bit different than other exchanges. We don't just focus on that one product.
Yeah, exactly. And I think there's there are multiple exchanges out there. What's going on in kind of the exchange world, right? You have your top players like yourself, and then you have a bunch of other little, exchanges around the world. There's exchanges popping up. What have you seen kind of the trend? Are there more exchanges coming out? Is there a condensed, environment of them kind of slimming down to a select few and leaving the market share up to Huobi and others?
Yeah. So you could kind of think of it like this, right? So we'll just say a couple years ago, right? Not exact, but a couple years ago, there's no real regulation, right? Crypto's a little bit new. Exchanges are kind of operating out of, Seychelles or whatever, Cayman Islands. There's no real regulation on what the exchanges can or cannot do, right? And then because it's in the web, it's in the, the metaverse, right? Anyone can access these exchanges, right? So then anyone can be an exchange. Anyone can have these tokens. Anyone can buy and sell. But as the trend goes on, as there's more mainstream adoption, as governments are hiring, these cryptocurrency divisions, right? They're adding these, special teams to kind of dictate or create, laws for cryptocurrencies. As they're doing this, there's a new regulated policy. So you're going to see the trend is these exchanges are going to have to go and get licenses to operate in these countries, right? There's so many countries around the world. Before there's no regulation, it's a free playground. It's a Wild West. Just get as many users as you can. But now it's like, okay, it's legit now. It's an asset, right? You can see in the US, they're regulating ETFs now, right? So it's like, it makes it legitimized. So exchanges also have to quote unquote legitimize, right? We need to get the licenses needed. We need to follow the right rules to operate in each country. So that's going to be the trend. The short answer to your question is, I believe that in the future, there's going to be regulation on all exchanges, right? Every country is going to have this policy, have this kind of, management to see what's going on, right? What these exchanges are doing. It's a lot of outflow of money, right? It's a lot of inflow and outflow of capital. So I think the regulated exchanges are definitely going to survive. And then of course, there's going to be more, with the regulation, there's going to be these more boutique gray zone underground exchanges like, all right, you don't need to do anything, we'll just let you trade. But of course, they might get shut down, they might die out, they might not be as safe as, a regulated exchange. But, regulation is definitely the trend and the way to go.
Yeah, exactly. And I think that's important, right? We need some guidance. We need to operate efficiently, effectively, and not only that, safely, security, right? Making sure that all measures are, all these hacks that we hear about. How do you guys manage kind of the cybersecurity and protection of the Wobi exchange? Obviously, we see these headlines and people are nervous to jump on exchanges. You guys are, the safest kind of exchange that's out there, at least to beyond the standards that you would hope to have, right? How much pride do you guys take in kind of managing that process on the security side?
Sure. You mentioned security, and that's really just one of our main differentiating factors from other exchanges. Because nowadays, before it was like a fight for who could get the best tokens, right? But now everyone can get the best tokens, right? So it's really about security. After you have those tokens, after the customers come into your exchange, how do you protect them? How do you provide an environment that they feel comfortable holding? You can go to sleep at night with as many, your great crypto wins and not be scared, right? So for us, I think it's really in the history of Huobi with the founders. They're a very technical team, right? I would just say even earlier on, Huobi has lacked in marketing, right? You haven't seen us have crazy marketing campaigns around the world. We've been really focusing our resources and our energy and our infrastructure on that security. And we're very proud to boast, Huobi is one of the only exchanges that has never been hacked or never had a security incident in 8 years, right? So technical infrastructure is always number one on our minds when we're building something new, right? It's not about getting users. It's not just about how to get as many people in as possible. It's really about, let's build it safe first. Let's have the infrastructure. Let's have this foundation. And then with this foundation, we can bring them in, right? And then for us, we have very strict KYC, especially since we adhere very, very closely with regulatory policies. KYC is very important, right? A country wants to, manage or take care of their own people, right? So you need very strict KYC to do this. We don't try to do the gray zone, answer the question, allow you to use VPN type thing. We really focus on that to get the right users.
And talking about global strategy, that's your role. You're managing director there, handling that, which is, a critical component to growth and making sure that you guys are ahead of the curve. And not only that, providing solutions and working with the market and your end user base. How do you focus? What's the strategy, I guess, to operate in specific regions? What have you noticed from the Americas to the Asias to Africa? How does that play into Wobi's strategy, for the long term?
Okay. So I think with strategy, you can break it down into two parts, right? One is the regulatory part. We have to work with authorities, we have to work with regulation, then you can operate, right? And then the second part is the product, right? You got to give users what they want. So it's really about finding the balance between these two things. And that's how you got to have the quote unquote perfect exchange, right? The perfect business. So with regulators, they're different. They're all different, right? Every regulator, some of them we have good relationships. Some of them have stronger relationships with our competitors. They might add some unnecessary hoops for us to jump through. So we work with a lot of regulators, of course, in Korea and Japan. Earlier, we were the only ones with the license, right? We work very closely with them from the beginning. So it's easier for us to integrate, to operate in there, right? That's one end. So for regulators, it's really about finding, there's areas where there is no regulation, right? Then we could just freely operate and that's not against the rules. And there's areas where they require very strict, like for example, we'll just say the US, right? For the US, there's a lot of different, at first it wasn't as regulated, right? And then afterwards they had a lot of different laws and a lot of different things like that. So in the US, we definitely work closely with them, but it's just a longer process, right? The US is a very developed market. We're all American, right? We know what you need to go through, right? To get something passed. But for example, the US, we have a trust license, right? That means that we can have custody of assets, and we would only do that service, right? We can have trust, we can have custody, but we won't do trading there, right? It's kind of like the same type of thinking with every market, right? And then the second thing is about the product, and that's really just finding what people need, right? For example, in Europe, in UK, we have a large customer base of institutional customers, right? Asset managers, hedge funds, this type of stuff. So then for there, we want the best trading products. We want more advanced trading products. We want to give them data analytics for them to make the right investment decisions, right? That type of stuff. For Southeast Asia, it's really more retail user oriented, right? So in the retail markets, we like, for example, GameFi's hot right now. In Southeast Asia, they all want to get into GameFi, right? It's fun, they can make money, right? So then we'll develop our GameFi products out there in South America, Southeast Asia, right? So it's really about finding that balance.
Nice. And I think, product market fit, you guys are definitely listening to that, some feedback, which is great. What are you seeing kind of globally, and this at a high level, retail and institutional? A lot of institutional players. Is it more retail at the moment?
Yeah, I think institutions are flooding in. Of course, capital-wise, institutional is gonna definitely take the lead, right? The amount of capital to bring in is like, one institution could cover thousands of users, right? So institutional is definitely every institution. I mean, not every, but the majority of institutions who have not been looking into crypto before are starting to have these, crypto researchers are starting to have crypto investments as part of their portfolio. This is definitely a huge trend that we're looking for in the next 2 years, especially like hedge funds, quant trading funds, high volume, high frequency trading funds, these type of stuff. They really want to get into it because the volatility in crypto is too attractive, right? They got space to play, right? And then retail users, I think retail, especially like you see lately, like Twitter, even like Burger King, I think recently had an ad out with crypto, right? It's becoming more mainstream. As it becomes more mainstream, retail users are more comfortable with it, right? So I guess it's a worldwide thing. I don't see one more than the other. I see both parties really running forward and really understanding, really wanting crypto lately. Yeah.
Definitely. And we're going to touch on some of that community aspect of it, NFTs, which you're a holder of, DAOs, which is, social networking and bringing people, human coordination. So it's going to be a great discussion. And I think you have a lot to say there. My next question around Wobi is, you're not only an exchange, and you touched on this briefly. You guys, make investments, and I think you have other programs. Can you touch on a little bit of the programs? Because I think ultimately that fosters crypto, right? That fosters blockchain technology. That's not just buying and selling and just an exchange. You guys are adding value back to the network, back to the community, back to the industry. Can you touch a little bit on what you guys do outside of just the exchange?
Yeah, sure. With programs, it's a very good thing to talk about. It's a very good thing you mentioned that, because that goes hand in hand with user education, right? It's like, to bring people into the crypto world, you got to educate them, right? Some people don't even know you can split a Bitcoin in half or something, like they think, oh, I can't afford a Bitcoin. They don't know a lot about, adopting, using these crypto products, especially if you want DeFi products, right? It's even more complicated. You got to link like a MetaMask, for example. You got to link that to your wallet. You got 12 words, like you got to hide, right? Yeah. And that's access to thousands of dollars. People are not comfortable with that, right? So it's really about this user education process, right? And then we go to programs. So in order to foster an ecosystem, if you think of traditional finance, well, who comes first? The startups, right? You got to have more startups. You got to have more ideas and innovation and people willing to come and share their ideas, right? And you got to, as a big kid, as a big player, we got to support them, right? We got to help them out. We got to give them, money and the support and the insights that we've learned to help them build bigger and greater things, right? So for our programs, like for example, we had a $10 million DeFi fund, GameFi fund, a $10 million GameFi fund. Yeah, that's exactly just for that. We want these game developers to come in, share your gaming insights with the crypto world, right? We give you money, we give you, an office or the guidance, we give you like a coach, a mentor. We help you like build this, right? And then we have our DeFi fund, of course, that's really going to be investing in the DeFi projects. But there's all stages, right? There's like token projects, which might be literally a team of 8 people. There's these more, established projects that we have partnerships, collaborations with. And then, of course, there's these startups. Maybe it's just someone with a good idea. We want to give them a chance, right? And that's the beauty of crypto. That's what crypto is about. We want to really be pushing that forward.
No, I mean, we align, here at Mousebelt, same thing. We run accelerators, incubators. We have a dev team, right, and providing development support really to those teams that are building, actually delivering. And, we're trying to do our best on that front to make sure that everyone succeeds. So now thank you for highlighting that. And I kind of want to stick around this region, this regional discussion, adoption. And it's mainly around like governments. You guys obviously go hand in hand with some of the governments worldwide. What role do governments play in the growth of Bitcoin or crypto?
Yeah, I mean, at first, right? So before the role of governments were non-existent, right? They didn't know what to do. They're not just going to set regulations without learning about it, right? And then all of a sudden, the governments had this like bad sentiment, right? This bad sentiment that, oh no, the government's coming, we got to shut down, we can't operate, right? They're going to ban everything, right? And then now actually I think the sentiment has actually changed, right? Governments, for us, we see they're not there to stop you, they're not there to halt crypto, they're actually there to support you, right? They're giving you the laws, they're letting you have the access to operate in their country if you just listen to the rules, right? And that's normal, right? You got to follow the rules. We think it's pretty normal. So I think it went from like non-existent to like this evil person to like they're here to actually support you, right? So if government passes regulation and supports the different funds and cryptos, stuff like that, then we can operate. Institutions are going to be pumping more capital into crypto. And that's going to help the entire ecosystem overall. Whether it's Bitcoin, Ethereum, or any of the altcoins, overall the ecosystem is getting more capital in. I mean, we're at 3 trillion TVL right now, right? Total. So it's crazy. Not TVL, but 3 trillion total. Market cap. Yeah.
Yeah. No, exactly. And I think you're right. At first, they weren't part of the equation. Then they were kind of against it. And in crypto and Bitcoin in general, these, maxis as well, it's like anti-establishment. But I think now with the ETFs coming out, and we'll touch on that a little bit. But what do you think, like in some of these regions, right? Argentina, Paraguay, Brazil, right? They're all Panama. They're all showing interest. Even Mexico, the president isn't showing interest, but the cabinet and like the rest of the the representatives within the politicians are showing interest. What do you think about that? Like, you think that's kind of a solid sign with kind of increased interest is going to flourish in other regions, maybe outside of the developed world?
Yeah. So, the other regions, crypto, okay, so in the developed regions, right? Some people like crypto, like, I'm going to buy some cryptos, get a Lambo. That's like a basic one, right? And then of course, in more developed regions, like for example, the US, it's like, okay, this is an asset. This is a capital. This is, a token of value. We got to deal with this, right? We got to use it. We got to take advantage of it. Now let's talk about the developed regions, right? We can use the Venezuela example or some areas in Africa. Their inflation is in the thousands of %, right? Their currency is unusable. So in these places, you can see maybe they're not investing on altcoins per se, but they're using the cryptos as as a real token, right? As a currency that they're actually buying, selling, making trades, sending remittances, sending money to their families. They're actually using it as a the utility value of the token, right? And that's great, right? That's great. That shows that crypto can be used for its real purpose, right? And then with this adoption, right? If the currency is not usable, then countries are buying in, right? So it's like if you think institutions buying in is a lot of money, now imagine country level money, right? The money of an entire nation, right? If that's buying in, then crypto is going to take it to the next level. Of course, governments are going to be worried, right? Everyone wants control, right? You don't want to lose control of your finances, right? That's crazy. But so that's why you have the conversation of CBDCs, right? What are CBDCs going to do? Is it going to destroy Bitcoin, or is it going to complement Bitcoin, or is it going to support Bitcoin, right? This is the question that we're going to be asking. But yeah, I mean, overall, it's good for the entire ecosystem.
And talking about control, monetary policy, right? Like handling all that. I was in Miami for the Bitcoin conference, and I think it was El Salvador, I think, announced like they were going to make it legal tender, I believe. What are your thoughts there? And what do you think about this decision for El Salvador to make Bitcoin legal tender?
Overall, I mean, as a crypto holder, I think that's great, right? It's pushing the thing in the right direction. It's showing that, okay, this is not just for investors. Crypto is actually, legitimate enough and safe enough and secure enough that a country can use as tender, right? But I think for now, they really need to look at how they want to use it, right? Because the properties of crypto is that it's decentralized. It's not easily to be controlled, right? You can't control the supply. You can't control the value. It does have volatility, right? It does have volatility. If you're using it as legal tender and then some other, everyone has access to it, you have no control. It could tank. It could shoot up, right? It's that does pose some risk as an entire country. So I think that's one thing that obviously they're definitely evaluating. But yeah, that's just my thoughts on that.
Another question that I've asked others too, like, why do you think they just haven't maybe adopted a stable coin? Like, why Bitcoin?
Yeah, I mean,
talking about volatility, like you mentioned.
Yeah, I mean, with stable coins, I mean, there's some better stable coins, such as USDT, USDC, right? But even though some are regulated, right? Some are backed by capital. And let's, with the things that happen, how safe really are they, right? I mean, I think they're safe. I mean, for the short term, for more of a small, short term and small size volume, I think it's okay. But I think to support an entire country, then you really got to think about that if the supply is enough.
And do you think like it's unique that that country made it legal tender when about 70% of the citizens like protested against it? What are your thoughts there? Maybe it touches a little bit on education, but 70% were not in favor of Bitcoin. So what do you think kind of that dynamic poses, I guess, on the government, the president, right, and the citizens? And then not only that, like us here in the States thinking Bitcoin's great, and then, they make it legal tender, but like the citizens aren't that, they're not in favor of it.
Sure. Yeah. Okay. The easy answer, education, right? A lot of people don't really know what it is, right? And then, for example, if I'm a local citizen with, a lot of cash or a lot of savings, I've been doing this for, 20, 30 years, 40 years, right? Then it's scary, right? Well, you're going to switch this out. What's going to happen to my money that I've been working so hard for, right? The other one is, I think, access. Sure, you can legalize it or you can make it your tender, but you got to give everyone the right tools and channels to get it, right? They have to understand it and they have to access it, right? So I think that's one thing, they might be too far removed from it, right? You don't understand it, you don't have the access, it's difficult for you to support it, right? That's very normal. I think on the other end, I mean, I don't know, don't quote me on this, but I think there's other things to consider, right? I mean, with any decision, it's not just about that one thing. With the crypto decision or the Bitcoin, as crypto as currency decision, it might not just be about payments or currency. There might be a bigger vision, right? Maybe they want to say that, look, the world is moving in favor of blockchain. That's going to be the future of technology. Why don't we become the hub for that, right? Why don't we have this new policy that attracts the best talent, the best crypto talent around the world to our country and start building this, right? Just like a while back, Israel, right, was a major hub for tech startups, right? They had the intelligent people, they had the resources, the infrastructure to build that up. Perhaps that's what El Salvador wants to do, right? They already have a high use case. They already know that it's usable. Maybe they're trying to build this hub, right? There's other reasons, I think.
Yeah.
Besides from currency, yeah.
No, for sure. And I think you're right. I think even Pakistan as well is trying to do like certification programs with some of the protocols that we know, just to keep that tech talent, there within the region, and get everybody kind of used to it. So that's great. And then do you think it's like odd that country, and we've been getting everybody's thoughts that publicly he considers himself a dictator, and now he's choosing Bitcoin to make it legal tender? Do you think that has what do you think about that? Is that weird?
I'll just say no comment on that one.
Yeah.
Not really. I haven't been really following that. Yeah.
Well, it's on his Twitter. We found it. It's on his Twitter, and he like publicizes that, and we're just kind of like, is this a good thing or a bad thing? Like, the dynamic is a little too much to absorb when we understand Bitcoin. We think it's great, and this country is trying to push forward. But is it an experiment? Yes, and I guess time will tell.
Yeah. I mean, I don't have enough background information to know everything he did, but I would just say from what I know, if by testing it, by even experimenting with it, I think that's a step in the right direction. You gotta someone's got to test it, right?
Exactly. and I mentioned those other countries, and they're showing interest because of that. Brazil, Paraguay, Argentina, which you mentioned, like high inflation, and I think it kind of makes sense, and we'll figure it out. And another thing that was public, like the IMF labeling like cryptoization as a threat to global economy. Do you think it is a threat? And do you think not only to El Salvador but to the wider global economy?
Yeah, I mean, I'm very bold. And sorry, I'll just throw us in. I think I have to leave at 1 or 1:05. I think I have another interview.
Is that like 10 minutes?
Yeah, like 15 minutes.
Cool.
So maybe we could adjust the rate a little bit on that. Okay. Yeah. Sorry. To your question. So. With anything new, there's going to be supporters and naysayers, right? That's always going to happen. For me, I'm very bullish. I think that if every country can standardize the right regulatory policies and use it for not for everything, but there's aspects of crypto that are safe, that are easy, that's not going to replace or destroy or disrupt your organization that you have. I think if you use it correctly, yes, it's fine. But of course, as crypto coming out, it's really going head to head against every country's legal currency. And I think the main thing is its transferability, its ease of transfer, its ease of sharing. It's really hard. It's very difficult to restrict this kind of money inflow and outflow. I mean, to be honest, at the end of the day, it's all about capital restriction, right? They want to have a degree of management over capital going in and out of the country, and that's normal, right? That's normal. That you got to control, you got to stabilize your economy on that. And if you're only using these type of cryptocurrencies, perhaps it might disrupt that, right? But I guess it just depends, right? There's new technologies to help with this.
No, fantastic. And these are all great insights. And, we've been highlighting this across all of our speakers. And so we appreciate kind of your feedback and your thoughts and opinions. And, I guess we'll figure out what happens, in the upcoming months, years. So again, like I mentioned, NFTs, DAOs is around this theme. Let's jump into NFTs, which has kind of been a fantastic boom. We did an NFT event actually in spring, and maybe we were a little premature, but obviously things have been riding high. You're an NFT holder. What fascinates you about NFTs?
Yeah, I think it's the art aspect, right? It's really about the art aspect. It's about the gaming aspect. Okay, so there's different types of NFTs, right? For example, we'll just say the best use case, like supply chain, right? It's authorization, right? If I collect sneakers personally, I've always collected sneakers, but yeah, I mean, StockX did something very similar, right? They have the RFIDs to kind of show you if a sneaker is legit, right? Now with NFTs, the same thing, right? If we can have NFTs, if we can have this kind of tracking or this kind of serial number, if you will, on chain, then you can kind of track everything, where it came from, who's involved, what happened, this type of stuff. So that's supply chain. But why I really like it, it's really about the art aspect, right? I think in the beginning, many people may feel that crypto is either tech or business. Is one of those, right? I mean, it is, right? It's either, you're either a tech guy or you're some kind of businessman. Oh, I didn't study business. I don't want to play with it. I'm going to lose money, right? But it's actually, crypto's more than that, right? We mentioned ecosystem a lot because crypto is about bringing people in from all over the world. I think it's something that it's a bridge for nations and cultures, right? So NFTs is the perfect thing for that, right? Because NFTs, any artist can share their vision and have it easily shared, right? A lot of artists are afraid to, or not afraid, just don't have the channels, right, to share their art with the world, right? There's not that many channels out there, but NFTs kind of make this possible. And by storing it on the chain and having it last forever, right, that just means something in itself. I think it's going to contribute to more and more artists. It's going to contribute to more and more people being in the art world, right? So we could have a more balanced, society, right? We have business, we have finance, we have art. That's why I like it.
No, that's fantastic. And you brought up a couple good points that I've been thinking about and been discussing. And it's really the adoption aspect, right? We've kind of been talking about like currency adoption, transactional adoption, utility adoption. DeFi was, it's its own target market and use case. And that was very complicated for people to, leverage these financial services, right? And now we have NFTs in the creator economy. And now that's allowing people to kind of, get onboarded and really kind of understand what blockchain and what crypto does, and it kind of an easy way, more relatable aspect, right?
Yeah, definitely. Yeah. I mean, make it even easier. A lot of people didn't have wallets or anything like that, right? But then they want this NFT. Now they're going to do the research. They're like, oh, this thing is so cool, right? A Bitcoin, you can't see it, right? But an NFT, like, oh, I want this art. That's my favorite artist that represents me. Now I want to go create this wallet. I want to do the research about what crypto is, right? So it's bringing people in this way too, like you said.
Yeah, no, you're right. And I was just listening to something about kind of it being tangible in a ways, right? Like you said, crypto's one aspect, one dynamic of it, and NFTs more ownership, more understandable and a little bit easier to kind of gauge like what it is and what you're buying and kind of where you're at actually in the industry, right? And so that's right. Great. And so do you see, you're an NFT holder, like do you see some of these art collectibles and paintings and musicians and stuff, but more specifically to collectibles, CryptoPunks, Bored Apes, do you see those as a new store of value, just as Bitcoin is on the crypto side? Do you see CryptoPunks and some of these other collectibles as stores of value?
Yeah. I mean, I definitely see them as stores of values. I'm not saying they're not risky stores of values. There's definitely high volatility, but they're definitely stores of values. I mean, I think the way you can look at it is this, right? Like, I'll just use sneakers. Right? I like to collect sneakers. This sneaker is red and black and it's $500. It's the exact same Jordan sneaker or whatever, the Nike Dunk, and it's in blue and now it's only $100, right? Why is this one $500? This one's $100, right? But no matter what, over the years, this one is still $500 or more, right? So by that's the global consensus, right? The demand for it. So it's just like Bitcoin. Bitcoin's value is because of demand, and NFTs is the same thing. If it can be something that people can capture what people want, capture what people like, whether it's a piece of art or they're a fan of the artist behind it, or what's the symbol that it's representing. If there's demand behind it, then that's a value. So I think that's how I see it. Of course, that can fluctuate, but yeah.
Yeah, and I don't know if you read, but Adobe like put out just like a couple weeks ago, they have an option right on their Photoshop and kind of in their software where they can the creator has an option to make it an NFT. What do you think about that? Where it includes a content creation certificate, and not only that, it takes all their digital identity in a way and embeds it into the metadata.
Yeah, and this is another thing about how to get everyone involved, right? So it's like you think crypto is this complicated thing, and it's hard to get into, it's hard to access, hard to understand. But with these kind of apps, they're more user friendly, right? You're finally bringing this high technical aspect to the community, right? And letting everyone be involved. I think participation, whether it's giving them a $5 airdrop or NFT, or helping them make a wallet, that's what's going to boost this to the next level. People are having, they're touching it, they're understanding it, they're feeling it, they're looking at it every day. And this is just exactly that, right? You're letting these artists help them become part of the crypto world.
Exactly. And this will I know we got a few minutes to wrap up here, but we'll kind of conclude on the DAO section, right? This kind of leads into the community participation. Have you been following DAOs? And I know there's a variety of DAOs. Is there anything that kind of sparks your interest?
Yeah, DAOs get really complicated, but I think overall it's about this decentralized governance, right? That's what crypto was first created for. It's about creating this new system that's not centralized, that doesn't have one power or one man or one woman controlling the entire system, right? I think that's the sentiment of DAOs. Of course, we're still in a very developmental early stage, but I think it's a good idea, right? There's earlier projects, and don't quote me, I think it was either Compound or Uniswap. The DAO, it wasn't set up right? The governance was too hard, right? There's no way you can get that many tokens that you can actually make a decision, right? And they're saying, oh, that's BS, right? They're not really governing. Of course, the founding team has all the tokens, right? It's the same. But actually, I think, with oracles, with things coming out, DAOs are being more to the people, right? I think as we go on, there are going to be certain, not everything, but certain projects or certain, DeFi or financial, products that can be fully, independent without a governing body. So I think we're still in the very developmental stage, but I think that will be the future, but not for everything, obviously.
Do you think
specific products? Mm-hmm.
Do you think it's going to be like the new legal structure, like organizational structure of like a business, right? Not taking over your LLCs and corporations, but do you see it as another entity that is going to do business amongst other DAOs, and not only that, with other traditional institutions?
Yeah, I mean, of course, there's going to be legal, tax. We're going to do it step by step, right? But I think in the future there are going to be certain DAOs where they created the tech and it's just for the people, right? It's just out there. It's like, for example, we'll just say, I think Craigslist, right? When they first started, it's just a tool, right? It's just a tool for everyone to share their ideas, to be in a marketplace, right? They didn't really need to make money off of it. They created it for the community. I think DAOs are going to kind of run in that direction. But yeah, I think if government wants control, the point of a DAO is that it can't be controlled, right? So if the DAO is properly executed, then yeah, it would avoid these kind of issues.
Awesome. And I think we'll wrap it up here. Jeff, we appreciate your time. Really, we just kind of covered a wide spectrum of what's happening in the market, really. Government influence and adoption. We just touched on NFTs, right, and that community and engagement. And not only that, DAO structures and how those are popping up. And probably the next boom is right around the corner. And, I think, as you mentioned, governance is going to play a critical part to all of this. And where can people learn more about Huobi Exchange?
Yeah, we always have updates on our Twitter at Huobi Global, and then of course Huobi.com, right? We have Huobi Learn. We have our own educational platform out there where we try to bring people to the basics of everything, right? So I think from our website, we're going through actually a huge UX UI change that's going to come out soon too. So I'll hint that, but yeah, we'll make it easier for people to access, easier for people to use.
Awesome. Well, we appreciate your time. We hope to have you back. For everybody tuning in, this is Jeff May, Global Strategy, right? Head of Global Strategy.
Yeah. And can I give a shout out? When is this going to air?
This is going live the week of 17th through the 19th.
Okay. So actually, if you want to include this in there, you can cut it out if you need to. But it's actually our 8th year anniversary. So Huobi's turning 8 this year. We're having a huge promotion on this. We're having a a space ticket raffle. So we're going to send one of our users to space. Literally, we're going to get them on a rocket with one of our partners to space, right? So then it's kind of with what we talked about earlier. The point of this theme is also to show that it doesn't matter what country you're in, who you are, how much money you have. We want to give you this chance to experience, this innovation, this special experience, right? And that's what Huobi Exchange wants to do too, right? We want to make it easy for you to experience all these, special assets, whether it be DeFi, NFTs, anything like that. So it's all in this theme. And then we're also giving away millions in cryptos and NFTs. So yeah, we'll try to get you on a special whitelist, get you a special NFT box or something like that.
Awesome. Well, you hear it first, folks. Make sure you follow that. And 8 years is a long time in this industry. So glad to have seen the ride and been through the journey. I use the exchange myself. So we hope to have you back, Jeff. And thank you for participating.
Definitely. I'm always ready. It's a great talk.
All right. Thank you for everybody tuning in. Hopefully you're having a good time. And we hope to see you again.
Stay tuned. We're about to wipe the floor with this one.
I'm Robert Davi, and you're tuned into Coins, the only podcast that might literally set you free.
Welcome to the podcast Coins. I'm your host, Patrick McLean, and I'll be joined by a panel of experts. Sitting here today with Eric Voorhees.
I'm Sheila Warren.
Happy to be here with Dave Jevons.
I'm Asif Herji. My name is Bill Barheit.
We have Paul Brody, Whitfield Diffie. Mark, how you doing today? Kosala Hemachandra. Sitting here today with Dan Hell.
My name is Luke Kerner.
My name is Bruce Fenton.
I'm Nick Carter.
Melton Damaris.
Raoul Powell.
Roger Vair. Lynn Ulbrich. Anthony Scaramucci. Alex Mashinsky. I get to sit here today with Charles Hodgkinson.
Sam Bankman-Fried.
Nathaniel Popper.
Paolo Ardoino.
Could we define this as a war?
We know your project is only as decentralized as your source of data. DeFi depends on oracles to supply real-world data, making it valuable infrastructure, but vulnerable to attack if centralized. Teller uses a decentralized data community, offering complete censorship resistance. Teller is a proud sponsor of REIMAGINE. Teller, data cryptofied.
Hello everyone, welcome back to REIMAGINE 2021 version 11, our virtual conference series, bringing you nothing but the best projects, bright minds, and leaders in the space. My name is Miguel Vasquez, and with us right now is Derek Lau, game director for Guild of Guardians, a mobile NFT RPG published by Immutable. Immutable, of course, is the outlet behind Ethereum, one of Ethereum's highest grossing trading card games, Gods Unchained. But Derek, an NFT RPG, it sounds really interesting. Could you explain?
Yeah, sure. So we're working on Guild of Guardians, which is a mobile RPG. So the way the game works is you have a team of characters in the game that you can level up, fight through dungeons, equip with weapons, etc., to kind of progress, similar to a typical mobile game. And the NFT part is simply the fact that many things in the game are tradable as NFTs, so that players can earn them and trade them, they can use them, they can buy them from other players or resell them when they want, and that's one of the unique parts about the game. And broadly speaking, our goal is we want to create a really fun and compelling mobile game that's played by millions of players, where everyone's able to turn their passion for gaming into NFTs.
Yeah, definitely. I saw that you had actually said that one of the big ways that NFTs are actually employed right now is kind of that play to earn model, but you have something that you like to talk about called play and earn. Can you explain that a little bit?
Yeah, sure. So right now, the play to earn terminology is very common, and I think it's been picked up a lot by media. It's very catchy. One of the things that it implies, however, is that people are playing to earn money, almost like a job. So they're not necessarily playing for any other reason than to earn money. And that kind of makes it sound like it's more of a job, more of a chore, less emphasis on the game itself. And so one of the ways that we like to describe what Guild of Guardians is going to be like is that it's play and earn, where players are able to play a game that they enjoy for fun, which they would play anyway. You know, they're playing with friends, enjoying being competitive or being social, whatever they enjoy. And they're also happen to be earning at the same time. And we think this is the direction that many games are going to head towards, particularly as we have, more and more quality games entering into the market.
Yeah, definitely, because you definitely see that model out there right now. Kind of the predominant model is that harvest or fetch quest kind of on a timer where it's kind of transparent about what's going on there. That's kind of, so really focusing on the games first. And then why are NFTs kind of a good use case for things like an RPG?
Yeah, so fundamentally what NFTs allow you to do is it allows players to own their stuff and trade them. And so the reason it's a really good fit for an RPG is that an RPG is a game which has a real economy. You have people wanting to trade their equipment, wanting to level up their heroes. You have people who might be, farming certain materials in order to do stuff. They might be questing to try to get rare loot. And it's a game where progression, trading, and all these different components in the economy are all interlinked. And that's what a true economy is, where you have people working on different things. They have their own role in the economy. And so NFTs are a really good fit for that. And they also allow us to do it in a decentralized way, which means that we can't take away someone's items even if we wanted to, right? It's completely owned by the players. They can do what they want with them, and they know that, and it's completely secure.
So in the game itself, let's actually kind of talk about how some of those things are enacted in the game itself, so we can kind of, because that's one of the things is people like to talk about, the theories behind it, but how are y'all actually doing it?
Yeah, sure. So first off, the game is a team RPG. So a player will go into dungeons with a team of 4 heroes, kind of fight through different monsters and bosses to level up and get loot. So what happens is when someone goes into a dungeon and successfully finishes, they can get several in-game currencies. And these are just normal, your typical, loot that you get from a game. So that, for example, they can get summoning shards. Summoning shards are used to summon heroes, which can become NFTs, which can then become tradable. Players can also get crafting materials, and so they can then use that and work together with the rest of their guild in order to craft items, which are tradable. And actually, the only way to create items in the game, or the rare items in the game, are through creating NFTs. Like we don't sell them. The only way to make it is players are making it. So it becomes a purely player-driven economy. There's also A big part of focus of the game is players joining guilds. So you're not just playing by yourself, but you're working together with your guild in order to, one is to do crafting, but also to do additional guild events. So we're going to have things like guild raids, where you're raiding together with your team, with your fellow guild mates against a boss. In the future, there's going to be additional things like, guild battles and other modes as well. One other thing we have in the game as well is a token, which is a bit of a buzzword. Basically, it's players can also earn think about like a gem. They're earning gems for playing the game, and these gems are tradable for the marketplace. So if they wanted, they could sell it straight away when they earn it, or they could choose to spend it in the game. And actually, whenever someone wants to craft an item or summon a hero, they need to spend a small amount of these gems.
Sort of like a gas fee.
Yeah, kind of like a fee, so to speak. At the same time, we kind of plan to reward gem owners as well for those who hold them.
It's very, very interesting, yeah, because I I read some of the paper that you had written on some of the use cases for some of these NFTs in the gaming space. And so I guess, is that kind of, when you talk about an actual, allowing like a third party to kind of build something on top of a game, that's kind of what you're talking about, where I didn't put anything in, the players actively went out and they created something, and now, they have a market in town or something along those lines.
Yeah, I think one of the things we're keen to open up to people is the ability for other people to build around Guild of Guardians. Effectively build a career or build a business, whether that means they're playing the game full time or like running a guild, whether that means they're investing in other people to do that, or whether that means maybe they're a content creator and they're creating, they bring more awareness for Guild of Guardians, and that's helping us, and that's allowing us to help them as well. Or maybe they're developing tools and things like that. So all of these things we're hoping to empower, incentivize, and build. And ultimately create almost like a crazy growth loop where we incentivize people to do these things, they're doing these things, which then grows the game, brings more awareness, makes the game more popular, which allows us to make more money effectively, which we can then have more incentives to give out to people. So trying to creating this prosperous loop through empowering the community is one of the things that we're trying to do.
It's kind of a nice positive feedback loop you got going on there. So I guess, is that kind of what you're talking about when you say that you want to, that's something else that I've heard you talk about, or I've read you talk about, is aligning the incentives between all participants?
Exactly. I think one of the key unique advantages that we have as a game, like as an NFT game, is the ability to do that. So we very much want to create a situation where it's win-win. So players win when the game gets successful, not just players though, but also everyone around the ecosystem, creators, influencers, developers, esport competitors, you name it. I'm sure there's things that we can't even think of right now, but we want to create these win-win scenarios, and structuring the incentives in the right way is really the most powerful way to do it. So maybe a simple example is we've done some NFT sales. We had a referral incentive in there where we said, hey, like if you tell your friends about Guild of Guardians, and if they buy, then you get 5% of what they spend, and they get 5% off. So kind of very simple, referral program. But even in that, I think we gave away something like $400,000 to individuals who are just referring their friends to buy. So it's kind of things like this which we're looking to do more of, and at a much larger scale as well.
Yeah, it's very, very interesting because you do see a lot of, like you said, esports, and even in the kind of the F1 and the soccer too. So you see these organizations kind of adopting these NFTs because they kind of understand, hey, the fans are interested in something. And I saw that y'all had signed a partnership with NRG. Is that correct? And how are y'all going to utilize that kind of partnership, and in what way can NFTs kind of even broader in a corporate sphere, how can they be utilized by big companies?
Yeah, we're partnering with NRG Esports, kind of one of the premier esport companies. We're both super excited about it. The broad goal here is that their audience is super digitally native. And they also have a really big platform, a really big following. And everyone in their following plays games, right? At the same time, this digitally native audience, they're going to be increasingly aware of NFTs, increasingly aware of NFT games. And so we're kind of partnering up with them to just make them aware of NFT games, Guild of Guardians, etc. But also give NRG a way to engage more with their fans as well, where they're able to own a piece of NRG IP as an NFT, which not only can they kind of buy and sell and own and show off, but they can also play within Guild of Guardians. So I think in the future there's a ton of really interesting things we can do as well, where typically influencers, esport brands, they really struggle to make money. They make money off ads and sponsorships, but it's not, even though they add so much value to the games. And so finding a model where they're not reliant on advertising, but they're maybe they're helping, the game like Guild of Guardians grow, and they get like a share of that upside, which helps them. I think finding situations like this is what's going to be super interesting to a lot of esport teams, and kind of one of the longer term things that we're exploring.
That's very, very interesting. Yeah, because
and it's not just esports; it's like all of the content creators within it. It's everyone around that ecosphere. They add so much value to games, but they don't really get paid directly by the games.
Yeah, it's very, very frustrating.
Strange. Right? Yeah.
Yeah, it's absolutely very frustrating, because in an RPG type environment, instead of those people working, they could actually be helping spread the word of things that are going on, like a kind of a herald type situation, as opposed to what you have today, which is, like you said, working for ads.
Yeah, exactly.
So I was reading as well that over there at Immutable that y'all had developed, and maybe we can get into some of the technical aspects of the blockchain that backs up Guild of Guardians. I had read that y'all had developed some sort of layer 2 solution for, I think, the Ethereum blockchain for NFTs.
Yeah. So Immutable is the company behind Immutable X. And Immutable X is a layer 2 scaling solution for Ethereum. So put very simply, Ethereum is a blockchain. It's the most popular one, it has like 99% of all volume among all blockchains, especially for NFTs. And Immutable X still uses Ethereum, but in a scalable way. So it means that there's no gas fees. There's many more transactions per second. And also developers are able to integrate with it in an easier way. So we build with it via APIs, for example. So it's much more developer friendly versus having to understand how to directly interact with the blockchain and all of those, technical nuances, things like that. So we're using that. We've kind of got some NFTs on there so far, putting that in, and there's many other games that aren't owned by Immutable or other like collectible projects, etc., also building on it. So I think like TikTok, for example, we did something with them recently on Immutable X.
Very interesting. Very interesting. Branching off from that, what are some risks that are unique to a mobile NFT game as opposed to just like a regular mobile game? Because you just said we don't really have to touch the blockchain that much. So are there any unique risks?
Yeah, I mean, I think there are some risks, right? I think the general regulatory kind of compliance element of it is an area of risk, which maybe people don't think about too much. And the main reason is that it's a bit of a hazy area, right? Like maybe the government one day will come along and be like, NFTs are illegal. Like you can't have them anymore, right? And we're beginning to see more scrutiny on the tokens, especially in the US. So that's always an area of risk. which we spend a lot of time thinking about and mitigating, right? Because it's serious. Another risk, I think, for the industry generally is around security. So players need to be able to understand how to securely own their NFTs and all the other digital assets. And I think we're going to see a lot more hackers, a lot more scams, a lot of hack attempts, on our servers, because of the fact that we don't just have, diamonds and wood in the gold. We have things that are tradable for real money. So that would make us more of a target for these scams and hacks and things like that. So it's that's definitely a consideration, which you don't have in a normal game. I think those are big ones. And obviously, we're building with new tech, so there's always not so much risk, but there's challenges for us to build with new tech. It's going to take longer. We're doing things for the first time. Things might go wrong, but those are things more for us to manage and execute on.
Sure. What are some of those groundbreaking areas that people don't really think about when they're talking about game development in this space? I know everybody knows Unity, but maybe because also I've seen at the bottom of almost everything, you're like, hey, if you want to come work on a video game for blockchain, come ping me, please. So what are some things that somebody would need to come and help out?
Yeah, I think so. Building a video game, incredibly challenging, very rewarding. But that's a big component of it. Ultimately, is at the end of the day, we're building a game. So those skills are very important. But on top of that, we have these new challenges that are unique to NFTs. So first off is the community element. In a normal game, typically games don't really build a community as much. It's not as valuable. The game will come out and then they'll have the community. But for us, we already have a community, even though the game hasn't come out yet. And our community is very invested. They care a lot about what we do. They want to give input. They own NFTs in the game. They effectively own some of the game, and so they're also partially invested, even just emotionally, right, into what we do. So I think managing that is really important, and also using that to your advantage by creating incentives, creating other things. Knowing how to do that, I think, is what's going to make these games like Guild Guardians super successful. And that's one of the areas where we're focusing on now. Even though we've already seen some really cool things, I think there's a ton of unexplored opportunities. Then there's the technical aspect of integrating the actual blockchain into the game. And most developers just aren't. Most game developers won't really be too familiar with how the blockchain works, how you want to integrate, etc. So the technical integration, I think, is a challenge, and something that people might not think about, because which leads me to my next point. So we're not just building a game. It's not just building a mobile game. We're building all the products around it. So what else matters for us? It's having a good marketplace. This is a product outside of the game. It's going to exist on the web, and that's something that normal games don't really have to think about. They don't have to think about building a product outside of the game. We have to think about that. We have to think about how do people easily create an account? How do people easily spend using credit card? How do people view their collection in and out of the game? So the product element outside of the game is quite important. And then lastly, I think the design of the game is also very different. So if someone wants to really embrace NFTs, just turning skins into NFTs, for example, isn't really making the most of it. It's kind of like, okay, you're letting me trade my skins, but that's really it. There's not much to it. Whereas I think, and also in most games, it's all about closed economies. As a designer, you're building for a single player spreadsheet. How quickly are you going to progress? When are you going to get these items? How do I manage your own progression? And how do I make you spend by yourself? Whereas now, the design is completely different. It's completely open. We don't necessarily even want you to spend money on things we sell. We want you to trade with other players. That's completely different design, right? And everything is tradable, which means that you have to think about the economy a lot more carefully. So I think the design elements are quite different.
Yeah, it's very, very interesting. It's instead of really like building that story progression, it's almost on one end you have to build out that whole like Web3 framework for everybody, and then on the other end, in order to not have to go in and hey everything's out of whack, you really have to be deliberate about building the world right as you seed it, which is I don't know another game that works like that, even MMOs.
Yeah, it's challenging, I think. Right, it's definitely not easy. Yeah.
All right, well, let's go ahead and move over and let's take a look at some things that are happening just kind of around the world. In September, El Salvador made Bitcoin legal tender. They opened their Chivo wallet there. And shortly thereafter, the IMF labeled cryptoization a threat to the world economy. What do you think that the El Salvador decision will do for their economy and then kind of the wider global economy in general?
Yeah, I think it's very interesting, I think, them taking that move. To be honest, I'm not too much into the details of how it's played out, right? But I think it's a really interesting use of crypto, because at the beginning, crypto was all about it's going to be a currency. And then it turned out that's actually not that viable because of like gas fees, and people ran into all these scaling issues. And then it turned into more of actually, you know what, it's going to be more based on products. It's based on decentralized finance, DeFi, it's based on NFTs and all these like art use cases, gaming use cases, like music, royalties, you name it. But the fact that it's kind of circled back to being used as a currency, I think is interesting. I'm sure most governments will oppose it. But the kind of it goes to show that the potential is definitely there, and the interest is there. Like people are able to onboard to it quite quickly. Like all the retail shops, like all the users are able to use it. So yeah, there could be a world where where it gets used more as just a general currency.
And my timing might be a little bit off here, but I seem to remember that very shortly thereafter, or maybe right before they released that Lightning network popped up real quick, right as soon as everybody needed to make Lightning fast transactions. So that was
Yeah, exactly. So the scaling solutions like Lightning are, also proving to work.
Yeah. So who knows? Turning over to DAOs. We talked a little bit about them earlier. Maybe we can talk about how they function in the game, and then if they actually have a use case in the real world, maybe for companies or for governments.
Yeah. So I think, DAOs are becoming more and more popular for sure. Currently, we aren't structured as a DAO. And I think there are some things which a DAO is incredibly useful for, and there might be some things that are more challenging. So for us, kind of like we're in a very early elements of building the game. It's a very specialized area, and kind of decentralizing everything makes it more challenging. Whereas for other things, for example, maybe like investment groups or things like that, that's when like kind of a DAO makes more sense. We have a group of people that are all working together, on this mission. I think we're going to see more DAOs spur up where it's important to align incentives. So things where kind of the power of the group is greater than the power of the individual. And so you get so much more scale with a DAO. If you had 10,000 people in a DAO versus 20 people in a team, like 10,000 people contributing could be super valuable, right? And so I think that's ultimately what the benefits are. There's also a bunch of legal stuff as well, and I think on that end, that's also shaping up more in terms of like, how do you actually do it legally? How do you structure it? And I think there's more. How do you manage funds in the DAO? Like, who's going to own it? I think there's a lot of operational legal things that also are becoming more and more solved, and there's also more and more third-party tools or companies dedicated to solving those issues as well, so that more DAOs can be created.
I think it's very, very exciting, and I think if I did hear anything about it, I think it would actually have been in the game somehow, but I don't know if where I had read that. But
yeah, I think we have, so within the game we actually have DAOs who are planning to build in Guild of Guardians, basically. So they're not run by us, right? Yeah. They're actually completely separate, but there's a few different ones where they're planning to invest heavily, or have already in Guild of Guardians. They're planning to build out what they call like scholarship programs and guilds in the game, which is effectively them. They're kind of running these guilds. They're finding ways to play the game. They're sponsoring other people to play competitively. They're educating, they're building awareness, and they're kind of earning a share of what their community makes. So I think there's a few different groups like that are forming. And there's also a few like non-DAOs who are just developing tools and other things outside of Guild of Guardians as well.
Yeah, that's very, very interesting, and it does kind of portend towards that. And I don't know if it was you who said this or somebody else about the game, that metaverse economy that you're talking about, where it's all on y'all go do it, and even make your DAO if you want.
Yeah, exactly. I think in the long term, we want these NFTs to not just be usable in our game. Like we want them to be usable across different experiences, different games even, or have different ways to engage. And I think that's when you really have the like these multiple use cases. Really, when you have this idea of a metaverse.
Yeah, let's round kind of just to kind of put a bow on everything. Let's round back up on the real world use cases of NFTs instead of just the really unique and interesting kind of, because I think a lot of people, when they think of NFTs, they immediately go to and I believe you might have been an early adopter of the CryptoKitties or a rock, and of course we've already been talking, it's not necessarily just about that, but what are some real world use cases where people who maybe are poo-pooing it right now in 10 or 15 years might be using it in a certain kind of way?
Yeah, it's interesting. I think in my opinion, like the primary use case of like blockchain NFTs is digital. So it's kind of it's like an interesting thing I like to think about is like almost everything in the real world is an NFT, but it's a physical version, right? It's unique. You can trade it, you can buy and sell it. NFTs is just a digital version, and so I think like the growth there is going to be huge. And I think there's a few areas where it's going to bridge more to the real world. So one is people love to show things off, show off, right? They love to show off, impress. That's why they buy a nice car, a nice watch, etc. And then how do they show it off? Like they take pictures of it, they show it online. And I think one of the things we're going to see more of is people don't show off their physical belongings, but they're showing off their digital belongings. They're showing off their, CryptoPunk or their Bored Ape, and it's actually much easier to show that off than it is to show off the physical good, because you can do it online, and that's where everyone lives these days. Mm-hmm. And I think that's where we're going to see a lot of things, like the transition where it's like no longer showing off things that physical belongings, but it's more digital. And like people might be walking along the street and they see someone with, a T-shirt that has their punk on it, right, or something like that, and like you kind of know, what that person's got, so to speak. So I think that's one element. I think there's a ton of stuff around, like property in the real world as well, like kind of using the blockchain to assign, and the ledger to have a record of like who owns what property, use that to trade. So I think we're going to see also things where the ownership of physical goods is represented digitally. So maybe you even have like a yacht that's like a physical yacht, and in order to get your timeshare of the yacht, you have to own this NFT, right? And you own one of the NFTs, you can sell your timeshare if you want, and you need to like tap that timeshare or whatever. Like you need to use that timeshare, use that NFT to get access. So I think we're going to see more of these things more NFTs and blockchain using to prove ownership of physical assets and who owns what.
So kind of bridging the gap between the physical and the ephemeral of just to kind of wrap it up, the long-term use cases in terms of that kind of what you were talking about with the social, hey, I'm showing off online. In the past, we've really had a single mass media environment where everything has just kind of been, everybody's watching the same channels, everybody's getting the same news, and as you move online, that kind of fractures a little bit. And do you think that some of, the hey, get off of my lawn is driven by not really fully understanding why that would be cool in an online environment?
Yeah, I think it's very difficult to explain. I think it's one of the things where someone really has to experience it to fully understand. I think, especially if someone they don't know what the blockchain is, they don't know what they might not know what the games are. They might not even use the internet that much. It's very hard to explain the benefits of having an online identity, having that, being verifiable and provable, these digital assets. I think there's still a ton of education that can happen, but it's actually happening at a much faster pace than we originally anticipated. It's hit mainstream media early this year, and if you think about 12 months ago, no one really knew what it was, but now it's pretty popular. Well, not pretty. It's getting more popular, right? And I think the education piece is going to be more useful, and also as it becomes more mainstream friendly, it also becomes more useful because I can then refer to, hey, you want to know what NFTs are? Why don't you play this game that looks completely normal? It's a pretty fun game, and you get paid, but at the end, right? And then you're like, oh, okay, you kind of realize why people might find that interesting. The benefit and what it's like.
It's definitely a very, very interesting, and I think we're being helped out too by everybody being stuck inside and kind of having nothing else to do but learn, because it really has taken off here, and I did not think that people would learn this quickly about, my parents are asking me about NFTs, which is insane.
Right. Yeah. Same. They're asking me if they should buy them.
No, absolutely not. Yeah, settle down. Be careful with that email in your inbox.
It's super exciting, and think about what's going to happen in 12 months' time, or in 5 years' time.
Yeah, absolutely. Okay. Well, before we go here, is there anything else you'd like to say about the game, or anything involved in it before we take off, or where people can reach you if they're interested in coming to work for you?
Yeah. So if you're interested in working with us, you can, probably the easiest way to find us is our website, www.guildofguardians.com. We're also very active on Twitter and Discord, which you can find on our website. So definitely come check it out. Feel free to join, ask any questions. I'm sure someone will be able to help you. And you'll also be able to find me there as well. You can just message me on Discord if you join our channel, and happy to try to get back to you.
Awesome. Well, thank you so much. That's Derek Lau, the game director for Guild of Guardians, put out by Immutable. Thank you so much, Derek. Have a great day.
Thanks for your time. It was nice to chat.
Awesome. Bye-bye.
See you later. Bye.
Consensus is a pathway to good data. At Teller, we use a permissionless network of data reporters in our Oracle. No more private data manipulation. Clear staking and dispute models make sure the data reported on-chain is up to consensus standards. Teller is a proud sponsor of REIMAGINE. Teller, the unstoppable Oracle.
Don't you dare change the channel, cause we're going ape shit.
You thought DeFi was just a buzzword, did you? You thought you could remove our face from your books without a legitimate explanation, did you? Does a mask on Ben Franklin offend you? Or perhaps the symbolism frightens you, because it represents the end of your arbitrary decisions made in the name of elitism? Well, I've got news for you. The decentralized financial revolution isn't letting up, and we will not be silenced. The future is being determined under your nose. I suggest you wake up.
Welcome back to Reimagine 2021 version 11, our virtual conference series, bringing you nothing but the best projects, bright minds, and leaders in the space. My name is Miguel Vasquez, and with us now is Josh Greenwald, Chief Risk Officer at Uphold, the anything-to-anything trade platform. They've recently announced a partnership with Mythical Marketplace in their goal to bring efficiency to cryptocurrency and crypto retail. Josh, I heard this is more than just sponsoring some NFTs. Is that correct?
Yeah, I think that like Mythical is one of, I think lots of people have wanted to, get into gaming and get into NFT marketplaces. And it's really great to see a company that's gaming native kind of open up a platform for NFTs in the space. We've seen a lot of guys move from crypto into the space, but Mythical is kind of unique, coming from like that gaming DNA and coming into the marketplace. So we're really excited to do a whole bunch of things with them. I think a lot of times like our partnerships start kind of on the boring side, where we're the regulated payments gateway to get money, from the traditional world into the crypto world. But we'll start there and see how things develop.
Well, let's talk a little bit about like what Uphold actually does, in case people don't actually fully understand. Then we can maybe talk about actually how y'all are in with the actual Mythical Marketplace stuff. So let's talk a little bit about that anything to anything marketplace that Uphold has.
Sure. I think that Uphold, like zooming really far out, like we are a crypto brokerage. We're a market maker in a large number of digital assets, foreign exchange, equities, and metals. I think that, like we really hammer internally on this slogan of anything to anything for anyone, anywhere. And that really speaks to the fact that like we're a global platform. We have, more than 1 million users on every continent except Antarctica. And I think that like the thing that like gets me fired up about what we do is I think about like the fact that like we've grown up in this world where there's like multiple platforms to trade multiple different types of assets, and multiple types of middlemen need to get paid. and like that is not just like a waste of all of our time and our resources, but like it's totally unnecessary in a digital world. It's probably been unnecessary without blockchain, and it's particularly unnecessary with blockchain. So that's kind of what we're like really fired up to try and help solve. And today there's I think 66 digital assets and 50 equities and a few metals and 30-ish FX, but I think that in the next few years, Uphold would be a platform with tens of thousands of assets. Like I imagine that in a distant future, that could be, hundreds of thousands, millions of assets, especially when you think about NFTs and all of the sort of like myriad of content, financial content that people want to plug into, and they don't want to, use multiple apps and have their money kind of spread about multiple places. That's kind of like what Uphold really is trying to do. And yeah, I mean, we can jump in any particular spot there, actually.
Yeah, definitely. I think it's an interesting time that we live in right now, right? Where you're seeing that kind of blossoming of all these different kinds of assets that people, it's for lack of a better way to describe it, kind of almost a barter type, return to barter kind of thing. Maybe you could talk about some of the risks that you manage in terms of swapping from even something like security to crypto, or some of the more esoteric stuff that y'all do.
Yeah, I mean, I think that definitely is a challenge to be a market maker in all of these assets, especially since a lot of them don't trade 24/7, 365 like crypto. But we provide liquidity in them as if they do. So you can show up at 2 a.m. on a Saturday night and trade Tesla stock with us and swap it for Ethereum, and we'll match that trade with you. And if you want to do it into silver 2 hours later at 4 a.m., even though there's no metal markets open, we'll do that as well. I think that's powered really by just kind of the core market making team's been in financial markets for a long time. We got risk models and statistical models to sort of price where we think the fair value of things are, and we sort of do our best to make sure that we're providing liquidity and that stuff all the time.
So just to kind of break it down a little bit more granularly, right? When somebody comes and says, okay, I've got this Ethereum and I want to, swap it into Tesla, how does that actually take place, like at 2 a.m. in the morning? So
in part of that, like basically whenever a customer requests to trade with us on Uphold, they're done and filled immediately. So, like every quote that we show a customer, we're held to for, I think, 36 seconds. So if we show you a price, you got 36 seconds to say yes or no on that price. And really, like once you click submit and confirm the trade, you're filled, and it's on us to manage our risk. Like we owe you the Tesla, and like we now have Ethereum that we received in order for us to go source our obligation on Tesla. And what we have to do sort of is wear that Tesla risk for a few hours until the market reopens, and then we can go source Tesla on the market. But any sort of market movement, adverse, if Tesla moves against us, that's sort of our trading loss and your trading gain when that happens. And and certainly it's not really like, I think that it's most obvious, that challenge, like when you've got markets that are closed, or like weekends and stuff like that. But I think everyone that's a market maker in these assets is sort of always wearing that risk one way or the other as a liquidity provider. Like crypto can be super volatile. Like a lot of the systems have like all kinds of safeties, like risk safeties and trading safeties that you build in any sort of trading system that sort of is the engine that backs a lot of Uphold. And like I came from traditional markets, and so I had like all these opinions of like what a reasonable price band is. Like, okay, like this thing's not going to move more than 30% in a day. And then I'm like, okay, fine, yeah, it could. Okay, it's not going to move 30% in an hour. Okay, yeah, it could. Like everything is possible in crypto. Every unusual thing that could happen in markets, you'll probably run into, especially when you cover the sort of broad spectrum of assets that we cover. And you talk about like people going from Ethereum to Tesla or gold to some other crypto. Like those sorts of cross asset trades are a small percentage of what we do. They definitely are a meaningful percentage, but particularly crypto to crypto trades are a big part of the business. I think the numbers float around, but somewhere north of 50 to 55% of all trades on the platform don't involve a fiat currency, like aren't just dollars to Bitcoin or Ethereum to euro. So it does speak to like the at least for our user base, people do really sort of like being able to go from anything to anything. They don't want to have to hop back to dollars or euros or whatever, pounds, whatever their local currency is, to do a trade.
Yeah, it's very interesting. It's more of kind of that Forex kind of mindset for, I don't really know how else to describe it. And when you say that there's a large crypto to crypto jumping, is that because on Uphold, I read that y'all take on assets that other crypto assets specifically that others won't, like XRP or Helium, things of that nature. And how do y'all stomach that?
Well, I mean, I think that everyone sort of takes, well, not everyone, but most of our peer group takes a kind of like risk-based approach for how they handle listings. And like we have kind of like this multi-step listing process where we have like a working group that discusses kind of like some like high-level diligence on projects, and then we have like a listing committee that sort of assimilates like a more thorough dossier on all the diligence we can possibly collect on something. And a big part of that analysis is assessing whether or not relevant regulators will find something to be a security, right? Like that's a big part. And like XRP is kind of a long, probably too long of a story to get into all of the details of XRP. But we spoke to our counsel, who was sort of deeply knowledgeable on the XRP case, and I think that where we got to is there was a case against Ripple for actions that happened in the past about XRP being sold as a security in the past, and we had to weigh the risks of being wrong, the risks of it being deemed a security today, with kind of like the risks that delisting would do significant damage to our customers. And so, there is no like riskless approach to a situation like XRP. You're either gonna hurt your customers to potentially satisfy a regulatory claim, or you're going to play it safe and satisfy the regulatory claim, but maybe your customers lose a huge percentage having to exit these positions. And so that's kind of how we ended up that's kind of part of the decision process that went into XRP, and then that similarly informs how we pick and choose listings. I'd say like we take a more conservative approach along some axes than some of our competitors. But it's kind of like, I think everyone has like the things that scare them the most in terms of like where they think the regulators are coming down on. And it's, like we don't, you'll notice like there's no privacy coins on Uphold.
That was gonna be my next question. Yeah.
It's not that we don't like privacy coins. Like I like Zcash. I think that like I think that like a lot of, especially like, I have enormous respect for Zuko, and like the technology of Zcash is amazing. And like so many other crypto projects have taken inspiration from the work that he's done. And like zero knowledge proofs like really come from the work of Zcash. So I think that like, but we see it as kind of like a like too large of a risk to underwrite, not even just because of like what a particular regulatory body will do, but when you live in kind of like the regulated world where you spend where one half of Uphold's foot is in this sort of like traditional finance. We have partners. We have, we work with banks and all kinds of other guys who sometimes have a more conservative approach to some of this stuff. And so we have to sort of find that balance and sort of which risks do we underwrite in the listing process and which ones we don't.
Is it fair to say that if a market was going to be big enough, right, sometimes those risks don't even have to be very, very big in terms of judging them because the damages get much larger. Am I correct in assuming that?
For sure. I mean, and on the like the same is true sort of like on the flip side. Like if an asset doesn't trade very much and it's like a very small asset and there's not that much opportunity in it, then it's also sort of like to take marginal risk with the listing is also tough. And like we don't have official policies. We don't even really have unofficial policies on sort of like the scale of trading volume or some such that we need to see to consider a listing. It's definitely a factor in the decision making, but I think it's a factor. I think that like users should understand that like for all platforms, that's sort of a factor in the decision process of listings, because you are underwriting risk to list more and more assets. Not just regulatory risk. I mean, there's also just like the more stuff you have on the platform, if you're a market maker like us, like the more things you have to price, the more things can go wrong. And so, it's just part of like that kind of like giant matrix that informs whether or not we think an asset is suitable for listing today. And then the other part is that, like crypto is like, it's so hyper cyclical and moves so fast. And so if you are trying to like chase what is hot right now in terms of asset support. I mean, you can do it, and there certainly are some platforms that do a really good job of just like they just nail like what is like the sentiment. They get it out the door really fast. That's not really what we do. What like I think that what we try to do is like we look for like communities and ecosystems that we think can be like long-term good partners for us. You know, like we talk internally about like this idea that like ecosystems and communities are like increasingly the organizational structures of the world. And you know, like we were really early in listing Dogecoin. You know, like Dogecoin was always like this like to us, like, you know, like it was an enormous Reddit community. It had like this great culture of people just like really amused by kind of like the kind of like arbitrariness of the Bitcoin forks. You know, like there's Bitcoin and it's like kind of like this pure thing, but then, you know, like you've got Litecoin and Bitcoin Cash and a bajillion other clones of Bitcoin, and it's a little bit arbitrary why like Dogecoin is a joke and those are not, and those are more serious. And I think that the market sort of, you know, bore that out, which is like, yeah, you know, like, you know, Bitcoin is great. But for a few years there, like it was really congested and really expensive to use. And you needed these other, you know, like forks if you really wanted to quickly, cheaply move money around. That was a slightly different world. Now we live in the world of stable coins and Ethereum is really dominated. But that was kind of what informed, to a large degree, our desire to like get involved with Doge. I think we listed Doge. I mean, I'm tempted to say like late 2019, long before the Elon Musk days.
I mean, it's so interesting because it really is kind of that fragmented, how much is a joke worth, really, right? And I guess it's worth, you know, under $1, but I mean, hey, that's pretty good. I saw you say to achieve wider adoption of cryptocurrencies, you want prices to go up, but volatility to go down. So how can some of these communities, you know, help adopt that? Is it just, you know, the HODL meme that everybody talks about?
Yeah, I think that's definitely something that's going to take quite some time still, because, you know, I mean, even, you know, like it's probably gonna happen from on high. You know, like as volatility comes out of Bitcoin and Ethereum, you know, like volatility will start coming out of the next tier of major market assets. You know, like we've seen, you know, like a pretty high vol regime ever since, I guess, ever since really like, you know, Black Thursday and then into kind of COVID. And it's been, you know, I remember the days when implied volatility in Ethereum and Bitcoin was in the 30 and 40% range. And, you know, like we've had nearly a year and a half of, you know, 80 to 100% volatility in those assets. You know, I would think that the major things that are going to make a difference there are like things that are probably like kind of boring to everyone, which is like ETFs and, you know, more developed, more active futures markets and traditional markets and stuff like that, like more just kind of like big institutional money where the stuff just kind of sits on books and balance sheet and isn't moving around as much. And so like there's just a larger amount of the assets parked and people are willing to hold. But yeah, like that's not going to trickle down to Doge and Shiba very quickly. Like those things are going to be super volatile for forever. Or certainly for a long time.
But there's been we have seen some movement on that here just recently with that stablecoin paper that just came out. And I did see that you kind of were talking about the ETFs previously. Is there? I know that there's a recently the ProShares ETF was announced. Has there been any sort of other kind of regulatory framework for how that gets done, or is it just kind of like chuck one up and hope it goes in?
Well, I think that, I mean, I haven't had my ear to the ground too closely on the ETF movement. I saw that there was like the 1.25x ETF that was proposed, and, you know, like the speculation I saw was that was likely to pass. So like all of these like futures-based products seem like they're likely to eventually make their way to market. there definitely is some like amusing stuff with that, like where like you potentially run into contract limits on the CME and stuff like that, where I don't know what, like then they become like de-levered because they have to hold, they're like fractionally cash and fractionally Bitcoin. There's definitely like challenges to that sort of model. I think that, you know, I think that like the ETFs are, they're in some ways they're like a little bit disappointing, like because like in a perfect world, like you don't really need ETFs. Like it should be so easy to buy and hold Bitcoin in your brokerage account, where it would be kind of like, why should I pay these fees again to middlemen to buy Bitcoin? Like I can just buy Bitcoin. Like, but I think that we haven't quite made crypto accessible enough and easy enough for all the different market participants to function that way. And so ETFs are kind of a necessary evil for types of market participants to be in the space and they get exposure. So for that, like, you know, for all of those reasons, like very happy with finally seeing progress on ETFs. But it is like, it in some ways feels like a little bit of a step backwards from like the benefits of Bitcoin.
Well, it's almost kind of like you need to ask your dad for like $50 to go out for the weekend or something, you know, that kind of. What about things like credit cards? Can like, I know Uphold has a credit card. I've seen a couple of other, I in fact have a number of them, even for some that I don't even have that much on. Is that something that can also broaden the adoption of cryptocurrency? And how does that function as an effective middleman?
Yeah, I mean, I think that like the debit card it's like critical for our strategy. I think that like lots of platforms have cards. I think one of the things that's pretty unique about our card is that you don't have to like pre-fill it up. Like a bunch of the debit cards, you have to like, you can hold crypto in a wallet, but then you have to convert it to dollars or euros to preload the card. And they're like kind of like prepaid cards. In that model, like ours, like, you know, if you want to spend XRP, you select XRP. If you want to spend basic attention token, like you select it in the app and you're spending it, you know, like on the fly. You don't have to like fill a bucket up with cash first. I think that, you know, it's not, you know, there are challenges with spending crypto, especially like, you know, for an American, like the tax implications of like spending crypto is kind of a nightmare on a card. And I really hope that we get out like something that there's, I pray for some like, you know, some regulatory change where you don't have to like track a capital sale for a $2 coffee. Well, probably a $5 coffee these days, but like, you know, like it's so ridiculous. Like it's like I'm not trading. I'm just buying coffee. And really, I whether or not that the Bitcoin were higher or lower on that purchase shouldn't matter. And so that's definitely like part of that creates more difficulty for card adoption for crypto cards. But ultimately, you know, there's a few things that are critical for cards. Like one, you know, it makes crypto real. Like you can use it in the real world. I think a big part of like what Uphold wants to do is find like real world use cases for cryptocurrency, not beyond just pure speculation. And a debit card really powers that. Lets people do things in their real life with crypto. And so it's going back the other direction across the bridge. For those of us that grew up, you know, and that live in, you know, in the US or Europe, you know, like where it's easy to get access to the banking system, it's not as necessary. It's still nice, maybe. It's like a convenience to have a debit card that's linked to your crypto. But if you're a freelancer and you don't want to use your local banking system, but you know, you can run around and use a MasterCard in your life, having a debit card is really kind of magic. You can get paid as a freelancer in Bitcoin or whatever your preferred crypto is, and you can go live your life and pay your bills with your MasterCard, and you don't need to rely on potentially a cumbersome local banking system. And I think that like that's not the like fanciest, sexiest DeFi solution to all problems that like we want to get to, but like from a practical perspective, it's really powerful. And so that's that's kind of like what the debit card means to us, like why we decided to acquire Optimus, who powers our program, and why we sort of you hear us talk about the debit card like a lot in Uphold. It really is kind of like the way that we anchor all of the kind of intangible things that we're out doing in crypto into like real world application.
Very, 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 very interesting, especially because that is the primary use case that I've heard from these credit cards, is that it cuts through that regulatory red tape that sometimes a border of a country, or even sometimes a different bank, it's a nightmare. And then in the global South, these things are, because we do take it for in America, we do take it for granted, just access to a banking system. How do you think the developments in El Salvador, the Chivo wallet, we were talking about Bitcoin forks earlier. It's kind of funny that Lightning network premiered right as El Salvador was like, hey, we want to make it a currency. What do you think about that in terms of heading into the future? And then also IMF, they labeled cryptoization as a threat. Is that just, internal IMF politics? You could talk about that.
I think that like there's like so many intersecting narratives, and it's like you've got like this great narrative for Bitcoin with kind of like probably not hyperinflation, but significant inflation in the developing world, and even more inflation, significant inflation in the developed world, and even more inflation in the developing world. And so there's this like real flight to non-inflationary assets. And so there's this great narrative for Bitcoin, and the idea of like people turning like smaller nations turning their back on the dollar because the credibility of the dollar has been weakened a little bit by sort of our unwillingness to like stop the printers. I think that like I think that there's like that combined with like the insane growth in stablecoin use is creating a situation where a lot of money is moving around in crypto now, and it's kind of undeniable that at times crypto is way easier to use than traditional system. Not always, and it's like this really kind of piecemeal thing. Like sometimes you're like like some days I'm in love with crypto, and like if I want to move money from an LLC to a if I want to invest from an investment club to some new opportunity, I can move USDC immediately. I don't need to ask anyone's permission. It's like the easiest thing in the world to do, and it's great. It's just magic. And then, but at the same time, you realize that but Ethereum fees can be $50, $100 to do a transaction, and like that's not exactly competitive with swiping a card. Like your MasterCard is pretty cheap relatively, and so I think that the backdrop is like you've got all this adoption to these other payment methods, and you can't the narrative that like blockchain is too slow, it's too expensive, it's not going to be competitive. Like that narrative doesn't really hold as much weight when you've seen that we're up to like, I don't know, $200 billion in stable coins now, or wherever we're getting close to that. And the amount of usage on these networks is really like exploding. Like it's crashing higher. Like MetaMask was at 20 million monthly actives, I think, last month. Like it's really, the adoption curve has really started to pick up. And so I think that everyone is looking now at the space, all sort of regulators looking at the space with a more critical eye on like what risks are people underwriting participating in these ecosystems, and is there systemic or existential risk due to that participation?
So to alleviate some of this risk, sometimes you see that word thrown around, DAO, that distributed autonomous organization. What kind of role can that play in, I guess, diversifying risk? And do you see any sort of future for that in a regulatory environment, or even moving away from a regulatory environment?
think DAOs are sort of like one of the most interesting developments in the past kind of 2 years in crypto, and there hasn't been like quite the same narrative oomph as DeFi and NFTs, but they're sort of like, I view as kind of like the third major sort of tranche of, I'll give credit to like Ethereum innovation, but they're not really specific to Ethereum. It's just that's where the communities have grown up. You know, I think of DAOs as basically like communities, like forum communities, but with a bank account and like a shared balance sheet. Like you're all like friends, but you're also all shareholders of this club, and your goal is to like make the club a financial success. And that's like really elegantly simple. Like it's you know, like, well, we'll give you tokens in the club for helping us build the website. We'll give you tokens in the club for helping us, you know, like get new users or for developing features. Like all of that is like, there's like some really great simplicity. And, you know, we definitely like there's been this, like, the internet has been really great at sort of forging communities. Like that's been like communities have been just kind of like forged, and like there's like the people come together and they fragment into groups. They come together and they fragment into groups. And like those groups now, with kind of the emergence of blockchain and stablecoin, like now have like real economic viability. And in the same, and they have economic identity, I guess. And so for us, I think DAOs are a huge opportunity. You know, I think that like Uphold has kind of like, you know, like we talk a lot about like the B2C side of Uphold. And like we as a company, like it's a big part of the business, but like a big part of Uphold's identity is actually really kind of like the B2B2C business. Like we power Brave, like we work with Mythical to power their ecosystem. Like we are quite happy to be kind of like a facilitator for other people to build a business. And DAOs are kind of like a big example of like another use case for a platform like Uphold. Like you have a group of people, you're building a product, you want access to banking, you want access to traditional finance, you have stable coins or whatever, but you want a card. So you might want your club to have a debit card that's branded, and you might want to, you know, eventually be able to move money across borders and into the regulated, less fun world. But I promise, like, you'd rather partner with you know, like someone like us, or you know, like, or there's other good players in the space too, than go get regulated yourself. And so like if the option is to go get regulated yourself or partner, like you will partner. And I think that in a world where there's lots and lots of like, you know, like these empowered economic groups, it's really great for platforms like us to sort of like one, there's the market opportunity, but two, like it sort of like it challenges us to like, you know, to be more innovative and to like really be on top of like what people are actually out there using crypto to do.
And I guess a good reason for people to partner with Uphold as opposed to, I don't know, something else in the emerging decentralized swap environment, right? Somebody else, is because you do have access to that quote unquote less fun world that, you know, we all have to interact with. That's the real world, right?
For sure. And you know, like the thing is, like, I think that we take digs at banking and the card processors because like they don't feel as like hip and with it as like the crypto, you know, like, I don't know, the hardcore crypto folks. But I think that like what we're starting to see is like the appetite for innovation in traditional finance starting to really kind of pick up. And so it may be that the difference from one side of the wall to the other might not be as broad. I would guess in the next year or two. I think that like both Visa and MasterCard have sort of made their intentions clear with doing something in stable coins, and you know, like we're going to see more of kind of, you know, like those sorts of products hit the market. I you know, like we're not doing anything specifically in DeFi that's linked to our card, but we certainly think about it, and I wouldn't be surprised to see like smart contracts that are linked to debit cards and stuff like that. You know, like it's not crazy that we'll start to see that sort of stuff touch the market in the next, my guess is, you know, year. And so the divide will close. In terms of like staying 100% on the DeFi side of the wall and just using your DeFi 1 inches and pair swaps and stuff like that for all of your trading. That like that could be a reality, but we're starting to walk a path in kind of crypto where that's actually like becoming harder, not easier. Like Ethereum is kind of like, because it's so expensive, we have Polygon and Matic and Optimism and Arbitrum, and like we have crazy fragmentation of liquidity, and we don't really yet have the ability to like cross-chain swap efficiently. Like there's designs out there that people have, maybe that will work, but then that's just even inside the Ethereum kingdom. You still got XRP and Bitcoin and Helium and all these other assets on other chains, and so like, is there going to be a decentralized way of linking all this liquidity? Like, I mean, I hope that would be great, but it doesn't feel super close. And so, like in the same way that you sort of have implicit trust in some of the DeFi designs, it might not be that much more trust to underwrite to just underwrite some trust to a centralized platform like an Uphold, to temporarily move your asset to Uphold, trade to a block to an asset on a completely different ledger, and if you want to self custody, pull it back to your wallet. And so I think that like that's like, again, that's kind of like being a bridge between traditional and crypto, and then being a bridge between all these different blockchains that are not yet interoperable.
Yeah, it might be, and it might be entirely possible, correct, that it's not possible to do everything completely decentralized. I know that there are some people that are working on it, but I don't know of any other technology that doesn't at some point come down to a single point of failure,
Yeah, I mean, I like, there's Ren and there's ThorSwap and there's like, there's definitely teams that are out there, but there's a part of me that's like, the rate of like new blockchain development is so high, where like, even if you support BTC and ETH and XRP and a few of the major coins, and you build like this pretty good decentralized way to swap them, so you don't need centralized middlemen, like they'll in that time be 5 or 10 new blockchains that won't be part of that aggregator, and until like I don't think that like the rate of innovation is not really slowing down, and so it's hard to like really even perceive. It's hard for me to really perceive of like how you would build like designs that are future proof when there's just so much, like so much innovation.
Yeah, let's branch off into maybe some of that, the newer innovations in the space. Well, like NFTs. Why are NFTs important? And maybe how is Uphold? I know we talked at the beginning a little bit about Mythical. Maybe we can talk a little bit more about Uphold's interaction with NFTs and what you personally see as the future.
I think that we believe a lot. We believe very strongly in the application of NFTs to gaming. We think that that's like such a great use case, that you've always had these rare items and in games, and there's always been markets for in-game items. They've just been like fragmented and crazy, like on eBay or like these private sites for trading items. And so like the market demand is so clearly there, and NFTs are just so clearly a better solution than the chaos of a bunch of shoddy websites. I mean, I was a World of Warcraft player back in the day, and I remember all of the famous players, or the big name players, they would sell their accounts, or they would they would power level run people through to sell rare items, and there's just there definitely is an economy there that is underserved, and NFTs feel like such a logical extension of a lot of the blockchain tech that we play with. So definitely gaming is a big part of our strategy, and we're really excited to work with Mythical, because I think we list a bunch of other NFT gaming related assets on the platform, and we believe very strongly that those projects will eventually develop great products and find good there's I'll get to be more specific, Axes has like I think version 1 of Axie Infinity, like there was a lot of hype, like there was a lot of token hype and like around like specifically the gamification that would like drive value to the token. And there's less about like the actual gameplay, but they've really kind of like, now that they've, made $1 bajillion from the token, like now they've really sort of like really, invested in gameplay and making it more engaging and like really, but like Mythical comes from like, like the like first class gaming world. And it's like, instead of like having these games that are like really designed specifically for the gamification and token, like the token mechanics, like I guess like in a lot of these games, like the token mechanics like define the game. And what interests us are like the games that are really like, A-class games that just happen to have items. And those could be, like flow back into sort of like the blockchain space. In the world that like I see in gaming, like fast forward a little bit more, Uphold can power all of the transactions, for your game. Like we instead of you building a marketplace, in your auction house or whatever you want to track items and things inside the game, like we can do that. Like that's exactly what we do. We have, like we run a high performance ledger system with pricing and all the other things, and like we can do that very well. And so like for games, like we can take a lot of that lift off the studio's shoulders and be kind of like a ledger for items and tracking items. And then we can also sort of like bring those items out into the DeFi world by making NFTs of them and making them available for trade out on marketplaces. I think that like the next level of iteration there is games might decide that they don't even want to build some of these features purely centralized. They would maybe lean on DeFi marketplaces for items in their game. And so you can imagine like going to your auction house in World of Warcraft and it's like pointing to a decentralized platform where like people that don't even play the game are like market making in the in-game items. And it's like, oh, I want to borrow that sword. I borrowed it from this guy that has no idea what the sword does or what the game does. But like, they're just there to make a buck. But you as a player of the game are getting access to like all of this liquidity. You're not just waiting for like one of the 12 players who has, I don't know, the ore that you're looking for to put it up on the auction house. So like, I think that like gaming is like, it's just so ripe for like a lot of this technology being killer. I think that, NFTs, like why are they so broadly like becoming like so exciting for people? I think NFTs speak to a market segment that never really was that interested in some of the kind of like, just kind of like pure speculation on the last few generations of crypto. Like I think that if you follow like, and it's like I tell people that like DeFi is like too big to talk about, like as if it's a thing. Like there's like so many cliques and communities and parts of DeFi where it's like I don't even know where to begin. Like NFTs are really like they're becoming that way as well. Like you'll know your specific little corner of NFTs, and so there's like all of the PFPs and punks and crypto funks and apes and all of that stuff, like all of that space. And that even like that space is like, like it's rich space. Like there's like all kinds of like playful creativity and memes and like, the very kind of like, it's kind of like very pure crypto. I would say like, it's very like quintessential crypto. It's just memes and fun. And what motivates people there is like there's definitely like some, like belief that part of it's identity and like tribalism, like people want to be part of the tribe, the 10,000 people that have it, and they want that badge of honor. Definitely there's some speculation, like NFTs are like even more volatile than most tokens. Like, you can buy an NFT for 1 ETH and then tomorrow it's 10 ETH. Like that's not going to happen to you in normal assets. And so there's definitely some, like I had a friend who bought an ape, when they first came out, stories that keep people interested. And I'm sure that there's like regulators don't love that side of the NFT space. But there's like other parts of NFTs. There's like art blocks. There's like all this like generative art, and there's like a lot of people that are just like, like it really is a new medium. That's like kind of cheesy, but like, like the projects. I can't remember the name of the project on my head, but like there's a bunch of these where like depending on who has owned the artwork, like the address like the art changes as the ownership changes. Like the address morphs the artwork over time slightly. And there's like all kinds of stuff that like are basically like building on blockchain as a medium. And that stuff is, you know, like really, really cool. Like super, super cool. So I think that like NFTs like dumbed down is like there's you know, like perceived enormous upside opportunity. There's like relatability to an audience that didn't really relate to, you know, the pure financial market stuff in crypto. And then there's like this gaming side of the space where, you know, like you've got all this money and items that have been trapped in local databases that finally can live out in the open.
Yeah, that's the most interesting part to me, is that I think, you know, the term kind of makes people's eyes glaze over because they go, oh, what's that? But NFTs have always kind of existed, especially to gamers. When you think about, I'm not quite sure because I'm not a WoW player, but I played CSGO or CS. Yeah, so all of the skins, they're all NFTs basically, but they just reside on Steam servers, right? So
yeah, and they're trapped there. You know, like this is still a small part of DeFi, but like, you know, you can own a CryptoPunk, and there's platforms where you can borrow money against your CryptoPunk because it's proof. It's on chain that you own it. It's composable. Like, you know, like you can get, you know, sometimes you get airdrops for just owning the NFT. You know, you can have logins to private communities because you own the NFT. And like everyone, like I think that, you know, like, and we, you know, like we are, you know, like it's hard to say like we're a centralized platform, but we're like an 85% centralized platform with like, you know, some fringe things in the DeFi world. But like we, you know, and I think all of the centralized platforms, like you look at all of the creativity and like people building on Ethereum, and you have to either be like scared because it's like man, like there's like hundreds of thousands of people building new applications that all talk to this stuff all the time. Like, how are we ever going to compete with launching that many features on our centralized application? And Steam should feel the same way. You know, like if you're a game company and you're like trying to compete with DeFi, and like it's going to become like ridiculous at some point. It's going to become like really, really hard to compete against the amount of like just creative people that are banging their heads against the problem. And like we're all, you know, like again, like there's scalability and other problems still, but just the amount of like stuff that you can do when you all agree on a single source of truth, which is like, you know, a common ledger, and like a single, you know, like a single set of like, you know, rules for how things interact. Like that's just really powerful.
Yeah, I guess the exciting part is we're really going to find out how true it is about that monkeys on a typewriter metaphor, right? The most exciting part to me personally is that fact that you could, hey, go from I'm going to sell my dragon lore to in 5 seconds, I now have it on a credit card. So that was the most exciting part for me. I don't know about anybody out there, but maybe you could talk a little bit more about Uphold's credit card and why y'all like to push it a little bit more before we start to head out.
Yeah, I think that you know, like one of another metaphor for cards is kind of, you know, like you can the metals that we support on the platform are physical metals, which is a little bit different than on some places where you trade like purely financial metals. Like you can't get access to the metals. Like you can request delivery of your gold on Uphold, and I'm trying to remember exactly which region you support it in, but there definitely are. I think in Europe and the US will facilitate delivery of gold. You wouldn't actually want to do that probably. Like it's very rare that people actually want delivery of precious metals. It's a cumbersome kind of pain in the ass process, but you know that you could. Like you always know that if you have metals on our platform, if you really needed to, you could get them. And so a card, you know, you might not want to spend your crypto. And again, like not just for the tax reasons. Like there's also kind of like the obvious reason, which is like I just went through the effort of buying this stuff. Like why would I want to spend it necessarily? Like you know, it's like I started with dollars. I bought a bunch of crypto, and now I want to go back to dollars to spend it. Like I could have just saved myself a step and not done that. And so, but like you know that you could, right? Like so, like you can invest in something, and you know that you have real time liquid access if you need it in that asset. I think that's that's like a big part of the use case in places where you have a developed banking and credit system where you have other cards in your wallet, you have other things you could use. The Uphold card is kind of like a nice option to have. It's there if you need it.
Well, thank you so much, Mr. Josh Greenwald, Chief Risk Officer at Uphold, the anything to anything trade platform. They've got some big stuff coming out with their credit card, so we'll keep it tuned. Thank you for coming out, Mr. Greenwald.
Perfect. Thanks so much for having me, Miguel. It's great.
More alpha coming at you now.
I'm Robert Darby, and you're tuned into Coins, the only podcast that might literally set you free.
Welcome to the podcast Coins. I'm your host, Patrick McLean, and I'll be joined by a panel of experts. Sitting here today with Eric Voorhees.
I'm Sheila Warren.
Happy to be here with Dave Jevons.
I'm Asif Herji. My name is Bill Barheit.
We have Paul Brody, Whitfield Diffie. Mark, how you doing today? Kosala Hemachandra. Sitting here today with Dan Hell.
My name is Luke Kerner.
My name is Bruce Fenton.
I'm Nick Carter.
Melton Damaris.
Raul Powell.
Roger Vair, Lynn Ulbrich, Anthony Scaramucci, Alex Mashinsky. Get to sit here today with Charles Hodgkinson,
Sam Bankman-Fried.
Nathaniel Popper.
Paolo Ardoino.
Could we define this as a war?
Hello, everybody, and welcome to REIMAGINE 2021. This is our 11th conference over the last year. Super excited to be here again. We host these events as part of our monthly series, bringing you nothing but the best projects, bright minds, and leaders in the space. We've been fortunate enough to invite many talented individuals like the one we have today and teams to come speak with us, providing updates, insights, and all the above that's happening in crypto. I'll be your host today from the Mouseball team, where we focus on early stage investments through our accelerator, providing development support to a number of growing projects, as well as education within our Mouseball University program. Our main objectives and goals are simple. It's increasing adoption, use cases, and real-world applications. We seek to educate our audience on blockchain by helping them understand crypto's real impact. So again, thank you all for tuning in to Reimagine. I'm joined here by Chris Harding, Chief Compliance Officer over at Civic. How you doing, man?
Good. How's it going, Anna?
Nice to have you on board. We've had your team on before. Yeah, it looks like we've had your team on before, and now we have you. How's your day going?
Pretty good. Yeah, no, we try and make it super easy with the Chris Hart and the Chris Harding, right?
Exactly. I even got confused at first until you jumped on. Yeah. But cool, man. So, we've had Civic on before, and for those of you that don't know, it's all over YouTube. Make sure you check them out. I had on Chris Hart before discussing kind of their updates, and this was months back. So we'd love to get some insights on what you guys have been working on for the last few months, and maybe you can break it down as you know, this market changes pretty quick.
It definitely does. So I've been with the team now for going on 2.5, 3 months, and even in that period, Adam, like it's been crazy just how quickly things have changed, right? So we're focused on identity and providing compliance solutions out to the crypto industry, right? So now there's many different identity providers out there. The thing that makes us unique is our focus on Web3 and crypto space, right? We've have a really long background in this industry. We've been in this space for a long time. We know the players really well, and you know, it's funny because my entrance to Civic and joining crypto space kind of came along with all these other conversations that we've been hearing, right, around regulation and DAOs and how governance should be structured appropriately. And the importance of compliance and identity plays a critical role in that, right? So the thing that we are bringing to the market is, the way we look at it is the identity Lego block or the compliance Lego block that developers can take off the shelf and implement directly into their Web3 or crypto projects, right? With minimal lift on their end, but adds tremendous value, we think, in this space, specifically in the long run. As we see more regulation coming into this space, I think identity is just going to be one of those things that become more and more critical, right? So as far as things that we're working on, there's quite a number of things. So a cool one that we are doing for the NFT space, right? We're supporting NFT creators right now with a verified by Civic solution. It's a free thing. We're giving it out to founders of NFT projects who can come to us and say, hey, we're founders, we want some legitimacy or transparency around our involvement with the project, but we want to do it in either pseudonymous or completely anonymous way, right? So we invite these founders to come over to us. We'll KYC them, sanctions check, we'll verify that they own the web domain, they own the Twitter handle. So we do a lot of like traditional vetting of those founders and the key things that support that business. And then we would communicate out to the community, the NFT community, that those founders have been vetted and been verified by Civic, bringing that level of kind of trust and transparency to a project without really giving up the identities of the actual founders, right? So they remain pseudonymous, but because we add that little badge there, it adds more trust and transparency, which hopefully becomes and translates into more adoption, right? So that's our focus: support the community with identity solutions, all the way from completely privacy protective, right? Not capturing any privacy information from individual, all the way through the traditional way of doing identity verification, KYC, KYB, that stuff.
Great,
so
great. And
we are.
And the topic, the theme of Reimagine, you know, this time around is around NFTs, which we'll get into. It's around DAOs, around communities, which you know, you're talking about your robust community, and not only that, kind of, you know, the adoption aspect, whether it's in crypto or blockchain, and we'll touch on all of that. I think it's pretty interesting, your role, Chief Compliance Officer. Can you give some insight on what you do daily and how important that role is? I think in the crypto space, it's up and down. You know, lawyers are making a lot of money for sure on trying to understand the landscape, the environment. So what does a Chief Compliance Officer do? Civic's been around for quite some time, so you know, you've probably seen the evolution, but give us a tad bit of the day in the life and kind of what your objectives and focuses are for, you know, a project like Civic that's tackling such a critical component to the blockchain kind of tech stack.
Yeah, I think it's an interesting question. I think my role in kind of the risk and compliance space in crypto, especially with a small team, right? So we're still somewhat small. as is almost every other company in the crypto space, right? So if you join a crypto small team, you get involved in just about everything, right? So my day-to-day is like giving input on product, giving input on strategy, giving input on marketing, giving input on press releases. So literally the entire gambit, right?
Wow.
But I do bring more of a compliance lens to everything that we do, right? So it's a little bit of a different focus than many of the other team members that I'm engaging with on a day-to-day basis, right? So I would say the difference between my role in this space with this small team is the involvement in all of these different areas with no roadblocks and no walls kind of existing between marketing and strategy and all of these things that exist very much so in the traditional finance world, right? So I come from traditional finance, fintech. I was at Lending Club for a long time. For you to get involved in all those different areas is pretty tough. Like you typically, if you're in a risk and compliance role there, you have a very defined, controlled kind of space that you're operating in, right? So I think the reason why you see more people from compliance, legal, etc., come into the crypto space is because of the breadth of kind of what they can get involved in this space, and their role is not limited, which is the thing that is exciting and the reason why I'm in this space, right?
And how do you stay up to date? I mean, there's a lot of moving parts, as you just mentioned. We're a small team too, and everybody kind of has to wear multiple hats. We do check in with our compliance as well and some risk, and collectively we try to keep an eye out, right, for each other. But there's just so much information and things are moving quick. How do you tend to stay up to date, up to speed? Do you collaborate with other, individuals in the space and figure out, what strategies work and don't work?
Yep, collaboration is key. So we collaborate all the time, right? I think the best strategy that I follow in this space to get up to date is try and cancel out a little bit of the noise, right? A lot of the things that we listen into and tag into, there's a lot of repetitive repeating of the same thing, and everybody has their opinion on what Gary Gensler said, or what Senator Warren said, or what the SEC might do, or so my focus is pick a few things that I really want to focus in on, and then have a hypothesis of how that's going to translate into US law later, right? We have a prime example of the Financial Action Task Force last week came out with their standards and their recommendations. Now, from a compliance standpoint, that's a body that's well known in our space, right? But everybody outside of the compliance legal world have no idea what FATF is, right? That to me is a more important piece of guidance and standards that's being set, that's going to inform global regulation. So my focus is identify the things that's really going to make an impact, and try and cancel out the noise of the everyday hearing from Gary Gensler, looking at the infighting between the CFTC and the SEC, because that stuff at the end of the day doesn't matter. Once those stuff settles and people actually start getting to writing laws and regulation, then I'll start focusing there. Other than that, I think my head is down on focusing on the things that's certain.
Yeah, sounds great. And one of the topics actually, and this is kind of a great segue, which I didn't think we were going to go down, but we're talking about government and influence and the impact of adoption. There's a lot of countries right now, and we could touch on this a little bit just from your perspective and what you think on the government side. That Latin American countries are exploring CBDCs. Some are not. The presidents are for it. Are not for it. The lawmakers are. It's kind of a interesting dynamic that we're seeing. There's some push and pull there. But what role do you think governments play in the growth of, let's just say, like Bitcoin and kind of this blockchain Bitcoin adoption?
Yeah, well, clearly they play a massive role, right? So you've just seen China ban Bitcoin for the number of times, but this time it's actually serious. And you've seen how the hash rate has moved significantly from China onto US soil, which is a great thing for this country. So I think anybody that thinks that government do not have an influence in this space, I think that's a prime example where you can point to and say, clearly they do, right? If governments want to shut it down or limit the adoption in a certain space, they've got the levers that they can pull, especially in regimes like China that's authoritarian in nature. They've got a little bit more leverage and more levers to pull than the US does. But I wouldn't put it out of the US scope of ability if they really want to impede and slow down, that they would be able to find a way to do it, right? So they have a massive impact.
That's actually, you said some critical components there. You said limit the adoption, right? And I haven't heard that. Not like stall it, turn off Bitcoin, Bitcoin's going to disappear. And I think that's, for people that are tuning in to Reimagine, have watched all of our episodes, obviously the narrative and the messaging is just kind of the impact that blockchain has. Like it's decentralized, it's distributed, it's peer-to-peer, right? Like there's no switch. But what you said is pretty, what I caught was like, you can limit adoption. Maybe you can't stop it, but yeah, they could definitely slow it down, pull the levers where they can, and really kind of impact regional areas, geographic regions for like their citizens and stuff. So it's kind of interesting.
Limit, I think, is probably the appropriate word to use there, because to your point, I think shutting it down, we all know the decentralized nature of it. It's almost impossible to do. But you can make it almost impossible for individuals that isn't already in the space to join the space, right? And you can also make it impossible for any company to legally operate any sort of business that supports the space, right? So there's many levers, as I mentioned, that governments can pull. And I think that's why it's so critical for us to work with the governments versus kind of be on the side and keep on trying to fight this fight of, hey, leave our valuable crypto space alone, don't come in and regulate us. You've seen this over even the past 6 months. You've probably seen it accelerate faster than ever. Kind of the change in tone in the crypto industry, where it was 6 months ago, it was stay out of our space, don't come in, don't look at us. When you talk now and you look at the space now, it very much feel like it's okay. We're open to regulation as long as it's reasonable and as long as it doesn't stem innovation. We're fine with it. And I think that change in kind of how the industry is seeing regulation is a good one, because at the end of the day, regulation is not bad. When Gary Gensler and Elizabeth Warren says we need investor protection, they aren't wrong. They're absolutely right. Like you see it with what's the Squid Game rug pull that just happened a few days ago. That's a prime example that the SEC can point to and say, this is why we need to come in and add some protection in this space. The difference is the old rules that they had, they don't necessarily apply to today's world and to digital currency, cryptocurrency. So I think there's a better acknowledgement today that on both the regulator side and the crypto side, that regulation is important, but it needs to serve the industry well and not kind of make it hard for people to continue to participate in the industry.
Definitely. And I think some of the countries that are exploring, Bitcoin and crypto and how it's, can influence or impact their economies, Paraguay, Argentina, Brazil, right? And El Salvador, which I was at Bitcoin Miami or BTC Miami, and he was, I don't know if you were there, but they announced that they were going to make it legal tender in El Salvador. What are your thoughts on that? Like, is that good, bad? How do you see that playing out? Because they kind of, anyways, what do you think about that?
I think it's an interesting experiment. It's sometimes hard for us to sit in the US and to try and imagine what something like that would look like in the US. And I don't think anybody's even able to make that comparison in a reasonable way, right? Just give me a second. Let me just look up something here.
Yeah, no problem.
I think it goes to what you're talking about, right? So El Salvador's GDP is 25 billion, right? If you go on the global list of GDP, where are they? They are 133rd on the list of global countries as far as GDP per capita. So that means 4,000, they've got a $4,000 GDP per capita. Compare that to the US. The US has, where's the US is number 9. They've got $68,000 GDP per capita. The gulf between those are just so tremendous. There's no way you can draw a comparison between that economy and this economy, right? Then you layer in the fact that they probably sit with 40-50% of their population is under the poverty line, right? It's just a completely different dynamic in that country. Not to mention kind of the political stance of that country and kind of the fact that it looks a little bit authoritarian from the outside. At least some would comment that it is, right?
Well, he's state that, right, on his Twitter, like that the president, he says I'm a dictator, and like is expressing that view on like his country and all that. So how does that play in? And you bring up one good thing, even from the US, you know, Silicon Valley tech, where we find problems and we build solutions, right? And we think, and now we experiment in other areas. And you brought up the word experiment, and I think you're like right on point. You know, does it make sense? And you know, is it going to work? But yeah, I mean, in that country, you know, it's kind of a unique dynamic, and we're championing Bitcoin at the same time. Like the rules that it was put under in El Salvador, you kind of see where they're going with that, or how it's planning out.
At the end of the day, you know, I don't know. It's like, what do they have to lose? Like, if half your population is under the poverty line, you don't have your own currency in the country. You use the US dollar anyway. So it's not like you're trying to protect your currency, right? Yeah. The US is clearly trying to protect the main currency that's used globally for international trade, right? We want to retain that power that sits within the use of the dollar outside of our borders, right? So for a country like the US, it makes no sense. For a country like El Salvador that has a lot of things not going their way, it might make sense for them to say, hey, let's try something else. What's the worst that can happen? Now, it's probably really bad for some of the people that's in there if it goes badly, right? But, you know, it's hard for us to tell. It's too early.
Well, you're right. What are your thoughts on them protesting that 70% are not don't favor Bitcoin? They're against it. The citizens.
Yeah, I think it's probably a mix of, number one, they don't understand what Bitcoin is. They've probably not spent enough time to really get what it is. It's completely something new, so you'll always face people that are against anything new, right? Especially if you're the only country in the history to abandon fiat currency and try and adopt a digital version of it that's global in nature, that's not confined within their own borders, right? The other aspect to that is the authoritarian nature of the politics there, right? So people are kind of, you know, you're protesting against the president and the political party probably just as hard as you are protesting against Bitcoin, right? And I don't think you can divorce those two.
How do you see Bitcoin? And I get all kinds of different answers, right? Depending on the evolution of Bitcoin and our understanding, as a store of value, or is it transactional, right? The El Salvador is making merchants, you know, making it a requirement that they accept Bitcoin as payment. How do you see store of value, transactional for Bitcoin? You know, I don't spend my Bitcoin. Most of the people I talk to don't really spend it unless, you know, they have to. But outside of that, they're kind of holding it.
Yeah. Look, I think most people that are currently in it, like you and me and many other people that I know, probably do use it more like a store of value, right? You buy it, you hold it. We all understand kind of the supply demand nature of Bitcoin. And because of that dynamic between supply and demand, we all assume the price is going to go up. So the longer I hold it, the more valuable it's going to become, right? The more people get used to it and learn about Bitcoin and adopt it, the higher the price is going to go. I think it would probably stay in that zone of a store of value. I don't think it will ever get to a point where it's transactional in nature, right? You've already seen kind of the dominance of stable coins, right? As soon as you made the US dollar a stable coin and you made it available widely for people to use, you're seeing it today, just how the adoption of stable coins has exploded. And I think you'll continue to see the explosion on that side, and that will be for transactions.
Perfect. Another question I have, and you've kind of touched on this a little bit too, like what drives crypto users? Is it distrust of the system or speculation?
So I'll talk a little bit about my entry into the space, right? So because I think most people have probably the same kind of path into Bitcoin, right? So I got introduced to this in 2014 by a friend, and he told me about this digital money. At the time, I was like, oh yeah, it sounds interesting, but never looked further into it, right? And then I think it was 2015, 2016, I got introduced to it again, started talking to some buddies of mine, spent a little bit of time, but it really didn't dive in, right? I quickly Googled, like, okay, how do I buy this? Like, tried to figure out how to actually just purchase it. And I don't know, Coinbase was around back then, but I didn't find Coinbase. I found some other way to try and buy it, and you had to buy Home Depot vouchers that you then have to submit somewhere. And it was just the user experience and the ability to onboard onto Bitcoin back then was terrible, right? And if you're not internet native, if you're not like very driven back then to get on board, you were not going to buy it, right? Unless you were trying to use it to buy drugs, like you probably weren't going to spend the effort and time to do it. But 2016 was when I got introduced to Coinbase. So then I started investing through Coinbase. 2017, we saw kind of that craziness that happened with the ICOs, and all of a sudden Bitcoin and Litecoin and Ethereum just started going through the roof, and it became a game for everybody, right? So I think most people's initial introduction is a game, like gamification. Yeah, number goes up, it all feels fantastic, but people don't understand the fundamentals of how does the blockchain work, right? How does specifically the Bitcoin blockchain work, right? Why is it decentralized? What is the benefits of having decentralized kind of network govern this thing, right? What's the power inherent in that, right? So it took me going through that, meeting Vinny, getting introduced to Bitcoin on a more educational, like fundamental basis, getting introduced to some other projects that I'm like, okay, well, it goes beyond just Bitcoin. It has all these other use cases. And then spending the time, right? Like I read multiple books, spent probably hundreds of hours on Bitcoin and hundreds of hours on other projects before I was completely convinced that this is something that I want to dedicate all my time and effort to, right? And I think that's what it takes for people to get involved, right? I think there's a 40-hour minimum to get up to speed with Bitcoin. And then you need to at least invest another 60 hours to get up to speed on all the other things that are happening outside of Bitcoin, right? So that's really going to drive adoption, is education. And that's hard. So I'm not sure how many people will ever get into like, okay, I'm actually going to pick up a book and try and understand fundamentally how this works, right? And I think that's going to be probably the biggest limiting factor.
Yeah, education is still key, component, critical. You're right. It's still taking time to like understand a lot of these use cases, right? I mean, I understand it now, but I definitely try to read a little bit more to fully grasp like the disruption, right? And kind of the understanding of how this thing intertwines. At first,
it's funny because at first we used to say like, you know, blockchain is going to save the world and this, and then it was like, no, it's not. It's just it's a tool, right? It's part of the stack. And now I'm starting to go back to that thought with all these use cases that I see. I'm like, you know what? It might actually change the world. It's the evolution of the internet, you know, the next wave of technology and innovation. And now that I see all these use cases popping up, I'm more thinking like, you know what? Actually, this is going to touch a lot of, you know, aspects of our life.
No, I think you're absolutely right there. I think look, our imagination is pretty limited, right? So it takes the whole community to come up with bright new ideas, and then they need to be successful in marketing and out to everybody so that everybody can understand kind of broadly what is the art of the possible here. I think we're pretty much still in the later stage of like the 1990s internet stage of people understanding what the internet is and what could be done by the internet. I think that's where we are in crypto, right? We're so early.
Yeah, no, fantastic. And talking about use cases, we can move on from Bitcoin and thank you for your insights there on the adoption. You touched a lot of key points that I've been thinking about and having discussions, and you're right on it. So, you know, time will tell. It's, you know, pros and cons, and you really just got to look at it. The influence of government, crypto, Bitcoin, just kind of where you're at, like that perspective of, you know, who you're asking and their experience in life, you know, life experiences, and you know, it'll determine.
Let me ask you this, Ada. How do you talk to your friends about this? Like when your friends ask you about, if they're completely outside of this area, if they ask you about crypto, like how do you introduce them to it?
I good question. You know, even I get caught up in explaining it sometimes, and I have to zoom out and I just say, you know, it's I feel like it's the evolution of money. I do talk about kind of the impact of fiat and like stimulus and central banks at a high level, just kind of like pumping money and kind of how money works. And I say Bitcoin is just kind of, you know, why can't I just transfer you, you know, this other form of currency peer-to-peer? Why do we need banks? And it actually kind of makes sense. And then I do have them log on to Cash App or, you know, Coinbase, something real easy. Okay. And my dad, actually, he's a caterer down in SoCal. And I had him do a Bitcoin meetup down there in Orange County. Yeah. And for like 50, 60 people, and I paid him in Bitcoin. And this was over a year ago. And so he doesn't look at it. I'm like, hey, man, check your account. And it's like, you know, quadrupled, right? It's like 4, 5, 6 times what I paid him. And he was like astonished. And he's like, what is this? And I'm like, well, you know, this is kind of an alternative method of an alternative currency where your government, like nobody owns this thing, right? This is deflationary, right? Like there's only 21 million. We solved kind of the technical aspects of double spending, and like it's this global ledger, and we can pay each other, and they get the grasp of it. They don't understand kind of the fluctuation of it, you know, kind of the market volatility. And I said that'll take time, but at the moment, it's a store of value. Like I understand him not accepting, well, he's accepting Bitcoin now, but you know, for merchants to that volatility is not really good, right? So, but then it leads me into stable coins, like, hey, you can transfer this out, and they're like, oh wow, like this is great, and instant, right? The payments are instant there, and nobody can take it.
I think you're absolutely right. Like so I'll tell you how I do it. So whenever somebody ask me now, well, explain to me what Bitcoin is, explain to me all of these things. Like I'll actually go out and buy them the basics of blockchains and Bitcoin, and be like, look, if you're interested, you need to invest your time and really understand it. Like, I'm not going to be able to explain to you in 5 minutes what it is. I'm not going to convince you that this is a good idea.
It's taken us hours.
Yeah, you need to have the curiosity to really want to understand what this is. But once you understand, and once that whole world is open to you, and you're introduced to crypto Twitter, and you're completely red-pilled, then you'll understand why I'm in this space. But I can't articulate for you in a few minutes, like why. Right? But your use of stable coins and transacting with digital dollars is, I found, a much easier way to introduce people to the concept, because I can tell them, hey, look, if you take your money and you put it in Coinbase and I've used Nexo for a little bit and said,
Me too.
I transferred some of my stable coins into Nexo, and I'm earning 8% yield on my dollars that sit there.
Yep.
Right? And that's a concept they can understand, because
exactly.
I can put my money in and I'm earning interest on that account. And it's all done digitally, so you can kind of explain to them the basics. So I love that you've kind of introduced the stablecoin aspect of it, because I think that's a much easier lead for people.
The utility, right? The utility aspect, it's no different. And I've even had this in other discussions where blockchain is complicated on the back end, from a technical standpoint, but the use cases that we're seeing, the money, right? The transfer of money like they get, the next obstacle was UI, UX and, the keys and all that. And like, I understand even, in the early days sending money, I was like, oh my God, like, is it going to make it right? Like, did I mess up? And you're waiting for confirmations.
I mean, that's such a critical point to adoption for this industry to get right? Because the percentage of the population that's going to be their own bank is so tiny. It's
small.
So small. We need to figure out a way where we can build in protection, where if somebody accidentally sends their crypto to a unsupported chain or unsupported wallet, that their stuff isn't just lost, right? Like, and it happens all the time.
Yeah. No, yeah. And I think one of the other aspects of it was, I think just, the infrastructure has gotten better. The UI UX has gotten better.
Yeah.
I think being able to transfer some of this stuff, the onboarding, the on ramps are a lot better. Visa, and your MasterCards are onboarding fiat. What does that say when they're joining? And that's obviously impactful for people to understand and feel safe a little bit, to adopt it further.
The protection is definitely needed, because I think without the protection, we're always going to be faced with the fact that the stuff that we're engaging with on a daily basis is super complex, right? Because like just the concept of understanding the difference between the Ethereum network and the Solana network, and like the limits in operability between these different chains. And yes, you can do this thing cross-chain, but you can't do the other thing cross-chain. Like it's all very complicated things that anybody that's not completely red-pilled is not going to invest enough time to really understand it, right? So there's still a ton of work that needs to go into being able to explain to somebody like a 5-year-old, this is how you do it. This is how you can do it. Don't do that because you're going to lose all your money. Right?
Yeah. No, I've been getting a lot more family members and friends ask me about it, and going through this path of the ease and letting them know like how it's operating. And one of the other things which I'll get into is on the NFT side. We just kind of talked about the financial services. I come from banking as well. I came across Bitcoin in 2013. One of my clients was wiring 100K. I was like, wow, what are you buying?
Congratulations.
I don't know what happened like years later. I didn't follow up on that. But I'm sure, hopefully they held, right? This was, Bitcoin was a few $100 at that point. It went up to 2,000. And so talking about further adoption, we just talked about kind of the financial side. It's hard to grasp. People are coming around to it, but moving on from there, DeFi, right? DeFi was popular, the boom. But you have to understand, like, that was super advanced. And the topic for Reimagine is around NFTs, and we'd love to get into this. Why do you think NFTs, and we just talked about, what's the word, being relatable, or like what's going to engage in, the consumer, the user, whoever it is, right? NFTs might do that. Why are you following NFTs, and what are your thoughts around that? Because DeFi and ICOs targeted one aspect of the space, and that was one adoption. Larger TVL than NFTs, but more popular NFTs, and people are getting crypto and blockchain. And so what are your thoughts on NFTs and are you following them and what are you thinking?
Definitely following the space. I mean, we as a company definitely want to support that industry and want to be kind of a critical part of the success of the NFT market. When I look at NFTs personally, for me, it's much broader than the JPEGs that we see kind of being sold left and right. I'll give you an example. So one of the companies that we're working with is a company called Metacask, right? I'm not sure if you've heard of Metacask, but they effectively mint rare whiskey cask, physical whiskey casks that sit somewhere in a warehouse that's going to be aged over X amount of years. So they can auction that whiskey cask off to the community in form of an NFT, right? That is super cool. Some of the ideas that's been floating around what you can do with NFTs is also very interesting. So the idea that you can buy somebody's future time by investing in them now, and you can say, okay, I'm going to cash in my coin sometime in the future, but I'm going to buy a coin that gives me 2 of your hours, Adam, 20 years from now, because I see that you can add value to my life 20 years from now. So, but I'm going to invest in you now. So imagine you're a college student, and you said you work with a lot of college students, right? So imagine you're at one of the Ivy Leagues, like Harvard, and you meet brilliant people there all the time, right? But they're in a position, college students, always a need for cash, right? Why would you not want to invest in somebody's time now, give them the cash that they need now, but you can choose when you want to cash in your IOU on that individual side. Like that is a form of NFT in my mind, right? That exists somewhere on a ledger that says, yes, Chris bought 2 hours of Adams that's usable sometime in the future, right? Just a contract that exists, right? So for me, when I think about NFT, it's much broader than how we've kind of narrowly defined it today, right? I do think the kind of frenzy around the art aspect of NFT, I think there's a lot of risk there, right? I think in a way, some projects are going to retain their value. I'm not sure if all projects are going to retain their value, and I do fear that there's a little bit of a ICO 2017 feel with NFTs right now. Like it's a money grab. It feels like a lot of people coming in, spending a lot of money. I'm not one to say that it will absolutely happen, but that's just kind of the feeling that I get when I look at this space, because it's like we look at Bitcoin, it's the supply and demand dynamics on the NFT side there's no cap on the supply. Right? Anybody can go and mint a new NFT and sell it. And because there's no cap on there, it's just hard for me to see that all of these projects are going to retain their value.
And it on the art, the collectible side, the art side, as you mentioned, that did pick up, right? And that is very tunnel vision. I was just, I had another discussion around NFTs in the enterprise world, right? And I mean, honestly, I guess anything could be an NFT. So how do you think NFTs, as I mentioned earlier, like Bitcoin and DeFi and ICOs were one form, you see NFTs as kind of the other population that'll get it, and what's its impact on adoption there to kind of streamline crypto?
I think the NFTs plays a critical role because it's so much broader than you investing in a project that has its own token, right? The association with physical stuff that exists in the physical worlds that you can represent on a ledger using an NFT, there's so much capability, and the functionality of that is endless. I think back to the internet of the early 90s, right? Like, I think that's where we are with NFTs right now. We just have not conceptualized in our own minds what could happen if you can mint an NFT that represents something in real world, right? So I think it will support adoption. The more interesting projects like Metacask becomes out there, where it's an NFT that represents some physical thing that people can better connect to and say, okay, I'm a whiskey lover. I'm going to invest in this whiskey, and that's going to force me to learn a little bit more about how NFTs work and how blockchains work, right? So I think NFTs is just another way of getting more people interested in something that they're already interested in today, right? Like tagging on to that existing interest of somebody that leads them into, okay, I want to understand what an NFT is. I want to understand how blockchain works, right? So the more you go into these verticals where there's pockets of interest, the more you'll see these streams of education flow back to, okay, what is a blockchain? And people get educated slowly by themselves, right? That's how I see NFTs kind of work.
So, and one question you've already kind of touched on a little bit that I have is like, does it do NFTs, does it have to be digitally native, or, you know, the physical world and some hybrid, or it doesn't matter? Like, does it need to be online, a native kind of asset, or?
I don't think it matters. I think people would engage with NFTs where they feel more comfortable with it, right? So if I'm more comfortable investing in things that I know, like a physical Banksy piece of art or a physical cask of whiskey, and I just want to use the benefits of a blockchain and NFTs to record transactions, then I'd probably stay in that realm, right? I'm not a video gamer. I've never been a gamer, right? And that's probably why my imagination around how these JPEGs can really take off and have a much larger impact on this space is very limited. But there's large communities out there that have that imagination that's going to foster kind of that growth and that use case. But I think it exists in both sides. I think the physical aspect of NFTs is going to grow, and the digital native part of it is going to grow. I just think it's going to be different communities that's going to foster that growth.
Definitely. And I think, I mean, the first half of the year is $2.5 billion. You know, the previous year was like between 13 and 20 million, right?
Yeah,
during the same time.
It's been insane. It's been fascinating to watch.
Exactly. And I think just in August, the volume like reached 4 billion.
That's
so it's super insane. And talking about gaming, I'm not a gamer as well. Obviously NFTs, in-game assets, but on a bigger picture, Facebook, the metaverse in general, how do you see kind of, you know, this kind of unfolding? And are you a believer in kind of, you know, where we're headed in this direction, and how do NFTs, you know, impact, I guess, the metaverse?
I think we are. I think the person that probably explained it the best, that really got to me, because for the longest time I did not understand it, because again, I'm not a gamer. Like that translation from physical to digital, my imagination around that is fairly limited. Also, the experience in using VR is just terrible. Like you're in there for 5 minutes, you come out, you feel nauseous, you're sick. It takes you 30 minutes to recover from 5 minutes. So that was never a pleasant thing. For that reason, I never thought VR is going to take off. I think AR, once they figure AR out, that's going to significantly help kind of the metaverse when you're actually in the real world, but there's art, there's digital stuff interacting with real world stuff. That is fascinating. That would be super cool to see.
Very immersed, right? Immersed in
exactly.
Hybrid.
Like the hybrid view is kind of the only way I see it really work, right? Balaji had this explanation of it, and he brought it back to the economics of how we're going to do things in the future. And he had this analogy of, if you have a wedding today, it costs you, say, $50,000 to have 150 people come together at a venue to throw a party, right? That in-person experiences are always going to be get more and more expensive, because labor cost is going to become more expensive. Like the stuff that you need to facilitate the party is going to be more and more expensive. And the more expensive that becomes, right, the less people are going to engage in the physical act of these events, like a wedding, right? And he then kind of spoke about the reduction of cost of providing digital experiences, and how the cost of providing digital experiences is significantly going down over time, right? So the experience is getting better and better and better, but it costs less and less and less to deliver that experience, right? So he explained it in a way of saying, okay, we'll still have physical weddings in the future, but it would likely be the people that can afford it, the most wealthy, the most people of means that can actually engage in the physical gathering of a wedding, right? And you'll have a large portion of the population that does it all digitally, because it is less expensive and you can still feel like you're engaging together and you're with loved ones and you're still celebrating, but in a digital way, right? So I love the connection of cost and the ability to pay for certain things, and how the digital experience is just going to be much cheaper and more accessible for some people than other people, and how that is going to be a driver of adoption of the metaverse. And I thought that was beautiful. Like, I've never heard that, and that clicked something in my mind.
No, I like that. I wonder if we'll still have to wear a suit, like physically, or do we just?
I think you'll have a digital suit on.
Gucci.
Yeah, there we go.
Actually, that might be an NFT, right? Where like you're in this thing and you can purchase in metaverse items, and you own it, and there you go.
That's exactly right. And I think whatever shirt I'm putting on is going to add 30 pounds of muscle. So,
and do you see this Zoom as kind of like, an iteration, the first iteration of metaverse? And
absolutely is. Who would have thought a year and a half ago that this would be our day-to-day ways of communicating? Like this is the first time you and I met. Like, I'm really enjoying this conversation, and I'm having fun, and we don't have to be in person, right? But you asked me 2 years ago if this would be the case, I probably would have said, "There's no way." It's unlikely.
When I take calls now, and it's the Zoom's an option, like they're always on it, right? Before you said we just do it on the phone and you can be off of it. Now I've noticed everybody's jumping on the camera, so I always got to be prepared.
I do think the image improving filters on Zoom helps.
Yeah. Did you see like the Adobe integrating their NFT option? It just came out like last week. Did you notice that?
I did not see that, no.
So when we're doing this conference, and this Adobe actually, and get your thoughts on it, is embedding an option for creators to create an NFT. And what it does is it adds a certificate, a creation certificate, I think. Okay. And then it also gathers their social media online profile, and then embeds that into the metadata. And now when they create something, they have this option to create an NFT. What do you think?
That's pretty awesome. I think more and more companies are going to go in that direction, where they tie other metadata and other aspects into NFTs, which again, I think if we bring it back to identity, that's going to start closely tying to somebody's actual real world identity, right? And maybe it's not even real world identity now that I think about it. Maybe you would form this digital identity that you associate with, and then all these things are going to be tied back to your digital identity, right? So maybe you have one NFT that's the primary signal of your digital identity, right? And everybody knows you as that Bored Ape, right? But because everybody knows you as that Bored Ape, and they can see your transactions on the blockchain, because your Bored Ape is connected into a wallet, and now your wallet tells a lot of people a lot of things about you, right? It tells them what projects are you investing in, right? Like, what other art and what games are you playing? So I think we'll continue to see how identity related things is going to be connected to a lot of other things in the digital world, which we're excited about at Civic.
I do want to circle back on that. You brought it up at the beginning of the conversation. What are you guys doing in the NFT space?
So we're doing the verified by Civic for the founders, right? So that's creates some trust and transparency around the project, which is so desperately needed, right? We talked about the Squid Game rug pull, right? So for that reason, like it's valuable to know who the founders are and who's connected to the project, right? We have this product that we call Civic Pass, which is effectively a gateway that we put up in front of a marketplace. So if you want to go and buy an NFT from a website, right, and you want to prevent bots from coming in and sweeping the floor before any individual can actually come in to sweep the floor, NFT creators can put up our gateway in front of their website that would force them to go through a verification process with Civic, right?
That's great.
So you would go through a verification process to make sure that you're not a bot. It might consist of just a face scan where we don't actually save any of your personal data, but we just verify that there's a physical human being sitting on the other side of the camera, right, engaging with the website. And if we can verify that, we can then issue you a token, and we can issue the token into a wallet that we verified that you own, right?
Wow.
So by doing that issuance of that token into the wallet that you own, you can go to the protocol or to that website where the NFTs are sold, and you would be let in because the website will notice that, yes, you have that token, you've been verified, so you can come in and you can participate in the mint.
That's awesome. Yeah.
So that's the
great
big project now that we have on the identity side.
Awesome.
Is a gateway solution, right? Because especially in a decentralized world where the project teams don't want to get involved and don't want to stay involved in their projects, they want to have an ability to still control who accesses it.
Of course.
Right. So we allow that now through our solution, and it's all on chain, right? So we're very excited about that solution, not just for NFTs, but for every single type of crypto project.
Awesome. No, that's great. I mean, NFTs are just kind of the next boom, or what's going on right now, which Facebook's, your NBA Top Shots. I just read like the Grammy signed a 3-year deal to do NFTs, upcoming. What do you think like big tech or maybe Silicon Valley's role like in blockchain? And this is kind of a random question, but they ruled Web 1, they created Web 2, and now Web 3 is decentralized. Anybody can create it, right? And so everything's kind of been focused in Silicon Valley, but what does kind of Web 3 do to inclusivity, I guess, even on the innovation side, expands that?
I do think it expands it. Look, I think VCs and that cohort will continue to have a massive influence, right? Because they have the opportunity to participate in these projects before anybody else can, and through that, they generate a ton of wealth and a ton of value for them and their investors. So we will always have them as a critical part of this ecosystem, right? And I'm not sure how that will continue to evolve in a decentralized world, but it will evolve.
Yeah.
The bigger question for me is the speed at which it will evolve, right?
Yeah.
Like, because it's going to take us time to move from a Web 2 to a Web 3. Yeah. And that evolution, that shift is going to take time. And I always think we might end up in a world where Web 2 and Web 3 coexist for forever. There's people that only engage in Web 2, there's people that only engage in Web 3, and there's people that engage in both. And I think that's probably going to be the world we live in.
Yep, you can have options, right? Yep. Decentralized, centralized, and kind of take it from there.
And going back to these booms, and we'll try to wrap this up in a few minutes here, about 3 minutes or so. DAOs, is there going to be a DAO boom? One, and then two, I think DAOs are fascinating, even kind of to my previous question in terms of a community coming together, one common goal, being able to, going back to your Web 2.0, the FANGs of the world, extracting value from its users. DAOs are, giving value back to its users, right? Yeah. You're kind of being paid for things that you love to do, and your time, you're investing your time, and now you're getting rewarded. Not only that, I feel like DAOs can attract talent like pretty quickly, and there's investment DAOs and social networking DAOs and all that. What are your thoughts around DAOs, and are you fascinated by them?
I am fascinated about them. Look, I'm a governance, risk, and compliance guy, right? So governance is a core element that I'm a nerd like that. Like I get excited about good governance, right? But I think therein is the question is, what is good governance? And I think that's the thing that DAOs still need to figure out, right?
Yep.
Is what is the right setup of a DAO? And it probably looks different depending on what the DAO is for and what the DAO governs over, right? I'll give you an example. So does owning more tokens in a specific DAO give me more voting rights? And is that the right structure for that DAO? Or does it give me more power, and does it again gives the people of means more power because they have a larger say in what that community does, how that community evolves, what changes are being introduced, etc. Right? So I do think the opportunity and the possibilities there are fantastic. I do think that there's going to be probably a few lessons learned on the way to figuring out what the right setup is, right? I do think identity plays a critical role because there's certain things where you would want one person, one vote, right? And you would want to make sure that one person didn't vote multiple times, right? So I won't go as far as WorldCoin and staring into a globe to make sure that only one person gets one coin, right?
Yeah.
But that is kind of the world we're moving in, right? Is identity is going to be tied to something.
Yeah.
Right? So I think identity is going to be critical to DAOs, but I do think DAOs will play a pretty interesting role, but I don't think they will replace traditional company governance. Right?
That was kind of another question I have. Do you think this is kind of the new legal entity, organizational structure?
I don't think so. I think incentives are misaligned, okay. Right? So I'll give you an example. Facebook or Google, Twitter. Let's use Twitter as an example, right? So let's imagine Twitter now all of a sudden says, okay, we're gonna implement a new DAO structure in defining what our roadmap is for the future, right? So the community can vote on what features needs to be introduced and the timing for introduction of those features, right? Like one of the first features that I want to introduce is going to be, well, remove bots, right? Remove fake accounts.
Yeah.
I don't want to deal with them anymore, right? Because it's impossible for me to tell which ones is, but there's mechanisms and ways where they can take it out. But if you look at what bots mean to Twitter and to the stakeholders of Twitter's stock, the people that own the stock of the company, the more bots there are, the more user count there is, the more fakes click there are on the ads, the more ad revenue they get, right? So they're completely disincentivized to remove bots, right? So for that reason, I don't think companies will ever give up the voting rights to people that don't have a monetary stake for the future growth of that thing, right? So I do think there needs to be direct alignment between incentives for a company and DAO participants before that can ever happen.
And you're right. And I think with this experiment, with regards to governance, we're so used to governing blockchains, nodes, validators, staking. Can we govern ourselves in these DAOs, right? This social scalability, like human coordination game of bringing people together, and I guess time will tell. It seems like there's some success, and one of the questions that I've asked was like, is it scalable? Like, what's the right DAO size, right, for these things to operate efficiently and effectively?
It's really tough though, because you can try and implement DAOs almost on anything, right? The biggest thing that I always question is, what is the minimum level of engagement that you would want to see from that community that you give the power of the vote to, right? And how many people are really going to engage in that activity, right? Like in this country, we give everybody 18 and above the power to vote, right? But how many people actually vote, right? So you're always going to be dealt with that dynamic of, yes, we can give the power to people to vote, but how many people are actually going to do it, right? Because time is a premium, right? And if people aren't passionate enough about topics, they're not going to engage. So you have to figure out what is the right level of engagement, what is the minimum level of engagement that I need before I trigger a change in the protocol, change in whatever, right? So those are all things that still need to be flushed out and figured out.
Yeah, this democracy, like, is it fair? Are we going back to these old ways that we have now, and how effective is that? But no, man, Chris, it's been a great discussion. I know we've gone over our time here, but we talked about NFTs, we talked about Civic's solution there as a gateway, into this new creator economy. We just finished up with DAOs, and not only that, government's impact and influence on adoption on Bitcoin, and not only Bitcoin, but the impact that they have on blockchain and crypto in general. So, I hope you had a good time. We hope to have you back. Where can people learn more about Civic?
So civic.com is our website. You can go on there, and you can go and see all the good things that we're doing there. We come up with announcements on our blog quite often. Follow us on Twitter. That's probably also a nice place. We do multiple announcements out there. Likewise, Adam. I had a ton of fun. This was good. Like, this is a nice chill conversation. We definitely did cover a lot.
Yeah. So thank you again. Awesome. Everybody tuning in to Reimagine, appreciate you taking time out of your day to come check out this conference. Hopefully you're enjoying it. This is Chris Harding, Chief Compliance Officer over at Civic. Stay tuned for the next speakers.
Reimagine 2021, the #1 global event in the metaverse.
You thought DeFi was just a buzzword, did you? You thought you could remove our face from your books without a legitimate explanation, did you? Does a mask on Ben Franklin offend you? Or perhaps the symbolism frightens you, because it represents the end of your arbitrary decisions made in the name of elitism? Well, I've got news for you. The decentralized financial revolution isn't letting up, and we will not be silenced. The future is being determined under your nose. I suggest you wake up.
Hello and welcome to Reimagine 2021. This is our 11th conference over the past year. Super excited to be here right now. We host these events as part of our monthly series, bringing you nothing but the best projects, bright minds, and leaders in the space. We've been fortunate enough to really, invite many talented individuals and teams to come speak with us, providing updates, insights, and all the above that's happening in crypto. I'll be your host today, Adam, from the Mouseball team, where we focus on early stage investments through our accelerator or providing development support to a growing number of projects, as well as education within our Mouseball University program. Our main objective and goals are increasing adoption, use cases, and real world applications. Pretty straightforward. We bring you Reimagine. For all the viewers out there that are trying to get into crypto or are in crypto, you're gonna take away something. So super excited to be here with my next guest, Colin Pape from Presearch. How you doing, Colin?
Hey, Adam, I'm good. Thanks for having me. Appreciate it.
Awesome. Well, welcome back. I think this is your first time during Reimagine. Is that right or no?
I think I did one previous, possibly in the spring, I think it was. Yeah.
Awesome. So you're a repeating guest and now a friend of the show.
That's right.
So, so as you know, Reimagine really just trying to highlight a lot of industry leaders like yourself, talk about projects, what people are working on, right, for the last X amount of years. Some people may think blockchain and crypto is new because they're just coming in from hearing about Bitcoin and altcoins and Ethereum and whatnot. But really, we've all been working on this for a little while. So can you give a quick little backdrop of what you're working on and really how you got into Presearch?
Yeah, so Presearch is building a decentralized search engine. It's powered by the community. It's been around since 2017. We've got about 2.8 million, I believe, registered users doing around 3 to 4 million searches a day. And really kind of the vision for the project is just to provide an alternative to Google and many of the other centralized search engines that are, VC backed. They've got maybe some conflicting interests really behind the actual engine, and trying to really provide the community with something that they can participate in actively. So it has a cryptocurrency called Pre. Rewards you when you search with it. You can also earn it for referring people into the system, as well as providing infrastructure for the project and running Presearch nodes. Got into kind of search through a bit of a weird experience with Google back in 2011, where we just kind of got blacklisted and had to participate in an FTC investigation, and kind of realized just how centralized Google was and how much market power they had, and really thought that there needed to be an alternative that was more transparent and community oriented. And so here we are a few years later.
Awesome. And let's kind of get into this, right? You're working on something cool. I chose this interview to come talk with you and figure out why it's important. We're talking about decentralization. We're talking about digital identities, this transformation. So in the early 90s, the internet's booming. The 2000s up until recently, where this web 2.0, your FANGs, your Facebooks, your Googles, your Netflix, where we are the actual product, right? If something's free, that's kind of the saying, right? That we're actually the end user, we are the product, they're collecting our data. So blockchain comes along and provides this infrastructure. And I want the audience to kind of really grasp it, and you can probably break it down of what we're all used to, and how you're actually trying to flip that business model and flip that model completely into more value going back to the users. But give us a little backdrop on Web 2.0 and a lot of these big players, and like what you guys are doing to kind of change that.
Yeah, so I think really one of the big differences between your traditional big tech platforms and then more blockchain, community-focused, decentralized platforms is it kind of encompasses the entire genesis of the different projects. So if you think about Google, it started off with probably pretty good intentions. In that case, it was like an academic research project, and then some venture capitalists get involved. And so those VCs have an objective to make money for their investment partners. And so when they fund something, they're basically looking right from the beginning with, what is the exit? How are we going to get out of this thing and make money for all of our investment partners? And so generally it's get acquired by somebody else, or figure out how to go public and get into that whole then model of evaluating success, which is based on revenue. And when you start getting into that model, then it becomes really about how to extract as much profit and revenue from all the participants in the ecosystem. So they're running, an advertising auction platform that is trying to get businesses to pay into an advertising system. And one of the things that would help them make more money is to collect as much information as possible from all the people who are searching on the platform. So that's when they get into, all this tracking and profiling and retargeting and following people around the web and, building kind of all these tentacles that will help them collect more data, because that then provides more targeting abilities and more revenue opportunities for them to make money. And so as that happens, the stock goes up, and then all the, the founders and the employees and the investors, they get rich. But it really comes at the expense of the people who are doing the searching, having their data be compromised. And then it also comes to some degree from the advertisers, because they're basically, kind of almost ultimately destroying that resource that is there, and ultimately it's not as sustainable as something where, for instance, with a blockchain project, you've got everybody kind of aligned around one value unit. So in our case, it's the pre-search token, PRE, and so the founding team is compensated with pre-tokens. The people who did the initial crowdfunding of the campaign, something similar to like a Kickstarter for a digital product, they all bought pre-search tokens. We then reward people who are doing searching for their attention with pre-search tokens. The advertisers, they also pay in pre-search tokens, but they're actually doing something called keyword staking. So they're not even giving up their pre-search tokens. They're basically locking them to a certain keyword. And so you kind of have everybody aligned around this value unit. So as we get more advertisers, there's more demand for the token and the value increases. That's a good thing for all the people who've been collecting pre-search tokens as users. And at the same time, for the advertisers, you've got these people who are aligned with you. They're viewing you as more of a supporter, a sponsor, than just somebody who's trying to bombard them with offers and trying to basically kind of interrupt their attention. And so you start kind of bringing all these different groups together around one value unit, and you get alignment. And that, I think, is really one of the fundamental differences, as well as just increased transparency. Just about every crypto project has either a Telegram or a Discord channel. You can interact directly with the team, you can contribute, you can make suggestions, and you really kind of get a product that I think is a lot more aligned with the actual user base than one where it's, designed internally. Focus groups maybe are providing you with feedback, but it's not necessarily that direct real-time interaction, and it doesn't have that same degree of accountability. And so to me, it's a huge paradigm shift where users are ending up with products that are more aligned with their values, and they get to actually participate in the ecosystem and benefit just by being a user. You don't have to go out and do something, like buy shares in Google or just kind of have your data be abused.
So no, that's all fascinating. And I think that's all important to really kind of break that down of the purpose, the objectives, and the goals. One thing that that you're taking on is really kind of a big endeavor. How do you scale something like this, right? Centralized versus decentralization. That's always been a talk, no matter who you talk to, whether it's on the enterprise front, whether it's in DeFi, whether it's in the NFT space, DAOs and all that, which we'll get into soon. But how do you guys tackle that, like for the challenges of scaling pre-search compared to what we're all, compared to the infrastructure now?
Yeah, so we're kind of tackling it by enabling the community to be a part of the project as much as they're willing to be. And so we've got, for instance, on the infrastructure side, something called pre-search nodes. So it's basically software that participates in kind of that search information collection process. And so people can essentially install this software on their computers or on a virtual private server, and they can actually earn pre-search tokens for contributing these resources into the network. So rather than us, building a big data center, for instance, right now we've got more than 45,000 nodes. So if you think about us having a data center with 45,000 servers in it, that would be a major data center. So we've kind of got access to that, but it's being provided by the users and the people that are really actively participating on that infrastructure side. And then from an actual development and a team standpoint, we're building the system to enable people to participate in actually, developing different user interfaces, different data models, and enabling us to not just have this one centralized team that is doing everything, but essentially to build out platforms where other people can, do a pull request on our GitHub and then, create a new, let's say, package, which is what we call them community packages, for any of the different things that they might be interested in and where they might be subject matter experts. So Google has really, built a lot of the kind of, on result page interfaces. So if you do like a currency lookup, or if you look up weather or sports scores, oftentimes you're not leaving Google. You're just kind of getting that result right on the user interface. And so we have an opportunity to do that as well. And so by enabling, thousands of users all over the world where they have, domain expertise, they're passionate about something, and they know how to do some development, they can go and basically build one of those interfaces, and then we can pull it into the pre-search results and then end up with more of these types of, knowledge panels or on-page results than even Google, and done by people who are maybe sometimes even closer to the problem or the solution where people are looking for that answer. So to us, it's all about empowering the community to participate and then providing them with rewards for contributing.
No, that's great. And I think community, especially in blockchain and crypto, right? I mean, that's kind of a critical component, your growth, your longevity, active participation and membership. And the Reimagine theme of this conference really is around DAOs and NFTs, and we'll touch on some of that. Another question I have, UI UX, we're accustomed to operating one way, what we're the current kind of internet landscape. How have you guys tackled that and addressed that for the end user?
Yeah, so again, I think it just comes down to enabling the community members to really participate in the product development process and to actually, in real time, don't go down like this really long path and then come out on the other end and, oh, here's our product. It's like you're shipping really early. You're coming up with kind of an alpha product. Hey, here's a concept. Somebody in the community came up with this. We built it. What do you guys think? And then getting that feedback and then iterating from there. So enabling us just to be, closer to the group of people who are actually using the product and getting that really direct feedback. There's nothing to stop community members from actually, organizing themselves and coming up with, either critical or positive product feedback and helping to really steer the direction of product development. So it's to me about, doing things that way. And then also just looking at where things are heading and, looking really at the opportunities presented by Web3 and the ability for people to control their information, control access to their stores of value, and giving them, tools and interfaces to enable them to take more control. And that's really kind of the audience ultimately that we are targeting with pre-search. People that are not happy with, Google's vanilla search results, people who want to be compensated for their attention and their usage and their data. Oftentimes with pre-search, because you can search all these different search engines and have these different interfaces that enable you to access information more quickly. We're targeting really internet power users, people who might be web workers. They might be online, 8 hours a day, doing different searches and different lookups. And so it's about kind of empowering those power users with tools that they can utilize to be more efficient and more effective. And then also at the same time, not trying to be like a lot of the big tech players who are trying to own it all. And, you are trying to pull everybody into some, moat that you have. It's about collaboration. It's about openness and enabling people to, kind of work across different platforms and tie in with different platforms. So to me, that's, one of the key differences in how that experience is evolving.
And one thing that I find interesting around your use case, or the way that you're leveraging the technology itself, is gaming, NFTs, DeFi, right? We talk about these things and how are we going to get more users understanding into the space? How does Presearch is obviously taking another angle? I mean, Google, like a search, right? How are you impacting the adoption that's a little bit more relatable, right? We do these things every day. DeFi a little bit complicated, advanced, right? You're your own bank and you got to manage all these things. Your angle, talk a little bit about that and like how you think you're going to impact further adoption outside of our bubble.
Yeah, I mean, that's the exciting thing to me about search is it is such a kind of average everyday activity. It's not something that you do every once in a blue moon, or it's not strictly trading related. It is something that really touches all different aspects of web content. And so for us, it's about just providing different opportunities for all these different audiences, whether, they're gamers or artists, to more easily access the content that is exciting to them and is oftentimes more connected to blockchain. So it might not be your traditional blockchain games or your traditional digital art. It would be, NFTs, or it might be play to earn games. And so I think it's something where people can build a bit of a habit and a routine, because it's something that, we all do on a daily basis. And so if you can create a user experience that is fairly similar to what they're used to, and rather than trying to give people this paradigm shift, give them kind of like a wedge that they can, start to use to change their behavior away from the centralized big tech platforms, and then start discovering all these different decentralized opportunities. And just do it slowly. So you're starting with kind of search, and then that wedge gets wider until you're using decentralized social media, and you're doing decentralized video hosting, and you're integrating with OpenSea, and which is something that we just actually announced today, and enabling people to find digital art that they might not otherwise be exposed to. And so I think it's a really tremendous opportunity just to become kind of an on-ramp to the whole world of decentralization, and just, make an active effort as a project to not just, use those traditional platforms that already have traction and are, coming from that big tech centralized paradigm, to, doing partnerships with these smaller upstarts that, don't have the same size community, but they have a really aligned community, and they're aligned with that vision, and enabling them to leverage the platform as much as they possibly can to reach new people.
Yeah, no, fantastic. And to kind of even stay on this topic about adoption, getting this technology into the hands of users, education. Talk about some of the partnerships. You have some major partnerships that you're working with, which is like another extension that people are used to using in their daily lives. Can you talk a little bit more about that?
Yeah, I mean, it's for us, it's kind of again about bridging kind of the traditional world with this new world that we're all building. And so, today we announced a partnership with OpenSea, and so now it's just an easier way to find information about NFTs. We're working with CoinMarketCap. We're working with a number of decentralized hosting platforms that enable people to run nodes on decentralized hosting infrastructure. And then, on more the traditional side, in September, thanks to there was a European Union ruling against Google a couple of years ago that forced them to add to Android something called the search choice screen, which rather than, you start up Chrome and you automatically get Google as your search engine, they now have to basically display this screen to all European users that enables them to choose a different search engine. And so we're the only blockchain and kind of crypto decentralized search engine that's in this search choice screen. But there's more than 100 million people a year that install Chrome for the first time or reinstall Chrome and kind of see this screen in Europe. So it's a really big opportunity for us to get in front of people who, maybe they're curious and maybe they're looking for alternatives, but they aren't necessarily going to go out and look for them themselves. They'll see it and then they'll add it as their default search engine to their Android device. And the next thing they know, they're searching with Presearch, and then they're discovering all these other decentralized opportunities and partnerships. So that's kind of the bridge that we're excited that we're able to build.
Yeah, and I think one interesting aspect around this technology is that it's really, there's different audiences or different user profiles within crypto. It's not just, this type of individual, this type of entity. It's actually bringing a community together. It's bringing people from all over the world, right? It's borderless. Everybody, accessibility, right, to this technology, and not only that, the innovation side, that you're providing. So, and I've heard you talk about how robust, how strong your community is, the engagement, participation. I want to get into DAOs a little bit. What are your thoughts around DAOs, and what kind of impact do you feel DAOs have?
Yeah, DAOs are really, I think, absolutely one of the biggest opportunities going forward. When we established Presearch in 2017, we basically put into the white paper that, we were starting more centralized and then over time decentralizing the platform, and that the ultimate kind of expression of governance and management for the platform would be a DAO. And so to me, it's something that just really enables the community to take ownership of something. And, when we think about centralized platforms, and we've got, the Mark Zuckerbergs and the Jeff Bezos and the Bill Gates of the world, and they end up, kind of controlling and hoarding all the value. And, they kind of build these really tremendous platforms on the backs of all the users and the people that have adopted them. And, in some cases it's resellers and partners, but ultimately those people really don't have much of a voice. And so in this case, I think enabling people to actively participate in, key decisions, and really just kind of setting up from the outset the expectation that a project is going to be decentralized if it isn't already right out of the gate. Sometimes it's tough to have just a kind of leadership by committee until a community does form. That's really, I think, kind of one of the keys. But then as the community does form, you're engaging the different people who are really active and passionate within the community, and you're giving them more and more kind of, ability to take responsibility and become leaders and help to, expand that entire just kind of web of trust, really, so that people who demonstrate that they're aligned with the values of the project and who have something to contribute can start to participate more actively. And then ultimately it's about getting to a point where there are no kind of dependencies with the traditional world. So in a lot of cases, it's banking, it's payments, it's credit cards, it's all these kinds of things that people might need in order to get a project off the ground. And so the really cool thing with decentralized projects is, you're taking payment in cryptocurrency. It's a way that you can start to, redistribute that crypto out to the people who are contributing. And, you can start to, over time, kind of leave those legacy ties and just become more and more free from that system that is, really tightly integrated with big tech. and build kind of a parallel system that people can participate in. And then as it kind of gets to that critical mass point, now you've got something that's actually competitive with big tech, and that hasn't sold out its user base, hasn't taken any of those poison pills along the way, venture capital or other things that just keep people out of alignment. And by staying in alignment, ultimately people are using a platform that they know that they can count on. And then ultimately, when it becomes a full DAO, it's something that is totally enshrined in the governance model that it's basically impossible for the platform to really kind of go astray from the values and the user base. And I think that's important, because I think a lot of us just feel like we've been sold out. I was a really early Google advocate back in the early 2000s. A lot of people kind of feel the same way with Facebook, for instance. They've invested a decade or more of their life putting their content in and building a network, and now they find out that, hey, Facebook has values that I don't support, but my content's trapped here, my network is trapped here, I have no way to get it out. And so you're kind of like stuck there, even though you disagree with the values of the platform. And so I think, it's about just kind of giving people choice, giving people voice, and ultimately giving them a platform that they really just feel aligned with.
And I think what's interesting is that, going back to the content being stuck, right, and the centralized powers, you can't move, and it is what it is, where depending on the DAO, you can work for multiple DAOs, right? So you can pick and choose how you align. You could take on some of these passion projects alongside your traditional work, or you're working for, committed a little bit more in one other DAO. And so your talent, or the talent base, really, you wouldn't see like an Apple engineer at like a Microsoft, engineer. DAOs are going to be able to kind of pick from the litter, or I should say not pick. Individuals are going to be able to choose DAOs and work and apply their talents and skills wherever they want, which is great.
Yeah, it's massive. I mean, you just kind of get this, pollination that's happening across different projects, where you've got people that are, in our case, they're really passionate pre-search users, but then they're really passionate users and involved in kind of the community and the DAO within another project. And then they find ways to bring those two projects together, and the communities get this cross-pollination that's happening. And, it often is really around values. And so when people identify, hey, this project has similar values, they've got complementary technology, next thing you know, you've got a partnership that's formed, or some type of integration through APIs or other open technology, and you end up with something that's that much more powerful than whatever you started with. And that kind of stuff doesn't happen with traditional companies. You've got these non-compete agreements, you've got like actual barriers, deliberate,
even hiring international.
That's right, exactly. There's geographic borders. I mean, in our case, we've got people who are really active members from our community from all over the world. And it's cool because it ends up being like a 24/7 project. It's like, I'm on the East Coast, and so I've got X hours, but we've got people that are all over the place, and like there's always somebody who's kind of like spearheading the community leadership, and we've got people that are working 24/7, and then just these kind of cross community partnerships that end up happening. It's just really powerful, and it's kind of this like collective success, rising tides lifts all boats, versus kind of the really kind of competitive, hey, it's kill or be killed in the traditional world, right? So I think that this model resonates a lot more with more people.
And talking about starting centralized and kind of ending up decentralized as possible, and we're used to like this top-down approach on the traditional institutions and hierarchy of levels of the chain of command, and then DAOs similar. it's more of a bottom up, right? Like everybody in the community is contributing, and everybody has, it's equitable for everybody to kind of give their time and really invest their time and feel confident in a return of some sort, some capacity, whether it's a social token, an NFT. How do you see the division of power playing out, though? You talked about it. You guys are starting off centralized, and I feel that you have to do it that way. Where I remember people complaining in the past, oh, they're not, they're still centralized, but you got to start somewhere. Training wheels, you got to crawl before you walk. And down the path, once things are rolling, then you can kind of, get out of the driver's seat. How do you see the division of power playing out amongst a community like a DAO? And then two, we'll answer that first.
Yeah. So I think it's a really good question, and I mean, you do have more of this, hierarchical approach in traditional technology. It's like somebody's got a vision, and then this kind of is how it is, and then like you're approaching everything totally differently. Really, it's you're trying to find like advertising channels on how you can align with people who fit this profile, versus when it's kind of a ground up movement. It is people who are coming in and they're contributing things. Hey, did you think about this? Oh no, we didn't. Yeah, let's try it out and let's see what happens. And so the barriers to participation and to impact are much lower. And I think one of the key differences with this space, and just how I've thought of things in general, and actually I stumbled upon a post that I wrote back, I don't know, it was like 14 years ago, I think, 2007, 2008. And it was about the post title is "The Decline of Money and the Rise of Goodwill." And I think about, really what we have at the core. What is our core kind of asset as a community? And it's the goodwill of our community members. And so we need to, really preserve that goodwill, and we need to build that goodwill. And the way that happens is not by, kind of top down, forcing of different ideas. It's about how do we empower people? How do we enable them to participate? And how do we give them tools that they want to utilize and can find different uses for? And, ultimately enable kind of this meritocracy where people who have something to contribute, have some value, are able to actively participate in the community. And really, I can tell you that the way that our project has gone, pretty much everybody in the project, started off as like an active Telegram community member, and then maybe they became an admin, and then from an admin they became maybe a developer, or somebody in business development. Alex, our head of growth, Marco, our former head of community, who just raised the largest $106 million for his project, Merit Circle, over the past week. It's like, you get all these incredible people that just kind of like bubble up because they're passionate about what you're doing. And it's, like, we don't do job descriptions and try to find people. It's like, there's tons of people within our community, and they end up just like identifying, and then we figure out, hey, how can we get them more resources? How can we give them, more ability to affect change? And as that happens, those people just kind of continue to, rise up and then bring other people along with them. And I think it's just, a much more empowering model. And the balance of power is, in the hands of the participants, not just, one single person.
And I think you pretty much answered my second thought to this question about this top down and bottom up and division of power was, we're used to running nodes and validators and governing blockchains. And you kind of just touched on pretty much, you believe that we're going to be able to govern ourselves in these DAOs?
Yeah, ultimately, I mean, it's again, when you're getting started, sometimes it does, sometimes take somebody to make a decision, or you've got somebody who maybe has some type of insight into, the specific problem. But, as it grows and as more people participate, I think it's the only real way to, both to scale and to really, support the needs of the people who are participating in the ecosystem. I don't believe in authoritarianism, and I think that people generally make really good decisions, and they find ways to enable themselves as much they can, and enable others when they're part of something that feels like a community. And so, yeah, just giving people more tools to do that is really kind of what's on the roadmap for us. It's kind of get that core search experience. Okay, it's usable, it can be it can work. It's something where we can get a working tokenomics model on the advertising platform, and then as that kind of core thing, hey, it's sustainable, we've got positive token economics, and we've got something that's a sticky user experience that people want to utilize. Now give people more tools so that they can run with that and really start to make it their own. And so yeah, I don't know, it's an exciting time to be involved in any type of endeavor compared to 20 or 30 years ago, when the options were so much more limited. It was almost impossible to do a lot of this stuff.
Yeah, no, exactly. This social scalability, this human coordination, right? To round up the troops and have a common goal and target that. And so you're optimistic that as members, we can execute proposals, processes, pivot, longevity, right? Maintain the vision of that DAO. So do you see DAOs, being a new form of a legal entity, like a new form of business structure, aside from an alternative to your LLCs and your C corps and S corps one? And then how do you see that? You see them doing business alongside traditional DAO to traditional businesses, transactions?
Yeah, I think it's definitely a new structure that's viable, and again, it kind of depends on. I mean, traditionally, you would need to register a corporation or something because you would need a bank account, and you would need that bank account in order to pay service providers and vendors and team members. But if you can operate within the cryptocurrency space and have these kind of digital wallets and do digital distribution of value out to different participants within your ecosystem, then your dependency on that kind of legacy model is really diminished. And I think that definitely the future is going to be more of this decentralized legal entity type, because it just makes more sense. You have less ties to that legacy world that is basically really just there to kind of hold people back. And you can see it with man, there are teams that are totally anonymous, and so when you've got stuff like that happening, and it's like fully decentralized trust and full decentralized everything, you can see how that model will work. I mean, to me, the corporate entity is really just about that tether back into that legacy world. And so, yeah, my hope is that DAOs really proliferate and kind of force change and provide people with the vehicles that they want and need in order to make the change that they see possible, but in some cases are being restricted by legacy bodies,
And what do you think needs to happen for DAOs to go a little bit more mainstream? Is it infrastructure? You kind of talked about tooling really for the members, but spinning up a DAO, what really needs to happen for these DAOs to go more mainstream to everybody that isn't in the crypto bubble?
Yeah, I mean, I think it's a bit of a paradigm shift. People always have been trying to like force on me, oh, you're the CEO, and I'm like, I'm not a CEO. That's not like, to me, how I think of myself, and it's not the role that I want to play, and it's not, to me, a role that's even necessary in the project. But it is kind of this thing that everybody traditionally has thought of, and so I think it's just going to take time for people to think about roles differently. And then, definitely there are some tech stacks that are being developed that are being kind of proven out right now that I think are going to ultimately just make it really easy to onboard community members into a DAO and enable them to participate. And like I mentioned, Marco with Merit Circle, I mean, they have a DAO, and they did their crowdfunding through something called a liquidity bootstrapping pool. And it's like a totally different model for bringing capital into a project. And so, in their case, a lot of their strength, I mean, they have really good, kind of product market fit, and definitely great, early governance, and also transparency. And so, it's just kind of putting all those different things together and making them really tangible, and just providing people with that easy to understand kind of, genesis story and narrative, and then kind of a platform that supports it.
Yeah, and I think DAOs are going to be a major disruption. I think we operate as DAOs in society. Now that just the structure, the infrastructure is now going to be laid out where we can leverage decentralized aspects, and we don't have to tap into some, integration with a centralized aspect. Where do you lie on do you think the full stack can be decentralized? Do you think certain aspects, some are going to be hybrid? You think there's going to be full stack, decentralization where you're not connected to your AWS, or, you have a centralized front end, or your data centralized, which oracles, are tackling that. We have Teller as a sponsor that are tackling that. What's your spectrum of like decentralization? Do you think from top to bottom, A to Z, it could be fully decentralized?
I think ultimately it can, and it will be, and in some cases it's going to be forced to be, because you've got pushback from some of these legacy regulatory bodies, or even just big tech censorship campaigns, and it's forcing people to find ways to operate outside of those ecosystems. But yeah, there's, really interesting platforms that are being developed that enable people just to, contribute their, computing resources, contribute their capital, and contribute, their code, and have ways to, track their work effort and the product of that work. And as all that comes together, I can see it already. I can see how, there's definitely going to be really significant big tech challengers that are going to have no tethers to that traditional world. When we kind of started in 2017, some of this stuff wasn't available, and we kind of established in our white paper that we were going to try to use big tech against itself, and leverage it as much as we could in order to get economies of scale, and build the network out to the point, which is basically the approach that we are taking. We've been using, centralized cloud computing to host things. But then as we develop things like the Node platform, now we can start to, do away with some of that centralized infrastructure, and then just, download that responsibility onto the community. And so, yeah, I can definitely see how it's going to happen. And it's really exciting times. It really, at that point, sky's the limit. And people's creativity is really going to shine through.
And last question on kind of the infrastructure. 2015 or 2017, things aren't ready. Things are more mature, a little bit more developed. Tooling, documentation, right? And people are tackling some of the cloud centralized available resources at the moment. But I think you're developing on Ethereum. Is that correct?
It is, yeah.
How, with the challenges and the barriers? One of the largest ecosystems, right after Bitcoin, and there's a lot of these other layer one chains that are coming out. How confident are you on Ethereum, and how do they meet your needs currently with the capacity, the bandwidth? I know ETH 2.0 is coming out, so what's kind of your holistic view there? Gas fees and all that, how do you guys tackle that, and do you think about other chains?
Yeah, it's definitely a challenge currently, and ultimately we really believe in the Ethereum community. We believe in the leadership and just kind of the overall vision for the platform. And they've done a great job at scaling to the level that they have, and at adding real functionality and actually being usable and used. And that is super important. But yeah, we're running into challenges with gas fees in particular. We've got just all the DeFi platforms that have built on top of it. And when we look at transaction costs, it's totally prohibitive right now. But we're kind of in the to some degree, like the wait and see camp. Yeah, ETH 2.0 really does provide some really I think solid resolutions to some of these issues. And then looking at some of the layer 2 implementations, we've been looking at Polygon and others that enable us to kind of bridge some of the different functionality that we require off of the main chain, and start to get that speed and that low cost transaction benefit that we need in certain circumstances. And so I think that's kind of like our overall approach. We're not looking to, at this point, abandon Ethereum, but there's lots of other really interesting, innovative solutions out there that we want to be able to offer to the community. And I think more than anything, I mean, hey, it's all about decentralization. It kind of kills me, truthfully, when you have these like Bitcoin maximalists or ETH maximalists, and it's like, man, I thought it was about decentralization, right? And now you want one currency to rule them all. To me, it's about having a multi-chain world where you enable all these different blockchains to bring their communities in, bring some of their innovative tech into different projects, and apply it in different ways, and have as many bridges that you can into these different L1 solutions. So yeah, I think moving forward, Ethereum is going to be kind of the backbone, but ultimately we see lots of integrations with lots of other L1 blockchains, and then L2 as a stopgap.
No, perfect. I mean, I think there's a lot of projects right now that are looking, which chains do we develop on, EVM compatibility, right? L2 solutions, it's all coming together. Wait and see campaign as well, where we lie. And at the moment, there are some challenges, but I think, we're surviving, and, the time will, innovation will pick back up here, and it never stops anyway. So, no, I appreciate kind of your thoughts around the technology, right? And you guys are working on this global scale. So that's kind of my curiosity, right? When projects come in that are tackling some major, very inspirational, like, tasks, infrastructure, right? Like, and you answered that. So I appreciate that. And, regarding DAOs, right? The ownership economy, giving value back to the community, the user, which is complete opposite of Web 2.0. They're extracting value. I want to move on to our next topic, and we have about a few minutes here. NFTs, right? The NFT boom. I think the DAO boom is coming, but the NFT, we did have an event with REIMAGINE in spring. Might have been a little premature. Not really, but it's been going on for a while. CryptoKitties for the past, the early days of Ethereum. NFTs is now the creator economy, providing ownership for like IP. I heard this one talk through the conference, IP liquidity. I was like, wow, that's kind of interesting, right? Like extracting, unlocking these values that are stuck everywhere, which is what crypto does anyways. And we talked about adoption. You guys are, your angle's one way, DeFi's, another audience. You're tackling kind of this global scale that we're used to. What's NFT's impact on adoption?
Yeah, I think NFTs are a really interesting technology. I kind of think a lot of the time of digital real estate, and different facets of different online platforms. I mean, it's essentially different real estate components. And so, you've kind of got your initial, digital art type use case. But ultimately it's really kind of title to different assets. And those assets can be virtual digital real estate. And so there's just so many opportunities to integrate NFTs into a platform and provide people with, different tools and the ability to take ownership of different, whether it's real estate or whether it's events, and enabling people to really build their social capital by having some type of marker that they're a participant in a group, or that they were attendees at an event. I think that, there's just so many different applications. We are doing our first NFT. We announced it, was it last week, I guess, or early this week? And it's basically a commemorative NFT for all of our early adopter node operators, people who've been helping us, build out the alpha version of the platform. And those NFTs will be utilized for different opportunities and promotions kind of throughout the life of the project. But it's a really cool way for us to recognize those people and to have them with a provable asset and something that is tied to that early participation within a project. So I think it's really exciting technology, and I think we're just getting started.
Yeah, no, I think it's very interesting with DeFi has a larger TVL, but NFTs hit the mainstream more. And I feel like it's the evolution of one aspect of NFTs is it's the evolution of, we all follow celebrities and athletes on Instagram, on Facebook. You're really into their life. Like it's really that much closer engagement. And I feel like NFT is that next level of engagement where now it's public, it's decentralized, it's true peer-to-peer. And you're actually, as you mentioned, you're giving these out for, different promotions, different, access passes or whatever the case is, certain benefits and features of these NFTs, which is great. And not only that, the evolution of like this reoccurring revenue, right, in perpetuity, right, like for artists and collectibles, that's kind of been popular mainstream. How do you see NFTs as well outside of kind of your CryptoPunks and your Bored Apes? Do you see it, everything being tokenized?
I think ultimately, I think most things of value will be, and I think, it is just, it's a different paradigm for creators and also just, promoters, any type of contributor really. And there are ways to, with, traditional tokens, reward people, but I think there is something to be said for the specificity that NFTs offer, and really the ability to make more kind of micro decisions and not have to like take into account the ramifications across an entire token ecosystem. So if, currently it's like, oh yeah, let's say it's a revenue share. Okay. You're going to have X revenue share from, this transaction, right? And maybe it's something that is, ultimately going to have some different impacts across, thousands or millions of people that are utilizing a token. And so you have to really consider those decisions, and you have to make them with kind of a lot more thought. And in this case, you can come up with things that are maybe just, easier to execute. It can be, hey, here's the title for this. It could be for a period of time. It can just be, things that I think kind of further break large things into kind of smaller components that make them more manageable. And I think, it's just a really interesting technology, and just getting started. I mean, in the grand scheme of things, this is nothing. And I know sometimes we can look at, there's billions, or in some cases up to trillions in market caps, and feel like, oh wow, we're so far down the path. But ultimately, we're in the second inning. We're not in the ninth inning at all. And so many interesting things are yet to be uncovered, and I think there's just so many great use cases.
And you brought up digital real estate. Let's talk about the metaverse a little bit. Facebook's coming out with Meta. more centralized. We'll see how that turns out.
Yeah.
But regarding the metaverse, do you think how do NFTs, the infrastructure, because we're talking about art, but I feel like NFTs really are the economic infrastructure for these digital worlds where now, and we talked about it early on where, your content is stuck. Now you can move it around, right? And NFTs give that power, that incentive for you to find value in an NFT where it's not tangible, but you're like, you know what? I'm in this metaverse, I can buy X, Y, and Z, and then I can go, to another metaverse and take that with me. And now I'm transacting all over the place. What are your thoughts around this metaverse that's been talking about, frequently for a little bit now?
Yeah, I mean, I think it's an interesting subject. It's kind of scary thinking about it in the context of, Mark Zuckerberg and Facebook ruling the metaverse, and just even the thought of, oh, there's one metaverse is kind of contradictory, right? It's about all the different universes that are online that people can participate in, and so there really isn't a single universe or metaverse. It's that collective. And I think ultimately what, this type of technology and blockchain in general, specifically really decentralized blockchain, and this is something that, I think it's going to be just a greater subject over time, is the way that it empowers people to be resistant to arbitrary decisions, so like rolling back a transaction on Ethereum or Bitcoin is like virtually impossible. And that's the real benefit. And so, the block explorers and kind of the open, transparent nature of information is super valuable. But ultimately, it's about kind of that censorship resistance and that just real, I guess, solid ownership of these different assets that then enables you to invest more in things. So, if it's a centralized registry of something where something can arbitrarily be changed on you, then you're only going to invest so much. But if it's something where it's virtually impossible for the wool to be, or the rug to be pulled out from under you, then, it incentivizes you and empowers you to invest more in developing whatever that asset is. And I think that's really kind of the key to, crypto tokens. And I think that really extends over to NFTs. And so just like in, kind of the traditional crypto space, centralized exchanges are one of the choke points, and, centralized marketplaces within NFTs, same thing. So, ultimately, the more that we have decentralized exchanges and decentralized marketplaces, then, we kind of remove those weak links, and we end up with, just this really solid and tangible and provable kind of ownership and transfer of ownership based system that empowers people. It's pretty exciting.
No, that's great. And I had another question, and you pretty much answered it, was in terms of who's going to own the metaverse, right? Is it, corporations? Maybe that's one world. Maybe you can move out of that into a more decentralized world, a hybrid approach. And you kind of touched on that, like, as much decentralized as it can be, you don't have to really worry about those rug pulls and who owns what. You're just confident in the infrastructure, the software, that it is what it is.
Yeah, an interesting analogy to me. I was fortunate to go to Burning Man in 2017, and so I would think of the metaverse as like the Burning Man festival, and you've got all these camps all over the place. And so ultimately, if somebody at a camp is not treating the participants well, man, there's 1,000 other camps or more that are right kind of within range. And so people will migrate from one to the other, and whoever's kind of offering that best, most unique experience and really building those strong relationships ends up with kind of the neatest community. And I think it's something very similar. And I also think it's similar in the fact that, there's just so many different opportunities, and there are so many different potential camps and communities to be built within the greater metaverse. So yeah, really exciting to think about what's going to come over the next few years.
Yeah, no, I think it's kind of scary at the same time, but you're totally right. I guess we'll see what happens. It's going to be interesting. So I think we've kind of gone over time here. It's been a great discussion, Colin. Where can people learn more about Presearch?
Awesome. Yeah. So anybody who's interested can go to presearch.org and run searches. If you want to find information on the project, it's presearch.io. And then our Telegram community is t.me/presearch. And then I personally am on Twitter, twitter.com/ColinPape.
Fantastic. So I want to thank you for joining. Thank you for taking time out of your day. I know you've been, previously you were on Reimagine. Now you're a returning guest, so we appreciate that. And I know our audience does. We've talked about NFTs, DAOs, Presearch, Web 2.0, Web 3.0, and just kind of the evolution and what the future looks like leading up to the metaverse. So we hope to have you back, Colin. This is Colin Pape, founder at Presearch. We'll extend another invite and we look to circle back soon.
Awesome. Thanks a lot, Adam.
All right, everybody. Thank you for tuning in to Reimagine. I'm your host, Adam. Had a great discussion with Colin here, founder at Presearch. And hopefully you're enjoying the conference. Thank you.
You're tuned in to Reimagine 2021. Yes, it is I, your friendly mutant, non-fungible, totally not boring, totally not 453, but rather 452 ape. As you know, I was born of a yacht club, and it's definitely easy to get carried away with exaggerating just how glamorous it is to go on weekend sails to exotic tropical islands and all of that. But trust me, it's not all it's made out to be. Sometimes you even have to cook for yourself in the salty air. The point I'm getting at is that we often glamorize that which is new and foreign to us, as long as it seems to be a solution to all of your problems. And this is true with the concept of decentralization. Although decentralization is helping the humans reinvent many of their outdated ways of living, it definitely comes with its drawbacks. Up next, we'll turn to see just what some of the common misconceptions of decentralization are, what it can do, what it can't do, but don't take it from me. I can do whatever I want. I'm a trust fund, baby, remember?
My friends, I am glad that you can join us in the decentralized financial revolution. The only way forward is if we continue to educate ourselves and those around us, and that is certainly what we intend to do. The value of $1 can diminish with the click of a federal button, but the seeds of wisdom may never die. Don't let them catch you. Be bold and dare to reimagine your freedom.
Hello, everyone, and welcome to Reimagine, the virtual blockchain conference. We're coming at you with our 11th event with some really exciting content. We're on the road, we're on tour, we are getting some high quality interviews with people both in person and virtually, like today, reporting back on what's going on in San Francisco, New York, El Salvador, all the biggest developments in NFTs and DAOs. I'm your co-host, Ashley Meredith, and today I'm pleased to introduce you to Matthew Niemerg, president of the AlphaZero Foundation. Hello, Matthew, how are you doing today?
I'm doing well, thanks, Ashley.
Yeah, thanks for being here. For anyone just tuning in, Matthew is a return guest. He was just on for our last event. So if you're curious, head on over to our YouTube channel, smash that subscribe button, check out Matthew's other interview. We're going to get some updates from him about AlphaZero, LF0 since the last time we spoke. Get to know him a little better and talk about the exciting world of what's going on in El Salvador, what's going on in DAOs, and what's going on in NFTs. So Matthew, can you give our viewers an update on what's going on with AlphaZero since we last heard from you?
Yeah, sure, absolutely. So we just finished up our public sale, and we are in the process of launching the mainnet here on November 10th. So this is coming up here. I mean, today we're recording on, maybe I shouldn't say this, but we're recording on November 8th on Monday, and we are looking at around going to be launching our mainnet in 2 days' time.
Yeah, so when you all are tuning in, it should be live.
Yeah, that's my understanding. So we're really excited. This has been a long road, but essentially what we've been doing is having our testnet has been up and running for quite some time. I think we hit over 4 million blocks on the testnet. And essentially the same code base that's been used on the testnet is going to be migrated to our mainnet, and we'll have a Genesis event with everybody who's participated in the sale. We'll have their Genesis accounts, and we'll be able to access their coins. And even now you can still have the opportunity to test things out on the testnet, see how the network operates. Excellent.
So for anyone who didn't catch your first interview, can you give a brief explanation of what AlphaZero is doing?
Sure. So what we're really working on is a new layer 1 protocol. What we did was essentially work on a consensus solution back in early 2018, and then that culminated in a peer-reviewed paper in 2019 at a conference that the ACM put together in Zurich. So this was at Advances in Financial Technology. So it's a sort of this new emerging tier 1 computer science conference. And what we did was go ahead and do various implementations of the protocol during sort of from late 2019 to 2020. Started looking at different technology stacks as to the blockchain framework that we could potentially use for the smart contract system. Ended up looking a little bit more deeper into Substrate and what the Web3 Foundation was supporting as far as using Substrate as a sort of a blockchain tooling system. And from there, went ahead and added in our consensus protocol into a generic Substrate blockchain node, and from there have been sort of running our DevNet and our testnet in this framework. So the idea of what we're really sort of doing is really focusing on foundational principles of math, computer science, building everything up from there. This is sort of the evidence from the consensus protocol. And then from there, we've been working on things like zero knowledge proofs, multi-party computation, really trying to hit on the various aspects of privacy whenever it comes to public blockchains and how you can achieve private states on or private data on public blockchains, which is, at least in our opinion, quite beneficial from a enterprise perspective and adoption.
Absolutely. So a new layer one protocol, meaning, you know, the same, it's a new token, a new blockchain, similar to Bitcoin or Ethereum. What are some of the benefits of your consensus mechanism?
So our solution is, I think probably for at least for me, I think what's the coolest aspect is the fact that it's fully leaderless, meaning that whenever you are operating or you have a group of people who are running this consensus committee, that at any point in time, nobody is in charge. And so then because nobody's in charge, we don't necessarily have some centralized points of failures with various bottlenecks and whenever it comes to operating the protocol. And so I think from that perspective, I think from a meta view, this is just really cool to be able to say that you have no leaders and that you have a solution that is doesn't necessarily have any centralized choke points.
Absolutely. Well, so anyone who's interested in seeing how this works, mainnet will be live by the time you're watching this, so super exciting. And it really sounds like you are focusing on, like you said, first principles. You're a PhD in mathematics, so you know, starting with the basics of like how these consensus mechanisms work, algorithms, all of that. As you may know, Mousebelt has a university program where we invite students to come learn about blockchain, have a couple online courses. For any students out there watching, definitely head over to mousebelt.university, sign up for some of our courses, get funding for your events. So in building that program and speaking to people in the space who come from all sorts of different backgrounds, I always like to ask people, you know, what would you say to maybe a mathematics student watching this, or maybe any student who's thinking about pursuing a career in blockchain?
So that's a phenomenal question. I would say that there is so many opportunities in this space that it doesn't matter your discipline or your area of study, or even if you're doing something in a formal education setting. So there's just so much. There's just such a need for talent in this space, whether that talent is coming from you know, people with a 4-year bachelor's program, or people coming from a, you know, just have finished high school, or are maybe a little disenfranchised with the education system, but are still competent and have various you know, skill sets at their disposal. I don't think that we really have a real need to pigeonhole you know, people that we want to bring to the space. And I think there's just so much, you know, so many options out here for people. So you could be doing things in content production, you know, as far as, you know, writing blog posts or Medium articles about how to use these different technology stacks, how to make this accessible to the layperson, people without, you know, the background that I have, for instance. How do you know, make it so that it's you know, understandable and maybe a little bit more tangible in the sense of what can you actually use these technologies for? Is you know, what are the business applications? How can you actually drive industry interest and adoption this way? What are you know, sort of and there's just such a, you know, a wide, you know, just such a wide range of you know, what people can do, that it's just really hard to say. So but I think that there's just, you know, so many, you know, projects out here that are looking for new talent. There are you know, of course, new projects that have yet to be built. So we're always looking for people, you know, generally in the space, for people who want to innovate and create, you know, be entrepreneurs. So yeah, I mean, just take a look and see what drives you, what's your passion, and then, you know, I'm sure that there's something out there for you.
Yeah, that is what is so exciting about the space, is that if you have a talent, you can kind of pursue that and add blockchain to it, because there's just so much need for talent in the space. Moving on to some of the themes of the conference, you know, we're kind of seeing this digital takeover, or, you know, this just amplification of decentralization, kind of this unstoppable wave of people really accepting that the future of finance, art, culture, and collaboration is digital. You know, we've got El Salvador now accepting Bitcoin, corporations converting themselves into DAOs, and as we were all just in NYC NFT, the NFT boom seems to show no signs of slowing down. So I want to get some of your thoughts on these topics. In September, El Salvador made Bitcoin legal tender. What do you think about this decision?
I think as a means of getting away from the dollar monopolization that exists in the world whenever it comes to the World Bank and borrowing money from these sort of larger institutions, that it's a very good move. However, there were a couple of issues, at least from my understanding, and I think you guys have had, like you say, you have some boots on the ground in El Salvador, and correct me if I'm wrong here, but there were a few things I thought in the bill, at least whenever I was reading it, that were somewhat troublesome. One was the requirement that you had to accept Bitcoin as a payment option. And while it's great to be able to make Bitcoin a legal tender option, I don't think that requiring it was the correct choice, or at least under how that language was provided. And just because from a technology perspective, it becomes difficult for small business owners or vendors that might just be selling wares on the street to be able to provide support for the acceptance of Bitcoin. Not saying that they shouldn't be able to find that kind of support, but requiring that could lead to just general problems. And is that am I correct in my understanding of the new law that was passed, that it was actually became a requirement that they had to accept it?
Yes. So the government in El Salvador made it requirement that businesses accept Bitcoin. Do you think that's a good or a bad thing?
Yeah, I think that mandating it as a requirement is the incorrect choice, and that just allowing for it to be used and supporting it is probably more broadly from a voluntary action perspective the better way to go about it. And yeah, I think it's just also just more of a divide from the perspective of who has the ability of accepting payments this way, right? Not saying that like if you're talking about a developing nation, it may not be the case that people have access to different like the Lightning Network or things like this. So it's not that these tools don't exist. It's not that people can't learn, but most people are just trying to live their lives day to day. They're working on their business. They don't have the capacity to go out and learn a completely new technology stack in order to comply with the new mandates.
Yeah, I believe there is like a lot of effort on the part of the government to provide like applications and readers and phones and wallets that will work simply. But at the end of the day, polls have been saying that up to 70% of El Salvadorians are against the idea. So.
But I mean, as far as a nation state wanting to hold Bitcoin in its treasury, right? I think it's brilliant. I think that it sort of shows the sort of progressive thought actions with respect to how the European Central Bank or the Federal Reserve are just inflating the monetary supply. And if you're a developing nation that's sort of dependent on these either the IMF or the World Bank for loans in order to continue to develop your economy, then you're taking out a loan in an asset that is depreciating in value. And instead, if you're able to put that value into something else instead, that potentially is at least a store of value, or at least isn't going to decrease in value based off of inflation, that's brilliant. And definitely, I wish more countries would be doing this.
Absolutely. So in lieu of requiring businesses to accept Bitcoin, what are ways that you think governments could incentivize people to, if that's the goal of their country, is to really put a big push behind crypto adoption or Bitcoin adoption specifically, how would you incentivize rather than mandate?
Yeah, that's a good point. Because as we know, being in crypto, it's all about the incentivizations, right? So I think maybe, one would be paying taxes in Bitcoin. If we just think of, from a high level perspective, what's the end goal of using any particular fiat system whenever it comes to a nation state sort of saying this has value? It almost always is derived from the fact that they're using that same fiat currency as a means of payment for taxation. So as soon as you start decoupling that payment from the fiat currency from the payment of taxation, now you have a little bit more options and opportunity to sort of not be as dependent on that fiat currency. So I think that obviously that's a simple solution, just being able to pay taxes in say Bitcoin or Ethereum or what have you. The other thing is trying to have a better understanding of consumer economics and incentivizing people to be savers as opposed to spenders. How do you drive incentives in that way? Well, maybe you say that if you can prove on-chain activity that you weren't spending your Bitcoin for whatever reason, right? So you're able to show that this Bitcoin didn't move for 1,000 blocks or for 20,000 blocks, whatever it happens to be. It's just an arbitrary number. Maybe there's a tax break you could get. You can get a credit this way, or maybe there are loan programs for small businesses that you can do in crypto, or maybe you want to provide some other incentives for software developers or for crypto businesses to set up shop in your country. So, I mean, I think that there's all sorts of tools that governments have at their disposal for incentivizing citizens. And normally this comes down from tax policy. I mean, this is, if you look at in the States, for instance, most of the tax policy is based off of incentivizing certain types of behavior and disincentivizing other types of behavior. So I think that you have a lot of leeway to encourage businesses to create your blockchain tools, to accept crypto, to further the adoption. And almost always this comes from either grant programs or from tax incentivization schemes.
Yeah, I love the idea about incentivizing saving. Speaking of incentives and encouraging collaboration or certain behaviors or participation, one thing that has been gaining momentum as far as the conversations that we're hearing and the projects that are being launched are DAOs, or decentralized autonomous organizations. Are you particularly interested in DAOs? What interests you about them, or are there any projects that you think are effectively coordinating this way?
So I think DAOs are pretty cool. I think that the issue is more about the nebulous legal aspects surrounding DAOs, not whether or not they are just interesting from a community perspective and from sort of a way of bringing people from all over the world with collective interests together. That's fine. I think the problem then becomes, what is this thing legally? What is a DAO legally? And this is where I think a lot of the various nation states and governments are trying to wrap their heads around, because as soon as you have a DAO that's starting to generate profits or generate revenue, well, how do they they just want that tax money, right? They want to get a hold of it as much as possible and get it as soon as possible. So then the question is, under what legal framework can they try to access and obtain some of these funds? And that's where I think we're going to see, as a community and as an industry, have some problems. Just because the current legal framework of these are just not well understood. I mean, essentially they are unincorporated general partnerships, right? So you now have an unincorporated entity with people who participating in them, but without any liability or limited liability for the participants. So probably the best thing to do as an individual is to have your own limited liability company or some type of some type of company that limits your liability, and then from there only interact with the DAO. Right. I mean, this way you as a personal individual, as a natural person, don't necessarily have, maybe there's a hack for a particular DAO. Well, if you're a DAO member, are you legally liable for that hack and for those loss of funds? I mean, where does this, where does the line come to as far as that's concerned? So I think a lot of people just are thinking that this is a new thing. It's obviously a new paradigm. It's a new way of how to operate and to bring people together and potentially do business. But we do have an established legal framework for general partnerships or unincorporated entities and people like coming together in some type of common enterprise to generate profit. The other thing is maybe they're more akin to, say, a type of co-op, right? So you could say that these are, they're more membership co-ops. You use maybe a decentralized identity to prove your natural personhood, and then you could just join the co-op as or this DAO. And there are separate legal frameworks for co-ops that have a different setup than strictly say a partnership or a C corporation or an S corporation. So I think that there are some tools available to us inside of the current existing legal framework, but that we're really lacking the understanding of what the default is if we are starting to understand and to interact with these DAOs, right? And I think that's the problem that we have as a community and as an industry.
Yeah, absolutely. So I think you covered kind of, some of the benefits and the drawbacks of DAOs. Any projects that you think are particularly interesting?
I wish I had the time to look into what was going on directly in the DAO space. I think that, probably more along the line, I've seen some stuff on some of these NFT DAOs where there's some either collective ownership or collective purchasing or decision making done by the DAOs. I think that there's some interesting stuff even whenever it comes to governance tokens, whenever with respect to treasury funds, particularly if you think of it as more along the lines of a public good, where you have treasury funds that are able to sort of do grant making opportunities to individuals or to teams, then and if the community is the one who's voting on this, I think that's a really interesting prospect as a broad view. There's what Kongland is a DAO. I have some friends who are very heavy into that. I think that they're going to be really fascinating. I think there's going to be a lot more interest in them, but I think that the legal framework is really murky. And obviously we are in the wild west of crypto, and often people tend to ignore the legalities in the space for some time. And we're starting to see, I guess, a little bit of the blowback with the infrastructure bill, and at least in the States, with not engaging in industry, or at least engaging with Washington, for instance. And it's causing it could cause some problems. And so I think without having a good, I don't want to say we need lobbyists, but in some sense we need lobbyists to push for appropriate laws that will protect us. And we are at a point in this industry where, it's a $300 trillion market cap now. Or it's insane, right? I maybe that's not even the right number. I should probably look at the right number. I'm pulling something out of my hat, but we do have the clout now to be able to really push for policy that benefits us, as opposed to just letting the letting the lawmakers and the regulators decide for us. And I think that this is part of the growing up phase, and sort of I think it's just part of growing up in the space. We're seeing a lot more maturity. We're seeing a lot more interest with working with regulators. And while we can say that we don't care for regulators all we want in the space, that doesn't mean that they don't care about what we're doing, right? And at the end of the day, if they're able to legislate or do various things that can limit our ability of acting and creating innovations and pushing things forward, then we're essentially, I don't know. It's one of those things where we're essentially just cutting off our own foot, right? Like we're not really trying to, work with the rest of society. We're just saying that, oh, well, let's just go off and create our own society. Everybody else who doesn't get it, they can join us or not. But that's just not the way the world works. That's not the way that, disruptive technologies operate. I mean, at some point you need to integrate with the rest of, the world and the human population. And if we're not doing that in an appropriate way with, reasoned, logical debate or discussion regarding what these policy frameworks should look like and what they should be, then we're missing out on a lot.
Absolutely. So calling for more collaboration, right, with legislatures, and I think it really boils down to education too. We've been saying at Mouse Belt for years, and with our university program, that education is kind of the foundation of the growth that's going to happen in this industry. You can't have these innovative technologies being built unless people know how to build them. Developer education, education for mass adoption for the users, and then also for the people legislating on this. So speaking of like DAOs and some of these NFT collections that are launching as DAOs, we were all just in New York City for the NFT NYC event, got to meet a lot of NFT artists, see some of the work that they are selling. I think around that time, an NFT sold for $500 million. So it's been a kind of crazy boom. Interested to hear your thoughts. Why, or do you think that NFTs matter?
Yeah, I think that there's a couple of ways to think about NFTs. One is, I mean, obviously we have digital art and we have sort of this provenance of ownership of the digital art. And in a lot of ways, NFTs is more about owning a piece of history, right? Of internet history. And it's not necessarily the case that, well, I don't necessarily get all the rights associated to, or either the copyrights or the rights to reprint or anything with these NFTs. What am I purchasing? I'm purchasing the provenance, right? The showing that, hey, I was a part of this history. I was a part of these communities, and that's it. Now, is that a good or a bad thing? I mean, I think that there's other use cases for NFTs beyond just strictly digital art. I think if it's more about being a part of the community and sort of showcasing, not necessarily ownership of a community, but early involvement with the community. And with the blockchain, you have the ability of seeing that provenance of when did you become a part of this community? When did you join? That's all time stamped on the blockchain. As far as other applications, I think we're going to see things like VIP access to particular events. We started seeing this in New York City. There were some events that you had to have the ownership of, like the Bored Ape Yacht Club, right? For instance, to go to some after parties or events or what have you. And so I think that we're going to see that, but that's also going to occur also in a digital framework, in a digital format. So if you have, say, a music artist that you're a big fan of and they're putting on a concert, maybe they have a particular live stream where you get to see what's going on behind the scenes in the VIP backstage. or you get a, while they're doing, before they do their encore, and they go back and they come and talk to the fans and such. So I think there's an opportunity for quite a bit beyond just digital art. It's more about access, improving ownership of, by having this item, you prove that you're supposed to be able to access particular things, whether or not it's fan-based materials for a community, whether or not it's like a key card for a location in a business. It really doesn't matter. And then the other bits are, how do you take NFTs and then maybe there's NFTs that are assigned to a decentralized identity, in the sense that you have like educational or like some type of certificate for trading, right? So you went through some coursework, you passed this class, and now you have this NFT. Well, that NFT is great. It's providing that provenance that you did the course, but you need to attach it to something. Well, you need to attach it to probably a decentralized identity. And now that decentralized identity could potentially be free floating. It's sort of attached to a natural person, which means that this NFT is attached to that natural person via the NFT, via the decentralized identity. And now you can go ahead and move it across multiple chains and so on and so forth. So I think that there's ways of moving beyond just digital art, community access, or what have you, to things where it's a little bit more tangible with respect to education, with respect to on-chain activity that you may have proven that you did. So maybe you're, maybe you're running a validator node for several different networks, and you want to be able to prove that you have high maintenance, uptimes, and that you're able to continue to upgrade the network whenever there's forks or whenever there's a network upgrade or what have you. And whenever this happens, now you can maybe get an NFT badge to kind of help, booster your reputation, so to speak. And then you attach that to a decentralized identity. Now you have a validator that you're trying to run on multiple networks, and well, now people can trust that this validator is associated with this group of people, this validator group, and that they have a track record of being online for quite some time, right? So I mean, there's all sorts of different mini applications like this that could be, at some point implemented or used later on. So yeah, I mean, in a lot of sense, NFTs are very similar to just a private key in sort of this public key infrastructure. So if an NFT is unique and it's not like, say, a artwork or what have you of 10,000 different pictures of a project, I mean, it's still a single product itself that has a unique identifier. And in a lot of sense, a private key is just a unique identifier associated to a public account. But now what we've done with NFTs is abstracted this away a bit, where that NFT is no longer directly associated to a single account. It is essentially separate and movable across accounts. And the question then becomes, well, what are the use cases? And I think that you could have, say, for instance, a company that has various secured locations on its campus for work. Maybe it's at a national lab, or maybe it's at a like IBM or Microsoft or any of these other companies, where there are certain access points where you're not allowed in if you don't, if you don't have access, right? And obviously people change and move jobs within these companies quite often, right? So you're going to have people that will go from one area that they're working on, and maybe say machine learning, they start going into doing, say, quantum computing as an example. Say they're at IBM and there's like a secure lab that nobody else has access to. Well, that secure lab, that access point could essentially be programmed as an NFT. And so that whenever somebody is moving jobs within the company and somebody else is taking over for you, you just send the NFT to somebody else, and then now they have access. you haven't really changed anything regarding the NFT itself, but the NFT is what's proving that you have the ability to gain access to a secure location, but you haven't necessarily changed you haven't done a lot of extra logic. So you sort of have decoupled the access rights with and assigning it to a particular individual, where an individual has their card, and instead you're saying that these access rights are embedded inside of an NFT, and now this NFT is movable between different persons.
Absolutely. Yeah, I think that what I've always thought is a good use case for NFTs is on top of these digital art pieces, you have to add some sort of experience or access, right? It's not gonna last very long for people to care about a JPEG on the blockchain. But when you start incorporating these things like access and experiences, it gets really exciting, and that's definitely what we saw at NFT NYC. Well, thank you so much, Matthew, for sharing all your thoughts with us and updates about Aleph Zero. And for anyone just tuning in, we've been speaking with Matthew Niemerg. He's the president of Aleph Zero. By the time you're watching this, their mainnet is launched, so go check them out. Head over to our YouTube channel and see his other interviews. Smash that subscribe button, and thank you for tuning in. Stay around for more.
Mutant Ape 452 here. You know, if there's one thing I know as an ape, it's that human beings can go a little bananas when they try to get organized into well-functioning communities without the right kind of leadership. It's just a fact of nature of the hairless degenerates that somehow, some way, the alpha gorilla, the CEOs, the presidents, the de facto leaders, more than often end up with too much power, and their centralized control becomes a single point of weakness. In that case, all that it takes to bring down the house of cards is for a single actor to slip on a peel. But one of the interesting developments in the world of crypto and Web3 is the emergence of what is called a DAO, a decentralized autonomous organization, where no single actor is in charge and no single point of failure puts the livelihood of an operation in jeopardy. With the evolution of business reaching its modern apex at the birth of the DAO, it's now possible for entire communities to govern a company, a project, or the development of software, amongst other things. Stay tuned to find out more about this revolution in decentralizing technology. Ape into decentralization, folks, and opt out of the old school.
Le comento, en este día hemos recibido bastantes personas en este punto Chivo Wallet. Las personas han estado interesadas en lo que es en la compra de Bitcoin, el cómo uso de la aplicación, en el registro, en los mitos que tenían sobre el Bitcoin. Aquí en este punto Chivo lo que hemos visto, que hemos aclarado las dudas, hemos tenido exitosamente el registro de la persona y hemos guiado a las personas en el registro y el cómo uso del cajero y de las aplicaciones. Sí, la gente se ha aceptado bastante al uso de la aplicación, ha entendido, ¿verdad?, que los falsos mitos eran falsos y que la aplicación trae beneficios en el cual no se le cobra comisión y la persona al registrarse exitosamente tiene $30 para consumo.
Hello, everyone, and welcome to Reimagine, the virtual blockchain conference, coming at you with our 11th event with some really exciting content. We're on the road, we're on tour, we are getting back in person with some high quality interviews with people, both in person, but also virtually like today, reporting back on what's going on in San Francisco, New York, El Salvador, as well as some of the biggest developments in NFTs and DAOs. I'm your co-host, Ashley Meredith, and today I'm pleased to introduce our third time returning guest, Paul Pui, the CEO and co-founder of The Edge. How are you doing today, Paul?
Doing great. Thanks so much for having me. Look forward to this chat. Glad we're back on for the third time in a row. Lots of exciting stuff to talk about. The whole industry, just as people have said, you know, crypto's like dog years. Just a few months, it feels like we've advanced a few years already as far as changes and trends and new advances in the cryptocurrency space. So I think lots to talk about.
Absolutely. And for anyone who is just tuning in, be sure to check out Paul's other interviews on our YouTube channel. Head on over to YouTube, Reimagine 2021, smash that subscribe button, and check out all the great content we have there. So this event, we're kind of doing a mix and match themes of different things that are going on in crypto right now, but it just seems like this digital takeover is happening. Crypto unchained, like we've got Bitcoin being legal tender in El Salvador. Corporations are converting into decentralized autonomous organizations, and the NFT craze shows no signs of slowing down. Had an NFT sell for $500 million today. I think that people are accepting that the future of finance, art, culture, collaboration is going to be digital. So really excited to talk about all of those developments. But before we dive into all of that, just want to give our viewers a chance to get to know you a little better if they haven't seen any of the other interviews, but you can always go back and dive in there, and a quick update on how Edge is doing and what we can expect in the next quarter or for 2022 from Edge.
Got it. So my name is Paul Pui. I'm CEO and co-founder of Edge. Our company's been around for about 8 years, although originally called Airbits with a focus on payments with Bitcoin. Originally had a merchant directory and a wallet with Bluetooth and NFC payments, as well as good old-fashioned scanning of QR codes, although we pivoted in 2018 and rebranded and rebuilt our entire technology around Edge, and Edge being now a self-custody exchange. You could say that people have heard the terminology like Bitcoin maximalist and whatnot. I'm definitely not a Bitcoin maximalist or a maximalist of almost anything, although I would say I'm probably a self-custody maximalist. I really want people to be able to hold their own funds, control their own privacy, control their destiny. Really, that was what Bitcoin was built for. That's what cryptocurrencies expand on. But unless we do that, we've really lost all of the core benefit of this revolutionary technology, and it wouldn't be interesting in the grand scheme of what this can truly enable. So Edge right now is self-custody exchange. People can buy, sell, and trade various digital currencies, all while still holding and controlling their own funds, whether you're onboarding from fiat or exchanging crypto to crypto. With respect to what's exciting, what we're doing at Edge, and what you can expect in the near future. Edge, first of all, what notably differentiates us from many other apps is the self-custody is incredibly easy. You never see 12 or 24 words that you have to write down and put it somewhere safe, but make sure no one sees it. You just create an account and log in. Lose your phone, download Edge on a new one, log in. 2 factors, click of a button, you're already done with 2 factors, automatically protected, and even has password recovery capability, which is non-existent. If you lose your key, you just simply lose it. Edge, much more user-friendly. We factor the human into the security model. Upcoming stuff for 2022, DeFi. I'm really excited about DeFi, and you're going to see much more tight integration of DeFi protocols across multiple different chains directly inside Edge, which will drastically help with the usability of DeFi. Right now, DeFi has been what I call kind of at the proof of concept early stage. Make sure people actually demand some of these financial services that are getting built. Clearly, people do demand it. They really want to use these services, and a lot of them replace CeFi. They replace these centralized services that fully control your money. And with that, though, we simply need to make the interface very similar to CeFi, and that's what I'm excited to really start building out and launching into the public, which I think will be the next big step in true adoption of these DeFi protocols outside of just the tinkerers and hobbyists that currently utilize these services. So excited about that. That's what I'm hoping people will give us some great feedback on once we launch.
Absolutely. And with all of this technology, right, it kind of starts with the tinkerers and developers, and the easier we make these tools to use, the more adoption there will be. So I want to go back for a second, just for people who might be tuning in for the first time. I think a lot of people are coming into the space with this NFT stuff, maybe watching some videos like this for the first time. I know that I have family members who are finally asking me about this stuff, and downloaded a wallet, wrote down their seed phrase, or took a screenshot of it and saved it in their phone. And I was like, no, don't do that.
Nope.
So can you explain for anyone just tuning in why self-custody is so important, what that actually means, and how it kind of usually works, and why Edge is such a probably maybe in your mind a better way to do it?
Yeah, so self-custody means that you, yourself, your individual person or company, whatever entity, holds their own assets. And from the viewpoint of history and assets and money, really, you as an individual person, ask yourself if you've ever actually held your own digital form of asset. You may have held your own bars of gold, you may have held your own coins, your own cash, but you've never actually held digital value yourself, right? If it was digital, such as a digital dollar in a bank account, your bank accounts are digital, right? Cryptocurrencies aren't unique because they're digital. Don't call them digital currencies because all currencies are digital already. But what's unique about cryptocurrency, and this is the first time we've ever done this, it's the first time that people can actually hold digital value themselves. No counterparty, no bank, no Visa, no MasterCard, no PayPal, no Venmo. You yourself on your own device can hold money. And you do that by holding a string of random letters and numbers, which are called a private key. But that's a little scary to many people. This is a string of data. Whenever in the history of your life, if you held a string of data that if you lost, you would lose money, or a string of data that if someone else saw, they could take your money. This is the first time ever. So that is a challenging thing, and it alienates a lot of people. So hence they just leave it with a bank. However, you ask like, well, why is it important to self-custody? Unless you self-custody, you lose all the benefits that cryptocurrency and Bitcoin were built for. Number one, being able to transact with anyone in the world. All they need is an internet connection and an internet connected device. As soon as you put funds in a bank, whether it be a dollar bank, Chase, JP Morgan, Wells Fargo, or a crypto bank, Kraken, Coinbase, Gemini, you put it with them, they will not allow you to transact anywhere in the world. They will put restrictions, they will censor transactions, whether they be outgoing or incoming. That is the core benefit. That's easily the single most important benefit of cryptocurrency. That's what got people excited about it. And if everything goes the path of non-self-custody, of custodial ownership, then we lose that. So that's a very core important part of it. And there's a few other nuanced reasons, like such as the utility of cryptocurrency. People can't reliably send their funds and interact with DeFi protocols from centralized custodians, primarily because of regulation. A rule is coming down, a global rule, it's called the fat of travel rule, which is applied to banks today, is going to get applied to crypto banks, right? Custodians, whether they be exchanges or custodial wallets, which says that in order to transact and send your money to another party, you have to KYC, which is know your customer, and have the personal information of the sender sent to the recipient, and you have to know the information of the recipient. Crypto turns that upside down. You can send money to a string of random letters and numbers. So how do you actually KYC that? You can only do it when a custodian sends to another custodian, which limits so much of your transactional capability. How do you interact with a DeFi contract, which has no custodian? There's no KYC, there's no personal information with a DeFi contract. So utility is probably the second piece, is being able to actually use your cryptocurrency reliably is a piece that really dies with custodian. So that's a nugget. It's an entire presentation. We could take up 30, 40 minutes on the value of self-custody, but that's a nugget that I think people should understand and realize and try to uphold. Now, what we do in Edge to make that easier, and because what it looks like right now is challenging, writing down about 12 to 24 random words is what it looks like for by and large 90 plus 99% of the different self-custody apps, whether it be hardware, software, a piece of paper, USB stick, you name it. And many people are really challenged by the two sides of the brain. One side says, keep this thing in mind, but at the other side, somehow prevent someone else from seeing it, right? That's what you're asked to do. And those really challenge both halves of your brain. Have you ever heard the term out of sight, out of mind?
Oh yeah.
Right. And so if it's out of sight, it's going to be out of mind. You really can't do the two. It's very hard. A cryptocurrency private key, you need to keep out of sight. You can't let anybody else see it. Someone else sees it, your money's gone. But you have to keep it in mind, because if you lose it, then very likely you lose your money. That is your backup. right? And so you need to have your backup in a reliable place because you will need to access it. So that's where a lot of money has been lost in self-custody. Someone else sees the key, or simply you lose the key. So with Edge, you don't have to write that down. We make something that's more familiar. People are used to creating accounts on websites and logging in. That's what you do in Edge. Simply create an account, normal login credentials, username, password, PIN, biometric, and log in. You lose your phone, you log in on another device. You can even set up password recovery if you forget your password, which is something that people frequently do. And you're protected with two-factor, something you can't do with a key. If someone sees your key, you can't just suddenly have two-factor on it and prevent them from taking your money. If you were to take a screenshot of your password, you said, oh gosh, that's probably not a good idea with the private key. But if you took a screenshot of your password and somehow that got put as a backup on a server and someone else found it, you're actually still protected because you have two-factor enabled automatically, or a form of it. We call it IP validation. So all of these come together, the password recoverability, the two-factor capability, and not having to deal with this really scary 12 to 24 words comes together to really provide a self-custody solution that feels very natural to the average user that has used just at least a mobile device before and has created a cloud-based account. All while you control your funds, you control your privacy. No one at Edge knows how much money you're holding in your account, cannot transact and move your money, doesn't even know your public keys. Clearly not your private keys, otherwise we'd be custodian. We don't see private keys, but we don't even see the public addresses and public keys. We believe very strongly in privacy, and we want to give that to people, even though it feels like a traditional financial app bank.
Absolutely. Well, love what you guys are doing. I think it goes beyond the whole, what I generally kind of explain to people is with this greater freedom to transact comes a greater responsibility to, and it's a new thing. Like if it's this important and it's this different of a way of doing things, but it's important enough to do it, even though it's difficult, but we can go a step forward from that, right? And say, no, people can be responsible, but we don't have to make it that hard for them. So love that. We'll have to check out that product and recommend it to all the newbie friends who are coming into the space, finally asking me for crypto advice. So the other thing that you brought up was things to look forward to from Edge, and it kind of goes in line with the trends in crypto these days, DeFi. Anything specific that you have tested out already, or that's already live, or what can users expect as far as DeFi offerings from Edge?
From Edge, we do have decentralized exchange capability, although one of the partners that we had integrated in Edge recently had to shut down. They were a DeFi aggregator, but we are integrating, or a DEX aggregator. They aggregate decentralized exchanges on the Ethereum protocol. So we are integrating those protocols directly into Edge. So people will be able to access Ethereum and the various tokens on Ethereum directly and with no counterparty. Once again, censorship resistant anywhere in the world. You don't have to provide personal information. They'll be able to do that pretty soon in Edge. But then more so what I'm really excited about is also the ability to transact across chain using DeFi, using decentralized exchanges. You can go from Bitcoin to Ethereum, Bitcoin to Ethereum tokens to Dogecoin, Litecoin, and whatnot, using the wave of new decentralized exchanges that are cross-chain. This is a fairly new development in the cryptocurrency industry. Before, DEXs were only on a single chain. But with the advent of such projects such as Chainflip and Thorchain, we now can do cross-chain exchanges as well. I'm very excited about that. And that'll be coming to Edge in the near future. So that, and then as well, as I'd mentioned, I'm excited about the more tighter integration of things like borrowing. So borrowing is a really hot product in the just financial services space. No, it's not just DeFi, it's not just crypto, it's in just a financial service. How many people just need to borrow money? And one of the unique things about crypto is crypto as an asset is a great asset to collateralize a loan. A lot of people don't realize that when you collateralize a loan with crypto, it's not very different from collateralizing a home loan with a house, right? Your house is collateral and you're taking out a loan that's some subset of the value of your house, typically like 80%, right? If your house is worth $1 million, you're taking out, say, an $800,000 loan, but the house is the collateral. But guess how long it takes to fill out the paperwork for that loan? Any one of your listeners and watchers of this video have ever purchased a home and taken a loan out for it? It's hours and hours and hours and signatures on documents about an inch thick, maybe half an inch, I'm exaggerating, but maybe like half an inch thick. DeFi allows you to collateralize a loan, not with a house, but with cryptocurrency, and not provide any information. There's no signatures other than digital signatures, which your wallet does for you. So allowing people to borrow from DeFi protocols such as Aave, Sovereign on Bitcoin are really key products that clearly there's big demand, and it replaces a lot of CeFi companies that exist in our world, not traditional banks, but a lot of Bitcoin crypto companies that launched and did very well. It replaces them almost completely with better terms, less application, more global accessibility. We just need to tie it all together and give a much smoother user interface, as I mentioned earlier in the interview. And that's one of the big initiatives that we're building over the next couple of quarters.
Well, that's super exciting. We'll be keeping our eyes peeled for all of those updates. So moving on to some of the big developments that have been happening. Our last event was around August. Since that time, El Salvador made Bitcoin legal tender. What do you think about that decision?
Just like you'll probably hear a lot in the news, I have very, very mixed feelings about it. On one side, it's amazing to hear that a government, an actual government, state actor, is giving Bitcoin so much legitimacy, so much so that they're even buying it on a regular basis and announcing it on Twitter that they've bought X hundred Bitcoin at various times, buying the dip. They've got all of the nomenclature and all the jargon down. Like clearly they're in the industry. They're not just, oh, this Bitcoin thing. Okay, sure, fine, for sure. No, they're in the community. So that really excites me. And the fact that they're open to businesses and services and actually government services accepting Bitcoin, paying people in Bitcoin, awesome. I'm not a fan of the mandate. I'm not a fan of almost any mandate, whether it be the mandates due to COVID or mandating that someone accept payment in a specific currency, like absolutely mandating that across the board, I think that should be the choice of each business. Right, each business should choose, okay, I want to pay people in some currency. I want to accept various assets, whether it be, heck, accept gold coins if you want. But I think it should be their choice. And you come to a mutual agreement between your customer and the business. That I think is what government should do. Mandating it and requiring it, that to me is kind of against the ideals of Bitcoin and cryptocurrency. And yes, ideals are one thing, but a lot of companies succeed against the ideals of a lot of their customers. However, I think it also could have negative backlash, which we've seen it has had. When you mandate something, you might get people that oppose it, that if you didn't mandate, they might be more open to it. Really, you want people diving into a technology or to an industry or just some type of behavior that they want to do versus you force them to do it. Just think about how you raise kids. When you force them to do something, they'll usually want to go reverse. And that's why reverse psychology is so effective, with kids. I have 2 kids and it blows my mind how effective reverse psychology is. And so if they're just surrounded by other people and businesses, these businesses in El Salvador, if they're surrounded by other businesses that are accepting Bitcoin, and they see that they're actually making business in Bitcoin, and these travelers that are coming into El Salvador, such as, people with your company doing these interviews and doing the conference with REIMAGINE, and myself, I'll be over there next month as well. And I'm going to look for merchants where I can pay with Bitcoin, and they just get jealous of it. How much better is that than trying to mandate, no, you must accept Bitcoin? And so that's kind of the mixed bag feelings that I have. And I'm hoping that other countries do sort of follow in line with El Salvador, but tweak that a little bit and make it, maybe the definition of legal tender needs to be tweaked for the next country that does this, and say it's legal tender, meaning you are definitively allowed to accept it and you can pay people in it, but you're not mandated to accept it as debt, legal for anything that someone might owe you for. So that's my take on it. I know I'm not the only one that feels that way, but there are other people, especially the people that will cheer Bitcoin for anything, just want any positive news, will think that it's 100% positive. But I definitely think that there is a different side to that.
Yeah, I think they've been doing some polls in El Salvador, and up to 70% of people are against the idea of mandating it. I think definitely, businesses in the US can decide whether or not to accept cash or not anymore, which I have a problem with, just because we haven't solved the problem of making sure everyone has bank accounts and debit cards, but
Right.
but you
Exactly.
are able to make that choice. So definitely would it probably go over better if the people didn't feel like there was some authority just forcing things on them.
Exactly.
But how do you see other world leaders doing it? You said something about them being kind of in the culture and really part of the industry, instead of just maybe trying to diversify their portfolios, or I
Right.
guess this Bitcoin thing is a thing, we're going to buy into it.
Other countries, I know that there was an announcement, I think by Brazil, that they were already heading down the path of trying to adopt Bitcoin. That actually really shocked me because, unlike El Salvador, Brazil has its own currency, the real, which they can print, to their own liking. And Brazil has gone through hyperinflation in the past. So the people there have experienced it, but usually relinquishing control to a currency that you have no control over, like you cannot print that currency, you can't put monetary policy on it, is something that most people have not expected. They always thought it would come from the smallest countries, the ones that couldn't have their money, they couldn't control their own money, that relied on another government. And that made most sense, in the sense that, hey, if I have to rely on some other country and how they want to print the dollar, well, why not I rely on no country and simply use Bitcoin? So in a way, it was a positive surprise, which means that Bitcoin to them is much more powerful and much much clearer of the future of economy and finance than just simply, hey, I want to move power from this other country that I don't necessarily like to an independent entity, which is Bitcoin, very, very independent of any nation state. Whether or not they're going to dive in and be part of the community and attend conferences and hop on podcasts like Peter McCormick's, what Bitcoin did, hard to say. I don't know. I don't know the global leaders of some of these countries, but it wouldn't be too surprising if they did. In a way, the community is fun. We've got a lot of cool, fun memes, and we've turned finance and made it fun again and made it entertaining. That's a piece that I think it kind of lacked for years. Some of these fintech startups like Venmo kind of creeped into that, but they were so restrictive. You couldn't get the same personalities of the youth, the vibrancy that we have in the crypto community. Sometimes the jokes that turn into billion-dollar projects like Doge and now SHIB. Oh my gosh. So it definitely can appeal, especially with some of the younger leaders. And President El Salvador definitely on the younger side compared to what you see in the US, or we've got one of the more ancient global leaders on earth. So I think it will really depend on age, mentality, personality of these leaders. But it's not above and beyond to see them actually engage with the community, come to conferences, talk with a lot of the people in the space. So I'm excited to see that, but hard to have a prediction.
Absolutely. And what do you think is is there the main economic benefit for regions like this adopting Bitcoin, outside of obviously having a deflation, a non-inflationary currency to combat the one that potentially they currently have, a hedge against inflation? Is it the crypto money moving in there because of places like Puerto Rico, where you can escape capital gains taxes? Just kind of the novelty of it and the crypto culture itself kind of moving into these places? Or is it an easier way for people to transact? Is it the price of Bitcoin rising? The merchants who are accepting Bitcoin can maybe hold on to some?
So multifolded. I think the first one, which very much like back in the days of 2014 and 2015, when merchant adoption of Bitcoin was heavily promoted, I think the first few, maybe the first half a dozen countries to announce that they are making Bitcoin or other cryptocurrencies, I don't call it legal tender because that implies forcing, but incorporating into the government structure, paying people with it, accepting it for government services. The first few countries to do that and make it very official. It's one of the official currencies of the country, whether you call it legal tender or not. That has simply a PR effect. Right? Just like these merchants, when they first took Bitcoin, you got this PR effect, and like they say, all news is good news. You get written up about, people travel to the country just to see what's going on. Your global leaders get interviewed on major news publications. You just get seen. that helps drive the economy one way or another, right? You will definitely have more interest in your economy just from the press about that. And then second of all, just simply the realization that if you do accept and promote Bitcoin cryptocurrency as a valid currency within the community, then you are helping drive just general economic value to your citizens. If they say, oh my God, my government is actually recommending this, well, maybe I accept Bitcoin. Oh, I accept Bitcoin. Maybe I didn't sell it. Oh man, it went up in value. Like that little bit of Bitcoin that I had went up in value. And now you just simply have a wealthier country. You have wealthier citizens. And not that I'm a fan of taxes, but wealthier citizens means a wealthier government from tax collection. And a lot of these smaller countries, a vast majority of their commerce is in cash. So it's not a big jump to go into Bitcoin, right? It's tough to collect taxes on cash. It's actually easier to collect taxes on Bitcoin, right? It's it's a little bit more trackable. Clearly not as easy as when people pay with credit card and wire transfer, but definitely still feasible relative to cash. So many different effects, everything from, I said, PR to just wealth preservation and acceleration for citizens of that country, as well as wealth for the country itself. And then just simply people traveling, all the Bitcoiners in the world that just want a cool place to be able to spend their Bitcoin and be able to say it and take a selfie. Hey, I bought a surfing lesson with Bitcoin. All of that just drives more visibility and wealth to your country. It's a no-brainer. Just do it, everyone. But probably only the first few are going to get that true benefit.
Right.
After the first
Early
half a dozen or a
adopters.
dozen, the early adopters, everyone else, you start to become a me too, right? After like 12 or so countries, it's like, oh, and there's another one. They're just hopping on the bandwagon in the train. And then afterwards, the last few dozen aren't going to have any news about it. If anything, you're going to have news written about how you didn't adopt Bitcoin and you were the last movers, and it'll be all negative news. And a lot of the value would have already been transferred. You will already have seen a big value transfer out of your country into the other ones that are adopting cryptocurrency. So where that transition happens, is it the first dozen versus the last dozen? Hard to say, but definitely the early adopters will have the most to benefit, both from a PR point of view and a wealth transfer point of view.
Awesome. Absolutely. So other big news going on in crypto these days, corporations becoming DAOs, NFTs selling for hundreds of millions of dollars. How much have you been following all of that? What do you think of decentralized autonomous organizations? What are they best used for? And maybe what are some drawbacks to them?
Yeah, so I have been following the DAO story and the definition and how it can be used since as early as probably like 2015, when Ethereum first started popping up and people talked about the potential of DAOs in our future. And I have, once again, kind of like the mandate of legal tender in El Salvador, I have mixed feelings about DAOs. I think there is some use case for them, but I think the idea of taking a mid to large size corporation and turning it into a DAO has far more drawbacks than benefits. So realize that most of the DAO structure that are being proposed is simply taking the funds of a company and putting it in what effectively is a gigantic multi-sig, right? A big pool of money that the token holders of a DAO effectively become shareholders of a company. And the token holders are the ones that can vote on how the funds move, which would equate to how you pay people and how you pay bills. So for one, paying people, if someone wants to work for a DAO, they pretty much have to accept that they are going to be paid in the cryptocurrency of that DAO or some fund that the DAO can hold. So a DAO can hold funds in a smart contract. Those funds can be USDC, which by and large, you pay dollar-based funds to someone. It could be ETH or it could be the token of that DAO. Now, think about how traditional companies work. Is that how traditional companies work, where a company has a big bank account and they pay people through it, which, that they do. But do the token holders vote on that? You have a whole bunch of people with these coins that they vote to say, oh, go pay your janitor this much each month. Like they unlock the funds to pay a janitor. You see them voting to pay a certain developer every month. This is where you present some challenges. Is the distribution of funds in a medium to large company generally goes through a hierarchy, and you allocate a budget to various departments. And that starts to garner an incredibly complex smart contract. So I had known that I'd, from some talks, for example, with the Shapeshift team, right? And this is a company, it's a traditional company based out of Switzerland with a lot of their team in Denver, and that they're transitioning to a DAO by the 1st of next year of 2022. And even they have admitted there are some drawbacks and there are some things they have not figured out yet, such as what happens if you need to pay, like most companies, you need to pay for goods and services that do not accept cryptocurrency in any way, shape, or form. Now you're actually having to trust an intermediary, a staff member, to accept payment and then relay that payment in fiat to a service, like with a credit card. So now you're having to use personal funds to make business transactions. And now that individual is at risk of what happens to those funds or the items that they've purchased. Are they the owner of those items, or is the DAO the owner of those items? And how do you even own items that are physical? If you have a company that has a DAO and it may need to purchase computers, or you name it, anything physical, how do you physically hold that? How do you own that? There's no entity, there's no actual corporate entity that can own those physical goods. So there's severe limitations from the viewpoint of ownership as soon as you venture outside of blockchain assets. How do you make the payments? I mentioned that, that's an issue as well. And then how do you delegate the payments? Who is the one that has to make the payments? As a person that does work in a company, I don't want to make all the decisions. What is the number one thing you hear as a founder, and especially in growth, is you want to hire good people and then delegate. You don't want to micromanage. The typical DAO structure of a token holders making votes on who to pay is kind of the epitome of micromanaging. It's not even micromanaging at the CEO level, it's micromanaging at the token holder or the shareholder level. And so creating that structure that has a level of delegation to alleviate a lot of the inefficiencies makes for an insanely complex smart contract, if even one that's possible at all. And with complexity of smart contracts comes risk of bugs, and realize that, real legal contracts can have bugs, right? Where you think it says one thing and oop, shoot, another. Difference is with legal contracts, you can catch them and simply say, oh, that's not what we meant. We're not actually going to send that money because that was we wrote something wrong in the legal contract, and it can be agreed upon. Whereas with smart contracts, they do exactly what they're told, and they're very autonomous. Very difficult to change, if able to change at all. So I think this is one of the core challenges. It's really hard to mirror the entire structure of a medium to large size company, how funds flow within that company, who has ownership of various assets within that company, and how the transfer of those assets happen, and then how do you acquire goods and services that aren't on the blockchain. All of those are huge drawbacks, and as well, without a corporate structure, it's hard to have what I'll kind of venture to say is, just a physical presence. And I know the world has definitely changed with COVID and so many jobs going virtual, but I think this, there's a silent majority, I fundamentally believe, that actually enjoy interacting physically with workers. But it's near impossible to have a physical space that a DAO would pay for, where people could come and collaborate. Right? If you don't want to be that person, want to work virtual, live anywhere you want in the world, and just be on Zoom calls all day, then great. Maybe you can work for a DAO. If you want to actually collaborate with people, and I do enjoy physically meeting and interacting with our teammates. We are 100%, Edge is 100% here in San Diego. We do a bit of a hybrid model, but we're in the office a lot. And that work style is just about impossible with a DAO. There's no entity that can then actually manage the facility. Right? It's individual people. So all these might be resolved, but I don't see the light at the end of the tunnel yet. Doesn't mean it can't happen. I'm really excited to actually see some companies try this. I don't want to be at the forefront of that. It's too bleeding edge for me even. So, but I'm glad to see, Eric Voorhees and Shapeshift give it a try, because it's an exciting adventure, and I want to see how it goes. But for me, and I think for a lot of people, there's a lot of drawbacks to be seen versus the benefits.
Absolutely. Yeah, I can totally see why he is the kind of person who would go for something like that, started his career in Bitcoin writing a political philosophy blog. And like, I also studied political philosophy at the graduate level. So I'm fascinated by governance and how do we create incentives for collaboration and disincentivize bad actors. And these are questions we've been asking since like the beginning of time. So they don't have hard and fast rules. So it's really interesting for me to see different DAOs and how they think about governance and what kinds of things they want people to decide on and what their aims are and what kinds of projects best lend themselves to that kind of collaborative decision making. So I think we still have a ways to go to watch all of that shake out. But it's awesome to watch and see these experiments come out.
Yep, absolutely. So excited to see it. We'll see how things pan out. And you mentioned like, are there projects that could work well with a DAO? And I think it's less about the term DAO, like decentralized autonomous organization. I think there's a there's a thin line in the sand between a DAO and just multi-sig, right? DAO is just gradually getting a more complex version of multi-sig. And I do think that multi-sig cryptocurrency does have a place, and you can make that more complex. That starts to feel like a DAO. So I would say a case in point example, and I've made presentations that educate people on blockchain technology for this. The good example would be, for example, an HOA, right? An HOA being an organization, it's still an actual entity. It has, it's registered with the government as an entity, but you could use an HOA to hold funds. You could use a DAO or a giant multi-sig to hold funds, which HOA members can vote on to move those funds to a trusted entity that which could pay bills. So a smaller form of this, where you don't have such a large contract with a lot of complexity that could have bugs, smaller version of this, which is effectively a multi-sig, could be useful. I know a lot of cryptocurrency meetups that don't want to have to go through the trouble of opening a bank account, but have several organizers that effectively have a multi-sig wallet. Is that a DAO? Right? It's kind of like I'm taking the extreme simplest version of the definition of a DAO. And heck, do you call that a DAO or not? If you call it a DAO, at the simple level, it actually does work. It's still an organization. It's a meetup group. It's an organization, right? It's decentralized, at least in the ownership of its funds, autonomous in that regards. It just doesn't have to be a company. It's not replacing a company, but it gets a lot of the functionality that you need without having to have a bank account. And that to me is kind of the interesting thing. Let's replace some centralized entity that the organization itself is dependent on and replace it with cryptocurrency solution, even if the organization stays the same as it normally would. So I think there are some small use cases that might be better test beds, smaller entities, before you go to something as large as a couple 100-person company.
Absolutely. Well, thank you so much, Paul. Fascinating conversation about some of the biggest news in crypto right now, right? The situation in El Salvador is still ongoing. DAOs I think are starting to become more and more popular. And of course, NFTs, DeFi, all of that. Where can people find you if they want to learn more about Edge, and who are you most looking to talk to?
So to find us, very simple, edge.app. You can find us, that's our website. And unlike many companies in our industry in the tech space, it is actually spelled Edge. So edge.app. You can go there on your browser and find pretty much links to our Twitter. You can find links to my LinkedIn, my Twitter handle. If you want to follow me on Twitter, Paul at Paulinator, PAULLINATOR, or at Edge Wallet if you want to follow the company. And I am most looking forward to really interfacing with the users and getting their feedback and hearing what they want to see. We get feedback in all different directions. Like there's no way we can incorporate all the feedback and build all of the features that people want. But by people chiming in, we hear and get a better idea of what we should prioritize. So definitely reach out, let us know, hit us up at edge.app. You get links to our support group, our email address, send us some feedback, issues, concerns, or of course, pats on the back. We love those too. So thanks to everyone. And let us know what you think.
Thanks. And for everyone just tuning in, this is Reimagine Virtual Blockchain Conference Series. We've been talking to Paul Puey, CEO and co-founder of Edge, the blockchain wallet and security platform. Stay tuned for more interviews and head on over to YouTube in case you missed any. Thanks, everybody.
While many government officials panicked over the next dog coin that Elon Musk was going to tweet about, or who was going to lead team, but sir, where did you get that $600? Other government officials were busy making world-changing decisions about adopting the new global monetary standard, the one and only King Bitcoin. And this is exactly what happened in El Salvador on September 7, 2021. President Nayib Bukele promoted Bitcoin to be a national currency. Since then, the REIMAGINE team has had journalists on the ground to observe the state of things as they unfold. Going now into day 3 of our conference here in the metaverse, get ready for the Bitcoin recap of the past 2 months and how Latin America is leading the way in global adoption.
Teller, we know your project is only as decentralized as your source of data. DeFi depends on oracles to supply real-world data, making it valuable infrastructure, but vulnerable to attack if centralized. Teller uses a decentralized data community, offering complete censorship resistance. Teller is a proud sponsor of REIMAGINE. Teller, data cryptofied.
Welcome back to REIMAGINE version 11, our virtual conference series, bringing you nothing but the best projects, bright minds, and leaders in the space, with the focus on what's up next. My name is Miguel Vasquez, and next up we have Red from Harvest Finance. Harvest Finance is a yield farm aggregator, and as some of the viewers may remember, they were in the news at this time last year, but we'll get into that. Maybe you could describe what exactly is a yield farm in general, and then a yield farm aggregator, and why that's exciting in the DeFi space and DeFi in general.
Sure. Yield farming, from very simple standpoint, is basically providing liquidity to projects who may need your funds to help it run, and in return, they give you reward tokens for leaving your funds there. So like a decentralized exchange, it needs pools of various different types of currencies, so it can perform swaps because, like a bank, they have a centralized person kind of sitting behind a window. Well, in DeFi, these are actually just code on the internet, smart contracts that are holding the money, and they permissionlessly swap these funds to traders like you and me, right? So again, it needs everyday people, depositors coming in, leaving their liquidity there to help their operations. In return, you get this reward token that you can either hold on to because you think it's going to appreciate as the project becomes more popular, or you can just sit there and flip it for a profit and, grow your cash pile from there. In yield farming, generally the returns, the percentages are displayed in an APY, which is a compounding rate, versus APR, which is earning like on a static rate. You deposit 5,000, you're always earning on that 5,000, whereas APY is you deposit 5,000, the profit you eventually earn in reward tokens is sold, piled back into that 5,000 to make it 5,500, and now you're earning on 5,500. So your earning power actually is exponentially greater in APY. And that's almost like in DeFi, it's like a little deceptive because you have to go through this process of, like, as I was mentioning before, you can't hold those reward tokens. You would have to go and sell them, compound your balance redeposit to achieve the percentage they're advertising to you for their yield farm. What Harvest Finance does specifically is actually automates the process for you, so you can actually achieve that APY. It does the compounding effect for you, kind of cuts out that decision to say, hey, we're not holding on to this gobbledygook token that you're earning. We're going to sell it, turn it to instant cash, redeposit it for you, and now your earning power is actually exponential in that APY curve. And in addition to that, like if you're farming on Ethereum today, for instance, the network cost can be very high on Ethereum just because of popularity and NFTs and all that stuff. So by joining like a yield aggregator like Harvest Finance, you're almost like carpooling. Everybody's depositing in say one of the 140 different strategies we have Harvest. You're depositing in one of them with 1,000 other people. And instead of you individually compounding and paying the $500 cost it made to do compound just once, that $500 cost is now shared amongst those 1,000 people. So now you're paying like 50 cents or whatever it is, right? So just efficiency and automation, but just, ultimately for the very newbie, it's like high-powered savings account almost, or like yield return accounts, right? Instead of we're earning only 0.75% or maybe like 1% on some high earning CD at a fiat bank, like some of the lowest strategies at Harvest are basically like 5%, right? So 5 times, all the way up to maybe like 150 times, depending if you want to get on some of those degen little higher risk vaults that are out there. But still, majority of all the vaults that Harvest offers, we kind of look through the code, make sure you can't really get attacked or there's not any of these vulnerabilities or things that can happen that you're seeing in the DeFi world today. We try to vet those a little bit. We can't guarantee safety. This is all kind of very cutting edge stuff that people can come up with all kinds of crazy ways to scam you out of your money, right? But like Harvest tries to, as its service, say, hey, we've looked through all these contracts. We've made sure there's no like exit code that then people can just straight up pull your money out, and we feel pretty confident that you can farm here with relative security. That doesn't mean that that specific token you're farming isn't going to plummet to zero because whatever, something goofy happens, but we try to maintain the security of your funds in terms of it being in the vault and it being withdrawable at any time.
Yeah, I guess that's really the first thing that I think scares people away, is seeing a large, when you get onto some of these yield farms, you see a large list of really exciting numbers in that APY space, but then you take a look to the left and while there might be some, oh, I see there's ETH right there, but then it's got like a weird, like a Y in front of it, or a B, or a HNH. Can you explain a little bit about what those are, and I guess dumb down the technical aspect of some of those things when it comes to, I guess, for lack of a better phrase, wrapping some of these assets?
Yeah. So yeah, wrapping is a great term. A derivative is another term that you can kind of use, but like ultimately, yeah, you take ETH, for example, and they may want you to deposit it into their ecosystem. And what they'll do is they'll give you like almost like a voucher back called YETH. Because maybe their project's called yellow.finance or whatever it is, right? So they kick you back YETH. And now they say, okay, now take that YETH and go deposit that in combination with some Ethereum into this liquidity pool. So now people can actually trade back and forth with YETH without even having to deposit Ethereum into our ecosystem, right? So it's like almost like an extra step to branch out that ecosystem without users ever needing to actually directly like jump into it. Like, right, you just want to be able to buy the token, but I don't ever want to mess with Yellow Finance itself. But I think maybe the token of Yellow Finance might go up. But that adds these layers of like complexity and risk. And without getting like too technical, if you jump into those liquidity pools and Y token suddenly plummets, you may be suddenly holding a whole bunch of worthless Y tokens while everybody's taking the ETH, panic exiting out of that pool because they saw Yellow token had crashed or whatever it is, right? So there's just some of these nuances that they need to give these 10,000, 100,000% to attract liquidity into these pools because the risk degree is so high into these, right? It can be very profitable, but it can be very negative as well, right? I equate this almost to like the American Wild West and the gold rush, right? Like, yeah, there's a lot of gold in them hills, right? But there's a lot of scams. You can get attacked and killed. Like, there's just a lot of stuff going on. You just have to be extremely careful and not be deceived by these 100,000%. You got to understand, okay, why is this 100,000 happening?
Sure, yeah, and I live out west. I know it's kind of hard to tell, but back in that period, when you would take, let's say you wanted to go take your gold and go deposit it over at First National Bank or whatever, they'd give you an IOU, kind of like a bank bond, and say, hey, here's all. Well, if you come back, a month later and they've all been robbed, yeah, your bond's worthless. So I guess that's kind of a similarity there between the what we're kind of seeing. So it is kind of that up and coming early type. Interesting, because people were making a lot of money back then too. So
yeah, it's just, you just have to be very careful because I think a lot of people are prone just to chase that number and they don't really understand what they're getting, because ultimately too that APY is saying you're getting 100,000%, not in dollar amount per se, you're getting 100,000% more of that token. But if that token plummets, right, and outpaces what you're earning, people just don't understand that concept, right? So there is just a little bit of understanding and do your own research. And that's why like a service like Harvest is very important, because we don't offer those kind of gimmicky type pools, right? Because we understand users can get affected by it. I think early in our days, we kind of did. And we even tried to put little flags on it and said, hey, this is degenerate. You can actually lose fiat, even though while you're gaining an LP position, it's just the craziness of the vaults. And just so many complaints flooded coming in saying, we just don't understand what's going on. And we took a step back and we said, okay, we have to redefine how we're advertising these APYs and how these vaults are operating, and making sure we're trying to offer like this lossless environment, right? Like, I'm not saying there's no loss or no risk here, right? I say that, and just that the vaults that we roll out, we almost want to be like dummy proof in a sense, right?
Sure, yeah, no loss like on the platform or for technical reasons.
Exactly.
I guess, and always important to understand those layers of the derivative when you're getting into that, because yeah, you're adding exponential levels of risk too. I guess the next question that kind of flows from that is, instead of those derivative assets, I guess also these yield farms have sometimes not just their own token that they're using to go ahead. I believe it's farm on Harvest. Also, sometimes they have another derivative token. I think I saw grain on Harvest, maybe. I've seen like cake and they have like syrup and there's a donut. I'm not entirely sure. Can you get into what are those derivative tokens? Not necessarily derivatives of an asset, but derivatives of the platform. What are those doing, specifically grain and Harvest, and then maybe a little bit wider view?
Sure. Well, I mean, in general, those derivatives are generally just like the reward tokens of the platform that I mentioned before, right? So, there need to be a way to incentivize people to deposit liquidity and kind of take on that little bit of risk of, putting your money with some platform you may not know anything about, or who are these guys, or it's a new startup, right? So a lot of those rewards are actually programmatically built into the code. Like when the project's launching, they say, okay, here's our offering. We're only going to have like 100 million of our token. We project these to be worth, like 10 cents a piece or whatever it is as we kick off. So we're going to start issuing these at, 100% APY up to the first like 3 million of deposits or whatever it is, right? And so generally that's what those like syrup or cake or whatever these tokens that you see are just kind of like their reward incentive token. Each token is kind of different though, because some of those tokens, they may not do anything other than just here's some tokens that we're going to give you, and the valuation is kind of like the free random market, right? Like so, and unfortunately, like crypto across the board is kind of plagued by that. There's tokens, and they're more driven by the popularity or the namesake of the project more so than like any intrinsic value behind behind the token itself, like cash flow or profit. It was the word I was trying to get out. So if you're not really associating profit with the token or cash flow from the profit of the protocol, it's kind of hard to evaluate that token, right? So like for us at Harvest Finance, that's why we think the farm token is so powerful, because it actually receives 30% of revenue from all profits generated by the protocol, right? So if we have $100 million, to churning throughout Harvest Finance, and that's generating $3 million a year or whatever, well, we're getting roughly $1 million out of that or whatever it is, right? So it's not a fee charged to the user. If you put in $100,000, you're always going to take out $100,000. We do not charge any fees on the base deposit. It's like a performance fee, right? So 30% of that flows to all stakers of the farm token. So you can immediately see, you can do like a P&E evaluation like you would do in a stock market on the farm token, because you can see like on the front page, we show you how much deposits there, how much that's churning out like on a monthly basis and an annual basis. So you just do a quick P&E and you can say, okay, this is what theoretically farm should be worth if I was doing that kind of evaluation. As I was kind of alluding to with like 95% of other tokens. And I say that as a random percentage just to say the vast majority of tokens can't really do a P&E evaluation on them, because they're not sending you like a cash flow. They may be sending you more emitted tokens, but emitted tokens are just like a printing press, right? They have no, like, again, intrinsic value behind them. So that's what I think is very cool and unique about farm itself. You mentioned the grain token, and you kind of talked about it, why we were in the news maybe about a year ago. About 3 months into Harvest life, we were flash attacked, or a hack on the protocol. Basically, like one line in the code, there was I think it was like get virtual price versus another type of price call, which allowed a flash attack to basically trick the pricing of our assets and the derivatives. So like I think it was USDT. Somebody was able to trick the price of the USDT, which is the voucher that we issued, and it resulted like they were able to borrow money in what's called a flash loan to attack us, manipulate the prices, and then extract, I think it was like $27 million of funds out of our vaults. To recoup all the victims of that, we basically issued the grain token, which is like an IOU token that we've been buying back off the market, right? As we continuously buy back and burn the token and get rid of it, it should revert to its like $1 peg. But because like people essentially just wanted to recoup money as soon as possible and just move on or do whatever they wanted to do, you kind of have your current market price of grain right now. To kind of like step back a little bit to $22 million or $27 million. I can't remember the exact figure off the top of my head. Obviously is a big, large amount of money. But it was actually equated to about like 17% maximum impact to any specific depositor's dollar amount, right? So yes, while it is a lot, and I will never make any excuses, like 17% is almost like a bad day in the market, right? So, not to put any humor on that, just like to kind of give it perspective and, what we were trying to accomplish with the grain token and really just make sure people were recouped. We've patched that up. We've had audits since then. We haven't had an issue now 9 months later of rolling out numerous new vaults. I think like probably over 100 new vaults, since that point. So I think we've shown a really great track record in that respect. The farm token's been issuing profits to all holders and stakers, since that point. So yeah, I think having celebrated like our 1-year anniversary in August, just really proved our staying power. We could have folded up shop, or the core non-devs could have folded up shop and said that really sucked. People hate us, let's move on. But they really decided to stick with it and really wanted to repay everybody. And I think we just have just a really great product because of that today.
Well, it is pretty admirable to see y'all still at it, to be completely honest. Yeah, that number is pretty scary, but when you start to break it down on how the protocol actually, works and who was actually impacted there, yeah, it's a little bit less than, that kind of big figure all at once there at the beginning. And I don't think it was just y'all last October, because I know there were a couple of other big, not just flash loans, but also attacks on protocols, stable coins. They're trying to push them up and down. It just shows you the activity in the area and in some of these yield farms. How do you go about, I guess, making, because there are so many illegitimate kind of actors in the space, how do you go about making everything, more enticing for the average kind of layman who's kind of, well, I got a couple of Doge now, what do I do?
It's a great question, because unfortunately the media never focuses on the middle road where all the good stuff and progressive stuff is happening. It's either this dude made $20 million flipping NFTs. This dude lost his house and the roof over his head for his kids. And, and it's there's all this really good stuff that's actually happening in DeFi. There's places that are offering, solid, real sustainable APYs, whether, it's Complify or it's Curve Finance, or Harvest Finance being an aggregator of all these other different products. There are cool things that you can do safely within DeFi. We just have to educate people. But unfortunately, because of the psychological and almost lemming effect of the moon crowd in here and wanting to be that next multi-millionaire NFT guy, people just rush into these things and chase these percentages. And unfortunately, there's always going to be these bad actors that are taking advantage of that, right? So for us specifically, at Harvest, we really try to do these educational efforts, Reimagine. Myself, I'm going to be speaking at Decentral Miami at the end of this month, beginning of December. Just more about educating. I'm not even necessarily talking about Harvest per se. I'm more focusing on the DAO aspects of Harvest. Me, I'm literally a nobody. I showed up Harvest week one. I'm oh cool, yield farm aggregator. I'm not a core dev. Those guys are fully unon. And I just started hanging out. And every other community manager that we have in there, all the yeomen, the guys that help us bring strategy and engage with new projects that are starting up, we're all just community members. I think we actually represent one of the projects that are actually trying to be what the spirit of a DAO is, right? A bunch of people running the day-to-day operations and making all these decisions. And the core devs have completely let go of that to us, whereas they are just trying to more concerned about the code and the security and things get deployed appropriately, right? So everything that leads up to that, making deals, education, doing all these things, that's what we're really trying to expand on and grow community and do the educational part of that. And that's what we're very passionate about, in addition to hey, here's this really simple protocol that anybody can use and deposit into. So it's just, to me, it's really about education, steering people in the right way, and not necessarily when Mark Cuban's saying he's getting into Titan, I'm like, man, you guys you're killing me with that stuff, because look what happened. Then you eventually got rug pulled because you jumped into it because of some stupid APYs. There were so many other projects this dude could have gotten into, but that's what you educated the public with, and there's so many other coins that you could be accepting other than Dogecoin too, bro. Come on.
I really wish you would talk a little bit more about his Aave exposure. Yeah, I really would.
Yeah, exactly. Aave, that's such a powerful protocol, and it's so many things that you can do with it. There's just so many other cutting edge things that are coming out. I mentioned Complify. a derivatives AMM that's like fully on chain, fully decentralized. You know, with all the stuff in the news, like Coinbase is getting attacked because they have a derivative USDC, and Binance, you can't do leverage, you know, in certain countries there. Whereas now you have like this fully decentralized, like easy to use as Uniswap. I want to 5x some Ethereum, click, 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 boom, you're done. And now I'm 5x. All positions fully collateralized, so there's no margin calls, no forced liquidations. You've cut out all the bad stuff about leverage. It's all DeFi, all on chain. It's an amazing product that people like on Wall Street would probably want to use, because now you can actually do trustless derivatives without some centralized exchange flash crashing you like happened on Binance USA and wrecks all these people. That would never happen on an AMM like this. But yes, let's go talk about Titan. Like, I just, you know, that's the kind of annoying stuff, you know, that really gets me. And that, you know, going back to your original question, if celebrity knuckleheads are going to talk about stuff like that instead of like the cool stuff that's being built, like, you know, Complify, AP Wine, Aave, all these amazing things, like, you're always going to have these people falling into these scams, and that's really unfortunate.
Oh, definitely. I think people just assume that you start talking about these things and people's eyes will glaze over, but people's eyes don't really glaze over that much when you're talking about numbers like this. And so maybe you could talk a little bit more about what got you involved in the project in the beginning, because that's something that we did want to talk about here, is the DAOs. And the DAOs have been gaining more and more attention, and I think people, maybe even just with a little bit of exposure to the space, have heard the word, but maybe they're not sure or are skeptical because they've been burned before by a community structure like that. So maybe you can talk about your experience there and, you know, why you're so excited about it.
Yeah, I think it's hard because, yeah, there are like pretender DAOs, or there's projects that call themselves decentralized. I actually wrote a really cool article about this with some links. You know, maybe I can send you that. You can post with this on the